coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola. Day 4 of my new Mr. Coffee is keeping everything very hot. Beth, I did my own Mr. Coffee. I don't need you anymore.
You're still unmedicated, though. You're still a problem. It's still a problem.
I am a problem. I got hot coffee now. I'm ready to go. Son, have you ever been called a hot cup of coffee on an airplane?
Lots of times.
What is happening?
Hot cup of coffee with a lid.
Oh, every time. Who hasn't?
I've never been called a hot cup of coffee on an airplane. Who called you a hot cup of coffee?
A flight attendant called me a hot cup of coffee with a lid because I had a ring on. That's their code.
I'll take things that never happened for 200, Alex.
You didn't make it up. That was back in the day. Anyway, how are you, Vanetta?
Is this before they could detect like radon leaks on the plane? And everyone's just
Before they could detect a lot of
everyone's
things.
just like all loopy and like, yeah, okay. I'm good. I'm good. Yeah, no complaints, I guess. I don't know.
Good.
How are you, Tomas?
I'm perfect.
Again?
Again.
How was your Wordle? Did you get Wordle today?
Yeah, it's easy.
Oh, okay. You don't know. There's lots of words you don't know.
So do you start a new streak because you're ended? Like you're like in like week 3, right?
No, I missed one this year.
Okay, but
I missed one.
I don't do Wordle. So does Wordle have a running tally on how many days that you've got correct?
I think it does, yeah.
So you're in the single digits again, or double digits?
No.
You must be in the double digits. You're not over 100.
Yeah, because you didn't get. Yeah,
Right.
you didn't.
I missed one word this
You didn't
No.
get foist. You didn't
I'm
get
a little
foist.
pregnant one time.
You didn't get foist. It was a couple weeks like a.
So what are you
Is
now?
that what it was?
Yeah, it was foist.
See your stats.
Because you typed in
what are you,
Zoist.
26 or something like that now? You're like a nothing. You're a has-been. You're a nobody. You're a Palookaville.
Yeah, so you should probably have like 9-10 days maybe.
What are you?
8.
First of all, you're making it make it seem like I don't know where it says how many days you are in a row.
Do you want me to help you?
I could use help. Hold on, let's see. The crossword. No, this is bad. I don't know. I don't know the answer.
Yeah, actually, you know.
I thought you kept a running tally with your
I don't
daughter.
do my own. No.
I thought you kept it with Case.
No, she fired me.
Okay, well, that's.
It says see stats, but then when I see stats, I don't see stats.
Open your eyes. Do you want me to see? Do you want me to do it?
Come on. It has to be in the double
It
digits.
says no.
All you do is simply navigate to the.
It says 15.
Click on the bar graph icon in the top right corner. So
This is physically hurting me. This is
This
so
will
painful.
display your Wordle
Icon.
statistics, including your current streak, your max streak, and other relevant information.
Huh?
Click on what?
Click on the lines. You see there's lines on the top right?
Yeah.
Okay, and then click on the bar graph icon top right corner that you just did. This will display your Wordle statistics. So just because you don't like what you see, those are the statistics.
I'm looking for them.
Throw the phone.
No, I'm not throwing the phone.
Do not throw your phone.
Throw the phone.
I kind of want to see you throw the phone. Here, do you want me to get it?
Do not throw the phone. Wordle statistics.
Oh, this is brutal.
All right, I'm not going to find it. We'll find it later, and I'll let you know. I don't know how to.
Ugh.
I think I'm 1,500 in a row, but I know I missed one.
You didn't get
streak
foist.
is like 900.
You didn't get
Foist. Was that the one? Are you sure it's foist?
Yes, because you asked me what that meant,
Oh, no,
and you typed in Zoist.
You don't even remember the one
Oh, I
word
typed
you
in
got.
Zoist. You're right.
Yeah, and you
One
didn't
word
get
you
it.
got wrong?
Zoist is a real word.
It's the name of a publication in Britain from like the 1800s.
Well, it's cleared.
Okay, but foist is an actual word that people use in the 2025s.
All right, well, whatever.
I like how you're mad at
Herder's
me.
now on there. You got to make sure you get this right.
Hoist.
Hoist,
Zoist. Joist. I got all those.
Right. Zoist is not a word, though.
Well, whatever.
Like,
It came up as a word.
okay, I am so tired.
So that broke my streak.
Right, that's what I'm saying. And so that was probably
Yeah.
like a week and a half ago. So
No, it was like a month ago.
it wasn't a month ago.
Whatever. Okay. Congratulations. You've hurt.
I literally have an eidetic
You've
memory.
intellectually damaged me this morning.
I literally have an eidetic memory, and I'm literally recalling word for word the conversation
How
you
many
and I
eidetic
have.
memories we have here?
Well, just one in this room.
That's fair. But we do have a few people. I think
You can't even spell eidetic memory.
I think we have 3 people total. I think Julia and Dylan both do too.
Yeah, well, anyway, it's very painful because I can relive this conversation over and over again.
I'm with you on this.
Well,
And it never becomes more fruitful.
I love the people that have those crazy eidetic memories where you can remember like what was a Tuesday 75.
So that's an autobiographical memory. So Mary Louise Henner, like she has that. So that's a different type of, so eidetic memory and autobiographical memory, those are 2 separate.
I'm in denial. I forget
Why does
everything.
everybody use Mary Louise Henner?
Mary Lou Henner, because she's
Lou
the
Henner.
most famous example of what. Do you want me to name some dude from Iowa that you've never heard? I don't know what you want from me this morning.
You're not the first woman. You're not the first woman to say that.
I've seen shows.
Like I'm literally answering all of your questions correctly and providing real
Yes,
example.
but not
and then
the way he wanted
But you
to
hate everything that I'm saying. So you know what? I'm gonna just I'm just gonna go.
Mary Lou Henner.
That's an autobiography, but you could be like, hey, when you were in the 3rd grade, what day was, October 9th? And she could remember what day it was, what she was wearing. So that's a different type of memory. Yeah. Okay. It's still very cool and very remarkable, but also very painful because you can remember, down to the day, to the hour, something very sad that happened to you.
Yeah, if you can remember.
Alive or dead?
Mary Lou Henner, she's alive for sure.
Age?
Mary
She's
Lou
in
Henner.
her late 80s.
I'm gonna say she's late 70s.
73. I'll give you the
Good for
close.
you, Mary Lou.
Yeah.
Good enough. That's
For
good.
you, Mary Lou.
Now that show, by the way, is a classic. Somehow it got into
And what show is that, Grandpa?
Taxi.
Okay.
It got into my TikTok feed.
Taxi did?
Yeah, somehow.
Topical.
I know. I have no idea how.
Okay.
A lot of Louis De Palma, like one-liners. He was really good.
Do you remember her name on Taxi?
Mary Lou Henner?
No, yes, that was her name. Yes.
No, I don't remember. What was it?
Elaine. I didn't know that either.
Oh, wait. No.
Okay.
Funny.
This is riveting. What'd you do last night? Can you remember that? Can you remember what you did last night?
Yeah, I bought some crawfish patties, and I made some crawfish cakes.
Oh, so you had homemade crawfish cakes.
Where'd you go?
According to the way your homemade is made.
It's a really good question. I don't remember exactly where I got them.
Okay, there it is.
Oh, so you had them in the freezer.
Yeah.
These are freezer burn crawfish
I didn't say
cakes
they
you
were
made
freezer
last
burned.
night.
But you don't remember where it wasn't the farmers.
You don't remember where you got it from.
It
so
wasn't the
freezer.
farmer's
could've
market?
been.
It could have been the farmer's market. Okay. Because I was like, where?
Wait a minute. If you got them from the farmer's market, you would remember you got them from the farmer's market, especially after she asked you, did you get it from the farmer's market? That's a pretty specific thing.
I think they could be from Whole Foods, but I don't know. They're either Whole Foods or the farmer's market. I do buy.
They're from Mariano's before it got taken over and they were getting rid of all the stuff that was in the freezer.
No. It was 2020. It was 2024 or later.
Ew.
Or earlier?
Or later.
What do you mean by later? 2025 or 2024?
Yeah, because I cleaned out my freezer.
Yeah, because we're over halfway through 2025.
I threw out 25 pounds of old stuff.
Oh, gross. Oh, gross.
I had some stuff in there from 2018, 2017.
That's vintage.
It's called dry age.
Dry aged, yes.
Dry
I
aged
like
fish.
that. Dry aged, yes.
Dry aged.
Oh, gross.
So
So you made crawfish patty. What do you serve them? You just eat them with just by themselves, or
yeah.
no vegetable, no starch, no.
On a bed of rice, a bed of lettuce or something.
Crawfish cake.
Yeah.
I like them.
Because I like them with like mashed
I
potatoes.
know how you like them, but how did
maybe
you
some
have them? You just had them on a plate,
green
on a
beans.
paper plate.
No, I don't even use the plate. I just use my hands. Paper towel.
Like a remoulade. Like
Remoulade.
Do you stick them in the
Yes.
salamander just because you got a salamander and you're like, F you, I got a salamander, I'm going to throw them in there even if they don't need it?
Occasionally. I like a little salamander touch. Salamander puts a beautiful crust on anything.
okay, go ahead.
I'm like a professional chef now.
You are not, because you literally don't even know where you source your ingredients from.
It's farm to table. We just don't know when the farm was.
So you just had to you just
I have a
ate-
lot of farm to table stuff. I go when I'm
Semi-homemade farm to table.
when I'm at the farmers market. I usually go like every week.
Yeah.
So I was at the farmers market last weekend, and because I go to this same girl buy flowers from every time, and I usually stop at the same places and buy some meat, vegetables, that kind of stuff. And but I probably stop at every single. There's probably maybe 20 vendors that sell various kinds of meat out of coolers
Yes.
from their farms.
Yes.
They're very similar, but
That's how farmers markets work.
I know,
Yes.
they're great. So I have so much crap from farmers markets. I just buy stuff every time.
But can we get back to this? So you just ate just crawfish patties?
Yeah,
like
crawfish patties.
that's it. That was your
No
dinner.
bun, no piece of pita.
No, that's what I'm saying. No starch, no vegetable, like nothing else.
Crawfish cakes, 2 of them. Yeah, delicious.
That's all
remoulade,
you
little
had? You only
remoulade.
had 2
Incur
of them?
remoulade. Did you do a little something
Yeah.
with them? You just choke them down dry?
Yeah. I just chuck them down dry. Just cook them, take them in my hand. Them done.
I'm so curious, like what your daily macros are. I'm sure it's just insane.
You blew his mind the other day with the chicken fingers from
Oh, Dave's.
Dave's.
Dave's, yeah.
Oh, you blew his mind. He still had
600 calories in
them,
one
but you blew
tender.
his mind.
Yeah.
That was so good too.
Okay, well, it's not good for you though. So.
Then, because I was working late actually, and then
You're working late
I was
because
working
you're a singer.
today's gonna be a long day. I'm gonna be here till 5 o'clock tonight.
That's your job. That's what you're supposed to do.
I know it's gonna be a long day.
Okay.
You
What,
get paid the big bucks for it.
Yeah, you
Well, you're
want-
the man.
That's right.
you want a commemorative statue for
right.
doing your job?
I do.
Okay, well, the rest of us don't get
I'll be
commemorative
here
statues.
11 hours today. It's gonna be a long day.
Oh,
If
boo-hoo.
you weren't getting paid the big bucks, would you still do it?
I would do it for nothing.
There you go. I love it.
Love the game.
Dedication.
Wait, why is your day so
long
long today?
Got meetings.
Oh, nobody wants you in a meeting.
I think that's what I don't understand.
That's what I don't understand.
I
All
don't
right.
understand why anybody wants me in a meeting.
Yeah. All right. Well, I'm done with you. Bat, how was your evening?
I
Yes.
did something most people dread doing. I drove to the airport. As soon as I got into the lane for the airport and paid through the toll booth, I was driving my daughter back to D.C. She got the text message saying that her flight was delayed.
There's no toll booth.
Yeah, you have to go through.
From his house.
You
Oh.
have to go through a toll.
Oh, I see.
There's
Okay.
one toll booth they have to go through. As soon as I got through the toll booth and got into the lane was, kind of gets real congested and everything like that. She got the text message that her flight was delayed from 5 o'clock at night till midnight.
Oh, that's quite the delay.
That's quite the delay. So
I'd
we
still
look, she
drop her
go,
off.
what's that?
I drop her off anyway.
She had a cat with her too. So you can't keep the cat in the, so I said, come on, we'll turn around. I'll drive you back at, 10:30.
Sometimes they change,
They changed it to 5 o'clock in the morning the following day, and then they changed it to 9 o'clock in the morning the following day as American. I checked on, DC had some flight delays because of weather from other destinations.
I mean, DC sometimes is just.
It was just, but United was going out and blah, blah, blah. Anyway, long story short, she got on another plane this morning. She left at 4 o'clock in the morning, but I didn't drive her. I made the Uber driver take her. So,
That's your big story?
That's your big story.
you like driving back and forth to the airport at 5 o'clock at night?
I mean, I didn't tell you to have kids.
One night of passion. It wasn't even mine for crying out loud.
I mean, I can't believe you even drove her.
Yeah, man, that's what you do. You have to pick up the wife, you drive the kids. That's what you do. That's what we do.
Hey, well, I got a better story because it is life-changing. After I got off the show yesterday, because I was working remote, I needed to get some stuff. So I ate a quick breakfast, went to Costco, executive hours, my first time. Game changer. I am so excited. It is an introvert's dream. They had everything all roped off. I was like, excuse me, I'm an executive member.
Oh,
They're like,
by the way,
they're
I've
like,
been doing the same thing.
they're like, okay, but I went yesterday for the first time. So there were no lines for it. It wasn't crowded. I had my pick of everything. I checked myself out super fast. I got gas. The first time I've never waited for a gas pump at Costco. It was just, I had the best day.
So I've been using that too. I didn't realize that it even went into effect, but I went there and I saw all these people walking around, it was waiting outside.
Yeah.
And then I saw some people going through it. I'm like, oh my God, they must have put this new policy in place.
Yeah.
I walked up with my
June 30th, I think it went
little
into.
black card and boom, in and shopped. There was nobody in the store. And then they let the riffraff in.
Yeah. Yeah, people were waiting outside. They were like waiting because it was like 9:50 by the time I got out.
It's Costco sushi before anybody else.
Do you feel like you feel okay doing that?
I felt great. I was like, out of the way, lady. I'm concierge level.
It was really just as someone who doesn't like crowds and like lots of people, then it's perfect.
I didn't even know. I forgot totally about it and walked in. I was like, oh, this is nice.
Well, you think Costco would be rallying on this type of news that there's lines outside and everything else like that? Costco at least had a 2-day rally, but can't get out of its own way. 9:55.
You get that first sushi. Fresh.
It hits different.
It hits different.
I thought about you. Last night I went into the Jewel and they had $5 sushi. I'm like, I wonder.
Oh, the $5 sushi is half off.
Yeah.
Yeah. You could do a 2 for 1.
Mariano sushi is actually good.
It's okay.
I draw my line at the Jewel sushi, but the
okay.
Mariano sushi is.
I kind of think that Jewel sushi is better than Mariano's.
No way.
I think so.
No way.
As a.
No, the one I'm talking the Mariano's here in the West Loop because that one's fancy. It's really nice.
Oh.
Yeah. Anyway, hey, we got a great show for you today.
Supermarket sushi is very underrated.
We got a great show for you. Do they have sushi at Buc-ee's?
Oh,
I was just curious because it's my dream to go to Buc-ee's, but I still have never
everything.
been.
I don't know if they have sushi though. I'm gonna go with.
But they have
no.
everything.
I'm gonna go with no.
I don't know.
What do you go with?
I'm gonna go with no.
I mean, maybe they have like Texas sushi and it's like a sausage wrapped in a brisket. Or
What do you think? Yes or no?
Yes.
I'm gonna say no.
Several business. It says place with Bucky in their name.
You don't
No,
know.
I'm gonna tell you this right now. I think I'm done with Buc-ee's. I had my one and done.
Yeah, but
You're never gonna travel again by car to pass one.
Yeah, you're such a passenger princess. Like
Right.
you're such a
I
little
think I'm
diva.
one and done. I think I'm one and done.
Oh, so you're not gonna drive your Range Rover to another Buc-ee's?
No, Bucky's gas stations do not typically sell sushi.
Okay, well you guys are right. You guys are right then.
Yep.
That's fine. I'll just
They
have to
do
get.
have beaver nugget.
Yeah, beaver nuggets. Yeah, I was gonna say I'm gonna have to get my
You're looking
fill.
for beaver nuggets. That's where you get them. They do not have cougar nuggets.
I
No
bought the
cougar
beaver nuggets.
You like
And?
beaver nuggets?
They're like it's like popcorn dipped in sugar, dipped in caramel.
Yeah, I think with peanut butter a
I
little.
thought they were like little pretzel bites. I don't know. I don't know.
no,
Oh,
no.
okay. It's the popcorn.
They're corn.
Are you okay?
Yeah, actually not popcorn.
It's corn.
It's like they're corn pops,
Okay.
corn puffs.
Okay. Are
They're
you,
corn puffs dipped in caramel and sugar.
oh, that sounds good.
Yeah, it's like orange chicken for corn puffs.
Sweet and crunchy snacks. So the Bucky's chain, the large travels, the caramel coated corn puffs.
Yes, I said.
Yeah.
Corn puffs.
That sounds
I
good.
think that makes them more like a Cracker Jack.
No, it's like the corn
No,
pop
they're
cereal,
like
kind of.
corn pops.
Yeah, corn
Yeah.
pop cereal.
I mean, I've had them.
Yeah.
A hint
like
of maple
they're-
syrup,
Ooh.
satisfying crunch.
A hint of maple syrup.
They're named after the Bucky's mascot,
Ooh.
beaver.
Hey,
Love a good beaver.
we got a great show for you today, whether you have nuggets or not. I don't know. I don't know what I'm doing. I tried really hard with that segue.
The dog threw up on him though.
Oh, gross.
Oh, great.
Hey, at the top of the 8 o'clock hour, we got an options
I got a
jive.
handful of them and threw right up.
We got an options jive. Adjusting strikes for earnings. Ooh.
Oof.
Ooh. And then 8:40, let me explain. Chris Vecchio in the house. What are you talking about with Chris today?
We're gonna let him explain some new stuff to us.
Okay, you don't know because you don't ever prepare for this segment. And then 9 a.m. on market measures when the bond market got it right.
Ooh.
Dun, 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 dun.
Da-da-da-dum.
No, we're doing a study. Actually, that one's pretty good. It's not too hard.
Yeah.
It's on. We're using TLT instead of the ZB, so
Okay.
anybody can play along.
Your favorite Bond, like the actor, favorite James
My favorite Bond.
Bond. Yes.
Ooh.
Ooh.
I mean, it's hard to go kind of against the original,
Sure.
but
I mean, just the longevity of Roger Moore, though, and just like his
Roger
canon,
Moore.
his canon.
but you know, I don't know. I'm probably gonna go. I guess Roger Moore.
Oh, Roger! Wow, what do you say? Who's your favorite Bond?
Roger Moore, because he's the original. It's like saying
No,
that.
Sean Connery's the original.
Yeah, but before us. Sean Connery was kind of before us.
Yeah, it's a little bit before us, but I can't.
I'm sorry, Sean Connery in a suit, driving an Aston Martin. Be so for real right now.
I can't get over Sean Connery on Saturday Night Live is in Jeopardy.
Okay.
Like, it's just all my memories of Sean Connery.
You know that's not really Sean Connery.
I know that. I can't get past that.
I mean, Roger Moore became Bond in 1973. I was born in 62. Sean Connery wasn't even around then.
Yes, he was.
For me.
But literally on TBS,
You asked my opinion.
I
who
don't
it is.
want
He's
it
my
anymore.
first Bond.
I don't want it anymore.
Roger Moore.
It's Sean Connery is the answer. So.
But has there ever been a better Saturday Night Live character than
Sean Connery.
Sean Connery.
on Jeopardy?
He's great.
It's
great.
the greatest.
All right.
Yeah.
Anyway, we're going to talk about a different bond when the bond market got it right. That's 9 a.m. for our market measures. And then around 9:30, Big Boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And hey, because today is a terrific Tuesday, you got Liz and Jenny live from the floor of the SIBO. It's electric. Yes, that's right. The ladies live from an active trading floor at 10 a.m. You don't want to miss it. But hey, in the meantime, in the between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking
Coming across the wire. Our leading story. Top stories. Jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's August the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings that happen or that are up for today, Mr. Bat.
For today.
For today, yeah. I got the other ones.
Uber.
Uber.
Uber is a better name than Uber.
I agree. Uber. AMD, Amgen, SMCI.
Ooh, AMD, SMCI.
Disney, someplace you've never been, and McDonald's, which you claim to never
SMCI.
been to.
You ain't got no alibi.
Took it off my watch list about 6 months ago.
Why?
I just want to hold on. I have no idea where it's trading.
No idea, girl.
I'm going to say 52.
You're good, 59, and markets are nickel wide, so there's no reason for it not to be in there. But the Ivy rank is 17.
Not looked at it.
Yeah.
AMD, what's the Ivy rank in there?
What's that?
AMD.
AMD has earnings. Yes.
I know. What's the Ivy rank in there? Is it rich?
31.
Not too shabby. Hey, getting to my first headline of the day, though. Global M&A hits $2.6 trillion peak year to date, boosted by AI and a quest for growth. Global deal making has reached new highs as a quest for growth in corporate boardrooms, and the impact of a surge of AI activity has overcome the uncertainty caused by U.S. just shenanigans. It's the global M&A is at the highest level since 2021, that pandemic era peak. We did an M&A in 2021. We were part of that global mania. What are your thoughts about this number and what it means?
I mean, I have no negative thoughts about it. I think it's good.
Okay, all right.
Yeah.
Sustainable,
I mean, I'm
not out of control. Just I'm saying with the whole AI
I'm
component
not
of
exactly
things.
sure what 2.6 trillion peak year to date. I don't really know what that means exactly.
Okay.
But I think it is sustainable. I don't feel like we have an crazy abundance of IPOs or anything like that. Or
Okay.
deals.
All right.
And I'm not seeing I don't feel like there's a takeover every day or
Nobody's calling me.
yeah. No,
I just thought it was interesting. Hey, here's something interesting. Our friends over at the CFTC yesterday said they would allow trading of spot crypto asset contracts that are listed on futures exchanges that are registered under the regulator.
Yeah, that will allow listed spot crypto trading on registered exchanges.
You're literally just reading the headline back to me.
I told my son Vinny, I asked him questions. You cannot answer the question with the words in the question.
I think this is really interesting. I don't know where it's going to lead to.
Okay.
But it's really interesting because I'm not sure why anybody would trade on a non-listed crypto exchange if
Sure.
you can trade spot crypto on a listed exchange. I mean, why would you want to go somewhere where the counterparty is the company? Like, you'd want to go to a counterparty that's where the asset's fungible and where the market is publicly disseminated, rather than an individual exchange that's owned by some person.
Yeah.
So I would think this would be really good for, potentially for exchanges, and maybe kind of bad for something like Coinbase. What's Coinbase doing this morning?
What do you think? We got Bitcoin basically unchanged.
Oh, yeah, it is bad for Coinbase. It's down
About $12.
Oh, wait, there you go.
I did not know this headline, so that was.
I did not know. You didn't not know this?
I did not know.
English is the second language.
I did not know.
You didn't not know this? So you're saying that my news does matter?
No, I mean, it's already in the market. Nobody cares.
All right, I tried.
I mean, the
to.
CFTC allow if this is approved.
Yes.
Like I would think
it is
hurt. Like for example, Coinbase, Kraken, any of the big exchanges, Crypto.com, any of those big exchanges. I mean, why would somebody go to one of those if you could do it on an illicit exchange?
And there you go. It's part of the SEC's Project Crypto push.
Yeah, I mean, I would think this is for the consumer.
Yeah.
It's good. For for me, the trader, it's good.
Okay, he likes it. What are digital assets doing this morning, Bat?
Mikey likes it.
Basically unchanged. Well, 115 on Bitcoin, which puts it on the futures, which makes it basically unchanged. Down small, about $300. Lower-ish end of its most recent range.
Bonkers, massive move for Palantir in the overnight hours, a massive move this morning. Palantir announced they topped $1 billion in revenue for the first time. They boosted guidance. They're getting all the government contracts. They have all of our data. Their revenue grew 48%. They are unstoppable.
They're unstoppable. How about you, Sosnoff?
What do we do in Palantir?
We did some earnings trades. We sold some Strangles. I think it's inside the expected move.
Yeah, it's up $12, which is a good move, but inside the expected.
It was up about 7, 8 most of the night, just right this morning.
Yeah, but it's crazy how much it's just rocketed in market cap and like where its position is now in terms of the most valuable companies.
$30 stock.
Right? Yeah.
It's 172.
Yeah.
The offer.
I mean, I think Palantir's.
Are you anticipating a vol crush in there? Or?
Yes, I'm anticipating a vol. It'll be a murder.
Okay, wow.
Murderization this morning. But also, I think Palantir's kind of pretty stretched valuation.
You've been saying that, though, for 6 months, and you've been wrong.
Not short Palantir. I mean, we're just short
Even
Strangles.
a broken clock is right twice.
Yeah, that's true.
Yeah, I don't like Palantir here at these levels, that's for sure.
Hims also had earnings. Did you trade Hims?
Yeah.
Hims and Hers falls 10% on a revenue miss. Revenue did increase 73% year over year to $544 million, but the shares fell after they reported results that missed expectations for revenue. So again, they came in at 544 versus the 552 that was expected. Also, they adjusted their EBITDA. What are you doing in Hims?
Hims was down around $8 pre-market. It is still down around $8.
We sold Strangles in there, same, but we're pretty. I was actually more worried about the upside because it was trading with massive call skew.
Oh, interesting. Okay.
We sold our nearest put is 45s or 46s.
Yeah.
So we're I think we did it for the weeklies. I think we're fine.
Have you bought your skinny shot from them yet?
Not yet.
Okay, get it, girl.
Yeah, soon.
Are they selling the Ozempic stuff?
Yeah, because they were compounding it, and then they made deals to.
So you can be skinny and strong at the same time.
There you go. A crypto exchange called Bullish is targeting a valuation of $4.23 billion in their U.S. listing, backed by Peter Thiel. They're launching their roadshow to capitalize on the momentum built by digital assets amid regulatory clarity. Bullish is seeking up to $629 million by offering 20 million shares priced between $28 and $31 each.
Wouldn't touch this with a 10-foot pole. Wouldn't touch this deal with a bat's money. This is the old guy who was the CEO of, I forgot his name. Is it Tom Farley is the CEO?
I don't have it right at the.
I think he was the CEO of the New York Stock Exchange.
Okay.
And he took this over and.
Yeah, Thomas Farley.
Yeah.
And yes, he was president of the NYSE.
Yeah. I would sell this to your hands bleed.
Okay.
If he does to this company what he did to the New York Stock Exchange, I would fully expect them to be out of business in 2 years.
It's interesting. They also operate the crypto news website CoinDesk.
They bought it.
Well, yeah.
Yeah.
Okay. Well, I said that they operate it.
Yeah, they bought it for like nothing.
All right.
CoinDesk.
Well, I use CoinDesk for news.
Okay, well, they're
so.
basically going out of business. And so,
Well, interesting. Bullish swung to a $349 million loss for the quarter ending March 31st. Nice work.
It's unbelievable, and they throw it.
I just want to know how.
I just want to know, girl.
How you can have a valuation of $4.2 billion. You lost $349 million.
You make it up in volume.
Because you have crypto in your job title.
That's right. And if we have to add AI and .com, we will.
Sure. Yeah.
So
That's right. We're not opposed to doing that.
About 10 years ago, I went, or maybe less, maybe 8 years ago, I went to Tom Farley, who's the CEO of this.
Yes.
And I said, listen, we want to route, because they ran the ICE.
Yeah. Right.
I'm like,
You hate ICE.
well, I wanted to route customer orders there.
Yes.
The futures exchange.
Yes.
They have certain products that we would like coffee and
Sugar.
things like
yeah.
that. We're like, we want to route customer orders there. But you know,
I said GFY to
we
you.
want to, but we need you to give us the data. So
Right. It's really expensive.
it doesn't matter what I'm like, listen, we'll pay for if our customers trade on a product, the
The brokerage firm will eat the cost.
brokerage firm will eat the cost of the data for that
Nice.
product. He's basically like, listen, it's a nice plan, but we don't do business like that. If you want to route orders to our exchange, it's $1,200 a year per customer.
Nice Italian not boy.
Yeah.
We don't want you here.
It's $1,200 a person
Per person.
for our data. If we were lucky, we would have made back from an individual customer from us, our customers. Maybe we would have made back $3 a year
Oh no.
from each customer because that's how much they would have traded in
Right.
coffee.
On a good year.
In a good year, $3 to $4 max.
Right.
They want $1,200 a year. So I'm like, F you. And that was the last words we've ever had together. I'm like, that is
You're
the
not bitter.
dumbest.
You're not
I'm not bitter. I'm just like, that's the dumbest business decision I've ever seen.
Sure.
This guy's now running this company. I wouldn't.
What do you think of the logo though?
It's ugly.
No, I like it. I like it. I like the bullet. All right. Hey, I'm
Now
gonna
he's
move
a
on from
homer.
this. I'm gonna move on from this.
And F Peter Thiel.
Hey, Figma, Fig.
And the horsey wrote
they
it.
They got options yesterday. Hey, focus, boomers. Figma
27%.
got options yesterday, and then the stock lost 27% of its
What
value.
is that stock trading for now? I have no idea.
FIG, Bat.
Yeah, I got it. It closed at 88. Got as high as 130, 40.
130, I remember. 140 pre-market.
The high was 142, but I didn't want to.
88.
How are the options?
I'm gonna assume not good.
But they just came out yesterday. They're brand new baby options.
Yeah, baby.
I
I can
would-
guarantee they're not baby options.
I would wait a day or two.
Okay.
Before.
What's the volume there? What do they have the
10
volume
or
there?
20.
What
Before
do they have the volume there right now?
100 and change.
Those are not going to be baby options.
And you know what I didn't know? So their CEO, Dylan Field, he dropped out of college and then he became a Thiel fellow. And then he started Figma. So I didn't know that. So
Now you do.
now you do. So
Now you do.
he's a billionaire. So you do with that what you will. Hey, shifting to some chip news. Broadcom is launching the new Jericho chip to advance AI data center networks. It's designed to connect data centers over 60 miles apart and to speed AI computation, AVGO. Broadcom.
We don't have a position in there. That stock has been a absolute monster.
Okay.
I mean, I don't know how else you can say it's been a monster. ABGO, almost $300.
When are their earnings?
I don't know.
September 4th.
Oh, okay. So
They're
some
on the
time.
tasty trade platform. You see that little purple line? You go to the option chain there, and it has a bell. If the bell has a greater than sign, it's in the afternoon. If it has a less than sign, it's in the morning.
Hey, maybe for your podcast today.
Maybe. You want to know why? Because IB rank is 24, but AVGO has been on a tear. It's up another $1 this morning.
It's my worst performing stock of 2025.
Is it really? Interesting.
I got caught long. I got caught short
I was gonna
first.
say, if you got caught long, you're okay.
I think you're
Caught
good.
down
Short
tick.
Yeah.
first, then I got caught long.
Yeah.
And
got-
then I quit.
Slapped on both sides.
Yep,
Yeah.
I got slapped both ways.
AMD has earnings on deck. Have investors been over enthusiastic? AMD set to report their earnings after the bell today, and obviously the most dominant player in the space is Nvidia. But AMD trying to hold their own. What's the expected move, and what are
AMD's
your
done
plans?
just fine since April when it was a $90 stock. It's sitting at 178, almost 179 right now. Ivy rank of 33. I look at August options. They're good, about a nickel to a dime wide. September options are maybe 10 to 15 cents wide. AMD is tradable.
What are you going to do in there, Tom? What's the expected move?
Call skew.
It's really early in the day right now, and I do not have an AMD position on.
Okay.
I generally trade AMD. I'm thinking that I'm going to fade this one.
Okay.
I'll time you the
I'm going to take the other side of that all day long.
Yeah, I'm going to be on the short side of this one.
What's the expected move?
About $13 and change for the next 3 days.
All right, there you go. Do it. Hey, Intel. Poor Intel. This is the other side of the chip news. Intel's credit rating got downgraded. Oh no. Fitch downgraded U.S. chip makers Intel's credit rating by 1 notch yesterday, according to a note by the ratings agency. Intel is now BBB from BBB plus. That's what BAT searches on those websites. BBB plus. No. But placing it just 2 notches shy of junk credit status. Poor Intel. What's Intel doing?
I'm not having a good Intel day.
Oh no!
No. I know. I mean, today it's
up
fine.
8 cents. You have long delta. You're having a better day today than you had yesterday so far.
Hey.
I'm saying in the last month it hasn't been good in Intel.
Okay. Well, it is what it is.
Yeah,
Hey, Apple CEO Tim Cook in a global all-hands meeting hosted from Apple's HQ in Cupertino. Tim Cook says that AI is bigger than the internet, and that Apple has to do whatever it can to seize the moment. Apple falling behind in the AI race. And that Apple, he said that the AI revolution is as big or bigger than the internet. Do you agree?
Did Tim Cook just wake up or something? I mean,
I don't know.
Did he miss?
Yes, he's in charge now. He's the man.
Where has he been for the last couple of years?
Hey,
he's just calling it all hands.
It's post earnings.
This is a rare all hands meeting. I mean, he's like 2 years too late.
But is AI bigger than the internet?
I don't think so.
I don't know. I would just ask. There's no right or wrong answer. It's just an opinion.
Like, so I'll just give you an example. I used the internet yesterday, maybe, let's just say 100 times.
Okay.
For whatever stuff. I was
like, girl, what were you doing?
I probably used the internet 100 times yesterday in the course of the day. I used AI once.
How do you know that what you weren't?
I don't think it's.
But how do you know that what you weren't doing on the internet was powered by on some sort of back end, front end, side end by AI?
Because it's not.
How do you know? You literally ate a hot dog once that had plastic on it. How do you know?
If I log on to answer my email.
If I was on one of those sports shows, I'd be going ding 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 for you, Vanetta. That's true. That's true. Ding ding ding.
I'm logging on to do my emails, or
so you're counting.
I would minus Sals off right now.
So you're counting emails as the internet.
I'm using the internet, aren't I?
Ding ding ding, more for Vanetta.
Okay.
I mean, I'm counting different things. I mean, I log on.
That's really more just using Wi-Fi. I would say that's more using Wi-Fi than using the internet. Like if you want to, you're Mr. Semantics.
What does using the internet mean?
So like using the like using the World Wide Web. I mean, no, I mean World Wide Web. So I mean
OnlyFans.
So if I log on Tasty, does that count?
Why are you so aggressive?
Why are you yelling?
So I'm asking like a specific website, not just an email server.
I got that.
So an email server is like different.
But if I log on
than the internet.
If I log on to my
so like if you go to Reddit, that's you using the internet. Like if I go to Ulta.com, that's me using. So if I go to Amazon.com, that's me using the internet.
If I log on to Tasty, is that using the internet?
Yes, but not emails though.
Yes, not emails.
But not emails.
I still use the internet 100 times a day.
What is Apple doing?
It's up about 30 cents.
Poor Apple.
Poor Apple. 203.5 or so, which is.
Poor Tim Cook.
Well, poor Tim Apple. But I love when my next story literally just contradicts what you just said, because OpenAI says ChatGPT is going to hit 700 million weekly users. That's up.
How does
that
contradict anything?
Well, because you're just like, you said you used the internet 100 times and you only used AI once, and then I'm giving you numbers that 700 million people are using AI weekly.
How many people use the internet?
I don't know.
Right, it's like 100.
But I'm saying that AI use is up 4x compared to. Okay, you're
that
just.
That doesn't mean that the
always,
internet use isn't up 4x.
You're always right, I guess. I don't know. I hate it here.
5.5 billion internet users globally.
OpenAI now counts 5 million paying business customer users. We're one of those.
That's a good number. Paying. So
yeah,
there you go.
paying
that's a good number.
5 million
That's all they have
business.
is 5 million.
What? Okay. What? Yes, that's all they
Random
have.
has more people on his
sounds low to
Instagram
me.
account than that.
That's all they have. Those are just 5 million business accounts. That is not consumer accounts. These are just business accounts.
I have 5 million people on my OnlyFans account.
Okay. No one wants to see your peanut nipples.
That's on the Ocho channel.
No one wants to see your Skeletor-like toes.
You have to find.
You can't trade OpenAI, but you can trade Microsoft. What's Microsoft doing?
You can trade Microsoft. Mr. Softy trading 538, let's call it, up around $2.50 or so. Not near its high that it made about 3 days ago in the 550 handle, but certainly well off of its lows of 350 that we saw in April.
Hey, here's something interesting. Tesla's board has now awarded its CEO, Elon Musk, a new interim pay package of 96 million shares of the company. That equates to around $29 billion. That's with his previous pay package that at one point at Tesla's highest level surged into the hundreds of billions of dollars that got kind of decayed by that Delaware Chancery Court judge. And so now the board has come back with this new pay package worth $29 billion, getting into a larger discussion about CEO compensation, because the Tesla was like, hey, these are the parameters, and they were outsized goals, and he did hit them, but a judge said that it was just too much compensation. So now he's going to get one of these pay packages. He wouldn't get both. So I just thought I would point that out. What are you doing in Tesla?
I mean, it's such a ridiculous number, and
So it's either 29 billion or like 80 billion.
Something like that.
Yeah.
Tesla's sitting at 309.5, up small, 25 cents or so.
Yeah. So his other package is around 56 billion. When
Ivy rank of
invested.
10.
Oh, Tesla.
you know what's so funny is they have a headline like this: Tesla awards Musk 29 billion, and you listen, and if you listen to the radio, nobody will ever talk about this, but they'll talk for 24 straight hours about Micah Parsons and his and sitting out for the Dallas Cowboys
Oh, yeah.
because he wants to be the highest paid player, which
Sure.
he's great, and he probably
Right.
deserves to be the highest paid non-quarterback.
Yeah.
But like he's trying to get $40 million, right?
Yeah.
Whatever the number is.
Jerry Jones says no.
Jerry Jones says no, but they'll talk about it for 24 hours a day. Like if you tune into sports radio in Dallas, they will literally talk about that nonstop.
Look, I'm just happy the cheerleaders got their pay raise because those women, they work so hard.
I watched a little bit of that documentary. It was hard to watch, but my wife enjoyed it.
It's good. America's Sweethearts season
Oh,
2.
it's
Oh,
far
it's
from
good.
good.
It's great.
It's far from good. And
You're far from good.
Yeah, but 29 billion to Musk is my point, and then these guys are fighting, and he's the best player. You know, it's just crazy how the what people talk about.
Baidu is planning to expand their robo-taxis in Europe by partnering with Lyft. Baidu struck a partnership with Lyft to deploy its driverless cars in Europe starting in 2026. Uber set to report their earnings after the bell today. What are you doing? Baidu, Lyft, Uber, go.
Don't we have also Lucid earnings today?
I am sorry, Sadnoff. Yes, I know you have a vested interest in Lucid, a $2.25.
40 cent stock.
On its way to be a $2.25 stock. I'm just giving you the
Remember, I sold the 250 puts yesterday.
I understand.
Like a king.
like the boss man that you are.
That's right.
Wrong Lucid. I went to Lucid Diagnostic, which is only $1. Can't.
LCID, there you go.
Yeah, sorry about that. Lucid is $2.46, up another nickel. Timely buy.
Nickel. What are you doing in, what are you going to do?
Baidu's basically unchanged, maybe down a dime or so.
What are you going to do in Uber?
Oh, nowhere.
I have a small bullish position in Uber right now. But
Okay.
It's very small. I don't know what we're going to do this afternoon. It really depends.
It's up about 50 cents or so.
Yeah, it really depends on what the stock does today and what premium does.
Ivy rank at 35.
I usually sell puts in Uber.
Okay.
Last earnings they missed, and the stock was down about $10.
Oh, okay.
But let's see what happens this time. Stocks.
What's the expected move?
It's usually
About $6 over the next 3 days. You can take 85% of that to get the daily move.
Okay. Hey, I'm skipping a story.
Oh, you asked me Lucid's move, Tom? 23 cents is the expected.
Hold on tight.
Next 3 days, you can take 85% of that.
Hey, I'm skipping a story here, Beth. Amazon announced they're laying off more than 100 employees in their Wondery unit as part of their audio business restructuring. Amazon stock kind of taking it on the chin post earnings, down, I think, around, 17% over.
From the earnings, it's down. It was down. It was 234, and now it's 211. It's up $2 this morning.
Yeah.
Right.
Amazon acquired Wondery nearly 5 years ago as part of a push into original audio content. They're gonna then roll the remaining part of Wondery into their Audible unit. I love Wondery. Some of the best.
What is Wondery?
So they were an independent podcast studio, and they make mostly true crime documentaries, but they do also, their most claim to fame, they do own the Kelsey Brothers podcast, New Heights.
Oh.
So that's something. You've
How
heard
do
of
they
that.
own the Kelsey brothers?
Wondery Studio. So like, you know how like Call Her Daddy has a studio,
Yeah.
and like Joe Rogan is this, like, so the studios that are funneling all of the hundreds of millions of dollars to these celebrity podcasts, there's just different podcast studios. So Wondery is one of those studios. Again, I am fighting for my life over here today.
American History Tellers is one of their big shows. Dr. Death and the Shrink Next.
Dr. Death is great. Oh my God, it's just about surgeons who don't know what they're doing, just straight up killing their patients.
I don't
all
wanna know
true
about-
stories.
It's like Botched on steroids.
Yeah, kind of.
I
Yes.
don't know about surgeons who don't know what they're doing.
No, this one, it was sad. He was the spine.
You could actually, you
a
might be on
spine
there with the
surgeon
eye surgery that you had
in
done for
Texas.
free. I mean,
It was really sad. Anyway,
That guy's still in business, so he must know something.
is he still in business?
can you
Somebody
do
sued him.
anything in Amazon or no? The IV got all sucked out of it post earnings.
It's Ivy rank of 9.
Oh yeah, that's brutal.
Well, I don't go to people unless somebody else has been there and lived through it.
What?
That's quite possibly the silliest statement I've.
Yeah, but no surgeon
the
surgeon
only
or doctor
surgeon
has.
you wouldn't go to is somebody who's just out of college and hasn't had a proper surgery.
Yeah, no one has 100% survival
Who does
rate.
that? There's only one person in the world who's going to be that person. Then if he does the one, you can go to him.
Hey, don't ruin my thing, okay? I just wait to see if somebody else. I wait for one of my friends.
I just want to
like
get
to
out of
feel
here.
back to
Hey,
you.
I have a CEO shakeup. This is an interesting choice to me, but Harley Davidson named Arthur
is wrong with Harley
Stars.
Davidson? They
Harley
can't
Davidson
together.
is naming Arthur Stars as their new CEO. Who's Arthur Stars? He runs Top Golf. What? Why is he going to run Harley Davidson if he came from Top Golf? Their other CEO, Jochen Zeitz, I think he came from Puma. Get someone with industry knowledge. I am begging you. Where's my camera? I am begging you, Harley. Get someone who knows how to ride a GD motorcycle to run your business. Not the guy who runs Top Golf. All he knows about is chicken fingers. But ooh, that is a choice out of Milwaukee. Hog, what are they doing? But Sturgis going on the big rally. Right now.
Unchanged at 23 and change.
Okay, there you go.
23, that stock's down to?
I can't. That's why I said I'm very disappointed in Harley Davidson.
Hey, this is actually something cool, and I saw some of it on TikTok. But Wendy's is making a Wednesday-themed meal. The Meal of Misfortune is a wink and a nod to the Wednesday Netflix series that is coming back. The limited time meal. They have rest in 10-piece nuggets, cursed and crispy fries, and a new frosty flavor called Raven's Blood. The Meal of Misfortune coincides with season 2 of Wednesday, which comes out August 6th, which is tomorrow.
I love their idea here. Unfortunately, the movie's going to be a complete flop. I mean,
No, it's the series on Netflix. The series is actually really good.
What's the girl
With
that's in-
Jenna Ortega, already answering your question, Boomer.
Oh.
So it's this season
I like
2.
her.
I love it. Yeah, it's great. It just takes them a long time to make the
I
season.
like
you sound like a creepy old man when you say that. Okay.
Yeah.
No, she's good.
Yeah, you like when she does her Wednesday
Yeah.
dance. Yeah. Okay. I just want to get out of here. I'm just here so I don't.
I've
get
never
fined.
seen it, but I'm disappointed in Wendy's too. Under $10.
Never seen the
90.
Jenna Ortega dance?
No.
Okay.
I don't creep. Okay. I go there for educational stuff. All right.
That's not called creeping. That's called just basic knowledge.
Okay. Hey, real fast. Krispy Kreme is partnering with Crocs
This is a mistake,
for limited
too. Who
edition
thinks of these things?
Crocs, the company's announced that if you purchase a 5-pack of Krispy Kreme Gibbets charms, you also get a box of Krispy Kreme donuts. I think that's cute. D-Nut or Crocs, whatever that you want to trade. But I like Crocs. I don't hate Crocs. And look at the little donut, little charm you could put on your shoe. You know.
I like it.
The Krispy Kreme Crocs retail for $90, while a 5-pack of Krispy Kreme Gibbets costs $20. In this economy?
It's up 2 cents on this. D-Nut.
D-Nut?
Where's that trading now?
Want to guess?
I have no idea. $10. I have no idea.
$3.65.
What about Crocs?
Testing me now.
Yeah, I am testing you. CROX.
Yes, it's trading
$82.
$100.
$100. Make you want to holler.
It's been going sideways since December.
Finally today for my viral video of the day, I love when white people just come up with new sports, like I'm here for it, like skijoring, where you are behind a horse and you're skiing and you gotta do things or whatever.
Sure.
Well, I was unaware.
Sure, you got this in your public knowledge?
I was unaware
on
in
TikTok?
Colorado, every year they have a 10-mile donkey dash.
Of course.
20 pack burros race across the American West.
I like to strap
They call it
something
hauling
behind
ass.
Sasha to do this.
They call it hauling ass. Watch this.
Nothing could go wrong here. Not a
This is awesome.
It's the dumbest thing I've ever
Some of the people are just being dragged by their
Yes, that's
donkeys,
what I mean.
and then some are leading them. Hauling ass for 75 years. So I want to find a tiny donkey because we both have tiny asses, and I want to take my tiny ass and I want to do this.
My
race.
wife wants me to kind of like donate to like the little horse kind of.
Oh, the mini horse, the miniature horse, mini goat, mini
Oh,
horse.
just send your money to
has mini
TP.
horse. Yeah, there you go.
He's got what is it?
He's got-
Slimmy, right? What is it?
No, no.
The burros.
Slimmy's a dog.
The burros
got too
and
many
their
horses.
runners train
Send him-
for weeks.
Tell your wife you can send him down. She'll send her down to TP's house.
I'm gonna send TP Scott. I'm gonna send him nothing.
These are some of the most athletic and active donkeys in the world. Hauling ass. It's great. I love everything about this story. No notes.
Who has a donkey?
A donkey?
A donkey?
Lots of people. I think
donkey.
TP has donkeys.
TP does not have a donkey.
Okay.
would
This has been super fun.
You would like a donkey?
I love
if I
everything
had to
about
pick,
this.
I'd rather have a donkey than a horse.
Well, I want to know why. I don't know why I'm asking the
Because
question.
they're smaller, like less
Because
to
they're a little
feed.
smaller and I like the way they laugh.
But you can't ride a donkey.
You'd
You
like
can ride
the
a
way they
horse.
laugh.
I don't want to ride either.
It's called braying. Braying.
That's
You
great.
can ride a donkey.
Not your fat asses. Hey, that's my time, everybody. Bat, what's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live. I'll get that picture of Sadnoff on a horse. That's
Have you ever ridden a donkey?
He killed that horse. R.I.P.
No.
R.I.P.
I've ridden
Buttercup.
horses, numerous horses, sure. I owned a couple of horses. I mean,
Can we?
we'll be back in 90 seconds to listen to Tasty Live.
Woo! Woo!
For-
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little more live with confirm and send. But before we do, let's take a quick look at the market because we're running late. Even the S&Ps are up 8. NASDAQ is up 61. Russell's up 9. The Dow is trying to lead us lower, down by 2. Volatility up by 10 cents. Sadnoff. The highs in for the day at 63.77. Only 14 handles higher than where they are right now. Bonds down 4. Bitcoin down. I almost kind of think so.
You almost what?
Kind of think like that. Like the highs are in. You can sell rallies today. Am I being a bad boy?
Okay, they closed at least $10 or $12 over their fair value, and they were up another 5 last night. This is actually below where they closed yesterday, but they were. I think we were at one point up almost 20 over fair value. Now we're up about 10 over fair value. I think they're too. I like when the market bottoms when we close underwater. When it top, when we close too much premium, but we don't have time to get into that. Let's do a little confirm and send, and we'll talk in a little bit. Yeah, I kind of agree with you. I think they might have blown their brains out. I've tried to sell them all night. Didn't make her lose anything, really. They're still the same price. Tuesday, August 5th. I have a portfolio margin account, this person writes. Why would 2 identical trades with different durations require different amounts of buying power? Why is that the case, especially for defined risk versus an undefined risk trade?
I'm assuming that they're doing this in probably futures.
No, because portfolio margin doesn't apply to futures. So this is
no, but futures options it has.
No,
doesn't it?
Doesn't apply.
Isn't that span margining?
That's span, but that's not the question here. This person says I have portfolio margin. Why would 2 identical trades with different durations require different amounts of buying power? I can tell you why. The reason is because different.
I don't know the reason.
What?
I don't know the reason.
Oh, the reason is because different durations have. So the way portfolio margin works is that it looks at your entire portfolio and it determines what your risk is. So if you have risk out, let's say 2 months from now, and you have very little risk in the near term, then your portfolio margin is going to require different than if you had all your risk in the same months as all your positions. So, for example, let's say you do a 0 DT trade today. The portfolio margin is going to look at that trade as almost as an independent trade because your back month positions are not going to be offsetting against your front month positions. If you have a regular margin account, of course it's not because it never does that way. But if you have a portfolio margin, the duration does matter because the 0 DT is going to be margined because it has a different level of risk and something longer term. So the way it works, and no firm has discretion over this. It's all set by OCC. So what happens is different durations line up against other different durations, and it's all just a mathematical formula. So that's why, whether it's defined risk or undefined risk, you can have different buying power for different durations. Let's go to the next slide. It's kind of a weird case. I understand that one of the common guidelines on Tasty is to collect about 1/3 the width of the strikes when selling verticals. So how closely do you follow this guideline in your own trading? Do you sometimes sell verticals for less than 1/3 of the width? And if so, what are you willing to accept as a minimum?
Yeah, I mean, I look for 1/3 the width of the strike, because I mean, all things being equal, you're going to have around a 65% probability of success on that, risking 2 to make 1, so you're going to be wrapped around that. But I will fudge those numbers, go get a little bit more, get a little bit less, but I work around those numbers. What's the minimum that I would accept in a 45-day time frame on a $10 wide, which I should collect around, $3.33, somewhere around $2.90 to $3, somewhere like there.
Yeah, this is a tough one because
Amount of time of days is going to factor in here.
we do our best to try to stick close to that, somewhere between 30 and 35%, around a third of the width of strikes. But I mean, there's definitely times when I can't speak for Tony. There's definitely times when I'll take as little as 20% or 25%. It's not my preferred. I don't do it a lot, but there are definitely times on a wide spread where I'll take closer to 20 or 25%.
If you're making like a synthetic short call using less buying power, sure.
But we just try to be in that a third of the width of strikes. We try to be there. Mm-hmm. But we will take as little as 20%. We never go much below that. Let's go next slide. Okay, what will cause the bond market to go higher or lower? Is there such a thing as positive drift in bonds? If it's not the Fed, I'm confused by what will cause interest rates to change.
The market, supply and demand, the appetite for risk-free rates versus not having risk-free rates in the market.
Yeah, I mean, the bond market is driven like any other asset class by supply and demand. Now there are, it's a massive marketplace, and you will have certain things that obviously factor into the daily trading. Like it could be economic news, it could be geopolitical news, it could be, in some cases, you might see a flight to quality. Like people get scared of stocks, they might move into bonds. There's a lot of different things, but there's no such thing as positive drift in bonds. It does not exist. It's not like stocks where they have to go where they should go higher over time. There's no such thing as positive drift in bonds. Also, the Fed can really only do what the market allows them to do. So the Fed can try to lower rates. The Fed can say they're going to lower rates, but ultimately it's the bond market.
Guidance for lower rates.
They can give guidance for lower rates, but ultimately, and they've already done that, but ultimately it's the bond market itself that has to determine, when interest rates actually change. Again,
because there's a tradable listed interest rate right now that anybody can go to.
Right. It's a $50 trillion market, but it's all supply and demand like any other liquid asset class. Let's go next slide. When a stock breaks outside of its expected move following an earnings announcement, is it typically more violent than when it breaks outside of its expected move and it's not because of a binary event?
From somebody who's had positions in both of these things happening, good and bad, they're just as equally as violent. They're just as equally as bad. I mean, it's just P&L. I mean, that's really what it comes down to.
It's funny. You looked at Microsoft last week and you're like, oh, that was a complete turnaround. Then you look at some other stock like Reddit and it keeps going the same way. There's no way to know this. There's no difference between an earnings announcement. I mean, we'd like to think there is a difference in an earnings announcement and a regular move. But the reality is that if you knew the answer to this question, you'd master the markets. You'd literally solve the markets. I think it's completely random. I mean, when a stock breaks outside of its expected
I can tell you this from experience. When I have a breakout or breakdown that I benefit from, it's never enough. And when I have one that is detrimental to my portfolio, it's always too much.
Feels to me like it's completely random. I don't think there's any other answer to that, to this question. Let's go next slide. Do you monitor things like skew and VVIX, or do you just pay attention to the VIX?
I mean, we look at everything. I mean, I pay more attention to /VX than VIX or VVIX, but we monitor all. And I do look at, it's skew in the volatility. I know Nick and some of the other team take a real good look and a deep dive into that. I don't. I think it's a good thing to know.
I mean, we look at skew and we look at VVIX. When I saw the VVIX drop like $11 on yesterday, and I saw that I look at skew. I'm probably not every day, but at different periods when it gets really high or really low. And we don't even pay that much attention to VIX, like Tony says. We mostly look at /VX, which are the VIX futures, because the VIX futures are kind of the real spot market. So we look at
the spot market.
We look at /VX rather than VIX, and we occasionally look at skew and VVIX, but we don't monitor them. They're not on my watch list, that's for sure. Let's go to the last slide. I noticed there are two different implied volatility indicators on the platform. There is one on the stock itself, and then one on the contract expiration date. Which one do you mainly look at when selling premium, say for a 45-day trade?
I'm going to look at, I will look at all of this, but the first one I'm going to look at is one you haven't mentioned yet, which is the IV rank right next to the stock's symbol. And that's why it's sitting right next to the stock symbol, because obviously the stock symbol is the most important thing. You have to find out what you want to trade. And then the IV rank. If that IV rank is high, I'm looking for selling premium. If it's low, I'm looking to do something else. But for me, if I'm going to answer this question directly, I'm going to look at the series that I'm trading. So I would say the 45-day or the monthly option closest to 45 days. Today happens to be 45 days, so I'd be looking at the September 19 options.
So on the platform, there are lots of different implied volatilities, and we've done lots of studies on all the different indicators on the platform. But the primary one we use for implied volatility is called IVX. It's a VIX-style way of looking at kind of the far out of the money, and we just or the out of the money options, and we kind of build this model around it, and we give you what we think is the most accurate implied volatility, which equals expected move, and that's the default is based on 30 DTE. So what we do for all our calculations is we base everything on the closest to 30 days. So we use the option strikes that are closest to 30 days to determine the implied volatility for the underlying, which also then gives us our IV rank and everything else. So the answer for a 45-day trade or for any trade on the platform is everything goes to the equivalent of what our default on the platform, whether it's IVR or implied volatility, is always going to be closest to 30 days. That's how we default.
Very, very good. You ready to take a quick 90-second break?
Sure.
Even the S&P is at the lowest level that I've seen this morning since we've been on the show, up 650. We'll be back in 90 seconds. Tasty Live. Option Jive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something?
Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well, this night.
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Even the S&P is up 5. NASDAQ up 49. Russell up 7. Dow down 21.
Option jive.
Option jive. Bonds down 7 ticks, 115.22.
Yes.
Big mover on the board. Nat gas up 6.5 cents.
I would not consider that to be a big mover considering it hasn't had an uptick in 75 years.
Well, I mean, it's a 2+% move. Is typically a big move by industry standards.
Well, I have a net gas position on, and I can tell you right now, it's not a big move. Okay, and I'm long it.
That's fair enough.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. And don't forget, we're just a short little week and a half away from doing our live show in Chicago.
Where you'll be on the stage with somebody else. I mean, probably won't get a mention anywhere in any of the publications, but
I have requested that Bloomberg retract the entire article and then just do a story about you. And I've got the entire Batista family on my case, and I'm going to write I'm going to actually do it myself. And I'm going to turn it into the Wall Street Journal. It's an op-ed column about you. We're going to do our best.
I would know the end was near then.
Yeah. Anyway, we'll be at Talia Hall next week on Friday, and can't wait to see everybody. And if you're in Chicago and you want to stop by Tasty offices, we have a little open house on Thursday from 12 to 1. Just
Send an email to support@tastylive.
We're only open for an hour. If you try to stay longer than an hour, we will shoot you.
No.
Okay. Yes.
Kindly ask you to leave.
No, we won't ask them to leave. We'll throw them out the window. And we'll do whatever we have.
There it is. Reach out to support@tastylive.com to receive all your information.
Yes. All right, let's see what else we got going on. Let's go back and do this segment, Beth. Adjusting strikes for earnings.
Dun, 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 dun.
Okay, this is a little bit heavy. Let's go to the first slide. So earnings season is a time of opportunities. Anticipated price movements result in large and suddenly decaying option premiums. We're going to see that this morning in HIMSS and PLTR. You're going to see option premiums go like this. Air coming out. Expected moves derived from implied volatility, spot price, and the square root of the time frame can assist traders in navigating a range of underlyings and expirations. Here's the question for you, Mr. Batista.
Yep.
Are all expected moves created equal? Or should we look to set up earnings trades differently than more typical trades?
I'm going to say no, just because the implied volatility of the earnings is already elevated and it's making up for that.
So are all expected moves created equal? And should we look to set up earnings trades differently than more typical earnings plays? What we are going to show you over the next couple of slides is that in the end, everything is set up. Of course, the answer is everything is going to be created equal. Otherwise, it wouldn't make any sense in an efficient market. What we are going to show you is that when it comes to earnings trades, you may want to go a little wider. If you notice how I trade them, I like to go like almost 2 times the expected move.
You do.
Because I don't like to deal with them.
And those tails are a little exaggerated too because of...
the tails are exaggerated to start with.
Yeah.
But let's see how earnings moves stack up against typical volatility. What do you think earnings moves are versus typical volatility? 2x?
Yeah.
But I would say 2x. Let's go next slide. So we used 5 years of data in 20 equities. I'm not going to read them all up, but you can see them in that top line. From Apple to Exxon, but we have basically every single one. Now the reason every single one of these big 20 equities using 5 years, because we needed a total of 400 earnings announcements to get enough data for this segment. We examined overnight price changes at earnings announcements in terms of expected moves, treating up moves and down moves exactly the same. We contrasted these to the distribution of 30-day price changes as multiples of the 30-day expected move. We're trying to compare apples to apples.
Yeah.
We also examined the distribution of one-day price moves as multiples of one-day expected move. Basically, we want to see how the market reacts to earnings moves and how different that is than the market reacts to normal expected moves. Earnings expected moves, regular expected moves. In practice, if the numbers are accurate, which they should be very similar, except that the earnings moves are going to have, they're going to be bigger than the regular moves. But that should already be built into the prices. Let's take a look. So the first plot that we look at, okay, and I can't read those off to you, so you'll have to read the Beth, can you read the vertical and the horizontal plots just so people can see that?
You want me to read it?
I can't.
Earnings moves as multiples of one-day expected move.
So that's the vertical line.
That's correct.
Okay. And the horizontal line.
Realized 30-day moves as multiples of 30-day expected moves.
Okay.
So 1 day is vertical and 30 days are horizontal.
So this quantile plot, I'm sorry, not quartile. This quantile plot shows that realized earnings moves are much more frequently a large multiple of their expected move. Oh, thank you. Put it on my screen. Beautiful. So this is a little confusing, but you can kind of get the visual here. So it shows that realized earnings moves are much more frequently a large multiple of their expected moves.
Because you can see how those dots are very tight together there in the first 2/3 of the plot, right? I mean, that's what he's looking at.
Yeah, it moves differently than a regular 30-day expected move. But if you go to the next slide, slide 4, here, we explain it. So for example, the presence of the dot at 1 and 1.77 means that realized earnings moves are over 177% of their expected move as frequently as 30-day moves were one time their expected move. Okay, so this kind of explains. Remember, I said I think it's about 2 to 1
times. Yeah.
Yeah. Well, it's actually
a little less. Right?
It's actually 1.77.
One in the orders.
Yeah, one in the orders. And so that kind of makes sense. Because I figured 2 times as big. This is a little less than that, but still. So that gives you an indication of regular moves versus earnings moves. That's kind of why we go a little bit wider on the earnings trades, just not to have to deal with this. But It's all priced in, by the way. So it's not. There's no shockers.
Point I
here.
made originally when you asked me. Yes.
Yeah, it's all priced in. The expected move is so damn accurate. It's crazy. But occasionally you'll get some outliers. But 1.77 is kind of a decent number to look for over a regular 30-day expected move. Let's go next slide. So based on the overall slope of the plot, we see that large earnings moves were about as frequent as typical moves half their size, which makes sense because you shouldn't, why should earnings moves that go outside of the expected move be any different than a regular move going outside of the expected move? They're going to be about the same. Mm-hmm. The earnings moves are bigger, but they're going to be about the same frequency of it happening, which again makes total sense. And I think this is a really good plot that kind of shows it.
Agreed.
Let's go next slide. So then we say, on the other hand, looking at all the one-day moves from the past 5 years, scaled by the one-day expected move, they were similarly distributed to the 30-day moves. So when you look at this,
from a much further view away, right? Like when you're going with more data.
It's so funny. They're basically the same. Yeah. Like they're essentially saying there's not much difference between the expectations of the earnings and expectations of the regular moves. They essentially move outside of their expected range they're very similar to one another, which would make sense because the marketplace is efficient and we just have a lot of different occurrences here. Let's go to the next slide, Beth. So realized one-day moves in terms of a one-day expected move and the realized 30-day moves in terms of the 30-day expected move were extremely similar, and they were distributed in a similar fashion. That's just what we said. Thinking in terms of implied volatility, derived expected moves can help retail traders operate in a variety of underlyings and expirations without getting turned around. But earnings volatility is inherently different. Realized overnight earnings moves tend to be about twice as big, even accounting for increased earnings expected moves. While earnings season may give us many opportunities for appealing credits, trading further out of the money and being more cautious with defining risk can help shield us from overnight surprises. But the key here is that the moves are very similar. It's just the earnings moves are just bigger.
Good job. And you get that volatility. That's why the volatility, we always look for elevated volatility. A lot of times you'll say, man, volatility in here, the IV rank is way too low.
Oh, yeah.
For what's going on for the earnings event. And you'll abstain from making a trade in that. I mean, that's what you're looking at, right?
Totally.
Let's see a quick 90-second break and come back. Even the S&P's up 6 and change. NASDAQ up 59. I did not mention gold. It's unchanged, down $2.90. Silver is up 20 cents. We'll be back in 90 seconds. You listen to Tasty Live with the opening bell coming at you next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh, no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh, no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some.
You were like a Mueslix guy.
No, I like Raisin Bran.
Okay.
Special K and granola.
Just not
I like oatmeal too.
Okay, congratulations.
We weren't talking to you.
I like cream of wheat.
To me.
I like cream of wheat.
I was literally talking, and he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now, St. Bart's.
Yeah, here we go. See, I knew I'd get Tom going. I have
I've
to
only
just talk
been
about
there.
St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? Would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the other?
Tough
What's
guy.
the other?
Wait till I tell him about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute. Hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart once. I go, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're
I'm
gonna come
not
with.
sitting through it.
You're gonna tell me Elton John's no good?
Radio was
One of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no.
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
Oh, you're a freaking poser.
So then I said, hey,
What? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, and start using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Oh, we are back, Sosnoff, and you know what that means. It's time for the opening bell. Even the S&Ps are up $4.75, Sosnoff, hovering around unchanged. NASDAQ up 50, Russell up 470, and the Dow down 27. Volatility creeping up by 20 cents here, Sosnoff, 1812. Bonds down 8. Bitcoin catching a little bid here, but it's still 114.6 on the futures, 114.650, down 600. Ethereum down 43. That's a twice as big move.
Oh, no.
To the downside as Bitcoin is. Oil down 69 cents. Gold down $1, basically unchanged. Silver making a move to the upside, up 20 cents here. 0.5% move, and nat gas, you made fun of it being up over 2%. Now it's down. It's not up over 2%. It's up 0.56, Sosnoff, just under 2%. Corn, wheat, and soybeans basically unchanged.
It's under $3, okay? Let me know when it gets to 320.
PLTR for earnings trading 171, Sosnoff, up $11. That's in the same range it was over the whole morning, pretty much. Ooh, not him, it's Hims. I apologize, with an S. Trading 55 and change, down around $8. That's where it too has been for most of the morning. Do you look at your pricing on what
I got some Hims on. I got some PLTR on.
Yes.
Ready to go, man.
I know you are. I know you are.
Ready to go.
I know you are, but you're gonna have to wait. You're gonna have to wait a minute and 10 seconds or so. You know, the production team really loves when you do that. Can you do it again for them? Sorry about that, guys.
Thanks, Tom.
Anytime, Beth.
One more minute, Sosnoff. What do you think here?
Uno momento, por favor. What do I think today? I think they closed them too rich yesterday. I think they go down today.
I kind of agree with you. Volatility is upticking here. I think we got to keep an eye on that. 1810 up small, up 15 cents or so. Even the S&Ps. Last time we were in this range, volatility was pretty close to where it is right now. Maybe a skosh lower. So keep an eye on volatility. Volatility starts dropping, then we'll get some footing to the market.
I mean, I haven't.
What do you think about your bonds? You haven't done anything there. 115.
I got flat bonds. No, I'm a buyer in the 114 handle.
Right. I mean, they're a tick off their lows at 115.20. They got to drop another half a point for you to do something.
Yeah, I'm a buyer in the 114 handle bonds. I'm flat on right here. We're gonna open in 1 or 2 seconds. I'm a seller. Probably a seller of futures somewhere up here.
Coin down 12 as a bucker, Sosnoff. Hims down 8 and change. I don't hear any dings from you yet, my friend. A Caterpillar down $6.70.
I think they had.
Costco, you pig, down $5.60.
I think Caterpillar had earnings, right?
Caterpillar had earnings this morning. You are correct, down $6.70. CRCL.
Yeah, they just hit the NASDAQ about 40 handles. I thought there was a chance we could get something off up there, but
upside PLTR up 10, Carvana up 5, 4.5, MU up 2, Amazon up $1.60 or so, Oracle up $1.60. Place your bets, Sosnoff.
Place your bets, sir.
Even the S&P's up 3.5.
All right, first thing we're going to do is we're going to go to Hims. Hims. I am, oh, this is going to be a good one.
Markets are a little wide in it before you count all your chickens before they hatch.
I'm not counting 8 chickens yet.
Sounds like you're counting chickens.
Oh, I got a chicken.
Oh!
I caught a chicken.
Thought you were getting a labubu, but you caught a chicken.
I don't want those stupid labubus, but I got myself a little chicken in Hims. Nice one.
Very nice.
Let's see PLTR now. Next one.
How does Daddy do it?
How does Daddy do it? You know what? You go 2 times the expected move, and Daddy can get away with it. I'm not sure PLTR. I don't like the fact that it upticks, but we got a couple little. Come on, PLTR. Don't get any ideas.
No hero stuff.
No hero stuff. I mean, you were crapping out a minute ago. Just crap out like you're supposed to. Don't keep going higher. Just got to crap out.
Easy there.
And let's see in the back month.
Yes.
I'm looking at my PLTR position. Definitely don't need this thing to go to the moon.
No moonshots, please. No moonshots, no whammies.
Yeah, PLTR, let's see. Oh, PLTR
is up 4.
PLTR is a good one, but I don't need it. Stop, boys.
PLTR up 14 and change. Even the S&P's up 3, 250 now. And NASDAQ up 12.
PLTR got ahead of itself, you know.
Russell up 7.
Tried to close.
What do you want? The nickel or the position? Obviously, you wanted the nickel.
I tried to close it on the opening.
You try equals failed. You just do. Okay,
well.
like Yoda.
Oh, thank you so much for your help.
Oil down 78 cents. Gold up $1.80. Your beloved bonds haven't moved, but they are on their bottom tick.
My beloved bonds.
Your beloved.
My beloved bonds aren't that beloved, just so you know.
I hear you.
Oh, that is a PLTR trade.
326. You closed your 122.10.
That was in September, right? Yes.
That is correct.
Now we have one last position on one straggler.
In August, right?
We do have an August straggler on, and we need a downtick, sir.
Hims down $7 and change, and PLTR up 14.5.
PLTR, we're done.
Got your downtick.
Got my downtick. PLTR turned out to be a nice winner. Remember. Somebody's gonna. Somebody
make it 20 cents. I was gonna ask you.
Somebody's gonna owe Tom $20.
I know it's gonna be your last one.
Okay, I forgot about this. Tony and I made a bet yesterday.
only because you're gonna win it now? No. Let it sit. I'm not interested in closing it.
You don't have a choice. The bet is on the opening.
I don't remember any of this.
What?
I don't remember any of that bet on the opening thing.
Pfizer, I
made 2 cents.
I don't think I made anything yet. Hold on, we're gonna see. See who's gonna win here. We made a bet on Pfizer if I can make $20 in there.
You made 2 cents.
And Pfizer.
Oh my God! You got filled at 109, and then you got filled
a different trade.
Oh, 10 days. 10 days. Sorry.
Oh, nope, I didn't make $20. I made $16. So you owe me 20. I took the risk. We made a bet on the close about earnings and Pfizer. I was like, I don't think you can make $20 in there. And I was right. You couldn't. You could make $16 if you were hard way. But PL2,
it's close enough.
PL2R was a good one, and HIMS was a good one. So earnings last night was good. That's all we did, right?
That's all we did, my friend.
Okay. Biggest.
Look at that. 5-6 minutes into the day, you closed up all your earnings trades. You did good there. You got rid of your futures. You did good there.
Yeah, we scalped a few futures overnight. Just looking at our other positions, nothing much.
Nothing, honey.
ENPH continues to be a pig. Coinbase.
Big lotto.
Oof. You know, I'm not even bullish in Coinbase. This is not a good.
Coinbase is down, right? Down about $10 now. Sadnov. Coinbase traded as low as 303 and change. It's 308 right now, so it's about $5 off of its lows.
Yeah.
IV rank of 15 in Coinbase.
I mean, Coinbase is. I just rolled calls down.
Costco down $14 on your executive their membership that you have.
Is it down 14?
Mm-hmm.
That's not good for my Costco position. Just so you know.
My Costco position.
A lot of these stocks are not good. AMD has earnings tonight.
My Taiwanese sources say you butchered the trade. It was an easy 20 to 21 cent profit. I should owe you nothing.
I did not butcher the trade.
Took it off fast.
ENPH, because that was the deal. We take it off on the opening.
I know, but they said you just paid up. You didn't squeeze it like you normally do.
That's true. That's true. I'm sorry. What is the? What else has earnings tonight?
AMD, Amgen, Uber, SMCI, Disney, McDonald's.
Uber. You do anything in there?
I have not done anything yet.
Okay. AMD, Uber, and SMCI. We have not traded SMCI in a really long time.
Yep.
SMCI stock is trading for $58 as a 19 IV rank. It has a 3-day expected move. Wow, nothing. What the hell happened in there? That stock used to fly around.
Used to be something.
Oh my God, that stock has no. What the hell?
Sadnov, you said AI has no use for practical application. Well, here's where you're wrong, Sadnov. I was able to upload that video of you the last time you were on a horse. Remember when you killed that service horse, a police horse?
That's not AI.
What's that?
You use AI for that.
No, of course not. Well, here you go, Sadnov. Here are you killing that horse, Sadnov. Here you are riding it, and then the horse just
That is awful.
Just had to be put down, Sadnov. It just had to be put down. I'm sorry. Now that's loaded to Gronk for all history to remember. Chris, I thank you very much for helping me out on that, making my dreams come
I hope you're happy.
I am happy. I am completely happy with that.
I hope you're happy.
I am very happy with that, Sadnov. See that? This AI stuff is good.
Yeah, right. S&P's up 10. They're still a little juicy.
Yeah, cancel crash. Volatility still up 15 cents.
Yeah,
Perplexed?
I'm not perplexed.
What are you then? Motivated? Not motivated? Bewildered?
No, I just want to lay out some. Kind of want to sell some futures up here.
You just did.
I know.
Some NASDAQ-y futures.
I don't want to sell more. I'm surprised that they Are this
But a little
strong?
bit of a bid here, up 12, back to where they were pretty much pre-market-ish.
Yeah. Just gonna put some orders in. I think they're a little rich, but we'll see. What are you gonna do in Uber?
Oh, Uber, let's take a look at it.
I definitely don't want to be short calls in there. It hasn't worked in the past.
Uber up $1, 89.50, Ivy rank of 35. You're gonna go to the 3-day with a $6 expected move. You like to go $12. You're looking around 92-ish.
What are you looking at?
If you go up $12, I'm sorry. If you go up $12, sorry, you're looking at 102-ish. Can't do that.
There's nothing up there.
Can't do that.
Yeah, if you're looking, I kind of
a guy like you.
Yeah, a guy like me.
94, 98. I know you don't want to be short calls. 1 by 3, Sadnov got your name written all over it. Get you your break even over 100.
I'm leaning.
That's where you're going to be.
I'm leaning on selling 2 calls and 2 puts and 1 call.
Yeah, because you're afraid of the call side.
I'm more concerned about the call side in there.
Mm-hmm.
Yeah. Okay. Well, at least we got flat on our earnings trades from last night, and we've getting a little bit short up here. Yeah, we're short. We'll see what happens.
You came in a little bit short.
Came in a little bit short. I'm getting a little shorter.
Mm-hmm.
Haven't got filled on the S&Ps. Got filled on some NASDAQ futures, but I'm just going to scalp those. Coinbase only down 7 now.
Catching a little bit of a bid.
Yeah, PLTR is only up 13.
Mm-hmm.
Let's see if anything else jumping off the screen. Not.
Sadnov, you sold some Lulu puts back 7:30 and
It's been a crappy trade.
8:01.
Yeah, what about them?
Well, it's not a crappy trade. It's trading 525. You sold them 525 to 475. I'm just wondering, are you keeping that on? Some people did a iron condor. Some follow you into puts. They're just wondering.
I hate Lululemon, but I'm not taking it off yet. Ivy ranks
Lululemon for directional play.
Hate Lululemon as a
short
company.
puts, which is a bullish play because Lulu hasn't had an uptick and you're a contrarian.
Just doing it as a contrarian play. I'm staying long Lulu.
Got it. All right. Well, let's take a quick 90-second break. You want to?
Sure.
We got to let me explain next. You're with Chris. We'll be back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live. Even the S&Ps catch a small little bit here, up 13. Volatility still up 16 cents, but all that means nothing when we got this man in the room. Chris is in the house. Let me explain. How are you, Chris?
Could be better. Could be long stocks. Not long stocks, so not doing better.
I don't know what the hell you just said. Could be better. Could be long stocks, not long stocks. English.
So not good. I'm missing this ad. I'm having FOMO, Tom.
Okay. Got it.
You're allowed. That's
You're allowed.
okay. FOMO's
That's okay.
real.
Yeah.
FOMO's real.
Yeah, no problem.
Yeah.
It's okay.
Well, you know, Tony, you especially, Tony, I saw a very nice Bloomberg article in recent days. Some very handsome photographs of. Yeah, I had to. Some very handsome photographs of Tony in that Bloomberg article, Tom. But
it was.
I couldn't see it because our firm distributed a copy of it that was behind a firewall that I would have to pay to see my name not being mentioned in the Bloomberg article. That I was on the stage with Sosnoff with an instrumental part of it, maybe 25 to 50% of it. But that's okay. That's okay. I spoke to her too. It's okay. I'll never speak to her again. That's okay.
They referred to you as Tom's furry sidekick. I don't know what that meant, but it was an endearing article, I think, about everything that we do here on Tasty Live. And Tom, there was a particular section where it went into your controversial opinions on the market. In particular, one about active versus passive investing. So in today's Let Me Explain, I say, let's forget about the news flow and anything that's going on in the market for a few minutes and talk about your 10 most controversial trading philosophies that if another article was written about you and especially Tony, would these quotes be in there? Shall we do it?
Let's do it. I've done many a debate and many an article on passive versus active. But let's fire away, man. Let's see. Let's see what you got. I have no idea.
Let's just start with the idea that buy and hold is dead. In a world of leveraged ETFs and zero commission trading, is buy and hold investing a strategy for dinosaurs?
I mean, no, buy and hold investing is not dead at all. It's not a strategy that we embrace, but it's definitely not dead at all. I mean, you know, it'll be around till the end of time. Buying and holding any asset will be around forever. So it's never going to be dead. I'm not endorsing it. I'm just saying, you said, is it dead? And the answer is no, it's not dead. It's going to dominate the industry into perpetuity.
Why choose active over passive then?
Well, that's a different question. I mean, and I thought that's where you want to go with the discussion. For me, it's everything that's related to active trading. If you're interested in the world of finance, if you're interested in the world of investing, I don't think you learn anything from being passive. And so the active side of the industry is where you basically gain all your knowledge, all your know-how. And it depends how much you value that know-how. But I think, between the strategic side, the decision-making side, the risk-taking side, all of those to me are where the value of active trading is.
Tom, if markets are really efficient, how do strategies based on IV rank and theta decay consistently outperform in your mind?
Nothing consistently outperforms. What they do is they optimize things. So what we try to do is to optimize your chances. Optimize your level of success. It's like anything else. It's like we don't know what's going to happen next, but if we think we can give you some kind of, optimization, some kind of mechanics that can help you to potentially outperform the person next to you or somebody very similar to you, then we think that that's very valuable. So it's basically statistical optimization rather than it's anything else. It's not edge. It's not edge. It's really just mechanics.
Do you think then that trading psychology is overrated, if you will?
Yes. I don't think that trading psychology is anything. I really don't. I think the concept of trading psychology is just somebody came up with the term trading psychology because they wanted to sell something. But the reality of trading is that it's a game of mechanics. It's a game of know-how. And, the pieces that are psychologically tough, you're able to overcome those with know-how.
Not with old age and trickery?
Sometimes
Some potions. But I think, if I could just push back on that, isn't staying mechanical part of trading psychology though, Tony, right? Having the discipline to say, nope, I don't care that I'm losing money. I don't care this trade worked out. I don't care how I feel. The stats say do this, play the probabilities.
Sure.
Gotta jump back in.
Now here's where you start taking the liberty of, what it means to you. I mean,
Okay.
Yeah, I don't
think you're wrong. I'm not saying you're wrong, but here's where you get into that gray area of taking liberty of what you think it means. Not just you, I mean everyone.
I don't consider that psychology. That's all. I don't think it's the same thing.
Okay, fair enough. Well, I guess different risk assessment, right? Yeah. I know myself, for example, like when I'm letting this trade run. No, that's my loss aversion. The mechanics say cut the trade, don't give in to that.
I think mechanics are very different. Mechanics are very different than psychology. That's all.
Okay, sure. One of the things that I hear you guys both frequently say is something like fundamentals don't matter in the short term, maybe ever. Why bother with earnings reports, balance sheets, economic forecasts if IV and price tell you everything you need to know? And I say this as you guys explaining this to newer traders who are looking at IV for the first time.
We don't bother with them other than for the trading opportunity. So if we weren't able to quantify and we weren't able to put context around the pop in volatility due to an earnings report and look at that as an opportunity based on liquidity, based on lots of other things, available strikes, price of the underlying, whatever it is. If we weren't able to look at an earnings play as an opportunity, then the idea that there's an earnings there would have no value to us. We don't care. Like if you name some stock that has earnings today, if it's not liquid, if it doesn't have high implied volatility, we couldn't care less about the earnings. The earnings are just, any kind of a binary event for us is just an opportunity. And I don't think we've ever thought of it any differently.
I think that's ultimately the big takeaway there, though, right? These are just binary events, and we care about binary events if it's a drug trial for a pharmaceutical company, right? If the results of that come out, if it's a non-farm payrolls report, if it's a Fed meeting, if it's Apple earnings, if it's going to impact price action, we care about it. If it's a tree that falls in the forest, why bother?
We don't. We are always looking for opportunity, and some opportunity comes. It's unplanned. There's no way to know that opportunities are around the corner. It's happening next week, whatever. There are other opportunities out there that are planned, and the planned opportunities we talk about because we can, but we don't look at them. Like, you tell us there's an economic number tomorrow, like unemployment. The unemployment number itself doesn't have any value to Tony or myself. It's the fact that there is an unemployment number that has value. It's the noise. Whatever creates noise has value to us because we consider the noise to be opportunity. If it's noise that we don't know that it's coming, then it's even more interesting because we think there's even a greater advantage. Like, the problem with known noise, like a binary event like earnings, is that everybody can prepare for it. So it's more accurately priced. That's why earnings don't have a lot of edge, but they're interesting to us, but they don't have that much edge. Yet you flip the cards over, and if it's something that's not known and it creates a lot of noise, then there's even more opportunity because there's a better chance that it's, a little more violent, that it's got a greater magnitude to it, that it is unplanned. So that kind of noise is even more exciting for us.
Let's switch gears here. Tony, I've heard Tom say things like nobody understands risk, not even the regulators. Risk metrics like VAR or margin requirements may not be true representations of risk exposure. Tom, do you stand by that statement?
Hold on. I'm not exactly, I'm not, when you say nobody understands risk, I think there are lots of parts of the world of finance where people don't really, where they have a really hard time with risk. But if you're asking, like, do firms like us, do the listed financial markets understand risk? The answer is yes. We price risk very effectively. We couldn't build a brokerage firm where we have, where we're processing 1 million trades a day, and where half the trades of this firm are undefined risk, or 3/4 are undefined risk. We're making 50 cents on each, contract or whatever it is. We wouldn't be in business if we didn't understand risk, or if the capital requirements weren't accurate. So the industry, the exchanges, brokerage firms, the people that process the trades, clear the trades, and manage the risk on the trades, they're really good. When I said people don't understand risk, I'm talking more about, like, when you go back and you look at certain things like, different banking crisis, when we did credit default swap crisis, and we look at, when banks and brokerage firms ladder out, interest rates, and they don't understand the risk of, inversion, just as an example. I think, or, yield curve inversion, that stuff scares me. But if you're asking risk here at Tasty, no, I'm not scared.
And that's Tom is just going very broad with talking about the banking crisis of yesteryear. I mean, I think when he was saying this, it was more towards like what you can and cannot, do by the regulators in like patent day trading rule, or in other type accounts that are limited cash accounts and stuff like that.
Right. Yeah.
I think that's what he was talking about. They don't understand risk. I mean, it really, patent day trading rule is so easy to argue against having it, because how could you say to somebody, you're going to be penalized if you take off this trade, even if it's a winning trade, if you take off the trade, even if it's a losing trade, if you're mitigating risk, how can you say?
I mean, that's a different thing.
That's the dumbest thing.
We've had issues with regulators over nuanced part of the business. Like pattern day trading is a perfect example Tony just gave you. Not letting a customer close a trade, otherwise their account gets shut down, is not what the rule was intended to do. But the rule was written in 1999, 2000, when was a different kind of trading. Electronic trading really didn't exist then. It was just getting started. I mean, there's other rules that don't make sense, like when you're required to put up capital that's greater than the risk in a trade. I mean, like stuff like that, it's just outdated. It doesn't make any sense. So, over the years, we found a little kind of cracks in the ceiling, cracks in the floors, as you say. And some of those things need to be corrected. But, and as late as last year, we just had issues with the crypto space, where brokerage firms were required to match customer deposits on a one-to-one level, which makes absolutely no sense. It's just a waste of capital. So there's been a lot of regulatory issues over the years that needed to be corrected. But overall, I mean, the industry understands risk, but there's just been these little nuanced cases that have to be addressed, and we've been too slow to address those.
Do you think that we're on the path to addressing them? I saw that the pattern day trader rule could be changed.
I mean, we've been trying for 15 years, literally trying for 15 years. Scott and TP made their first appearance like 15 years ago in front of the regulators. JJ and Scott have been doing it for the last 8 years nonstop. I mean, it's taken 15 years. I mean, I don't think that's, let's put it this way, I don't think that's a great accomplishment on our part. I'm happy that we're finally getting closer, but the regulators have been incredibly slow.
But I think that's what you meant when you said they don't understand risk, because if you understood risk, you would never come up with that type of rule.
100%. 100%. Right. I mean, listen.
Thank you, Tony.
But overall, I don't want to make this thing. I don't want to get this thing into. Yeah, I don't want to make it bigger than it is. I mean, like, we understand customer risk. There's just little nuance things that have messed things that need to be better. That's all.
If we could just round this out on your cherry bomb, Tom, which I thought was interesting this weekend. Obviously, the news on Friday that a bad jobs report provoked the firing of the BLS commissioner raises some eyebrows.
Hold on. Don't cover him now. We got him right where we want him. Don't cover your NASDAQ futures. Show some intestinal fortitude.
Well, don't you worry. Okay, I got plenty of deltas. Right. Go ahead.
I'm sorry.
Sorry, Chris. Go ahead. Sorry.
Ilya, Dylan, and I were talking about this on Overtime yesterday, and we all independently rounded into the view that we're not sure that this matters much from a trading or markets perspective.
Agreed.
If the data have been unreliable, maybe it leads to more volatility. But the whole point of all these data releases, they're common reference points, right? Kind of the way that Nielsen data allows us to view television habits, and we have an understanding that this is a baseline that we're all looking at. The non-farm payrolls report is a consensus view on what we all believe to be the labor market looking like. So as long as all traders are still looking at the same number, why would this impact us from a trading perspective? And there are other considerations, of course, which you got to in your cherry bomb, but from a trader's perspective, how would this change how we approach non-farm payrolls or any other data release?
It won't. I mean,
okay.
It won't unless there's, I think from an immediate reaction standpoint, unless there's no confidence that, unless there's no integrity to any number or anything like that, and people just making up stuff, I mean, that's something different. But assuming that doesn't happen, sure, it won't affect traders. I mean, the marketplace will figure things out and normalize everything in a matter of seconds. It always does. So yeah, I mean, from a trader perspective, I'm not worried about it. The markets do require a certain amount of integrity, because basically, what is a market? I mean, it does require a reasonable amount of integrity, because everything is all paper, it's all electronic. You have to believe in everything. I mean, since the beginning of time when we got in this business, it was all about the integrity of the space. So I think that's important, but you're right. I mean, the market will figure things out almost instantaneously. The money flow is too big.
That's where I'm at. I mean, it feels like it's important news for other reasons, but for traders, we're all going to be looking at the same numbers still.
It is important news for other reasons, because there's never been a time in American history where you killed a messenger. That's a dictatorship type, situation. But I'm not that worried about it yet.
I'm not trying to go down that path.
Yeah, I'm not going down that path either. I'm just saying that I don't think that at this point it's an issue on the trading side. There's a whole different discussion you can have about politics and all that kind of stuff. But as for traders, no, I don't think it matters. Like, did it change what the bond market's going to do or did? No. Did it change what the stock market did? No. None of that stuff is relevant. So I don't think that's the case.
Tony, I assume you have a similar opinion.
I think I echo with Tom's.
Which is a good thing, by the way. The fact that the market is bigger than
U.S. Steel.
Than that story. I don't even know where U.S. Steel is trading right now. But the fact that the market's bigger than that and that it can digest that, that's a good thing.
It's also a good thing that ISM services report came out weaker than expected, Tom. That's
why the S&P's
Nasdaq position.
That's why the S&P's just sold off about 15 handles or so.
10 o'clock Eastern on the dot?
Yeah, and the Nasdaq sold off a little bit, not as much, only about 30 handles.
Volatility upticking.
Yeah, the bonds haven't moved though, which is kind of weird. And looking around at just different stocks, to see if there's anything crazy. PLTR is still up 13.5. It hasn't moved. And HIMS has actually rallied all the way back.
Can't keep a good stock down.
Can't keep a good HIMS, hers, and or whatever it is down. I haven't seen. I've been looking around. I haven't seen much else here. What's happening? I don't know, Tony. Is there some other stock I'm missing?
No, I mean Palantir is still up $13 or so. OKLO has caught a bid. It's up $7 and change. Reddit's up 3 and change.
OKTA, I have a position on. Is that the same thing?
No, that would be a different stock since they have different symbols. Costco down 17, Coin down 11, MSTR down 4.
Check out AI name Axon plus 14% right now.
Which one?
Axon. AXON.
Ooh, I don't trade that one. Don't know. I'm looking to see, and our earnings plays. Uber's up big. And AMD's unchanged. So we haven't done anything in either of those yet. All right, Mr. Vecchio, thank you so much.
Thank you for your time, my friend. We're going to take a quick 90-second break and come back. We got more Tasty Live at a market measure next. Even the S&P's down 4.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. So the evening S&Ps are basically unchanged. Volatility up 40 cents, 10 cents off its highs. Peculiar? I don't know. Sounds off. NASDAQ up 49 and the Russell up 12. Russell actually the leader of the clubhouse.
Yeah, Russell's strong today.
Dow is the weakest, down 60. Bonds down 5, catching a little bid.
Yeah. I mean, I don't see much here this morning.
No, we have a little bit of a tug of war with the market. I thought it would be a little weak with volatility upticking like this. We haven't gotten there yet. I mean, we're 10 handles off the highs.
Another little rally in Reddit. Oof, that one's so.
Can't keep these stocks down, Sosnoff.
Can't keep the
up $4.60, 206, flirting with its old highs around 220 something.
Can't keep Reddit down.
Can't keep Reddit down. Nope.
And let me tell you something. Reddit, not a great trading vehicle. It was okay going into earnings, and
August markets the calls are wide, 40 cents. Yeah, I'll give you that.
Wide.
September or even wider. Yeah,
they're wide. Mm-hmm. And you go to put a spread in there, and all of a sudden,
everything moves.
Yeah, you'll see the markets widen out. Like you'll do it 10 cents worse than you thought. Let's put it that way.
Yeah.
Me not happy about that. I'm just looking for some. You took me down in Costco.
I took you down in Costco? I only followed you, but days after you, and you took me down.
Took me down.
Costco's like a reverse indicator, so it's down almost $20, but the market's not up. I don't figure this out, Sosnoff.
Okay. Anyway, we'll do a little housekeeping here. S&P's down $5, but I kind of want to be short.
More to come, Sosnoff.
I know, I think so, and I want to be
short.
short.
Hang on.
I got plenty of short deltas.
I know Tesla Fortitude. I know you get short delta, but
yeah,
more leverage.
Yeah. It's 9:13 in the morning. Coming up, we told you about the Italia Hall in a week in Chicago. Looking forward to our local event, but we also are going.
Sosnoff, will there be a shuttle to and from your house?
No, but the after party will be at Tony's house. The after party. Breakfast, brunch.
That's house after dark. That's what we're calling it. Yes.
Well, you are having a pool party that weekend.
Yes, of course. Yes. All week long. Kidding me?
Yeah.
Why stop at the weekend?
We're going to be also, you know what? I think we're giving away Cubs tickets too.
Awesome. That'd be great.
I think we're going to do a Cubs ticket raffle at the live event.
The prizes and surprises never stop at Tasty.
Which we're going to give away a couple of Cubs tickets, a couple of pairs of Cubs tickets. We're going to, for that weekend. We got a bunch of other stuff going on. We got an open house. We got, this weekend, Mike, Nick, and Katie are going to be in Seattle. So if you haven't, if you're on the West Coast, you want to check out a Tasty live show, Mike, Nick, and Katie. Mike and his whiteboard, the whiteboard tour. So Mike, Nick, and Katie will be at the Crocodile in Seattle this Sunday.
tastylive.com/events.
Yeah.
Sign up. Still room.
I believe the event, doors open at 5. The show starts at 6. And Beth, we should put that on there. But tastylive.com/events. Sunday, August 10th in Seattle, the Crocodile. Crocodile sounds like it's going to be a cool place.
It does. It does.
I don't know
Cooler
what's
place
there.
than we go to.
I don't know what's there exactly, if they have real crocodiles or not. But we'll see.
Crocodile tears.
Anyway, Mike, Nick, and Katie, support the team. Check them out. They'll be there on Sunday, and then Tony and I will be in Chicago at Talia Hall on next Friday. We have an open house on Thursday afternoon. And then the following week, I'm going to be in Mexico City. So throw it up on the board. We're getting into the travel schedule. I'm going to be in Mexico.
I can't look at this picture.
Why?
Who is that?
It's my picture.
What kind of, they took your jowls in by 1.5 inches or so. They put it on your chin. They gave you one. I don't know somewhere else they added some little girth, and then they gave you some big hands. Cassie, what are you? She owe you money or something like that?
Wednesday, August 20th at 6 p.m. I'm doing a keynote on something. It's a brand.
Your head's 2 sizes too small. Come on, that's not your head.
I'm doing a keynote on something that I haven't done before. It's called AI.
I could fit that head through the doorway. I can't fit your head through the doorway.
It's called AI digitization and the future of risk taking. Doing the keynote. It's a risk conference in Mexico City. If you would like to come, you're more than welcome. If you're going to be in Mexico City or you're in Mexico City now,
it's a paid for event, but it's free if you're Tasty Trader.
Yeah, it's a very expensive event actually, but since we don't charge for any of our stuff, anybody wants to go to see me, we have a bunch of tickets. Happy to give them to you. Just drop us a note. Let's see, Beth, who are you writing to for this?
Well, you can use a Tasty code right there, Tasty RMTC30.
You can. Or you can just drop an email to
support@tastylive.com.
Support@tastylive.com. We'll send you all the information.
You can get almost anything you want done on the Tasty Live side if you send an email to support@tastylive.com. I wonder who does that.
Support@tastylive.com.
That person their props.
So just drop us a quick email and we'll take care of you. Last year we had about 10 people, 10 Tasty Traders come out to an event I did in Mexico City. It was awesome. But if you're down there and you want to check it out, I would come to Wednesday night, August 20th. We're going to be doing 2 shows in Mexico City and then 2 events in Guadalajara the next Monday and Tuesday of the following week.
Casa Bonita, Guadalajara.
No,
it's just before the guys went in the water.
2 different places.
Oh, you sure?
Yes.
Casa Bonita, Guadalajara.
I am going to be in Guadalajara. We do support a university, a business program at university in Guadalajara. They have a huge trading program, and we're going to be down there talking to the kids and graduate students, PhD students, undergrads, and it's a lot of fun. Anyway, that's coming up. 9/18. You ready?
Sure.
It's booze, new low.
Almost 44
now,
and a half.
What are the chances they're down? Because we were up 100. We're up 100. Sorry, we're down 100 on Friday. We're down 107 or 110 on Friday. We're up 104 yesterday. What are the chances that they're down anywhere close to 100 today?
0, Sosnoff. I just gave it to you. 0.
Oh, 0. Okay.
Yes.
Tony says 0. That means there's probably about 25% chance. Let's see what we got here. I
do think we're going a little lower.
When the bond market got it right. Do you remember when the bond market got it right, Tony?
No, because I'm the world's worst bond trader. So I don't remember when bonds get it right.
Bonds got it right. Bonds got it right in 2025. TLT is roughly flat.
Bonds got it right this year?
So far. Here's what we're going to show you. Because everybody said, because the reason we're doing this is because everybody's like, well, you know, how do you know that bonds got it right? Like, you know, the Fed's supposed to cut rates, but they haven't cut rates. And, you know, how do you know bonds got it right? So we're going to use TLT instead of ZB because a lot more people can trade TLT. Even though ZB is a better bond product, TLT, anybody can trade it. It's smaller. It's about 1/11th, 1/12th the size. So 100 shares of TLT is about 1/12th the size of a bond contract.
Yeah, and it's more of a 20-year, not a 30-year. I mean, what bond we're talking about?
Yeah, but it's
shorter
the
term,
same.
longer term.
They track each other perfectly. TLT is roughly flat
Not
for
perfectly,
2025.
because it's a 20-year.
I know, but the actual basket of bonds is mostly 20s. So TLT is roughly flat for 2025, having fallen about 1.4% after long-term yields jumped to 4.79 in mid-January, then retreated to the low 4 range on softer data. A sharp April sell-off amid recession jitters was followed by stabilization as markets priced rates cuts in to their bond prices. So how expected was this move based on observed implied volatility from earlier this year? How expected was this move? Well, since we titled this When the Bonds Got It Right, I'm going to say pretty damn expected.
No fair, you peaked.
Let's go to the next slide. So we did a study. We looked at the entire year, 2025 to present. We looked at the price changes, the daily implied volatility, the 30-day historical volatility. The implied volatility is what's expected. The historical volatility is what actually happened. The implied volatility should be higher than the historical volatility because what's expected to happen should always be a little bit higher than what actually happens. We computed the percentage of time in 2025 that realized price moves in TLT were within the expectation given by implied volatility. So that's IV minus HV equals overstatement. What do you think it was? How often do you think that prices are in line?
On a percentage basis?
Yeah. TLT prices. How right do you think they were?
Almost 80%.
Okay. I'm guessing that you're probably going to be pretty damn close. Okay. Let's take a look at the next slide.
NASDAQ down 2. That's we're told.
It's kind of a crash.
You missed that on Friday, I know.
Yeah. For most of 2025, TLT's implied volatility sits well above its realized volatility. In fact, here's crazy. You said 80%. Its IV exceeded historical 95% of the time in 2025. That's a ridiculous number, by the way.
More than I would have thought.
Yeah, well, more than anybody would have thought. 95% of the time, to get implied volatility over historical volatility, 95% of the time, that's rare for anybody who prices volatility in any product. Usually it's somewhere around 80 to 85%. 95% is right, which means that for all the chatter about bonds and everything all year, bonds have been priced like to freaking perfection. That's why we say when the bonds prices got it right. Let's go to the next slide. So the high overstatement rate may be hard to believe because bonds have traded lower for most of 2025. However, when taking into consideration the size of implied volatility relative to the seemingly large moves, we see that the average weekly move in TLT up or down was 1.8%, while the expectations were around 2.5%. Now, again, we use TLT here, but the bonds are going to be virtually the exact same. So there's, on the first column, it's the expectation for the weekly moves based on monthly implied volatility. We always use the 30-day. And then the reality for the average weekly moves based on historical volatility, what actually happened. Again.
So sad enough, why can't I make any money in TLT?
You're just not a good trader. I mean, bonds have been our best trade of the year.
Your best trade of the year because you've been trading them directionally, and every time they go lower, you've been buying them. And they've gone nowhere all year long. They're basically the same price as the beginning
Well,
of
if
the
you
year.
sold premium in TLT, you should be fine.
Well, according to these statements, you should be, yeah. But it's I'm going to give you my answer. 15% monthly implied volatility is your answer. That's
TLT.
You have
so
to
I'm. I have not
directional
looked
bias.
at my TLT. I've had short premium on in TLT the entire year.
Mhm.
Small, but I've had short premium on the whole year. I've not looked at my P&L once in TLT. I just looked at it, and
I can validate it if you're going to lie here. Don't lie.
My P&L is very good, and it represents exactly what it says here because it hasn't moved all year. If you're trading Tasty methodology and you have 95% implied over historical,
you should make money.
You should make money. If you didn't make money, you do.
Well, you do stink.
So if you didn't make money in TLT, you stink. That's all I can say.
Yeah, you are. Yeah, you are.
Okay, because it has worked. That's it.
Yeah, TLT hasn't gone anywhere. Yeah, I agree.
Yeah. And I've had no
That's all
direction on
good
in
numbers,
TLT. It's just been pure.
You're a little pretty short.
Sure.
Mm.
Let's go next slide. With the current 30-day expected range for TLT, we see a 4% expected move. Over the last year, 88% of the 30-day moves saw a price move smaller than 4%. It's a good starting point. It's a really interesting number, actually. So, while TLT's downward pressure might initially spike implied volatility during periods of uncertainty, sustained directional moves typically lead to volatility compression as the trend becomes predictable, which is exactly what we've observed since April of 2025. In reality, TLT's implied volatility has been larger than its daily historical volatility. Implied is what's predicted to happen, and historical is what actually happened. Roughly 95% of this year. This means the velocity of actual moves on a weekly and monthly basis in TLT was smaller or in line with what the market was anticipating. Hence the reason for a positive P&L in there. Hence the reason when the bond market got it right, which is pretty rare for bonds, actually. But this year so far, it's been so far so good.
Even the S&P is down 15, NASDAQ down 19, Russell down 1, Dow down 159, volatility up 70 cents out. Enough bonds catch a bid. They just trade over 116, 116.03, they're 115.31. Bitcoin going a little bit lower, 113.7, down 1,500 south.
I think that's about the lowest we've seen Bitcoin, 113 handle, right?
Yeah, no, you are 100% correct. I mean, we saw these numbers, on Friday, but yes, and then it rallied. But yeah, this is about as low as it's been. Yes, you are 100% correct. Volatility, as I said, catching a little bit of a bid here, up 75 cents to 1870. Even the S&P's down 17. Take a quick 90-second break and come back. We got more Tasty Live after this with Oh Joy, your friend and mine, Mr. Scott Sheridan. Next, we'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All frickin' losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
No, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous, okay? There you go.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tomas, we are back, my friend. You know what that means. Enough out of you. That's right, Tasty Trade World Headquarters, your friend of mine. From the Scott Sheridan Studios, Mr. Scott Sheridan.
I have to say, it's only been since Thursday that the three of us have been in studio.
Yeah.
It feels like it's been weeks.
I know.
I missed you.
I missed you too, man. I missed you too. You know what? It feels like 7 to 10 minutes, but underwater. You know what I mean?
Which part?
Not being together. Like
where you're by choice or you're being held? Because there's a difference.
I'm not going to answer it.
There's a difference.
There is a difference. There is a difference for sure.
Tom, you're awfully quiet.
No, I'm.
That's right. When he talks, he only says mean things anyway.
Oof. This is where we are.
Right, don't let him talk. You walked in.
Okay, hold on. The air conditioner's broken. The TV's broken. The water's out. The electricity doesn't work. What didn't happen? What bill did you not pay that you're grumpy?
Oh, I got a couple of bills. No, I'm not grumpy.
Really?
My house is so cold.
I love a cold house.
Really? I do not like it.
You can't.
I believe you fixed my air
I don't want to go through this again, but do you remember when it
make
could only be freezing in here?
Freezing. And the office.
You've
our
really come
office,
full circle.
You really have.
You really have.
I got to go with
My house,
Tony.
Carlos made it so cold. I can't adjust it either.
It's killing you.
And we used to keep our old office was freezing. People were like it's freezing, and Tom walking around it keeps you awake.
Carlos just texted me. If you pay your bill,
Wait, is Carlos the AC guy or the TV?
yeah, AC.
Does he
AC
do TVs too?
What's that?
Does he do TVs too?
No. That's low voltec, my buddy, Greg.
Greg.
Mm-hmm.
Those are the bills.
I don't have a TV. I don't care.
I know.
Greg
You know
just
what's so funny?
texted me.
You
Tell
what's
the
so-
cheap ass to pay his bill.
What's so funny is you do care, but you can't admit that you
No, I
care.
don't care.
So therefore you go, you guys just waste your life watching TV.
You do.
And
I don't
I'm
care.
on TikTok 24 hours a day.
I'm not on TikTok 24 hours a day.
Go ahead, let's look. What's your screen time?
He won't do that. We've tried to do that. He wouldn't admit
Not
it.
again.
We
Let's
did
do
this
it.
with Vanetta.
Let's do it.
I don't.
Okay, what happens when college football starts? By the way, did you see opening game? This is strong to quite strong.
Who?
Ohio State, Texas. What do you mean? The reigning champ, which I don't know where they are. Notre Dame's 5, Illinois is 12 or 13.
And the reigning champ against Arch Manning.
Arch Manning. Yeah, buyer of Arch.
It's really hard to fade. Where's the game?
I think it's at Ohio State.
Really hard to fade. I'm really happy that college football for.
I don't know if it's neutral. It might be neutral, but if it's not neutral, it's
I'm
Ohio
still
State.
really happy that college football kind of changed it
They're coming out strong now.
so that you can actually lose one or two games and
Correct.
still
Make it.
Still make it.
Correct, I
Because
agree.
before they had such a ridiculous schedule that nobody would play anybody.
Right. The first 3 or 4 games, you're playing like nothing against Appalachian State, but Appalachian State
Against Ohio State.
It's Ohio State. And, those are the first few games. Now they're coming
Western
out.
Alabama against Alabama.
Right.
Yeah.
Exactly. Line 74. That's not the over-under. That's the line.
Portland versus Portland.
Right. But, I mean, it's really crazy because there's really 2 leagues now. You got the Big Ten and you got the SEC. I know. Don't give me Clemson. We'll throw in Miami and Clemson from the ACC. But whatever.
Who's talking about college football?
Me, it's starting. Because you're not going to have a TV. You can come over. I got a couple beautiful TVs.
I'm selling 9 for the Bears if you're interested.
I'll buy 8.5. That's 9 wins. Wait, 9.
I'm going to
I'm not
opening
going to
night.
say who would make that market, but I'm going to give you the acronym BIT.
We're going to opening.
Okay.
We're going to the opening night now.
We are 50-yard line.
Oh, you guys are going to another party together, huh? Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice. Be
No,
nice.
the best
You
part.
need to be picked up too. Because I can hang out and wait.
You could. And actually, if you
get
wait,
your beck and call for when you need me.
So the best part about it is the person who's taking us, I'm not naming names, but he lives right across the street. So
You?
Me? No, he lives across the street from Soldier Field. So he's telling Tom, he's giving one of these, we're going to tailgate. So Tom says, where are we tailgating? He's like, at my place, I got 2 balconies. I got a smoker. And he looks at Tom, totally serious, because you'll know this is. He looks at Tom and says, do you know what a smoker is? And Tom looks at him and says, yes, I know what a smoker is. Now, he says then it's a 17-minute walk to the stadium, to which Tom replies,
It's 22 minutes on my back, though, so it's a little bit longer, but it's a lot.
That's not bad, but to which Tom replies, don't worry, I'm buying parking.
What?
I'm buying parking.
Well, I mean, it's a really mistake not buying parking, but I feel bad. Like
You can't not go to the host apartment.
I know it's.
And I don't know. I think you threw his wife out.
How will you get the ticket if you don't go to the host
I think you threw his wife out, by the way.
Ooh, I don't want to do that. I don't even.
No, I think you did. You do have
More women hating you.
I don't even
He
more
did say
women
another
hating me.
one. Oof, I think
This
you
is
did.
nice. You guys going
Because he
another
said,
party
I
together,
said,
huh?
who's going? He
Sweet.
said, well, I
I can
invited.
take the other side of my bet because I want to bet on the Bears.
Me too. 8.5.
Man.
No, I want to, on that game against Minnesota.
Me
opening
too.
night.
Don't worry, I got DraftKings. I don't want to take your money. I'll go to DraftKings. I'll take their money.
8.5. Sold.
You can give a number later.
Are you selling the Bears 8.5?
You can give a number later.
100.
Okay, done.
100.
I need it on air because the only way I'll collect from Sosma.
And 8.5's a push. Or are we buying 8.5? We bought 8.5.
How the hell is it going to not? How it's going to be a
I mean,
win
they
or
have to
a
win
loss?
9 for us to win, and they have 8.
I'm saying a tie, but a tie doesn't count for a half. It should. Should count for a half.
It's a tough ask.
Like in hockey, you get a point.
I mean, Grover bet me 500. You're only going 100.
Oof.
Wow. Well, you guys are going to pay up soon.
Chucky bet 1,000.
He did.
Oh, now if these are the people on my side?
Yeah.
Yeah.
Can I pay you $120 right now just to get out?
I'll let you out for
Can I give you 20 bucks?
I'll let you out for 50.
Can I give you 20 bucks? You let me out a piece, please?
Yeah, give me 20 bucks.
50 total for the two of you.
Done.
Done. See, smart man. He should have revealed that information prior to accepting.
That hurts.
But anyway,
That
it's
hurts.
really the only game you go to because it should be guaranteed weather. Now that I say that's gonna be storming, but
I will be praying for rain, doing a rain dance too. Okay.
I remember.
There's no doubt in my mind.
I
I'll be
remember
doing a
Halloween.
rain
I
dance.
think it was the night they retired.
I mean, I was hoping. I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because we're gonna. Because
It's close to here.
Vinny and I are going to build a rickshaw so that we can take you there right up to the door.
No, he's going to really slather it on right now. The reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field most likely before the game.
You're going on the field most likely before the game. Are you guys fornicating on there like friend Mr. North did? Is that what you...
No.
Oh, okay.
No.
Okay.
We're going out with
We might have an invite.
We might have an invite with somebody special.
I'm working at
You
it.
guys are special, indeed. You guys are really special. It's nice.
You're going to meet the guy. Actually, if you play your cards right,
You might be able to.
I don't
you
want
might you might be able to come and have a
I don't want to.
you might have a better seat than we do. Because this guy, he's special. And you're going to meet him.
I don't know.
I'm going to meet him what? When
Depends
I
on
bring
his
him
attitude.
his drink?
Depends on his attitude.
No, I can't give out too much information, but we're going away. You guys will be golfing. He could be golfing. See? Not.
I might be waiting for you on the field.
You could have press
I know
pass.
exactly what you're talking about.
Right, you could be waiting for us.
Wait until he meets me. He's going to sell you down the river. He's not going to care about you.
As soon as he meets you, he's going to say, "Hey, kid, get my bag." Okay, 'cause he's a really good golfer and he needs a caddy.
Oh, that's bad. He's a really good golfer, and I'm not even going to be a good caddy. This is
No, he's really good.
Yeah.
No, but if you play your cards correctly, you might be in the press. You don't know where you'll end
You
up.
might show sympathy.
Right?
It might be a sympathy.
To look at Tom and say, do I need to throw him one? He'll go, yeah. He'll say, all right, come on.
What do we do with him? Put him on the bag, see how he does, then we'll decide later.
Oh, you're brutal.
Brutal.
Told you not to cover your NASDAQ futures. You could do them 100 points lower now. Now you can cover them if you want to.
140.
Because the down move is over.
140.
Down moves over. What is Spoo's down for?
So you covered them at 352.
22.
Yeah.
Spoo's around 22.
Yeah,
22.
I think they're going to be down. I think they're going to be down 80 to 100 today.
No, they're done. I just told you they're done. The move is done.
But you don't know anything.
I said the high was in.
See, I
Five handles
said
before.
that they closed at such a rich premium last night that
And then you followed me after I said it.
I think they could close down like.
Well, if they're down 106 or 110, whatever, up 100, down 80.
I think that's what you can see.
Volatility's up 85 cents, so it's still percolating.
I think you could see that here today. I think you can see
That's a
the
good
third
movement.
day. I just hope tomorrow they're not up 100 again.
Well, you're saying it like it's a guarantee that they're down today.
Yeah, because I'm making the call right now.
Oof, he's making the call.
I'm making the call.
Tony
That's what we do here, Scott. You see, we don't do what you do out there, which is like.
I guess he's done beating the shit out of me. He's
Well,
on
hold
to you
on.
now.
We don't do what
Wait a minute, Tom. Do you realize that Tony's still in the room?
We don't do
that
what you guys do
voodoo.
out there, which is
we don't
nothing.
do that voodoo that you do, which
Yeah,
is like,
so well,
well,
which
if they don't go up, they could go down. We actually make a call here. Like I'm saying, they would be down 80.
And this is why you're not allowed to talk to customers. Okay. Okay. What do you think? Just sell everything you got. Okay.
That's why I'm here.
That's why you're here. Fair enough.
Customers don't want to hear you say, I don't know, they could be, I'm not sure. Like they don't want to hear that. They want to hear, what do you think? All right, down 80. Thank you.
God, I'm really happy our compliance department's in a meeting right now.
You call into a,
They're all in a meeting.
sports radio show. You don't want to hear the guy go, well, I'm
They could win, but if they don't win, they lose.
I'm a Bears fan, but I think Vikings are going to win. Like, who wants to hear that?
If you don't make it into your 80s, you're going to die.
I mean, if you're a Bears fan, in this city, you call into sports radio, you say, what do you think
Tony?
the Bears record's going to be this year?
Is he still talking?
It's going to be 17-0.
Beth.
He did try to warn
Beth, in fairness, I really appreciate the warning, but could you give me a warning and then say, I'm serious?
You got it, Scott.
Like
Thank you.
supposed to say things like,
Oh, here we go.
what?
What are we supposed to say?
Like, I'm not going to tell you because it's not fair. I don't.
What was for dinner last night? Something went wrong.
Crawfish cakes.
There you go. Old? How old?
Homemade.
Homemade?
That he bought that were frozen in his basement freezer.
So how old?
They were recent.
Yeah, he says
within the last decade.
He says he purged his.
I purged everything that was 2023 or earlier.
But there's a 40% chance he could not find the expiration date on many things and kept those. Okay, for sure.
I purged everything that was.
Where were the crawfish cakes from?
Not exactly sure.
That's why I tell you couldn't
either
find
the
it.
farmer's market or Whole Foods.
And I'm sure they say consume within either freeze or consume within 72 hours.
That stuff is just garbage. It doesn't.
Oh my God. Here it comes. It's along with the feel like temperature, wind chill. None of it's real. None of it matters.
The same.
Expiration dates on food. How long will you if you had milk? I don't think you're a milk person, but how long would you let that sit in your refrigerator?
A year. I don't really drink a lot of milk.
Oof,
but if I had milk, I would say
I have cream with my coffee, but
maybe.
Eat cereal?
Me? No cereal.
I eat cereal. I like cereal.
I don't eat cereal. I don't eat
Tom
breakfast.
always has milk.
Maybe a year.
A year.
There's almost nothing that won't last a couple of years.
Nothing.
Almost nothing.
Like you open something up and it smells rancid, you just cook it longer?
You do what?
You just cook it longer? Kill anything that's on it?
Yeah, you can kill anything. When we were kids, my parents, I don't know if your parents did the same thing.
When we were kids, you could remember that long? By the way, you mean the S&P volatility upticking 95 cents?
When you were a kid, I can guarantee your parents did this.
Yeah.
If there was a piece of mold on a piece of, if there was mold on a piece of bread.
Many a day, my mom scraped it off.
Just cut it off.
She called all mold green mold for some reason.
Yeah, same mine.
Okay, because I said to my wife one day, oh, it has green mold on it. She goes, what the freak is green mold? It's just mold. I go, it's green mold.
You give a kid today a piece of bread.
Oh my God.
With mold on it. She'll turn you in.
If I have cheese, if I have cheese that's got a little mold on it, I just cut it off and eat it.
Yeah, 100%.
My kids look at me like there's
your kids won't
They
take
got a
it.
block of cheese in the fridge the other day. It had a little green mold
cut it off.
on the front of it.
And if it's blue cheese,
the rest of it was good.
If it's blue cheese, it just adds.
And you don't even see it on blue cheese. You just eat it.
Guarantee that your kids will never do it.
Never.
My kid, he opens up, and we weren't, when I had a bag of chips, you were not allowed to open up another bag of chips to eat the other type of chips or nuts or whatever.
Wait, so if you had Fritos and potato chips, you had to nail one before you could go to the other?
100%.
Oof.
100%.
Ooh, that's rough.
My son won't eat it after it's open. like he goes and opens something else.
Because they're not fresh anymore?
Yeah. They're soft.
They are soft.
Just like his mother.
I'm not disagreeing with on this one. I'm not.
You're not disagreeing with him?
I'm not disagreeing
I'm raising
with
a
you.
Sheridan?
I'm not disagreeing with you.
Oh, thank you.
Yeah, soft.
Soft.
Yeah. They look at it like, why would you eat
I went in there the other day. We had 11 bags of opened chips. And I'm like, all different kinds.
There's
like
11
potato chips, pretzels.
Yeah, that's fine.
Something else,
That's probably what I have.
That's okay?
Yeah.
Yeah.
That's what I have.
I like that.
I do too, because then you don't know which one you want.
Yeah, what if you want like
you want a couple potato chips?
Popcorn or
yeah, you want a couple
potato
potato chips and a couple Fritos.
Or
At the
pretzel.
same time, you mix.
Or what if you want to cash?
Your Fritos can't touch your potato chips?
I don't want to be a snob. What's that?
Your Fritos can't touch your potato chips?
No, they can, but you should devour one before you open the other.
Why?
There's not even that much in there for crying out loud.
I'm a careful.
My daughter will go through like my pantry and just throw everything out.
She should.
And it's like, I'm like, what are you doing? She's like, this says,
expired 3 days ago.
It said expired. Right? This expired in January. I go, what year? She goes, 2025. I go, it's fine. It's good for another couple of years. She's like, throw it out. Everything.
It is Joe.
I'm like, what is wrong with you?
It is Joe. I mean, they might lose a little bit of flavor, but it's still good.
Oh my God, it's awful.
All right. Talk about flavor. Let's get to some business.
Let's do it. Even the S&P is down 39. Volatility up $1.05.
Yep. It's going to be painful tomorrow. If spoos are down 80 today, I'm not coming on air. because he's going to be.
Is that all we need?
How does Dan?
Oh, I know. It'll be
do it?
obnoxious. It'll be
I
obnoxious.
told you they're going to be down 80. They were down 80.
Yep.
Right?
Yep. And I said they wouldn't be.
Oh, of course you did, because you don't. This is tough for you. I mean, I'm just being.
I did say the high was in at 7 o'clock this morning. I told you that when we were $3 away from the highs. I did say that. But I thought this down move was over about 5 handles ago.
Oof.
Oh, did you just roll down calls?
Oh,
did you just roll down calls?
Oosh.
Oh, this is good. He just rolled down calls. Please do it in like SPOOs or SPY or
Top 20 symbols going through the system. First 40 minutes. Indices or futures. Time for you, number 20. If you are interested and paying attention, which I am betting against both of those. Uber at a 36. For everybody else, PLTR at a 13. HIMS at a 33. TSLA at an 8. NVIDIA at a 20. AMD at a 34. Amazon at a 7. Coin at a 16. Apple at a 20. OKLO at a 33. Meta at a 6. Goog with an L at a 24. UNH at a 30. TQQQ at a 21. Hood at a 21. Intel at an 11. Goog Noel at a 23. Did Pfizer have earnings? I haven't seen Pfizer in a long time. At a 7. iBit at a 24. Reddit at a 20. And number 20 for Tom. Uber at a 36. Pfizer. Did they have earnings, Tony?
Yes.
Okay.
And Tony bet me $20.
I was good. I haven't looked at.
He couldn't make 20 cents. He made 16 cents.
He bet me $20 that I couldn't make $20 in Pfizer.
I thought you could.
Oh, he thought I
said
could.
you couldn't.
And I said
put
you
it in
can't
English
make
for you.
$20. So I sold a strangle and a straddle.
If you say you can't do it, you just lose money and you win $20. You got to bet on yourself.
I didn't do it. I didn't do that. I don't need to cheat to beat him. I just sold a straddle and a
he just paid up for it.
Right.
Sold a straddle and a strangle.
He did.
Sorry, what kind of bet is that?
I made 60.
One I couldn't win, which is the only one that Sazonov will make.
Right.
And I didn't make it. He just blurted it out and then made the trade.
Where's Pfizer these days?
Same price it's been for 37 years.
Right. I didn't know it was still a company. I thought somebody acquired it. I mean, Pfizer, there's a couple up there. Intel, Pfizer, IBM.
All right, what else you got here?
Really?
By the way, after this guy sees how much fun I am, okay?
Oh, you're in.
Mexico. You guys are going to be out, okay?
Did you hear, by the way? So we're going, this is great. According to Tom, the restaurant we're going to is a taco omakase taco place. According to my friend who went to Mexico City to go to this restaurant because it's considered to be like the best restaurant in Mexico City. He's like, what are you talking about, taco omakase? He's like, it's omakase. It's amazing Mexican food, but it's not tacos.
It depends which meal you go for.
Tony fed you at the streetcar outside with tacos before we went in?
To the taco omakase at this particular restaurant. It's like we went for. It was
taco omakase night.
They do it
It's
like
all tacos.
No, they have lots of different things they do. This particular period of time, maybe it was like a 1 month period of time.
Oh, they changed the menu.
Okay, so that's the full story, though. You didn't say the full story when you told the story.
You would love the taco omakase because what it is like 9 different tacos.
It's gonna be, here it comes.
9 different tacos, but each one is super cool.
It's very pedestrian. Well, wait a minute. Is the 6 gonna have a problem here? Is it like?
Oh, I forgot.
Fish.
Wait a minute. You're bringing sand?
I forgot about her. Oh, she's. She's gonna be a problem.
There's gonna be a problem.
She's gonna be a problem.
She might be watching.
We might have to put you and her at a different place. Different table, different restaurant.
Oof.
They have an outdoor area.
It's good for us.
Yeah.
Be nice.
Thank you, Beth. This is what I have to deal with. Really appreciate it. I appreciate those.
Because we sat at a bar.
Oh my God.
We sat at the bar. Like we didn't sit at a table.
How many of you?
I think there was 3 last time, or maybe 4. 3 or 4.
That's pushing.
Oh my God, people are saying how fast the Sazonov pivoted from trashing me to trashing Scott. It was an epic
He
pivot.
just took.
You haven't had a pivot like that? Well, you've never had a pivot like
He took the gun and went like this, pointing over here.
Yeah. It was
going
great.
over here.
It
We're
was
not
great.
pointing over here.
It was great.
I'm just saying. I don't know what they're going to serve when we're there, but it's going to be great.
Well, don't they list the menu?
Just don't embarrass us, okay? Don't embarrass us by like pull your wine snob stuff or anything.
Oh my
Just
God.
try to be normal, okay? Like try to be normal.
Sad enough, they're already asking me to bring a jacket for you. I didn't want to tell you.
Oh,
Jacket?
is it?
No, this you wear sneakers here.
Oh, we need to bring a jacket?
No, you can wear sneakers. You wear shorts and sneakers if you want. It's not fancy.
A little embarrassed. They were a little embarrassed by his apparel.
Well, there's the 3 rules of life: death, taxes, and if you're in a room with Tom, you're better dressed than at least one person.
100%. 100%. On that disc, we'll let Scott get the win. We're gonna.
Let me tell you one thing about Mexico City, which I didn't realize.
The 6 just texted.
Oh, she's watching.
Should I watch?
I love you, baby. I love you, baby. I don't mind groveling.
I will tell you one thing about Mexico City, which is surprising. Everybody does dress up there.
That's what I told you. Yeah,
It's
embarrassed
fancy.
us.
Fancy. What do you go with? What's your go-to fancy? A clean back coffee shirt?
Yeah. Yeah, I got to save my.
So what do you do?
Clean underwear.
What do you do for 6 or 7 days? Is that a carry-on, or you still do that out of a backpack?
100% carry-on.
Or is that a backpack?
Backpack, yeah.
Okay. Yeah, backpack and a carry-on.
Okay.
Duffel bag.
Duffel bag.
Yeah, no, I got a carry-on. I have a carry-on.
Do you need Todd's help?
What?
Do you want Todd to go shopping again?
No.
That's not a bad idea. You could get the you could get that stuff back from Todd. Okay.
For a small nominal fee.
It's the lowest point in my life. Okay, I consider that one of the.
He did you good. Don't you?
Still one of the lowest points in my life.
It was one of the lowest points in your life, but he did you good. He did you good.
Do we have
You've never
photos
looked
of-
better.
do we have photos?
I'm going to tell you something right now. You and Todd, and he's available. Hell of a pair. Hell of a pair. Hell of a pair.
He's not available.
Let's see. Wow. I mean,
if you hit the market, he's
you're-
available.
Yeah.
No. He's available if you hit the market.
Yeah, for sure.
Yeah. He's good.
He misses flying private. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Lynn J and Neck. Peace.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Take it off so you don't see yourself. I'll take it off so you can't see yourself.
Good morning and welcome back to the Liz and Jenny Show. Today we're live from the SIBO. I'm Annabelle Deerking and I'm joined with my mom, Liz Deerking over here, and then Jenny Andrews. I'm going to let them take it away, but thanks for having me this morning.
All right, before you leave, Annabelle, you've been doing this since you were little.
I got it.
Where is the VIX trading? Give it to me live.
1871.
Annabelle, thanks for joining us.
Thanks for having me.
So exciting. What a treat. Your daughter visiting us on the floor today. Last week of summer vacation.
Last week of summer vacation is the only time we could get her to come down here. I really wanted her to experience what was happening. The floor is someplace you can't even explain.
Right. I'm so glad she got to come down. She did great. She's beautiful. What a star.
I know, she did such a good job. It's really fun to have her here. I was walking in and Alo, everybody knows Alo. I introduced her as my intern.
Alo, I think he had a tear in his eye. He felt like he was being replaced.
But the good news is, Alo's really tall, so they knew how to frame the screen with...
Because Annabelle's very tall, too. So she did an amazing job, and it's so nice to have her. And Liz asked her what the VIX was, or where the VIX was trading, because she used to quote that when she was little.
When she was little, I had one thing on my phone, and I would be like, hey, why don't you tell me where the VIX is? She used to know where the SPOOs were, but I think that might have confused her if I asked right now.
Well, sometimes looking at these boards are a little different than like looking at your computer at home.
Yeah. But it is a beautiful day in Chicago. But the one thing that is interesting, and we kind of talked about this with some people down here, this is the time, it's very slow, when all sports come to a halt. So a lot of people on the floor are gone.
So this is called Dead Week here in Illinois. I don't know if it's across the country, but in Illinois, the first week of August is a mandatory shutdown of high school sports.
It is. And I mean, and rightfully so. It used to not be, where they used to just let them flow and flow and flow. They shut everything down for a week, so they let people go on vacation. It's technically illegal to do anything.
So the few guys that I know on the trading floor who have kids in school with my kids, they're all gone this week. They told me, like, they're gone, they're going to be gone, they're on vacation. This is vacation week for people who have kids in high school. Now, I'm here and you're here, but, you know.
The show must go on.
The show never stops.
The show must go on. But I was actually pretty excited. Now, it is, like I said, slow here, but the SPOOs have had a crazy, in my mind, it's not that crazy, turnaround, because when I was on the train, I wasn't paying that much attention because I was talking to Annabelle, but I closed my computer with SPOOs up about 19. And then I came in, rubbed my eyes, and I was like...
And I've seen them as low as down 30, 35, something like that. So we have had a 50-point range today at least.
Yes.
So...
Did you see where they closed yesterday, Jenny Andrews?
Okay, I'm not living in my normal world. I'm in the city because my daughter's here for an internship. So at the end of the trading day, I was walking. I'm getting so many steps in this. You're never going to believe it. Like I'm going to be 10 pounds lighter next week. So I was walking
You don't need it, but you are walking all over the place.
I was walking. I think you called me. When the market was closing, I was walking to pick her up in... I don't even know where. Oh, Kent Law School, the IIT Law School yesterday. I was walking over there to pick her up.
And you did say it's a 35-minute walk, and I was like, are you feeling okay? Yeah, 35-minute walk to the Kent Law School.
Yeah, so I missed it. Where did they close?
Up 108.
Exactly.
As foretold.
Exactly as Liz
as
predicted.
Foretold.
Exactly as you predicted.
Isn't that crazy?
Yeah. Yeah,
I
it
should have
is.
taken a screenshot and
You
then
know
sent
what?
it to you. I mean, don't get me wrong. I'm not saying I'm good at predicting. I'm saying I got real lucky.
These 200-point moves, 100 points to the downside, 100 points to the upside, I missed. Friday we were at a Cubs game. Yesterday I was going to Kent Law School. I missed it all. What were you doing, Liz? What were you doing? The only thing I had time to do in the afternoon was load up on hymns.
So, I mean, I did trade a couple of the earnings things, but I will say I was pretty happy that I was at a Cubs game on Friday because I think it protected me. I think day drinking with you helped me not overtrade.
You know, and we had so much fun. I went back again yesterday, and John Cusack and his crew were back.
Yes, you should have given them front view. Wait, we got to zoom in on the guy I told to take the picture.
Oh, well, I think the other guy in the row with him is famous, too.
The one I asked to take the picture.
You know what? I'll post this on Twitter right now.
Do you remember when I was like, I want to take the picture of John Cusack, and I handed the camera to someone, and that person is like, you want me to take the picture of him? And I was like, yes, I do.
I will. Okay, so I'm going to send this on Twitter, and this is, so now that I know where his seats are, I took a picture because I was sitting on the opposite side, and 1914 Club is on that side too.
It is?
Yeah,
Both sides?
Both sides, and there's an entrance on the other side too. Both
Impossible.
Sides. You wouldn't believe it. Okay, this is going up, and then we're gonna take a look because I think I didn't know exactly. I was sitting a little far. I couldn't tell exactly who the other guy was with him, but I think he's a celebrity too.
Someone else can crowdsource this. Tweet it.
Okay, I did. I'm going to go to it. Okay. Okay, Twitter. Bob, we will get to you. Let's go into Twitter.
And there are a lot of earnings today, so that's good.
Okay.
Oh, yeah, there we go.
So here we go. So right above, just so if you're watching the Cubs game, right above this national, these are seats.
He's
so
gonna love this.
Hey, and the people next to me were on a baseball tour. They were from California. They were going touring baseball fields across the United States.
Oh, that's fun.
And they were all from California. I was like, hey, look, that's John Cusack over there.
Were they like, no way? That's not the same crew from last time.
No, this is the guy that took the.
That's the guy that took the picture.
This is the guy that took the picture. Here's John Cusack. Don't know who this guy is.
Those two are new.
But this guy, I think.
Looks like Rob Reiner, but
maybe that's what I was thinking of. I don't know. But there they are. Those are seats. And then the California people were like, do you think if we walked over there that he would take a picture with us? I wasn't sure. He might have. But I didn't think the security would let them down to his seat.
We got denied twice by him. We just didn't take no for an
You know what?
answer.
He was very nice. Very nice. Very friendly. And then, okay, so for the SIBO team here watching, the SIBO seats are right here.
I know. We're totally busting it out.
Anywho, it was a lovely time. And I was on the opposite side with my... camera.
Do you think? And I got you on. Camera, so you can't say it. Are you turning into a Cubs fan, Jenny Andrews?
I was going to say. I mean, my whole life I grew up on the South Side. My whole life I was a Sox fan. I met my husband at a Sox game.
Yeah. Auntie, you went last night too.
And
did he have fun?
Yeah, he did. He did.
Okay,
He didn't think he would. But he did. I think I'm turning into a Cubs fan. I might go in a couple weeks on a Sunday afternoon game.
Well, I'll go with you.
The people from California were like, you must come all the time. You know all these things about the field. I was like, yeah, this is my second time. It's pretty funny.
All right, wait. Because, what time is it? I want to see the clock. Okay. Do you want to manage our hymns since we loaded up on it yesterday?
Sure. When I say loaded up, I was like, okay, here's what I did. I went right before I walked over to Kent Law School. I said, let's see how much money my account's making today. Oh, I'm doing pretty good. I'm going to take half of what I'm making today and put it all into hymns.
That's what you did today?
Yesterday. That's what I did.
Oh, yesterday.
Yesterday. I said, I'm going to take half of my P&L today and put it all into hymns.
Well, hymns is down. Oh, it's only down 260. It's only down 4.19% because I know people love percentages these days.
Hey, I'm a big believer. I saw an ad yesterday. One woman lost 30 pounds on the hymns pill.
Hold on. Did you just type in XLV?
That's my trade of the day. I told you to bring a trade of the day, and I was going to bring a trade of the day.
Mine's an XLV.
Mine's an XLV Big Lizard.
Mine's an XLV Big Lizard. Stop it! Actually, I looked at V and E.
What?
I looked at XLV and XLE, the energy one.
I took XLV. I can't believe... on the phone with Liz today, I said, find a trade. You bring a trade to the show, I'm bringing a trade to the show. And we brought the same trade to the show.
Well, and a lot, I think because we've gotten a lot. The Spike Lizard we reviewed yesterday.
Yeah.
And it's been a long time, and I think because of that, there's decent volatility all around.
Hey, you know what? I went to...
Want to put it on in hymns?
Let's look at hymns. Okay, we're in hymns. Here we go. Down 240. I don't know what they said on earnings. Let's take a look if it's already in this overview. Earnings per share, 68 cents. I don't know that this changed. I don't know that updated since last night.
The earnings per share? I don't think it did.
I don't know. But anyway, no, I think this all looks like similar to yesterday. So what do you do? It's down. What's a girl to do? What do I do with all my hymns?
Well, I mean, it's only down a little bit.
This is one of those lifers. I'm holding it for life. This is going to be one of those where, like, 10 years from now, I say either hymns is, gone the way of Spirit Airlines, or thank God I held on to that.
Well, what are we gonna do with ours? We just have one short put, and I'm happy we did. Even when I saw hymns down as low as 7, and
Down
the expected
7?
was 9. Yeah, so it was down 7, which means it was at 55, because I know we were about $2 away from.
Okay, so let's take a look. Hymns. We sold the 53 put for $123. It's worth $44 right now.
Yeah.
We made $74 overnight on the hymns put. And considering it's down, well, not bad. We'll take it. We'll take it. So
this is why I like short puts. I know they're riskier because then if it wildly gaps down, you could lose a lot more. But this short put, it's down. It was down. It was even down more than this, and we were still up.
Right.
Because it's in the 4 day, or the 3 day.
So that's not bad at all. I'm just going to close this. We made $80 on that put yesterday. But if we want a new position in hymns, let's see what our choices could be.
And hymns has still a 32 rank. So let's go back into it.
And the nice thing about hymns, so I bought back for 46 cents. The nice thing about hymns is the buying power. If I go to September and just look at a put, like here's a 20 delta put, $230 using $490. Do you see that buying power?
Good.
That's crazy.
That is real good. That's what I'm saying.
Yeah.
And you've got dollar wides. Oh no, it's $5 wide.
I kind of think hymns is just a plain old short put. Don't overthink it. But we could. I know you want to look at.
No, I want dollar wide strikes on the top of things. That's why I was looking at the
That's
X's.
why I picked XL.
That's why I was looking at the X's.
XLV.
So I do agree. This is plain vanilla 20 delta put.
Yeah.
Not bad at all.
20 delta put, $242 with $490 in buying power. I'm always looking for like bang for my buck with the buying power.
I agree. Can you do me a favor and change delta to volume? I just want to kind of see what's happening
Well, I'm
today
moving out
in
to
hymns.
SEP.
There you go.
Okay.
Yeah, I mean, take a look at that. You've got some decent volume in the 50 and the 55.
Let's get aggressive.
Yeah.
Be aggressive.
Be aggressive.
BEAGGRESSIVE.
So be aggressive. I was not a cheerleader, but I did learn this from her.
Hey, I don't know how many years of cheerleading I have under my belt, but it was all worth it for that one moment.
One moment in time. The only thing I got was from UGLY.
The Bad News Bears?
That's from Bad News
No,
Bears.
what is that?
No, it was
with
with
Goldie Hawn.
With Goldie Hawn.
What is that show?
Where's Mikey when I need him? He's on
what's the
Safari.
movie with Goldie Hawn and the football team?
Yeah, I don't know. And Steve usually answers all my questions.
Nobody's
but he's not here.
Nobody's here to answer us.
Nobody's here to answer it.
What is that movie called? Our viewers will know. What's that movie with Goldie Hawn and the football team? Tweet us and send us a tweet. Include the hashtag LIZJNY, just like the hashtag right here.
The one you see right there.
LIZJNY. Okay. Yeah. What is that show?
I got the internet.
She's gonna look it up.
I got the internet. Hold on.
Okay, so if we want to get crazy, we could bring it all the way up to the 55 for $425.
Yeah, I'm good with that. That's where the volume is. That's where we're going.
All right, we're doing it. $425. Short putting hymns. We're not afraid. We are not afraid. Did it say our option buying power is only $4,000? Let me take a look at this.
We must have gotten signed. Wildcats.
Wildcats.
Which I can't believe I can't remember. My son's going to be a Wildcat.
Yeah. Yeah.
Not the same, but they're called the Wildcats.
Right. Kentucky Wildcats.
Yeah, Wildcats.
Are they ready? Is Kentucky ready for JD?
No.
All right, I'm just going to do a little test here. I'm going to go to something like very low price, Rivian. They have earnings. We already have a put in there. I'm just going to look. If I sell a put in Rivian, just say I sell the 11 put, and I go to review and send.
Rivian has earnings today.
Option buying power $4,000.
Hold, please. I will assess the situation. We got to sign on something.
That means we're assigned on something.
I got it.
I'm opening it up.
No, I got it. You do something else. I'll look through all of them.
Here, all I'm doing is scrolling for stock. Here, watch this. Closed working.
Oh, yeah. Good trick.
Closed working fixed income, futures, options, stock.
I don't know.
Maybe not. How can we be using so much buying power?
I'm seeing if that IWM that we put on yesterday is holding up a lot.
Like something we have, or something we put on that wasn't using too much buying power is now using more buying power. So you can go look at capital required and see what's using a lot of buying power. Because a few days ago I think we had over $10,000 buying power.
So it's just all adding up right now because
Really?
IWM is about 3.
3,000.
DocuSign is 1. Intel's a couple. Enphase. HIMS is holding up quite a bit right now.
What? No. We took one off and put one on.
Yeah.
Well, you can see here we weren't assigned in anything. How is our pair doing? 2 shares of Apple versus... Where's our Apple pair?
It's Apple Oracle, and they're down.
No,
it's not much down, but it's down.
That's not good. Okay. I'm adding everything back in. Futures, working, closed. I guess.
No, ZC can grow teeth. Like your futures can grow teeth, even though they're defined risk. If it gets closer to the at the monies, it might be our natural gas, Jenny. That's not in here. When I go to cap required, it's not in there. See if you go.
But it's just a spread.
I know, but cancel that and see if you close it. It doesn't matter if it's a spread. If it gets close to the at the monies, it holds up a lot of buying power.
No, $500.
Okay. I don't know.
I don't know. Well, I don't know. I guess what we could do is you could all, and this can be an issue for people. If one day they walk in and they're like, "Where's all my buying power?" With the market falling on Friday, some margin might have increased, right?
Might have increased.
We were just like hanging out at the Cubs game, didn't even pay attention to our account, and margin might have increased in places. So if we want to take a look at any position that we don't need to do, any position that we might want to take
off Webull. I mean, because we're up $100 in it.
Yeah, but that's a roll.
Oh, it is a roll?
That's
okay.
a roll. I'll put anything that would come off. No, we'll just leave it. I think we'll leave it as is. You better hope that XLV trade doesn't hold up too much buying power.
I know.
No, it doesn't. The one I came up with only was going to use about 800.
But I do know that. So that's something. What I do like about this is we have multiple accounts we trade. You trade your account, I trade my account, I trade lots of accounts in my name, and this is a smaller account, and that's what happens. You sometimes get handcuffed, and buying power can get a little bit away from you.
I know.
And we did use a lot of buying power yesterday. That's our biggest position.
With the what is it? $2,000, $3,000, $3,000 in IWM. Well, let me take a look at that IWM.
So IWM was a spike lizard that we put on yesterday, and we actually used less buying power because we did the strangle instead of the 2 puts.
Yeah.
We cut it in half.
We'll leave it for now. If we need the buying power, we can take that off.
If we need the buying power, we take that off.
Yeah, if we need the buying power, we take it off. If we can make it through this week and into next week, we might be able to get out of that strangle. We've got enough. We have $4,000 in buying power. We have enough. But if we needed to, we could release $3,000 with the IWM.
Yes, we could. Yes, we could.
And here, guess what? We take off trades when they're winners. We have scrolling positions because we have a lot of losers on right now.
Yeah, we do manage our winners. We manage an order entry. Can we take a look at iBid? It's right underneath HIMS. I want to see what's going on in there today. Because yesterday it was, and we're still right at our break even.
Yeah, it's a jade lizard, but crypto is down today.
Yeah, crypto is down today.
But I think that's okay. It's close. All right, there are, Liz,
a handful of earnings.
Yes. So let me just refresh, make sure we're getting to everyone. So Ajit comes in, short put credit names with 10 DT or less, mainly this week expiration. These are earnings plays. So if you, look, he's got Oklo, SMCI, Uber. He's got quite a few. Yeah, Oklo, SMCI, Uber. We're going to take a look at all of those.
Yeah, for sure. We're in Oklo. They have earnings today.
I don't know if they're today, but they're this week. OKLO.
I mean, I'm sure I'm not updating because I bounce around a lot on here, so I apologize. I think this is definitely a slower feed. But somebody thinks Tom Cruise took our picture. When you we're like, this guy took our picture. Like, it looks like Tom Cruise.
No, he's much taller. He was probably 2 feet taller.
Yeah.
Okay, Oklo not until the 11th, so next week.
Next week, but I don't know about
the 5th.
Uber. Let's go to Bob's list.
All right, Bob's list. Make sure and get your club jacket.
Oh, that's your Genesis
Oh my
car.
gosh, this is when I get. Hey, Florida 7, do you have one? He must have one. If he has a Genesis jacket, he must have a car. Do you have the massage chair?
He can't answer. It's through the TV. But let us know if you have a massage chair.
I'm a big fan of the Genesis, and it was one of the only small SUVs. I want to say it was the only smaller luxury SUVs that actually got all 5 stars with the safety ratings.
Oh, really?
Yeah.
Cool.
Yes.
Well, don't take this the wrong way. I'm really glad you're off the Bronco train because I didn't know how to stop you from buying a Bronco. But I don't think you should be driving a Bronco. You're not a teenage boy.
I share a car with my daughter, so I can't buy Florida 7 as much as I would like the Genesis massage chair. Not allowed to buy it until my daughter gets a parking spot in the paved lot.
Oh, for sure.
Because now she parks in the gravel lot.
Because otherwise she's
like
dipping out of there.
There's dings all over the car.
And even if it's not her, the person peeling out next to her.
Yeah.
Could hit
There's dings all over the car.
I get it.
Okay. Punished Pixels, good morning, ladies. My new earnings trade idea. I love earnings trade ideas. Let's take a look. Wide iron fly, 2 times expected move wings for earnings, close for 20% profit at open.
Oh,
great.
Congratulations, because Caterpillar, and I don't know where it opened, but Caterpillar was down, I thought. So can we take a look at Caterpillar?
Looks like he did well in Caterpillar. Got 20% out of the iron fly.
What I love is, let's take another thing that has earnings.
It's only down $1.30 now.
Oh, good.
Yeah.
So I was going to say, so he went 2 times the expected move for the wings. So it's basically selling a synthetic straddle.
Right.
Because we say iron flies, you won't typically get all the way out of the way of the expected move.
No, you don't get all the way out.
But that's if you're risking one to make one.
But
he went 2 times the expected move.
$430 product, and it only moved $1.20.
Yeah, pretty good.
Okay, back to Bob's list. And maybe we'll look at that iron fly, 2 times the expected move, if there's anything we're interested in.
Yeah.
AMD, SMCI, ANET, Snap, Upstart, Rivian, Uber, Shop, Novo Nordisk. Is that it?
Disney
No, I don't know.
and McDonald's?
Well, there are a lot.
There are a lot. We don't have a Disney position in right now. I think we should.
No, I don't have a Disney position in, and I usually do, but I think it's up pretty high.
We're just seeing some McDonald's these days.
I have to stare at it. I have to stare at it out my hotel window. Okay, so.
You buy the Rock and Roll McDonald's?
Yeah.
Oh. You didn't pick up like a breakfast sandwich on the way down?
I don't know if it's even inside anymore or all a drive-through. It's like a massive drive-through now.
Is it?
It's like the amount of drive-through lanes and cars rolling through there, and it's open 24 hours. I think that's why I didn't get any sleep.
Oh, yeah.
Okay. What do we want to look at first? Let's just start at the top.
Well, I mean, I don't want to look. I mean, we can't. I think you have a position in SMCI. We can take a look at all those. We looked at AMD yesterday.
So let's
talk
about that iron fly trade you mentioned. So if you're going to at the monies and you're going double the expected move.
You're doing a synthetic strangle, but it is an iron fly. I agree with you. I mean, it does go in as an iron fly, but if you're the way we would do an iron fly would be risking one to make one. So if you're collecting 14, you're going to go $30 down and $30 up, right?
Or you want to collect. You're collecting half the width of the spread. So let's just see here. $75.50. That's
there you go.
$25 wide, right?
Yep. And $25 up. And this isn't bad because.
Oh gosh, look at that call skew.
Yeah, that's a lot of call
$25 up, it's $1. $25 down is 38 cents.
Wow.
That's crazy.
That's a lot of call skew in AMD.
So you're collecting $13 on a $25 wide.
And so all we're saying is what they did is they went 2 times the expected move, this is 2 times the expected move.
This is about.
Yeah, this looks about right. And you'd have to move a little bit. So if you look at the green bar is not exactly in the same line as the brown bar on the downside, but it is on the upside.
And you're close. You get close to the expected earnings move.
So you could probably shift the 75 put to the 72.5 put and get it outside the expected move.
But so this is a discussion that traders will have. Okay, I could do this iron fly, get my break evens to about the expected move, or using $1,100. And what am I hoping to make? 10%, 20%? He made 20%.
No, not for earnings. I mean, you can make a lot more for earnings.
He made 20%.
He made 20%, but I don't put a GTC in for 20%.
Caterpillar moved $1 on a $400 stock.
It was down a lot lower on the open.
But I think the flip side of this is, you delete this, sell the strangle. Here you're getting $1.43, and your break evens are so twice as far.
Oh, I see what you're
saying.
Twice as far. Yeah.
That's why I think, this is more typical earnings trade, but then you have that naked option risk.
You have naked option risk. That's correct. But this is double the expected move, and you're getting $1.43. If it doesn't move or stays within, you've got 3 days left. You keep your whole thing. But yes. No, but there is more profit potential if you're looking at the earnings trades iron flies, because people think you're going to get more out of it than a normal iron fly, than a normal strangle for 20%.
Has anything moved crazy out of its expected move this earnings cycle?
Not that I remember. Not yet.
Not that I can think
yet.
of. Not that I can think of. The strangle looks pretty appealing. Not going to lie.
It doesn't look bad, but it's a little bit expensive buying power. This is AMD. We looked at this yesterday. Let's look at some other ones, because I do want to get into Snap and Uber. Those are all low priced, lower priced.
Okay, so next on Bob's list, SMCI, which I don't think we have. No. I have short puts in SMCI.
See, it's a $57 stock instead of a $100-something stock.
Yeah, and it's not, I don't think the buying power is terrible. $7 expected move. Here you can get $1 and you're using, the buying power is high. Oof. SMCI, what are you doing to me?
So I always thought the buying power was high in SMCI.
So if the buying power is high, I'm just going to look at a diagonal. Here's $1. Or here, 90 cents on the 67.
Thank you, Daniel. Meta is the only one that was outside of its expected move, and it was to the upside.
Oh, yeah. Okay. All right, so here, 58.67, $9 wide for $3. This checks all the diagonal boxes of a third. You're paying a third of the width of the, that's what we like to see, a third of the width of the spread.
It does, because you don't want to pay half. You want to pay less than half, so a third is even
better
than
a third
less
is,
than half.
I think a third is perfect. You've got a $9 wide spread and you're paying $300.
It's not bad. Now, if you put this in and SMCI goes down, you could lose $300.
You can be out $300.
Yeah, I don't mind it though. So what's your profit potential here?
600.
Yeah, it's not bad.
I don't know.
I don't mind being bullish SMCI. It's low. Like if you were paying $500, I'd say no.
But we're only paying $300.
Yeah, go for it.
Like we'd risk $300 on a $5 white iron condor, again $1 and $1.
Yeah. Now, that being said, $5 white iron condor, you have a lot more room to be wrong. Very similar to our HIMS trade. It went down and we still made money. If this goes down, we won't make money.
Right. So then we could.
But capital wise, I don't want to spend $2,000.
But that $2,000, the short put was $2,000.
Pop it in.
I'm going to send it.
Send it.
This is going to be our first earnings diagonal.
Full send. What is that from? Full send. Is that like a kid's thing?
I have no idea. No idea.
Full send. It is.
Full
isn't
send.
It? Yeah. Full send.
What does
That's
that
my
mean?
new thing. Full send.
All right, so that's our first earnings diagonal of the earnings season.
Yeah. Okay, let's go back to the list.
Back to the list. All right, that's SMCI. Now, ANET, Snap, Upstart. ANET.
So I'm more interested in Snap and Uber.
Snap.
Snap's low price, hasn't gone anywhere.
Yeah.
Take a look at the chart.
$1.37 expected move. We know what it's been in this range for what seems like forever.
Forever. Yes.
All right, I'll also put in Snap.
Because I mean, you can get a little bit even if you're doing it. So
60 cents for the 9 and the 3 day, or in Snap, I don't mind going out to September.
You're getting 80 cents for the 9. That's pretty good.
I'll take 60 cents in 3 days instead of 80 cents in 45 days.
True.
Yeah, let's just do 60 cents.
Sure. Because then we don't mind rolling it out. That's what we're saying.
Yeah. 60 cents in the 3 days.
Here's my question. Every person I know uses Snapchat.
Yes.
I don't. I mean, every person except for Jenny and I. Do you use Snapchat?
You know, I joined it to see what my kids were doing, but then I don't even see what they're doing because they have like private stories.
I'm not going to lie to you. Everything Lily does gets sent right to my phone.
Well, I don't see it.
I don't know why. So if you need anything, she's actually a very delightful child.
What's she been up to lately? What has she been up to lately?
She's only wishing birthday messages. She's a good girl.
Well, I don't really see much of what's going on with my kids. I don't even see that, I don't think. You must have notifications on for her.
Just her.
I better set that to my phone. Well, so the kids all use Snap. That's true.
Yeah. So that's what I'm saying. That's what we're saying here is that I don't mind selling this 9. We are in the expected move. So our break even is under the expected move for the cycle. But that's okay. We're filled in SMCI.
Filled in SMCI. Let me push that out. So far today, closed our earnings trade in HIMS, sold a new put in HIMS, and put on the diagonal in SMCI.
Yes.
So we're going to sell this 9 put in Snap, $61 using 340.
Okay, perfect.
Okay, done.
So I've
That's
got all
sent.
that out.
And I'll push that out to the follow page too.
Okay, thank you.
Okay. So that's all out. Next up, Snap, Upstart, Rivian. One thing I wanted to look at before I forget, and I know we're in the middle of these earnings, but at the Cubs game, AbbVie advertises everywhere. Everywhere, AbbVie, ABBVI.
ABVI?
AB, is it ABVI or ABB?
It's ABBV, isn't it? Yeah.
Oh, yeah,
AbbVie.
ABBV. All I know is they are advertising all over. Every time you go to the Cubs game, it's AbbVie. They advertise.
Is it a financial
everywhere.
company? What is it?
No, it's like a pharmaceutical company, I think.
Oh.
But they advertise all
Maybe
over.
they'll be replaced by Hims. Do they have earnings, or where are they in the earnings cycle?
It wasn't on the list. I just went mental note last night. Look at it
Okay,
because
gotcha.
I see it constantly. And I saw it constantly last night.
$200
in my
stock?
dreams, I was like, I got to look at AbbVie tomorrow.
$200 stock? Yes, it looks good. You know what I wanted you to look at today? This is not on the list either. Can you type in Roblox?
Sure.
Listen to
RBLX.
this. No, I don't know. I know Roblox is a game. I understand that. It's just a game. It's down a little bit today. But this morning, they were talking about how the number it launched, it went faster than any other game in history. A 16-year-old programmer got onto Roblox and programmed a game called Grow a Garden. Now, you can quote me on all this because this is Grow a Garden, and it's just like you feed and grow a garden.
Yeah.
16-year-old programmed it, and they're a billionaire as of this morning.
No way. For making this game on Roblox.
Yeah, that's what I'm saying. Annabelle, I don't know what you've been doing with your time. You're 17, you're not a billionaire yet.
Poor Annabelle. She looks so bored over there. We should bring her back on the show.
She said she's not bored. But yeah, 16 years old, billionaire. They said that Roblox, and I didn't realize that. That's what I'm saying. Now I was like, nobody's really playing these games, but they are programming it. They like child developers.
Well, so
Grow a Garden faster than anybody, and it usually takes game developers years and millions of dollars. They did it like in their backyard.
That's crazy.
16-year-old.
Well, and look at Roblox on earnings had this wild move up to 150, and then he lost all of its like earnings momentum.
Yeah.
Came right back down.
It did.
So I'm going to take a look. Puts in Roblox.
It's expensive. No, and it's okay. I just wanted to bring it to your attention. Number one, my mental note, I was walking Will Ferrell this morning. It's like, I got to tell Jenny because I feel like she'll play a game called Grow Your Garden.
I know you showed me a game the other day on the train. I haven't. The last time I played a game on my phone was when. So this was like so long ago. My daughter had a serious accident in the hospital for like 5 days with a head injury, and 5 days in the hospital. Played Candy Crush 24 hours a day. The doctors would come in and be like, "Hold on, don't stop me now." Do you remember that?
I'm on a roll.
Do you remember that?
I do remember that. Yes.
That was the last time I played a game on my phone.
Yes, you did. I'm currently addicted to Block Blast. My son put it on, and I can't stop. It's like a reverse Tetris. Okay. With that being said, we don't have to push anything in Roblox. It's very expensive, and it is up high. I just know that when our kids were young, they used to play Roblox.
Yeah.
But I didn't realize that it's now like a small development. Like you can develop games. Yeah.
Cool. I'm in. I know it's $30,800 to sell it put here.
Yeah, you can't do that.
If someone, this is where a Big Lizard might come into play. Where if you
Big
think
Lizard with
like,
a fat tail.
oh, I wouldn't mind selling a put here in Roblox, $3,800, a little too expensive for me. So let me look at a Big Lizard where, and I could even separate this. I kind of sell this at the money straddle, create a call spread. I have a $5 wide call spread. I'm getting $9. If I do a $10 wide call spread, I'm getting $10.50. I can use this 50 cents.
You got to go pretty far down. Just do a $5. Make it like let's do very baby. Take it to the 35.
Or you do this. $10 wide, then you're getting $11.40.
There you go, and buy the 105.
So here I'm getting $10. I'm getting $10. $10 wide call spread. My risk is only $1,000. This is neutral to bullish trade.
It is, well, yes, because it's got a long delta. It does have a long delta, but our sweet spot is 125.
I know, but still, it's like neutral. There's no risk to the upside. So I'm going to I'll compare the two.
You know what I was going to say? Pull it up, buy $5, take a little bit of risk.
So here you see, to Liz's point, our sweet spot is slightly below, but there's a lot of theta here. 430 a day in theta.
That's a
lot.
lot.
That's a lot
And you're
of
in the
theta.
45-day cycle or 40? Yeah, 45
And
day
it's
cycle.
defined risk. Not bad. I actually wish we had more buying power in our account.
And that's what I'm
Because
saying.
I would push this trade through.
So we can adjust this a little bit though. So can you go back to the trade page? Let's take a little bit more off of it. So pull it to the yep.
So
yeah, bring that up. Perfect. So you got $7 and then bring that up. You're getting 6. Can you take it up one more?
But then then it's like turning into a butterfly, and then we're not gonna get much out of it. And it's gonna take forever to get anything.
This is
out.
still neutral to bullish. You've got still a bullish delta. You've got $3 day in theta, and it's only $800. That's not bad.
I mean, so
then you get one.
If we pull it up more, then we only have $440 in risk. But
you still have 60 cents over. It's not bad.
No, it's not bad.
If you look at it on there, it's not bad.
It's not bad.
And I really want people to realize what Jenny and I just did. And this is true. Like, clearly there was no plan. Like, we walk through and we say, oh, Roblox, some kid made $16 million, or made $1 billion.
Yeah.
So when some 16-year-old made $1 billion, let's take a look at it. It was too capital intensive for us, but this isn't a bad play.
No, and this one's only using $400. So now we went from our original trade where we were risking like 900 and we had four something a day in theta. This has $1.90 a day in theta, but we cut our risk in half. I like the one risking a little more.
I 100% like the one risking a little bit more. I actually like selling the naked put. But
I like selling the naked put.
However,
we are running low on buying power.
Yes, so we have to be a little bit more conservative.
I know. What can we close?
We'll take a look at it afterwards.
I wish we could close
this situation will be rectified by tomorrow's live from the SIBO.
I guess, I know we got a little crazy yesterday. I got a tight shot. I got to bring my hands in tight. We got a little crazy yesterday with that IWM strangle. If we take that off, that gives us $3,000 in buying power.
I know.
Maybe we shouldn't have done that.
And we'll take a look at it. We will. But just ship this. This is fine. And then put a tight GTC in. Risking $400, let's try to take 10% out of this. 10, 15%. Call it a day.
Okay, I shipped that. I did ship that.
Yeah, we'll see if we can get filled.
But I hesitate on the narrow one. 10% is $56. I know. Thanks for $50. Roblox. This is the constraints of a low amount of buying power or a small account.
Do you know what I love? Is I run our Tasty Live. All of our programming people are amazing, but Dr. Data did this thing where he takes ours and transcribes it every day.
Yeah.
And every time we go, meh, it's in like all caps. Exclamation point. It's pretty funny.
That is funny. I just want more than $56 out of the Roblox trade.
I know, I get it. It's good to want things.
Fine.
Well, we're gonna have this capital situation rectified by tomorrow.
The only way we're going to rectify the capital situation is closing the IWM.
We're getting real creative.
Okay, so that's Roblox. That's what you wanted to look at. What's next on the earnings list? Upstart and Rivian.
So we are staying down. Like the SPOOs are keeping their wings down. We're still down 37 right now.
The only thing saving me today, and I hope it's still up. Ooh, it's only up 80 cents. It was up more. Ooh, Pfizer.
Yeah, they had earnings and they did pretty well.
Yeah, that was.
Oh, they kept up.
Yeah, and it was up to $24.79, just a little higher than this. But
the bell of my ball is PLTR today.
Ooh, what did PLTR do?
It gapped up huge. I mean, not really, but you know what I mean.
Up 950.
Yeah.
Yeah, that's good. That's good.
I don't even think that was the expected move, though.
Okay, so Upstart, UPST, $80 product at the top of its range. Earnings are today after the close. We've got a $15 expected move in Upstart.
Take a look at this, Jenny. And I know we just talked about how we don't want to use the capital. You get dollar-wide strikes all the way. Do you have dollar-wide strikes to the upside, too?
Yeah.
All the way. Okay. Now, spike lizards typically don't work for earnings. Do you want to try one?
No, not an Upstart.
Try it.
I'll try it.
I just want to see if it prices out.
Okay, I'm going to show you an easy way to do a spike lizard. I'm going to start with a big lizard. Let's see, 80.90. That's $10 wide for $11.60.
That's perfect. No,
$12 wide. Here's $12 wide.
Yeah, but if you're going to buy something, you need to go $10 wide.
Okay. $10 wide for $11.60. I know I have $1.60 to buy something. But anyway, then you kind of flip the cards over, turn this into a butterfly.
Delete leg.
So sorry, 1x2.
Here's your big lizard.
1x2. That's the big lizard.
Can you toggle it so the green bar goes with you? Thank you.
Sure. So I'm collecting $1.73. I have $1,173 in profit potential. Our break even is, down at 68.
Yeah.
But it's using $4,500. We can't afford that. So let's do the 90, 80, 70 butterfly.
You're paying $168 for it.
I have to cover that $1.68 with 2 puts. I mean, that's the problem. We can't sell 2 puts in Upstart.
No, you really can't. But it looks beautiful in there.
But we could pay $1.65 for a $10 rate butterfly and hope it doesn't move more than $10.
Yeah, but look at where the expected move is. It's all the way out to 96.
Yeah, right. So
it just, my enthusiasm came from the fact that you can.
We could get our break even to 60. So here's a spike lizard, and
you're still using $4,000.
It's a lot of buying power, but to your point of, here's the trade. We could make $1,000 if it stays right around 80. We've got this wide win range.
You lose nothing to the upside.
You risk nothing to the upside, and to the downside, you get long Upstart at 60. The spike lizard is appealing.
It is, and I know you mentioned it yesterday. We do have a lot of people that will say that they, on the road shows, people will come up to us and be like, I have graduated and all I do is spike lizards.
Now, it's appealing. It's interesting. So it uses $4,000. It's pretty much, it's weird because in this trade scenario, worst case scenario is I get long 200 shares of Upstart at 60. 200 shares of Upstart at 60, but on margin would be, $6,000. So I guess.
Yeah.
It's almost using full margin.
Yeah, it's almost using full margin for it. Yeah.
I kind of like this trade. I do, getting long Upstart at 60, right down here.
Yeah, that looks great. So the spike lizard is very appealing as long as you're willing to take the risk. And it reminds me a little bit of Tony from Mexico because he'd always say, I like to defend it with the same side. And that's kind of what this is. You're putting 2 puts in there. You don't
if
have
you're
that.
okay getting long. Like, the only reason someone would put this on is if they would be okay getting long at 60.
Right.
It wouldn't let us push this button because we don't have enough buying power.
Oh yeah. No, I know. We just wanted to walk through it again. So and it looks good on earnings.
Okay. One of these days, Liz. One of these days. Maybe I'm going to call a meeting. I'm going to call a meeting or like I said, let's stop trading with the show account and let's just start trading with our accounts. That's my idea. That's my idea for the show.
I can't trade with mine. I got too much stuff in it. I have every ounce of buying power used.
You do?
Yes, I told you that. I took everything that isn't used and I put it into Box and Bill. BOXX and BIL.
You're not going to sacrifice that for the sake of the show?
No. I give it at my 6% or 4%.
All right. Anyway, not a bad looking trade. Not a bad looking trade. But I'm going to take a look at something we could afford. I'm going to see how expensive. It's going to be a lot. I'm just going to take a look at a diagonal, like the 80-90. The 80-90 diagonal. 80-90 diagonal, 450. That's too much.
Yeah, that's a little bit much.
In the one situation diagonal, we were paying a third of the spread. Here it's a $10 wide and it's for something that's too big a percent of the spread.
It is too big of a percent. And I don't want. Yeah, I agree.
All right, I'm moving along.
No, we will go into those, but you want to go top down. Let's make sure we get to everybody in Twitter.
And we still have Rivian, Disney, and McDonald's.
Yeah.
And I do want to look at Rivian because I think we have a position. Okay, here we go. Rivian. We have. Whoa, we need a miracle.
No, but let's roll that out in time. Let's take it. Let's take it as far out as we can because we can get the earnings boost.
It's not going to. It's $12. We have the 16 put. We're not going to collect anything moving out in time. It's not going to make a difference.
Then change it to a zebra.
Like it's so deep in the money. We're just long 100 shares of Rivian. So we're long 100 shares of Rivian. If you were long 100 shares of Rivian, what would you do against it? Maybe sell a strangle around it?
So I am long Rivian, and I'm going to be selling strangles around it.
Yeah.
But you can also change that to see if you get any buying power back. You might.
So $492 buying back this in the money put. This is just like long stock. So I'll buy this back. I'll buy back our deep in the money put. Right?
Right. And then if you want to, for earnings, buy a 3-day and then wrap a strangle around it. That's how you can save capital.
So here's a 3-day call.
Perfect.
We could even move it here.
Right, and then sell a strangle
and
around
then
it.
sell a strangle around it. But do we want to cap ourselves at 13 and a half?
No.
No.
Just change that. Just change our trade for that night.
Just buy the call.
There you go.
So we got $140 at risk on earnings. If Rivian goes up, great. We're just long the call.
So sometimes I'll do that if I'm long stock, and I am long stock in Rivian, but I'm going to change it. It eliminates a little bit of the risk. You're not giving up anything in extrinsic value when you're in the 3
15
day.
cents.
Yeah.
Not a lot. Not a lot. So we just have a long call instead of our deep in the money put.
Yeah, for sure.
I mean, Rivian, we have seen Rivian trade as low as what, $6, $7?
Oh yeah, it's been low.
Yeah, so
it's been low.
It's okay to take. Now we have $140 in defined risk in Rivian if earnings goes horribly awry. Did I get filled yet on that? No. There's a lot of commotion going on in the background.
It's just a low rumble.
SEP 5100 puts traded recently. June 4300 puts.
So if you want to go to the most active, there has been some on the most active or on the volume.
Okay, I will, and I'm going to go before we get to McDonald's and Disney.
Don't go top down. Go underneath.
Oh, underneath.
Oh yeah, I was just going to say because we're like Fabio's coming in, Jack Tucker's coming in, Blue Wackadoo's coming in 2 hours ago, and then you get to Frank the Great with the economic calendar.
Okay. Okay, so we had, all the SPX trades for today. Hopefully, people are surviving it because we're far from where we were on
So
the
what
open.
time did he? Can you move Tony Batista? Although I like looking at him. He did it at 8:46. What time did Eric do his?
Here's Eric. You can see SPUs were 63.35 at the time.
Did we decide where Eric is? If it's 6:33 a.m.
Or if he's just
Eric's location.
6:33 a.m. would be like West Coast.
Yeah.
Yeah, somewhere on the West Coast. But you can see where the arrow is. SPX was 63.35 at the time.
Yeah.
And now we're like 62.90 or so.
Yeah.
62.95. Yeah. So you can see his short puts. His short puts are right here.
But what's interesting about this is take a look at this. All they need is a little pop because it's still out of the.
His puts are the 62.95.
Yeah.
And I think Jack Tucker's were the same. Short puts, 62. Well, here 63.15, and then.
Yeah, he's 62, 60, 63.15, 62.90.
Yeah.
So, but they just need a little bit of a pop. Like Eric just needs a little bit of a pop.
Right. So
Yeah.
fingers crossed we get a pop in the market today for you guys. Jackie, one strategy I find useful in selling is to wait until the morning macro data release to pass. The fewer the possible surprises,
Agreed.
the better. Okay, so was there some release that came out this
Yeah,
morning?
there was. This whole,
Probably.
I think it's all locked and loaded with stuff, and we can go back to
Frank's
Frank the Greats.
calendar.
But I agree with you. That's why I usually wait until 9. Yeah, you got
PMI.
8:55.
PMI.
The Red Book weekly sales, of course.
So I see what Jackie's saying. Wait for the news to come out.
But I do believe, and that's what Jackie's saying, that's why 9 o'clock makes the most sense. Just in general. Things have a tendency to shake out by 9.
Yeah. Now, Fabio says the tariff live updates, pharma tariffs could go up 250%. So
That's probably why we turned around. That's exactly when we turned around, is probably my guess.
But as far as some of the pharma, like Pfizer was still up on their earnings. It's still up. I don't know.
Yeah, but it's not up as much anymore, he said.
No, right.
That's why Hims is taking a hit. We're already down on our what we sold.
13 minutes. Do you want to look at Disney, McDonald's, or get to the XLV trade?
I would like to look at Disney. I don't care too much about McDonald's.
And do you care about XLV?
I do care about XLV because we both care about it.
All
we
right.
both deeply care about XLV.
Disney and then XLV. 13 minutes. Disney and XLV. I think we can do it, Liz.
So I want to take a look at Disney. If we put something in, maybe we'll put something in if we can.
Disney, I have Disney at 118. You know, I was loving Disney down in the 80s, and now once it popped back up here, I have been out of it.
Yeah, I mean, that's what I'm saying. We can take a look at Disney. I don't know that I'm going to do anything in it either. I'm out. I tapped out in Disney.
Yeah, I'm out.
Yeah, if we're out, let's not get in.
Oh, because like I had sold calls against my stock. You probably sold calls against your stock at some point in time when we were tapped out of Disney.
Yeah.
I don't have anything in right now. I'm curious to see how far you can get, what the expected move is, $7. Go down to you get to the 111 for $1, and that's using $1,600.
I mean, Disney's never been that bad of a buying power stock. I like it around 100.
I kind of like selling puts in that 90 handle.
Yes,
And like
right.
So Could it go up on earnings? Sure. Will we be mad if we miss the up move?
No.
Not really. The diagonal's not expensive. 119, 126, so you've got $7 wide for 280.
That's not bad. Well, we've noticed all that today. Does that mean there's a lot of call skew? Are the diagonals cheaper when there's call skew?
Yes, because you're getting more for that out of the money call.
Yes. So
yes.
the diagonals trade cheaper when there's call skew. And call skew doesn't mean the stock's going up. It's just saying that they're...
Because you're buying the at the money in a lower volatility, and then you're selling that out of the money call in the higher volatility.
In the higher volatility, yeah. So
it's not bad. It's really not. What do you think of 284 in the Disney diagonal?
I mean, I don't want to go bullish, bullish, bullish. Because we just did.
Yeah, sure. I got it.
We gotta.
Do you remember where we used to just say bullish diagonals on everything for earnings? And
it took us
looking
out.
at Kai's, no, the down move, But look, remember Kai's information on earnings. We were seeing, over 50% were good earnings reports, but then the last earnings report, we had more stocks down.
More stocks down. Even on good reports.
Even on good reports.
Yes.
So, all right. Then let's play it safe. Let's play it safe with the Spider Select Healthcare Fund.
Okay, let's take a look.
Here we go.
32 rank.
At the bottom of its range. How did you find XLV?
I went to the X's in the watch list and went to the highest rank.
I went to stocks near their 52-week low.
Oh, well, that makes sense. So if you got an index, this should be at the low if it's got a high rank.
Yeah, if it has a high rank.
Yes.
It's a high rank, near its low. XLV healthcare ETF.
Yeah.
So, well, let's walk through because we had a lot of emails on it. Spike Lizard, but we can start with the progression, like Jade Lizard, Big Lizard.
To $5 wide strikes at the
Does
25
it?
level.
Yeah, but it'll still set up.
Okay.
I mean, I looked at a Big Lizard here, which made sense.
Okay.
But we'll compare. Here, we'll start with the Jade Lizard with just like basic Jade Lizard.
And look at, well, I guess it's not the same. It's a $125
Yeah,
stock,
16 Delta put is a 75-cent put, $1 wide call spread, and you're getting $1.05. Here's a Jade Lizard, break even at $1.24.
Yes.
Whoa, watch out. What happened?
Somebody dropped something. Somebody dropped something back there. That's all I can say.
But I would say, like, this would be the, I don't know, I'm not going to say quietest week on the floor because you don't know what the market's going to do, but least amount of people on the floor because, like we said, Illinois, dead week, all the traders are on vacation.
Yeah.
Except the crew you see behind us.
Except for...
but it is like, looks like an empty pit.
It does look. It looks a lot more empty than it usually does.
Yeah.
Okay, so I don't mind this. And that's the Jade Lizard. Let's go to the next. If we could pop into the platform again, that'd be great.
Okay, I'm going to show this on the curve view here, analysis. So here's the Jade Lizard. You've got this wide win range where you can make $100. The stock is trading right here in the middle. No risk to the upside, and your risk is getting long 100 shares of XLV down at that, 123.72.
So looking at this, I would prefer a Big Lizard with a fat tail. I want no risk to the upside with a fat tail. I need you to buy something.
Because it's using almost $2,000.
Correct.
So then we go to the table page and we change it. We change it to a Big Lizard. So with the Big Lizard, I bring my call spread, my short call.
To the 33, yeah.
Yeah, bring this all in.
One in.
So 33.36, that's $3 wide. 32 put, I'm collecting $3.98.
You brought your upside break even in only by 2.
Not much. And I could, let's see, that's $4 wide for $4.32.
Well, if you take it to the 36, you know you can buy the 926.
I can buy this 125.
Or the 26.
Yeah, so this is using, so I was just looking for a little over. If it goes up, we make something.
Yeah, there you go.
If it goes up, we make something. Here we're getting 317, and it's only using 383.
So we took something that, I do like the Jade Lizard. I think the Jade Lizard looks the best, but you're using a lot of buying power doing that. So
I know.
That's why we wanted to switch it.
So instead of having that wide win range, you've got a narrower win range.
It's still pretty big, though.
Yeah, and your break even here, you're at 128.83 instead of like 127.
Yeah.
Not terribly different.
No, it's not bad. Let's ship it.
Okay. And you can tweak it, like Liz said. You could bring this up and have even less risk. Then we're risking $300, and then we have $3.
Yeah, but I don't mind. I mean, what's the difference between like?
I just want it a little over, so if it goes up, we're guaranteed to make something.
So 315. We're collecting 315. We're using 385 to do it. You're selling the 132, 133 strangle. You're buying the 136 and the 125. No risk to the upside, and you can see that in the green bar.
Okay, I'm going to ship that.
Now, how wide was the market underneath? I didn't see it.
These markets are a little bit wide. I didn't pay too much attention. If I take this down to 310, this is going to be final offer, 310. I took it down by a nickel. If we don't get filled a nickel lower, then we're not going to chase it.
I wouldn't chase it at all.
Yeah, we're not going to chase it. Took it down by a nickel, we're not going to chase it. So that's XLV.
Okay.
In honor of my view being McDonald's, I just want to look. McDonald's 302.
I mean, it's been within a range.
Yes, it doesn't seem to get out of this, like, it hasn't seemed to have broken out of this low 300 level.
No.
What's the expected move? $8. $8 expected move. Seems like $8 expected move seems like a small expected move for.
I feel like it's way too low for McDonald's.
Way too low for McDonald's. That's what I think.
That's what I think too, and I don't like that. So I wouldn't want to sell premium with that.
No.
Okay, we are almost out of time, Jenny. I got a question for you. So with the market the way that it's doing right now, let's take a look at the VIX. I want to see if it's moved since when Annabelle quoted
when
it. When
Annabelle quoted it was 1880.
1880. So we've come down a little bit. So the VIX.
Because they're just kind of sitting here. We're still down 30. We've been down 30 for the last hour.
Yeah, we have been.
Yeah.
So it's pretty interesting. No, we significantly rallied throughout the day. We started yesterday. We started, up 20, then up 40, then up 50, then up 60, and we just went like this the entire day. And today's the exact opposite. We were just going down, but now we're just sitting here.
Right. I know. Down 30.
Okay, so what do you think is going to happen?
End of day? Down 30. I don't know if we're going to move. Down 50 maybe? Maybe. If anything, I think we're going to be down a little more. I don't think we're going to bounce.
Okay, well, the chat seems to think we're going to be hitting new lows.
Okay. All right.
And we're going down a little bit. So the chat seems to be right.
And I think we got to everybody on Twitter.
Oh, I think we did too.
Yeah.
I think we did too.
just had a G.
Can you, okay.
And we didn't look at all the, so Oklo, SMCI, and Uber.
Shameless self-promotion. You got to go to the live events before we close the show.
I just want to make sure I'm not missing this. Oklo's not till next week. And
Next
Uber.
week. Uber is not on the list, was it?
Uber's today.
The 6th?
So today's the 5th. It's the 6th before the bell. So Uber would be today.
Uber is today. It's $90. Take a look at that chart too, though. So you've got a $6 expected move.
I mean, 80 cents on the 83 put.
No, you're giving $1,000 for 80 cents.
I wish I wouldn't have put that IWM trade on. She's not letting me trade anything today.
No, you went crazy yesterday.
Jeez.
You lost your mind yesterday.
All right, well,
you got to rein in today.
I'm gonna get that $3,000 back. As far as our activity, HIMS, SMCI, Snap, Rivian is the only thing I don't think we pushed out. We closed our deep in the money put, replaced it with an in the money long call. We're just synthetically long stock. That's all.
Okay, so Rivian is the. Did you push them through?
Yes, they're all pushed through. As far as the tasty events, let me find them. Here we go. We have a lot coming up. Mike and his whiteboard are in
this
Seattle.
Sunday.
Yes.
Wow. Okay. Come out and see them in Seattle this Sunday. That's awesome.
Yeah. Sign up. It's free.
Yep.
And this At Work by 11. That's going to be Friday, August 15th, and the Thursday before you have to sign up. But there is an in our office event.
This is a sign up required in office event.
Yes.
But this is sponsored by the SIBO.
Yes.
At Work by 11.
So, and we're all going to be there.
Yeah.
Liz is going to be there. I'm going to be there. We're all going to be there in our office.
No,
Thursday.
I will not be at the At Work by 11.
We're not going to be at Work by 11, but we're going to be in our office on that Thursday. Sign up required for the Thursday. And I don't want to say event. I think people can just pop into the office.
I think it's hours. I don't think
it's a certain time frame, and you have to sign up. You have to email.
Yeah, I don't think it's a pop in. So we'll see.
It's not a pop in. You have to sign up, and you can email Tasty. Who do you want to email?
No idea how you got it.
But we'll check. We'll find out. We'll let you know tomorrow.
All right, Jenny, we are out of time for today. Everybody, good luck with your earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mike Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike, Thomas. Thomas, good morning. How are you, sir?
Doing good. You know, the weather's getting nice and cool at night. I love it. Doing a lot of canning with my tomatoes.
Ooh.
Yeah.
Very nice.
Got like 30 jars so far. So
really?
Working on it every night.
How many plants do you have?
I got like 20 San Marzano plants and 5 super saucers, a few other random, you know.
That's a lot. That's a lot to keep track of.
How does the canning process work?
So you like blanch the tomato, the skin pulls off easy. You know, you put in some steaming water, put it in ice, peel the skin off, boil it down in a pot, then you just put it in the cans.
You got to seal the cans.
Yeah,
though.
yeah.
You got to do the like.
Screw it on, water bath can it for like
Yeah.
35 minutes if it's a pint,
Yeah.
45 minutes if it's a quart. So, yeah, but I got.
So this is a whole operation.
Tomato sauce all through the winter, so.
It's gonna be great.
There you go.
Awesome.
And then you have the Westwater Farms logo on these cans.
Yeah.
Oh, that's awesome.
Yeah, and I pulled like 80 onions the other day, so those are all curing. Gonna have those all through the winter. So.
Very nice.
I'm set for spaghetti all winter.
You might have something here. I think you should make your own, like actual like sauce.
Maybe, yeah.
And just start selling that thing.
Sauce or something.
Yeah. Tom Sauce-Noff sauce.
Yeah.
No,
Sell it here.
don't put that Tom on it.
Yeah, no.
Don't scare the children. Although he could kind of look like an old like grandma, you know, like if you kind of make the picture a little bit like grainy, it could fill the spot of like the old Nona.
Yeah,
you know,
yeah,
like he could be a Nona.
You could create some AI stuff.
Yeah, like make it a little bit more feminine.
Yeah.
Yeah.
Well, that's exciting.
Yeah,
Good
yeah.
stuff.
It's pretty nice eating food that you've grown and
Yeah.
processed yourself.
Mm-hmm.
There is something to that.
Yes.
You gotta buy the noodles and beef.
I've always said living in the medieval times would be tough, but that chicken, let me tell you, that chicken's got to be so good.
That's
Yeah, just completely unprocessed, just organic. Everything's organic in the medieval times. Just saying.
All right. That's.
You have to brush your teeth with like horsehair.
You're going into the what was that meme, like the Roman Empire?
Oh yeah. How often do you think of the Roman Empire?
Yeah, you're basically there.
It's more than zero.
Yeah, you think about it a lot.
I do.
Okay.
Yeah. All men have been conditioned to think about medieval times, the Romans, at least once a month.
Certain periods, in the Roman Empire, the tax collector comes, you could just kill him.
There you
Yeah.
go.
So,
You got to work on your sword skill.
Can't do that today.
Can't do that.
You have a lot of medieval times experience, so maybe your
do.
sword skills would be quite good.
I've seen a lot of sword fights.
I'm buddies with one of the guys that
Really?
He's a knight at
Really?
times. Yeah.
Is he? Do they move him around, or is he a specific
No, I
one?
think he specifically stays here. I used to do.
No, I mean like which color he is. Like
the last time I checked, I think he was the blue knight, but I'm not sure.
Ooh.
That's what he always is. Yeah.
because don't they have? Isn't it always set like the Green Knight is the bad one?
He's like the villainous one.
Yeah.
But the narrative always changes. It's a different.
Is there a different winner?
Different wins.
Oh really? Oh, okay.
Yeah. I think they usually do it by like what group is the largest.
Yeah.
And has the most amount of kids, and then they
Yeah.
make them win.
Yeah.
Gotta make the kids feel good.
No. No.
We'll have to run some data.
Mm-hmm.
Figure it out. But yes, I'm sure I'll be going again this fall.
It's a
your annual tradition.
yearly pastime for you.
Mm-hmm.
Very
Anyways, market's red again. This is interesting.
You say again like yesterday was red. It was not. Yesterday was a face ripper to the upside.
Well, it's giving back a little bit.
Tiny bit.
Tiny.
A little bit. Nothing.
But in the last week, we've had 1, 2, 3, 4, 5, 6 red days.
I know. It's pretty
6 red
crazy.
days, 1 green day.
Times are changing.
Yeah. rates are changing, it appears.
Yes.
I think they heard me talking, saying, you're not going to cut rates, you're not going to cut rates. And then next day, they flipped it. Now we have an 87% chance we get a 25 basis point cut in September. A 40% chance, 60% chance we get another 25 basis point cut in October. And then it's a coin flip, whether we get another one or we stay at 50 basis points for the year. It's going to be crazy.
Money printer go burr. Turn it back on.
And I think this could be the situation where if they do end up cutting, that's when you might see some big market moves. Because so far it's been push, 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 push. There's still a probability that they don't cut. But if they actually do cut, I think that's when you see the reaction in the market. And you can kind of see it if you look at the September 17th expiration.
For what, SPX?
For SPX, which is really the September 19th. See a little bit of an IV boost there, but this will be more prominent as we get closer to that expiration.
Yeah. I mean, volatility hasn't really gone all that high. It's still in a pretty decent contango here, so there is that kind of drag on volatility, especially after yesterday. The vol crush yesterday was quite spectacular. I mean, if you look at the chart of volatility, it basically reversed the entire move from Friday in terms of volatility. We actually got to a low point, a little bit of a bounce today, but it has, volatility has not been sticky to the upside, to say the least. It hasn't held any sort of legs in any of the down moves that we've had.
Yeah.
Been no continuation. Even into last week where you had a little bit of market weakness, you can see volatility itself was basically unchanged / lower. So, no big move in volatility, unfortunately. Quickly to the markets, E-mini is down 25. They've bounced about 10, 15 handles from the lows today. We got to 63.15. That was the low of the session here. NASDAQ down 111. It's the weakest of the group today. You have some bigger moves in NVIDIA was down like $4 or $5 earlier today. Meta's been kind of weak. Microsoft, and by weak, I mean they are just down. They're all very much near highs here. You have some of the lower, the middle tier tech stocks. I was looking at CrowdStrike today, which was down a handful. It's down 12 now. It's had a pretty big move to the downside. Netflix is one that since earnings seems like it hasn't caught an uptick at all. Apple and Amazon catching a little bit of a bid. Apple's actually up a tiny bit today, but it's near the lows. Amazon as well. It's up $3, but has looked like duty for the better part of the last week or so since earnings. So some weakness in the big name tech stocks here, despite the big move in Palantir up $10 and change. That stock seems to just go up every single day. You got the Dow down 59 and the Russell actually up 2. So the Russell bucking the trend. It was moving with everything else yesterday, but has been relatively strong. You got, as Mikey was talking about, bond rates projections seemingly coming down, or at least, you got the bonds at 115. So they're telling you that rates are coming in a little bit, which should be overall bullish for small cap stocks. They have a little bit more reliance on debt and financing and whatnot. So rates do kind of play into those a little bit more than the NASDAQ or the mini stocks. Oil down 68 cents, /CL 65.61. Swift move from 70 and change here. As we talked about, volatility futures, 1836. We're up 41 ticks. They got as high as 19, so we are certainly off the highs. The VIX itself at 18 and change here. Vol getting bid, but not exactly exploding into this down move. Gold and silver have both been super strong. Gold's up $15, silver up 49 cents, and then Bitcoin giving up a little bit here in the 113 handle, down 1,700 on the future, spot down 800. A little bit of a risk-off day across the board, it seems like. Risk on, risk off. Risk on, risk off. That's what it's been. One little dip, explosion, and buy the dip.
Yeah.
And then a dip again. Maybe we buy it here.
Yeah. It's It feels like that's the MO of low VIX environments.
Yeah.
Certainly a lot more dip buying because the general fear, like the real true uncertainty, isn't really there.
Sure what it seems like.
Yeah. But we'll see.
Yes.
I think the September Fed announcement will be an interesting point in time. We did get through a lot of the earnings this cycle already, but there's still some more coming down the pipe. So maybe we'll see some big moves there. But, yeah, it's been kind of two-sided.
Mm-hmm.
Coinbase got hammered.
Yeah, Coin's getting killed today, too. Down 16 and change, 300. Man, swift move from 450 to 300 in about...
It's very odd.
2-3 weeks. Yeah. See, it's at a certain point, don't you have to take some chips off the table? You ride from 200 to 450. I don't know.
Pure euphoria.
Yeah, I look at Palantir. It's in my spots of places to maybe get some short delta. Yes, but had some good trades in there for earnings. We had the Strangler I closed out before earnings. I also had a Butterfly that was perfect at about 175 was kind of my spot for Palantir. So I closed out of that. That was a nice little trade there. Closed out of the HIMS position. So HIMS was one that I've been getting a ton of questions on. Stock was up at 65 and change. Had about a 10-point down move on earnings. I closed out of that ratio spread, so took some profits out of that in both this account and the Johnny account. So that was a nice one. OKLO, I bought in the risk on the down crab trade. That stock has gone parabolic as well. And then closed out the Webull cover call. I think this was like a fast market trade that we did over the last couple weeks, but that was a nice one as well. And 2 new trades for Eli Lilly and another one in Palantir in the cherry picks that should be coming later this afternoon.
We do have Snapchat earnings after the close today.
Yes.
So I remember placing that. That was a trade we placed when we were on the morning show, I believe. But it was I bought 100 shares and then I added a call ratio on top of it. So I have the 11.5 call ratio, 3 days to go. Basically a scratch right now, but if we get a rally from earnings, that'll be a nice trade.
Yeah. The other big earnings today, AMD, SMCI, those are pretty much the biggest I'm looking at. Lucid, Rivian, Toast.
And yeah, we have a bunch of earnings previews in the News and Insights tab. I'll put a link in the YouTube chat for that.
Uber tomorrow morning, Shopify, NVO, Disney.
Yep.
McDonald's. So there's a handful. Yeah.
But yeah, we will be in Seattle.
Yes.
This weekend.
Come hang out.
Yeah. On Sunday.
Get a couple drinks on me.
Yeah.
Not really on me, on Tasty, but
yeah. The old crocodile. It's gonna be fun.
Very nice.
Do they still do grunge music in Seattle?
Oh yeah.
Oh, I think this place is like a grunge spot.
Grunge spot.
Yeah. They have a couple shows I think we have the option to go to.
We will see.
Yeah. I didn't plan this one very well. Should have gone a little earlier. Enjoyed Seattle for the weekend, but
I mean, we'll be there bright and early Saturday, so we can explore Saturday.
Time change. The flight back, disaster. Disaster.
Because we go backwards and then we're adding time.
It's like an 8-hour time difference.
Yeah.
And you get 4 hours flight plus 4-hour or 3-hour time loss. Woo.
They'll do you in. We'll have to call off Monday.
Well, it's on Monday.
We are.
Monday's our flight, and Tuesday.
It's gonna be all loopy on Tuesday.
Yeah.
But yeah, join us live.
Yes.
Full free. tastylive.com/events. August 10th, and then we have the
Chicago event.
Chicago event the following Friday.
Yes.
So Talia Hall, great venue. Lots of great Mexican spots around there. So if you are going,
Pilsen.
plan on eating lunch there.
Yeah.
Afterwards.
Some good food.
But yeah, doors at 8, show starts at 9. Friday, August 15th. Reserve your tickets today.
Yes. Very nice.
Cool. Well, it is Thomas Tuesday. We're talking futures, specifically live cattle, which I don't have a position in. I'm very excited for it.
Getting in now.
I'm going to.
I do. I think I do have a live. Yeah, I have a short call spread that's right at the money. So we'll see if we're on the same page here.
Yeah, we'll see.
I don't think so. I don't think so. That wasn't instilling confidence in my position. So that's okay though. Two sides to every market.
Yeah, I think we could get right into the slides. There's a couple interesting things going on with beef cattle right now. It's it's pretty crazy out there. So just go to the first slide. August usually seasonally, we're headed a little lower.
Okay.
August, September, October before you get a little uplift there. But one big thing is these Trump tariffs on Brazil. We have a surplus with Brazil, so it doesn't really make too much sense for these tariffs. But again, they're saying it's political. He doesn't like the person that's the president right now.
Yes.
So the tariffs are here. There's been a lot of exemptions announced. Beef is not one of the things on the exemption list. So that 50% exemption, it's going to hit these numbers, and we see this blue line. This is from S&P Global Commodity Insights. This is showing, the huge rise in beef imports from Brazil. And one thing that's going on is why we need all this beef is the U.S. supply. It's pretty low. We've had years and years of drought. The head counts have just been getting lower and lower.
Okay.
Now we have this thing called the New World screwworm. It's this fly in Mexico.
Okay.
A couple months ago, it was about 700 miles away from the border of Texas. Now it's more like 300 miles. So they're coming up. The USDA is doing a lot of stuff in coordination with Mexico to try to prevent these screwworms from getting up here. One of the things we've done is we've suspended imports of Mexican beef. So one of the main import avenues that we get beef from.
Right.
And the screwworm is really devastating. They're trying really hard not to let it get into the U.S. supply. The U.S. hasn't had it for decades. When we did have it, it was killing, thousands of cows. This fly lays its larvae in open wounds,
Okay.
and then these larvae, they eat the flesh. So it pretty much severely injures or kills the animal. So what the USDA is trying to do is they're funding some production sites in Mexico where you actually breed millions of these flies and you release them, but they're sterilized. So you're releasing male sterilized flies out there. They breed with females, and then in turn the females become infertile. So it's pretty much like you're interrupting the life cycle of these flies.
We're playing God.
Yeah.
I've seen these movies. They don't end well.
Yeah,
That's a little scary.
Lord of the Flies?
Oh, it's different than Lord of the
I'm not
Flies,
sure how they
but-
do it. I think they radiate these flies or something. They do something to them to sterilize them, and then they release them by the millions, just out in the air. So if it gets closer, yeah.
Just a black swarm of just sterile flies.
Engineered flies. We know about engineering from a couple years ago, and that didn't turn out well.
Is this how the zombie apocalypse starts?
Pretty much.
Yeah, I mean, it's one way, but
Yeah.
I get nervous.
They've been doing that though with haven't they been doing stuff with mosquitoes and all that?
Yeah,
other
we do a
stuff?
bunch of crazy stuff. I mean, the other thing is India. India right now, Trump is saying we want India to take a lot of dairy, a lot of agricultural products. The one thing is India really doesn't like GMO stuff, so genetically modified things. They don't. Their stance in that country is it's harmful, so they don't take in a lot of that stuff.
I don't blame them.
And Brazil has these elections coming up soon, and if the president of India, accepts a deal where you take in a lot of this stuff, a lot of India's populace, they're farmers, so they, it's going to lower their prices for corn, it's going to lower their prices for cattle, all this stuff. So. It looks like products not going to get sent there anytime soon. It's a lot of political headwinds. From Mexico, the cattle's not coming in. And now Brazil, where we've been sourcing a lot of this stuff, those 50% tariffs are probably going to slow down these imports.
Okay.
And that's just going to drive beef prices higher and higher. The demand is still there. People are still buying beef. That's why these prices are staying elevated.
Yeah.
We like our beef. It's probably going to take us a little more price increases to really, throttle this demand. But we'll go to the next chart. This is just, your seasonality. So, August, month 7, you start going down through August. September, you're going down. It's not till October you find a little bit of increases. And the blue line is live cattle. That's what we trade, the LE symbol. Feeder cattle is, forgot the symbol for it, but feeder cattle is what moves onto the live cattle lots when they get up to a certain weight. So there's 2 segments of that market. It's really, we're counter trending the seasonality right now, and that's because of the things we mentioned, Mexico, Brazil, etc.
Screw worms.
Yeah, screw worms, all this crazy stuff. And there really isn't too much besides for that, too much analysis behind this other than, the chart. We've been supported by the 9-day moving average, the 21-day moving average for, going all the way back to the start of or late June. And we've maintained those levels. So the chart is telling us, the prices are telling us that, to stay long. Every dip, and there hasn't been many, there's been 2 dips over the past 6 weeks, and they've gone bought up pretty quickly. We're buying up a dip right now. I mean, price is up 1.7% today. Last week, we had probably the biggest down move of the year.
Yeah.
And that took us to the 21-day moving average, the 1 month, EMA, and it supported us again. So, it's just a market where buyers are coming in and, selling pressure is not lasting anything past 2 days. We'll go to the next chart. This is just from the USDA. U.S. cattle on feed down 2%. The marketing, which is cattle that are up to weight and go to the market, that is the lowest for June since the series began in 1996. So a lot of supply problems in this market, more supply problems coming with these tariffs on Brazilian beef. And it's just kind of a perfect storm of, things to get these prices higher. You could short it, saying the prices, we've run too far, too high. But if you've done that over the past couple months, it has not worked out. You have to be very precise in when you take that entry, because you've only gone these couple times where it's
gone down.
It's really gone down, and it's it's not doing that. So the seasonality trade, if you were coming into August, you were saying, oh, seasonality, we're slated to dip here. It has not worked. We'll go to the next chart. This is just net speculating position for non-commercials. And we are still maintaining that, this very long position. We've been at the longest since, going back to 2023. If you go back before that, you have to go to 2019 during COVID times. So the market's still thinking we're very, very long. I mean, I think the market's right here. I think the speculators are right to stay long. I think it's, getting in this trade, it's got a good IVR. The IV rank is at 87.8. I have an order filled. I did a short put spread, the 59 days out at 225, 226, just a pretty simple trade. Either we stay the same or we keep going up. And if we keep doing what we're doing, this is just a trade where you're doing what's worked.
Yeah.
You're not doing anything fancy. You're not trying to call a top. You're just staying in something that's worked. And, if the market keeps doing what it's doing, if these screw worms keep getting closer, the market's going to keep getting more and more nervous. These Brazilian tariffs stay on. That's excluding a big supply avenue into the U.S.
Mhm.
We already have low head count. So, even if demand drops a little bit, and I think I did have a chart somewhere in here.
You think that's the only way it flips the script? Is like demand dropping?
I mean, demand is dropping a little bit. If you look at the cutout prices, we have come down a little bit. I was going to put that chart in there, did not make it in there for some reason.
Oh, good.
But yet the market is not, these slight decreases in cutout prices, which are where you slaughter the cow, you cut it up, you send the loin, the primal cuts, you send it out to the market. Those have dipped a little bit in line with seasonality.
Okay.
But the futures market has not, it's not taken the cue from that downstream demand. It's taken the cues from the screw worm thing, the real stuff. It's still, we're going to get over this 2 month of seasonality downtrend. And then, for 60 days out, you're starting to get into that seasonality where you're lifting up again. So, I mean, I think this is a trade where you don't overthink it. You just jump into what's happening, and, these screw worms, they're not going to be, unless they all decide to head south all of a sudden, they're going to keep doing what they're doing. If these USDA reports come out that they're getting closer and closer, the market just gets a bit more nervous. Maybe, if they get really close, maybe all the farmers try to push a lot of product right away, thinking their herds are going to get potentially infected. Maybe that could create a little, temporary boost in supply and bring prices down a little bit. Maybe that's something that can happen. I'm not too sure, but I don't really see anything that's going to immediately cause a drop in prices.
Yeah. Well, it sounds yeah, it sounds good. It sounds good. I have a call spread that I've had on. I think it was part of a trade idea or something from. I've had it for a while, and I'm right at the money. So I wish you all the best, but I'm
go out
selling.
Go out and buy some beef.
Yes.
Hedge yourself.
Yes. A little bit of a hedge, except it is getting quite expensive.
Yes.
You see it at the stores. Yeah. A pound of ground beef is like $9 now.
Yeah, it's getting high.
It's getting a little bit much.
So you gotta go to Costco. I got 36 organic eggs at Costco for like $7. I'm like, how is this possible? Unless we're getting absolutely gouged from the other places.
Yeah. I don't know. It's quite expensive.
The one place that's cool is, have you guys been to Wild Fork?
Mm-hmm. That's pretty cool.
We got some pretty good cuts there.
Yeah. We have one. Is that one on Halstead still? That one's still there. Yeah. They do like the flash freezing of like
flash
local
freezing, vacuum sealed.
Westwater Farms could get on that.
Yeah.
You need a little second revenue
some more
stream.
land, so if the neighbors sell.
That's true.
There you go. Sell to you.
Yeah.
Go on, sorry.
Yeah, I just got filled. So I did a diagonal spread, very small diagonal spread. It's basically a calendar. But I bought the 235 in October, sold the 236 in September. That was a debit of $700. But just moving the 236 short to the 236 short from 235 gets rid of basically all of the upside risk, and it adds a lot more profit potential. So yeah. Same contract. The October and September both settled to the V contract. So it is not calendarized through different contracts. It's calendarized through the same contract.
Any other of the ags or something like that are? I mean, all of these are kind of at lows. Corn is getting
crushed.
killed.
All the satellite imagery, the weather, it's been really good. The crops look like high crop yields per acre. It's just a season where a lot of farmers planted corn, and it looks like that crop is going to turn out pretty well. I don't know how the farmers are going to take this. Prices are pretty bad right now. If you were looking back 20 years and you were adjusting for inflation, corn prices should be up like $800 to $1,200 right now. And, it's just, without the government subsidizing all these corn farmers and stuff, I don't think anyone would really be planting corn.
Because the prices haven't gone anywhere. Is what you're saying? Yeah.
Yeah, but it's looking ugly. I mean, I don't know. I don't want to short here just because it's. I mean,
it can't go. It can only go so low.
Yeah, I mean, but it's gone a lot lower than I expected. I thought that that 400 level a few weeks ago, I thought that would hold. Then the 390 gave out. Now we're trading, 382. It's. I mean, there's some good volatility in there. It's just this is.
It's ugly.
If you don't get any like severe weather events like hail ripping through some of these fields or tornadoes, all that stuff, it doesn't look like there's going to be much relief as we get closer to this harvest. There's less chance for this crop to get impacted, and it's not looking like we're going to get any crazy heat waves through the Corn Belt. I mean, there's some chances for severe weather, but it would really be like some severe drought that would really hurt this crop.
Yeah, all these are basically at lows.
It's crazy.
There.
Someone was asking about the wheat calendar spread that I have got. It's the 560, 595. So that's a really long-term one, so I'm not doing anything there. But I bought the 108 day, the 560, and then sold the 52 day. 595. The 595 still has $120 of value there, so I'm not adjusting that, and it's really long term. So maybe we get a little boost here.
Yeah, we do have the WASD next week. It's on the 12th, so that's a week from today. A lot of people are going to be watching the acre or the yield per acre on the corn. It's not looking like it's going to get downgraded right now because, like I mentioned, the weather, everything, it's all looking good.
Okay.
Yeah. We'll be praying for it. But yeah, shout out to the farmers that shorted corn at 480 to lock in their price. It's crazy. Beautiful. Well, long live cattle, long micro natty gas, long corn, long
we got that
long everything.
That natty gas move. Didn't you get out? Didn't you have like a?
I still have the micro contract up.
You have a micro?
For natty gas, yeah, I'm taking some pain on it.
But now
it's helping a little bit, but yeah, I'm still.
Now we're at low, so
now you gotta hold.
Just weather the storm.
Yeah, you gotta let it ride.
Yeah, I still got a short put spread too at 3. So as long as we stay above 3, and I think I think I said 2 weeks ago I think we bottomed, but now we're up against this November 2024 swing low in natty gas.
How low can it go?
I mean,
can't be zero, right?
If that breaks, I mean, it could go down to 2.6, 2.7, but it's we're holding 3 for now, so that's good.
Any view on oil too? I mean, oil's had a pretty wild ride over the last 2 weeks or so. Up to 70, back down to the 65 handle. I've been doing iron condors in there. It's been a nice little trade. I did a short position in my Johnny Trader account, a short call spread, so that worked out. But anything changing with oil for you?
I mean, I think iron condors are the right move to do right now. It's fallen back into its range that it's been in for, going all the way back to early July. We're at the bottom of the range now. I think an iron condor with a little room on the upside.
Yeah, a little skewed a little bit. Mikey's looking at it for an MCL.
I'll probably put that on today.
Nice.
A long MCL. I mean, you got OPEC saying they're going to do more. You got people doubting that Trump's actually going to put these secondary tariffs on the fuel.
The India selling of Russian oil, all that
like
stuff.
India and stuff like that, but you never know what he's going to do. So
I'll put an order in at 65 flat.
Ooh, there you go.
I want the flat order.
Gold and silver moving, obviously the rate effective, or you would think maybe an effect of the projections for rates. You think they're going to continue this move, or are we bouncing back off that like kind of 3,500 top that we've had in gold. Like gold's been chopping between 33 and 35 for pretty much all year.
Yeah, I think an iron condor here is maybe the thing to do. I mean, it's in the middle of the range pretty much right now.
Mm-hmm.
So I'm not going to try to, trade it long or short out of this range. I don't think that's the thing to do.
Yeah.
I mean, we've really come up here as rate cuts bets have come up, so that jobs report has helped us get this boost. But I don't know. I don't know. I think even if we get these 2 rate cuts, breaking above 35 is still not looking like it's really tangible too much right now.
Uh-huh.
I think the range trade is the thing to do here.
I have a gold futures position, but I'm going to put a slightly short skewed iron condor on in GLD. So I've got kind of 2 short positions in slightly tiny 2 delta, 3 deltas in gold on GLD. And then my gold position, I'm like right at the money, but I've been rolling down calls, rolling up puts. So I need a little bit of a down move in gold, I think is kind of where I'm at.
I just did a 24-day, August 29th, end of August, call Brooklyn Butterfly.
Okay.
Bought the 3480, sold the 3500 twice, bought the 3540, classic 20 by 40. I've done this like 6 times in a row, and they've all worked out just because on any sell-off, I'm removing the risk immediately and locking in a credit. But we'll see.
I like that.
It's been a great trade this year for sure.
Yeah.
Trading the price moves against what's happening.
This has been the most, this year, gold trading has been the most interesting I can remember.
Yeah.
Like the gold used to be one of ours, like why even trade it? It was kind of like bonds.
I remember you saying, who cares about these boomer rocks?
Yeah, the shiny boomer rocks. Yeah.
Yeah. But now
they're tradable. Now you got a little bit of volatility.
Yeah. I agree. Cool.
Sweet.
Yeah, I was filled on GC for $260 in the 24-day cycle, and I'm still working that MCL order.
There you go.
Diving deep into the futures market.
Awesome.
All right, popping over to the YouTube chat now. Colin, best P&L year so far. Love that.
Sweet.
Trying to learn futures options. I was wondering if you have any tips. Looking at ticks is confusing. Yes. So I would not trade futures if I had to do the math. I just wouldn't do it. I would trade an ETF.
Yeah. Or just stay really small, or, the micros you kind of have to be directional with.
The micros are easy. You just buy them straight up or sell them.
Yeah.
But to give you a tip, Colin, so I don't learn any of these ticks. I know that they are what they are, but what you can do, and what I do is I throw trades up and I look at the information that's provided from the Tasty Trade platform. So like going back to, I think the lean hogs example is a better one, where so I bought the 59-day 235. So I click the ask there and I say, okay, I look at the max loss. So this is a $1,300 option. And then I went to the 31-day and I initially sold the 235. And I say, okay, this is a $630 debit. That's my total risk, nice and small. And then I go to the curve analysis. And
you have the 235 and then the what? The 240?
The 235 calendar.
Oh, calendar spread.
Yeah. So I looked at this curve analysis and I saw, okay, this is a $600 position. There's risk to the upside. What if I move this 235 call just up a little bit to 236? And now you can see it removes almost all the risk the other way. So it's a small diagonal. There you go. So now it's
236, 235, 236.
Yeah. So it's just a small diagonal for $700.
I'm moving the long option. Now I'm really messing everything up.
There you go. So this is all I did. I looked at this. I said, okay, $700. That's in my wheelhouse. No risk to the upside, which tells me that the max the max value of this 1 point wide spread is more than $700 because there's no upside risk here. And yeah.
We also have tons of resources on futures. A
Yeah.
lot of them, these are not our wheelhouse of futures.
Yeah.
E-minis are $50 a tick. Like that's
But my point is, you can trade all these futures because the platform, it takes the tick sizes and everything, and it converts it to dollars on that max loss, max profit line, and also the Theo here.
Yes.
So I use this exclusively. That's how we can trade, 6J options, which are impossible to even look at.
Yes.
Unless you do the same exercise. Then now you can look at these and just be like, okay, these options are $500 at the money, 30 days out.
Yeah. And I think the point being, too, of doing defined risk spreads.
Yes.
There's no, we don't really do any naked positions in futures because they're big. You get extra leverage. They have a lot more risk than the capital you put up. And so it's important to understand that the buying power is going to be far different than what the max loss is. Your max loss is going to be bigger on a lot of positions.
Yeah. And then the other little tip I would say is to determine the notional value of these positions is to go to the trade page and just pull up the nearest expiration and just sell an at the money put. So if you go to the 227, you can see, okay, this option is $1,700. The max loss is $89,000. So this is a $90,000 contract.
Yeah.
For what it is. But you're only putting up $1,900 to hold this contract. So I do this to determine the notional value. If I'm ever curious, I just sell an at the money put and just look at the max loss. And then add in the credit you'd receive. So those are some just easy things you can do to dumb it down, for lack of better words, or simplify it. Because, I find the ticks to be
a barrier.
They're certainly a barrier unless you do stuff like that. Let the platform help you out.
Yeah.
What do you put on chicken in medieval times? I looked it up. They would just roast it on a spit.
It's the
throw
most
some butter on there.
disgusting food.
Actual medieval times?
Yeah.
Yeah.
Medieval times.
No, I'm talking about back in the
gross.
day, how they actually prepared food. They would
You've gone
it would
into
just
this?
be herbs. I just looked it up.
Yeah.
Sure. It's just herbs and butter. That's it.
Yeah, it's simple times.
But it's organic, tell you that.
No, medieval times. Have you been to medieval times recently?
I haven't been in a couple of years.
Okay. It's gotten progressively worse. It's gotten worse since the food wise.
Yeah.
Since didn't they call it a dragon leg when they give you the turkey leg?
Yeah.
But they don't do
Now
turkey
it's a
anymore.
half chicken.
Half chicken, not even the full chicken.
Half roasted chicken. You know how much food that is? I can barely finish all of it.
Yeah, but that used to be the thing, was that it was an obnoxious amount of food and you dig your hands in and
you still
eat it
do that.
Yeah, I know, but if you get a half chicken, it's not as sexy. And they're probably they're GMO chickens, that's no doubt.
For sure.
Those chickens have been
Those are cheap, pumped
with shit in the back of the gross.
All of a sudden, you have the symptoms of steroids.
Yeah.
After you leave medieval times because you're just
You need that
jacked on this.
You need
half
that
chicken.
thing of wine to just sterilize.
That's probably GMO too. GMO grapes.
That's true. Yeah.
It's all GMO.
It's all GMO. Come on.
But if you're going to medieval times, you got to get the medieval times chalice.
Yes.
Because then it's an extra $10, but it's
Mike has
glass.
10 of them at his place.
Yeah, it's glass.
Drink out of it at home.
You drink it out of it at home, but you also get free refills. Not free refills, but it's cheaper refills, I should say. And then yes, you can drink it at home when you're watching Game of Thrones or whatever you're doing.
Kingdom of Heaven.
Here you go.
Yeah. There you go. That's a classic. It's a good one. Never got enough credit.
Yeah, it was underrated.
It was underrated for sure.
It's a good one.
For sure.
Let's see.
E-mini's down 30. We had a little bit of a rally. Volatility was basically unchanged. Now they're selling off a little bit.
Are we staying long natty gas?
Yes.
Yes.
I have an at the money put spread. 21 days. We're there. I'm gonna hold this. I'm not looking to roll it. And with futures in general, just to go off on a little tangent, with defined risk positions, I try to hold them as long as possible. One of the other things that is funky about futures is that they trade on a curve. They're not exactly the same price. So our natty gas position is trading at about 3. The next contract is actually higher at 3.12. So when you're rolling futures positions, you got to roll based on delta rather than the actual strike, because you're trading a different price, right? So, the 3 strike is a 45 delta. In August, if you go to September, your 45 strike is going to be like 3.1. And so we roll based on the delta rather than the actual strike, because you have to adjust for the difference in price. And this contract is trading at a higher price. And so being defined risk allows you to hold it a little bit longer, not have to worry so much about it, because you're putting trades on with the appropriate sizing. And then when you have to roll the position, just keep that in mind, that it's not the same exact product or the same exact price.
140, 220 strangle in AMD in September.
140, 220. Yeah, I mean, the big wide strangle into earnings. I have a little butterfly on the upside.
Yeah.
Around 200 would be my spot.
Yeah, you'll get a little bit of a vol crush in September still. But yeah, I think it's a decent setup if you're playing for an inside move.
What about like the 150, 200?
Nice round
$8. You're not exactly playing. I mean, you're kind of playing for an inside move.
I mean, this could be your start to a core position.
Oh, you're telling me I'm getting blown off to the top side?
That's what the options are telling you. No, I think it's
make it a wide.
It's obviously a good starting premium.
Maybe like a 20-point wide. Rather just go naked here. All right, I'm going to leave that on the back burner for now, but I'm thinking about that.
Ryan's looking at an SLV call zebra for September. The 33-35 call zebra for $300.
Yeah,
Sure.
Why not? Cheap way to...
Yeah, we've done this a handful of times.
I wish you did it yesterday or 2 days ago.
Would have been nice.
In the middle of last week.
Yeah.
Would have been a home run already. But yeah, a couple $100 to rent 100 shares, essentially.
Anything to sell against the Amazon long call from the earnings? No.
No, I'm stuck.
It's only $200 still. So the value of the long option is only $200, which tells you that the short options to sell against it are like 10 cents.
Yeah, nothing.
We need more.
Yeah. Good move today, though. Good start. Volatility's super low,
Especially into the
too.
sell-off. It's a good sign.
Yeah. It's unfortunate the vol has been crushed so much. You would expect to be making a little bit more than 30 cents, but it's not the case.
Sell a neutral back ratio against the screw worm. Sell.
We're fading the screw worm. They're going to genetically kill it off.
Yes.
Genetically modify and kill it off.
Sell the 31-day 228 call and buy 2 of the 236 calls. And yeah,
They're doing like a flipped ratio.
Yeah.
Not our wheelhouse, but do it. Small.
So yeah, it's like a $400. Looks like right now it's a $400 credit.
Yeah.
But yeah, it's up to you. Why is UNH going up? Well, can only go down.
Stock has been left for dead.
So long. But yeah, this is a giant move.
I saw all sorts of rumors. Like I see somebody saying, "Can we make a rumor about NVO?" I think I still have a long position there, but there was some like speculation or rumor that Buffett wants to,
sprinkle
in UNH, which would fit his MO. But
yeah.
I think he'll probably wait until all the bad stuff is done with.
Yeah.
And there was a, I think we talked about this before. There was, when it dropped initially, there was a Reddit post. The guy took out all the equity from his home, didn't tell his wife, and then bought Leaps in UNH. And
He's having a tough. He's
Yeah.
having a tough
Yeah,
couple weeks.
all right.
Yeah. Hopefully he just is diamond handing it. You know.
You have to at this point. I mean,
At this point, yeah, you
No
can't.
choice. Yeah.
You can't eat that sort of loss.
either tell your wife and, or
Yeah, you got to somehow hide that. It seems like a lot to hide, though.
maybe not sleeping the best at night.
No.
I mean,
you got to think, are those posts real? Like, some of them have to be real.
some of them are, they're definitely real.
fake.
Some of them.
Some of them are real. Some are fake. But I think that aligns with like UNH multi. What is this? What is this?
I think it's
Low.
like 10 years.
There you go.
20 years.
Yeah.
I mean, it's been a huge.
Oh, actually, it's not. It's from 2020. So it's a
2018-ish. I mean, it's pretty down there.
Yeah.
I mean, you take for granted 6 years. It's a lot of years. 6-7 years.
Now, if you would have taken the equity and just bought shares, I think that would have been
More
a better
conservative
scenario.
But that's not how you 10x.
That's not your mentality when you're taking all the equity out of your house.
And you're like, this is it.
Especially if they were listening to the 10x podcast. Have you ever heard this guy? It's this guy that's like, all you should ever think about is what's your next 10x.
Mhm.
It's like a very aggressive, like,
yes,
crazy podcast, but that could
All right.
be it. A couple more here.
Sure. E-mini's only down 19 now. Moving around. Volatility not doing much, which leads me to believe that this is kind of over with. Just another routine little dip. Getting monotonous. Need some pop and volatility here.
If I get a sign on cattle futures, does it settle to ground beef or tomahawk? Good question.
No, you have to take all the cattle, actually. Yeah, so they'll be just in your living room.
Yeah.
I mean,
And then you got
40,000 pounds.
20,000 pounds. That's what it is. That's
Freezer space.
Yeah.
Large freezer. Big.
Yeah, you're gonna need like a whole like shipping. You gotta need what is it? Multiple shipping containers. It's gotta be like 5 or 6.
40,000 pounds, I mean,
What could you fit? Like maybe 5,000 in each of those.
yeah, it's a lot.
Yeah.
What's the plan for the coin trade? The coin trade was a symmetrical butterfly. That's just going to expire worthless.
Yeah, you're
because coin is down 100 points.
Yeah, I got a short put spread.
I still have it on. There's no reason to close it. It's basically worth nothing right now, but you need a swift reversal of this move for that to come back. I have a deep in the money Jan 26 naked call on AMD. What can I do for earnings today?
What's the strike?
Yeah, it depends on what the
And
strike is.
Why are you in January?
Just a long leap call.
Selling it. I have a deep in the. Oh, maybe you're long it. Yeah.
If you're long it,
Could sell something against it.
yep.
You know, sell the
pretty much it.
190, 185.
If you're trying to get out on like a continued up move, yeah, so you could sell the 3-day 190 or 185, call it a day if it reaches that point. Pins earnings play, hoping for an inside move, double calendar. 33.42 August, September.
I think I might get some short delta here. Fade that.
33.42. I mean, it's not, you're reducing basis quite aggressively. And it's a cheap trade. So if you want to do it, I think it's fine. Under $1. You basically need to move to 33 or 42, ideally 42, and this will be a nice trade.
I might do a little poor man's covered put.
There you go.
Long the 40 in September, short the 36 in the weekly. Small little Johnny trade, 200 and some odd dollars. 237. That's it.
Last one here. What's going on with the cybersecurity sector? All getting blitzed today.
Yeah, all those stocks. I know Palo Alto Networks is another one that has been just absolutely killed. Zscaler, see where that one is. That one's near the higher end of where it's trading. Net, I think Cloudflare had earnings before the open today. Yeah, those stocks are getting killed. Maybe Palantir is the new cybersecurity. They're just going to scoop them all up. $400 billion company now. Insane.
They just might.
Yeah. They got all our data, so why not?
Yeah. I have no qualms with that. Just take it all over. Monopolize us. Send me to the Tesla lab. On that note.
That's it.
That's it. We're out of time. So we're all long lean hogs.
I'm short.
He's short lean hogs.
Screw you guys.
Okay. Screw Worm.
I want cheaper beef prices.
Well, I'm not sure you're going to get it.
Probably not.
No. But yeah, we'll post those to the follow page. Yes. Thank you for the analysis.
Yes.
A lot of people in the chat loving it. But yeah, if you want to shoot us a note on Twitter, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. It's still Tuesday, August 5th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, tectonic plates are shifting in this market, not just here in New York again.
Yeah, man. What's going on out there? Things are getting a little shaky, if you will, but markets are a little bit shaky too, so maybe they're connected somehow.
I really appreciate that the universe is letting New Yorkers speed run all of the climate events. We've had Aurora Borealis, we've had locusts, eclipse, 3 earthquakes now in the past year.
Damn, really?
Just
it's the end,
wildfire
it's the end of
smoke.
times. It's the end of times when you put it like that.
If it is, I got to buy more gold and bonds because that seems to be the prudent thing to do.
Those would be good ideas today.
They might be good ideas today because there's a certain economic gravity that's coming back to this market with the release of the ISM services report, Jamal. We were all flying high yesterday, people covering their shorts following Friday's NFP-inspired meltdown. Today's PMI numbers, I don't think, provide any semblance of security for anyone paying attention at home. Let's just look at the data. The PMI, first off, is a diffusion index, like a ISM reading, and this ISM PMI, same thing, but ISM services is a diffusion index. What do we mean by that? Survey respondents give 3 responses. 0, things are getting worse. 50, things are the same. 100, things are getting better. You blend all the responses together, you get a number that's anchored right around 50. If you're above 50, it means you're growing. The higher above 50, the faster the growth. The lower below 50, the faster the pace of contraction. So that's how we interpret the data. What do we see here for July? We're down from June from 50.8 to 50.1. The services sector of the economy, which is 80% of the economy, is barely inching forward right now. Business activity growing at a slower pace, new orders, slower pace. Employment is contracting more aggressively, according to the survey. Price pressures are now at their highest level since October 22, according to the survey. Jamal, this is just ugly. The economy is shrinking, price pressures are going up. It screams stagnation right now. But that's kind of what one would expect after tariff implementation, where the Fed has told us they're concerned about the declining growth and this bump in inflation pressures. So it seems to be playing out as the textbooks would tell us it would.
Here's the wild thing, and I'm glad you just mentioned that last word, textbooks. Nothing in this administration is based off textbooks, that's for damn sure. And so at the same time, I've noticed that they can switch things anytime they want, lift the lever, and things change. So I feel like this is something that we would have been worried about for sure. Say it had been 10 years ago. Well, it's not 10 years ago, I guess, but whatever, in different administrations, where once things are in motion, they stay in motion, they stay that way, and they don't change. And I feel like that's the one difference with this current administration with regard to the economy and how things are going to move. And I say all that because normally I would have probably devised a trading plan based off of this type of data, assuming this data is going to continue to go the same way it is. And nowadays, Chris, I just don't necessarily feel like that. Like, I feel like it could change at any given point in time. I mean, just not that long ago, we were looking at GDP where it was forecasting not to be very good based off of what was going with the tariffs. And then all of a sudden, May happened in June and things change. So I don't know. That's kind of how I look. I'm starting to feel sometimes when I see some of the economic data. I mean, especially if we're going around firing BLS chiefs and things like that because data don't look good.
I mean, that to me, the whole firing thing is silly because it doesn't change the process by which the data are collected. And just knowing how this all works, the BLS commissioner just receives the final report after the numbers have been tallied, and then they bring it to the president's Council of Economic Advisors. But from a trading point, what does that mean for us? I mean, if we're all going to trade around the number, we're all still looking at the same number. So we're all going to be trading around whether or not we think it's a good number or a bad number, if it's real, fake, if it's, people have that conversation all the time, right? How many times have you seen Zero Hedge put out something like, well, if the birth death model adjustment was this, then we would have lost 1 million jobs this month. It's like, okay, they're like, people have been complaining about this and doing it for a long time, but we're still going to operate around it. I think what you bring up about the malleability and flexibility is really fascinating. That is something that I have lightly opined upon recently, but I don't think I went into the rabbit hole the way that you did there, even if it seemed like it was a passing phrase. Directionally, tariffs seem to be de-escalating, right?
Yeah.
So the whole idea that like, oh, we have a deadline and Trump's chickening out on it. It's like, no, the market cares more about the vibe, and the vibe is they're going to change policy, but they're trying to do it in a manner that's not as disruptive as it was in early April. So at least they got the message that they can't go about. And so even though the tariffs are coming, we've given them a little bit more slack because of that malleability and willingness to be flexible, as you say, which is a great point. I got to think about that more.
Yeah, I mean it's becoming somewhat of a thing, right? And even these goalposts, the tariff goalposts that keep moving. I don't know if they keep getting moved. They're moving around quite a bit. Again, we saw the effect of last Friday. And to your point, like normally, I shouldn't say normally, but going back to April, that probably would have been a bigger move to the downside, and certainly not such a quick return to the upside as yesterday. And it's a different type of feel now in the market because, like you said, I think the message has been received.
Yesterday, we saw a V-shaped rebound coming out of Friday's jobs report. We ripped from the 22,800 level in the NASDAQ, which was support basically for all of July once you made your move in the first 2 or 3 trading days of the month. So we fall back there. It also happens to be channel support, which, as we've discussed in recent weeks, having reconstituted the trend to effectively be the period post-US-China trade detente in Geneva, Switzerland back in mid-May, you have a channel that has clearly formed from a technician's perspective, at least in my view. But to this point, we are seeing here now in the trend, we rallied up into a former support level. That low is 23,356. We couldn't quite clear it overnight, and now we've since pulled back from it on this bad PMI services data, Jamal. I'm not one who likes trading long stocks in the month of August or September. I just really haven't had a good track record of it. So I wasn't buying into yesterday's bounce. I'm more interested to see if this thing fails and if we can get some traction below 22,800. I think a setback into the mid 21,000 area where you have that bounce on June 22nd becomes an eminently reasonable place to look. But we're not quite ready to cross the Rubicon just yet. So this is a very unappealing place for me to look long. I still think short may be the path of least resistance if we're enduring a few weeks without Congress in session and a Federal Reserve that's not meeting. The help is just not around the corner.
I don't have any direct NASDAQ exposure. It's been more in a couple of names here and there. I just haven't had success shorting anything, right? And I don't think anybody has really. And so for that reason, I've stayed away from it. I think this, I've mentioned this a couple of times. It almost seems more prudent to just wait for the big move if that does happen to the downside and then take the other side of it, basically. I mean, I came into yesterday thinking we were going to fall more, and I was ready to step in that situation. And obviously the opposite happened. So, is that an opportunity missed? I don't know. We still, again, it's a long month, and maybe August ends up being one of those type of months, mostly because it's not a ton of catalysts. It's kind of quiet. There's no Fed meeting. Like you said, Congress is in recess, right, at some point. And so for that reason, I'd rather just wait for the big move and then capitalize. The only one I still have on as far as indices is the Russell, mostly because I probably should have closed it out, but then I just decided to keep it on because whatever, it's September and I'll just weather the storm, even if it, falls, which again, it's pulled back. I think I'm down like almost 40% on it right now, which in this case is almost $400. So it's not, a drastic move, but that's September and that's a while out. And so that certainly has enough time to recover, if anything. But that's the only one I have as far as the majors. That's the only axis, the only current position that I have. No NASDAQ, no direct exposure to S&P 500.
S&P 500 looks very similar to the NASDAQ chart, Jamal. We take a look here. We have a NASDAQ bounce off of the swing lows that you have throughout mid-July. You rally into the swing low that we have here on July 30th. This is an 8-hour chart. Ultimately, that's where we fail today in the NASDAQ. The S&P 500, pretty darn close, right? Bounce from the mid-July swing lows. We run into the high, or rather, excuse me, the low from July 30th intraday. And that's where we've started to fail again. So there are little crumbs here that momentum is being lost, right? We're not seeing that kind of recovery even within the trend. Pullbacks to the moving averages within the channel were previously seen as places of support. Now they're kind of serving as a little bit more resistance. This may not mean a big pullback is coming. It may just mean that upside momentum's been lost and we're due for consolidation or some shuffle here for a bit. But 17.7 IVR. If I was looking at this from purely the volatility perspective, forget whatever I've drawn here on my screen. Is this enticing enough for you to jump in with a typical 45 and 21 out window? Do you feel like you have an edge up here?
Hell no. I mean, not in this market. And when you have a situation where we could drop 100 points at any given time, I just really don't. I'd rather wait. And that was actually my plan, right? I was trying to be a little patient. I was trying to be patient such that if we had dropped on Monday, like we did on Friday, at that point you'd have been talking about ES being an IV rank at least 25 at that point, and that would have been a lot more enticing. Hell, even to start the day yesterday, I think it was over 20, so it was somewhat interesting. But it's just one of those situations where the relief rally led to relief in vol, and now it's in the teens, and it's just not as appealing as we know it can be, and it probably will be at some point in the next couple of weeks to a month.
I was having a conversation with Ilya yesterday about the longevity and experiential knowledge that retail traders may have. And one thing that I always think about as an anchoring point is the fact that when Bank of America puts out their surveys on the experience of traders at bank desks, junior traders typically only have around 7 years of experience on average. And so when you think about that, that means we're in 2025. A year and a half from now, a lot of people who are working the desks won't have any episodic memory of, well, they may have an episodic memory. They don't have any experiential memory of trading through COVID. And so retail traders, it's even a little bit more extreme, right? Like you're going to find the bulk of retail traders are 2-3 years experience most of the time. Mm-hmm. So there's probably a good chunk of people who are listening now who don't remember this time last year. Last year, August 5th was the day that the market bottomed out following the carry trade unwind, Jamal. That was obviously a great point to be looking to sell vol, just like early April was a great point to sell vol. I suppose what I'm getting at here is, do you have any insights or takeaways about trading over the past year since that August 5th blowout in 2024? Anything that you've learned about yourself, your trading approach, things that the viewers may want to listen to?
So that's a good question because if I remember correctly, that time a year ago, I was very happy to say that I was able to trade during that day, right? Like I was able to put on trades during a very volatile time, which a lot of people aren't able to say because if you remember how that went, if I remember correctly, it was basically that Friday and that Thursday and that Friday, and then the Monday was the really big down day. And so when you have that kind of thing happening, usually a lot of people push a lot of chips in on the 2nd, right? Like, which was that Friday, August 2nd, as opposed to being able to trade on that Monday. And so I know myself in the past, I often did that. I mean, I always pushed my chips in maybe on the first day. And that's why I didn't do it on Friday or even, like on yesterday even. Like I just didn't do it because I was a little bit worried about the big move down coming still, and I wanted to have some cash available. And so I think that's the thing, being able to trade during volatile time periods and not pushing all of your chips in, which again, we talk about a lot on Tasty, aligning your buying power with the levels of the VIX and things like that. And I think that's what really helps. So that's the biggest takeaway. If you're able to trade on big days where the market is moving and it's volatile, I think you've done something right.
Now, having powder dry, right, to take advantage of the market when other people are panicking is you don't want to be over leveraged or overextended at any given point in time. Particularly as a retail trader, right? If you're trading on margin, you have to be very mindful.
Yeah.
So when volatility is really low, it's prudent not to have just undefined positions. Last August could have been brutal. If you were undefined risk, it took you 2 weeks to get out of the hole. And that's if you had the fortitude and capital to stay with it. So when volatility dries out, take some chips off the table. If you really feel compelled to trade the product still, you're going to have to do it in an extreme risk-defined manner so you can take the shots. And if it works against you, you're not getting carted out. And we have to make sure we protect our capital.
Look, it's not easy. I mean, times like this, you get a little antsy. There's a lot of different things that you want to do, a lot of different trades you want to put on. I think, as of Friday, I was like 90% in cash. And like I told you and I said to the world on Twitter that I was not. And yeah, I'm still calling it Twitter. I'm not calling it X. My mom actually calls it X. I don't really care. I'm calling it Twitter, okay? Mama named Clay. I'm calling Clay. But anyway, I said I wasn't stepping in front of the sell-off. And I didn't until towards the end of the day. And I identified a few individual names that were, I thought, really had been sold off a lot. UNH being one of them. Names like that over the past year that have gotten really sold off. And I decided to put a couple of zebra option trades on. That's been, working out fairly well. But as far as as far as cash, I really didn't put out a lot of cash after that because I was waiting to see if this was going to be a multi-day sell-off. Just so happens to be an anniversary of that weekend, but and it's not easy. I mean, times like this, you want to do that. Even today, I almost lined up a 0-day SPX trade with 6,300 being the center. And for the most part of this day, I think we've been kind of around there. But I'm still glad I didn't do it, But I wanted to do it. I did. And then I said, to your point, I'm like, vol is a little low. Like, what's the... Which you do kind of want vol to be low in that because you really don't want it to move much. Obviously, if we have a higher vol environment, sure, you can collect volatility, but that thing moves around. And we know with those 0 DTE iron condors, you really need things to sit still, which we're kind of doing in this market. But again, I kind of talked myself out of it because I'm like, that's a trade that I'm only doing because I'm bored. And I think that's the thing you really want to avoid, doing trades just because you're bored.
Don't trade because you're bored. It's a very, very important point. I know that I can overtrade when things aren't. I think everyone can. You start to push the envelope. You have like your tiered baskets. In the morning, I put together like my baskets of what I think are really good trade opportunities, and then like tier B, tier C. Mm-hmm. And these days, I'm not seeing a lot of tier A stuff. Just for myself personally, like it's more. I've got to reach for this a little bit. I'm taking some trades, but they're not the most comfortable ones. I'd rather be comfortable. What do we look at for this market today in terms of the breakdown? I see basically an even split, 13 positive, 12 red in terms of the sector ETF performance. Weakest semiconductors, which problem for tech stocks here. Trump talking about new semiconductor tariffs. Yeah. We also see biotech is down big because we're hearing about potential pharmaceutical tariffs. Yeah. Which could reach 250%, according to the president. So sectors, tariffs, those are crossing streams here, and it's not leading to any good news in the short term.
I got to tell you, Chris, that could really be interesting from a trading standpoint. If it goes down anywhere near like what we saw with tariffs overall affecting the market. I mean, imagine how that could really affect a lot of these big semi names that could end up receiving somewhat of a haircut in price. I mean, same thing with some of these biotech names and pharma names in general. So yeah, you talk about wanting to have I want to have cash ready for that when that whole bomb drops, because that could be wild and that could be a great trading opportunity.
The names that are doing well in today's session seem to be the rate sensitive ones. Metals, mining, home builders. XHB is near the top of the board in today's session and rounding out to what would be its highest level since mid-February. Could be a nice close. Either way, though, the rotation today, it's split down the middle. Feels like some folks shuffling papers around. And I say that because volatility here, while it's gone up, we've had a little bit of a return in volume. This isn't healthy volume. Still only 939,000 contracts traded in the ESU5, Jamal. But for the past few weeks, throughout mid-July into the later part of the month, you were looking at 600,000 contracts traded midpoint of the day, which is not where you want to be. The past 4 or 5 sessions, volumes have ticked up. They've returned to healthier levels. But the fact that we're not seeing more volume on like to buy the dip, and it's really just every time we're seeing a down candle, the volumes are accelerating. This feels a little soft. I need to see more of a pullback before I can get comfortably long.
Yeah, I agree with you. And to your point, as far as the split down the middle with going on the sectors, I mean, look at NASDAQ, look at S&P, NASDAQ, Russell, and the Dow. You can see that divergence between, two doing one thing and two doing another. So it is that kind of weird day. Volume's a little bit better than it was yesterday, but still light nonetheless. And I think it's just kind of a typical summer trading day with the exception of we got a lot of earnings between tonight and tomorrow, quite a few. And so we'll see if that does anything to change the market.
Do you have any strong feelings on earnings tonight, or what's your general take on earnings so far?
Yeah, it's interesting. I've traded a couple. I haven't. Well, first of all, I think I've told you this, but I almost always play earnings for the move. That's not really. I don't really sell earnings for the most part. I like even Palantir last night. I played it for the move up. I did sell a strangle in September. I don't think that's an earnings sell. That's just a selling somewhat of a little of all. But I did play it for the up move more than anything. I typically play earnings for the up move. And one of the things that has worked well is mostly calendar calls. And yeah, most times people are like, why don't you do calendar puts? I mean, you can, but I just prefer. It's something I learned a while ago. It's just my bias, right? So I'm just going to play my bias in that direction. Sure. And, it's just kind of how I think. And I feel better when, even if it doesn't work, it's like, okay, whatever, I missed a shot. And a lot of it does have to do somewhat with technical setups a little bit as well. Then also, potentially, right, like you sort of have to be a little out of your mind like I am as far as trading goes. You got to potentially be like, well, what could they say? What could they really come up with that could really make the stock move? And so I always think about it like that. But yeah, to answer your question, I mean, there's been a couple that I've played. I played, those we don't speak of, Robinhood, I'm saying it again, but I played that one for earnings. I usually try to play a lot of the bigger Mag 7 names, had varying degrees of success. Meta was a really good one. Again, calendar call spreads. Amazon did not work out as well. And so I think it's been a mixed bag, if you will. As far as tonight, there's a couple I'm eyeing. I haven't decided what I'm going to do yet, but I'll probably end up putting on a few here and there on engineering the trade later today.
Yeah, the Russell here proving very resilient in today's session, up 0.37% right now. Getting across the final line in the sand for me, I do not want to see it close above 22.32. Otherwise, I'm going to take off the little bit of short delta exposure that I have here in the Russell. It would be another time where it hasn't been the cleanest set of circumstances, but from a technical perspective here, that 51-month moving average envelope, we crossed the 1 month here on April 23rd. And since then, the posture of this has really picked up. When we've had these dips into that 21, 50-day envelope, they've been bought up. And this could be another one of those times. Mm-hmm. So if we are seeing a market retain the characteristics of the structure, which, mind you, we had the move on Friday, gives you the first close below the 50-day going back to May 7th. It's already been warded off. So structure not broken down. The Russell's not breaking down. I mean, these are, I hate to be disparaging, but like America's not best 2,000 stocks. And if they're poking up and you have lower rates and lower oil prices, this should be the group of people that are most concerned about the deterioration in the economy. So Jamal, you mentioned the ISM services report being something that 5-10 years ago, different administration, you'd have paid a little bit more attention to, maybe based more significant trades around. Maybe Russell traders are looking through it and saying, if the data is already this bad, they're going to have to do something different. They don't want the economy to tank. So
that's essentially what I'm doing. I mean, again, I have the 2,400, 2,500 call spread, which at this point looks like a pipe dream, but it's in September and it's pretty far upside. But again, I'm not really that worried about it on a day-to-day basis as far as what's going to happen with the trade, because it's 56 days out. So there's a lot that can happen in 56 days, and we could easily end up seeing this chart turn around and get back to some former highs.
I'm very much with you. Let's talk about what bonds are doing here, twisting across the curve on the other side of this morning's data and news. ZB continues to edge up now to 116. Jamal, I'm playing this still a little fast and loose here because I went past 21 DTE. There are 17 days left. I really would like to see 117 just tick up there once so I can get out of this position.
You got on?
Long 117, short 120 call spread.
Nice.
And I've been riding it for a few weeks, but the posture has changed here, right? No matter how you slice it, it really does seem like we're beginning to, try to exit whatever consolidation or downtrend we were in, at least here in bonds. Another number of different interpretations, but a little bit more to the upside seems good. You know, it also seems pretty good right now. We're at the halfway mark in bonds, in notes. It's a broken record. I keep going at it, in bonds, halfway mark. I think that's a great place to do directionally neutral. Notes, on the other hand, feels like it's safer to sell put spreads than be an iron condor person, because this has decidedly broken out. And the data going back to 1980 tell us that the long end of the curve is the market's favorite place to hide out if recession fears are coming. So an ISM services that's barely above break even, and then the jobs report revisions this past week, scope and scale that you typically don't see unless you're into or about to arrive at a recession. I don't feel like I want to take any trades that necessarily want to cap off the upside potential of notes or bonds here. So notes, I think you just got to lean long at this point in time. Forget whatever directionally neutral aspirations I've been having. I think the game may have changed.
Yeah, this is an interesting one. In ZB, I'm just looking back through my. So first of all, I had a position. It's one of the ones that I closed when I was out. As I mentioned to you, when I came back, I'd closed a bunch of different things. ZB was one of them. It's one I probably should have held on to. But I'm looking back. I've actually made money. I didn't realize, overall I made money because it just didn't feel like it. I got to tell you, it didn't feel like I was making money until as I was closing the trade. I was like, well, I'm up some money. I might as well just close it out. Maybe I broke even, but I didn't realize I actually made decent money on this. But what started out at the beginning of July as the 116, 119 call spread in September eventually turned into from rolling. I rolled a couple of different times throughout the month and eventually turned into the 112, 116 call spread by the middle of the month. And that's the one that I closed out last week. And I could have held it longer. I mean, it's the 112, 116. Again, I'd be right here, but I could have held on a little bit longer because bonds have been really strong more recently. And like you said, the long end of the curve has really been the big mover more than anything. Now you got to, I think you're right. You almost got to just lean long at this point because why not? It seems to be trending in that direction. Unless it's just another head fake like we've seen throughout the year a couple of times. We saw it in April, end of April. We saw it at the end of June. I don't know. But I would be leaning long until proven otherwise.
There's not much by way in terms of, we'll call them traps or things that we can trip over in the market, so to speak, before we get there. Today, of course, we had a 3-year note auction, which really isn't moving the market. But 10-year notes, that auction's tomorrow. 30-year bonds, that comes on Thursday. Next Tuesday, we're going to have the U.S. CPI report. Now, the bond auctions recently have been good, which was one of the surprising developments last month, where you have all this tariff on, tariff off, inflation edging up. We had some very, very good auction results at the long end of the curve. In particular, foreign buyers more than happy to continue financing the U.S. government despite whatever noise and news we have out there. So let's see if we can pass those tests again this month, right? We have another good 10-year note auction, another good 30-year bond auction. You can get some more upside movement here, right? At least keeping intact that lows are in. I'm thinking, where do we get back to 121 here in ZB? Getting back to something like 121 in the next few weeks would require absolute calamity. Something going so far off the rails that people are selling everything else and just buying treasuries because they need to put their money somewhere. Do the auctions or CPI have that potential in the short run? I'm going to say no. I don't think so. So in terms of trading this, when I talk about ZB being directionally neutral, I'm comfortable being in the short iron condor here because I don't think we're going to get up to the 1 standard deviation move of 121 where we were at the highs after Liberation Day within the next few weeks. And if we do go there, then that has meaningful implications for stocks and currencies and everything else. So I think we would have enough advance notice. In any event, if we were to do that right now, Jamal, if we were to slap on the new short iron condor, you're looking at this with fresh eyes today, something like the 110, 112 on the short put spread side and the 121, 22 on the short call spread side. It's 59% probability of profit, a little bit better of a 3-to-1 risk to reward. Max profit exceed your buying power. Check, 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 check. No reason not to do it still, as far as I'm concerned. And that's why I'm sticking through it.
To play devil's advocate for a second, we didn't the core PCE, didn't we just get that recently, right? Didn't that kind of show there was that kind of accelerated since the fastest pace since June? Is there a scenario where somehow or another CPI comes in hot and bonds take off? Is that possible?
Yes. If we were to look through the CPI data, you would find that the owner's equivalent rent portion of it is getting much weaker than people have been projecting. And were it not for inflation in core goods, right, we would then see inflation coming down already. And there's a very strong argument to be made that but for tariff inflation, the Fed would have delivered a cut, not just in July, but maybe as early as June. So yes, there is a world in which the market sees like I could see a hot inflation report next week. The bond market dips initially, and then after there's a few minutes of digestion for looking through like the little subcomponents and various line items in inflation, bonds rip back up because it's like, oh, were it not for the tariffs, we would be getting more cuts because the economy is weakening. And why is the economy weakening? Well, it's because of the trade policy adjustments. Maybe this is a one-off and this is the shift in transformation and it's going to be uncomfortable for a few months or a year, as some forecasters are suggesting. But this is kind of what one would anticipate. Weakness in the broader economy because tariffs are effectively enriching domestic producers that have significant monopolies in those industries that are being tariffed. That's why insiders like this kind of stuff. It secures their market position.
The weird thing too, and again, nobody's ever been able to explain this part to me. And I know as we sit here on Futures Power Hour, I am supposed to be a futures expert, but I'll be totally honest. I could have never been able to understand why, when we're trading September 26th expiration, that is the Z contract. You know what I mean? Like that's always been kind of a strange thing to me, but that's one of those wonky things about trading bond futures. So as much as I would think that I'm bringing this up to say we have a Fed meeting on the 30th, right?
September 17th.
Oh, it's the 17th. Oh, okay, never mind. Forget what I'm about to say then. Forgot. I was thinking that it was the 30th. I couldn't remember. It's the 17th.
July 30th. July 30th just was in the past.
That's right.
17th,
that's right.
October 29th, and then December 11th? 10th or 11th to round it out.
Yeah, I mean, there's a scenario, right? But anything can happen in this market in which we exist. So, I mean, right now, I think you're totally right to be holding on to the short iron condor. Things aren't really moving that much, and you can't necessarily predict how data is going to come in.
It's 16.6 IVR. It's not super fantastic, but that's where the IVRs are for the NASDAQ and the S&P right now. So if you were thinking about going directionally neutral there, take a gander over to notes and bonds. But I feel much more comfortable having those, again, directionally neutral, upside kicker. Before it was like 60-40, 70-30 in terms of the balance of that view. Now it feels like just longs are meaningfully appropriate until the data shows us otherwise, that we're not careening towards some sort of recession or slowdown. And maybe it's not even a big recession or contraction. It's just adjustments. And the data just kind of muddles through, not in a fantastic form. But either way, good news for metals. Stagnation, more monetary easy coming. That's great. Gold loves that kind of stuff. So does silver. And it's helping them perk up a little bit more here today, where we have gotten back to the midpoint of where gold's been trading since April. So much for that earlier breakdown, Jamal.
Mm-hmm.
But these guys are proving really resilient in the wake of that massive sell-off at the end of last week. Silver here in particular, bouncing off of its 50-day moving average. Today's close would bring you back above the 1 month moving average and back through the high that you had on June 18th, which that was a trigger to get long. And ultimately that carried us up into the all-time high before we lost the uptrend from the lows here. this is a reclamation of some significant technical levels, Jamal. I don't think we should dismiss this. Gold and silver are telling you that, and like a Randy from South Park kind of like, I didn't hear no bell, and this isn't over. It's got that look in its eyes right now.
100% it does. Like you said, bouncing off the 50 days, one of the things that has been, we haven't seen it too many times throughout the year, but this is strong, obviously, support, and it's bouncing up once again for silver. So, I said this is probably going to be the harder part of the trades now, gold and silver, because they're not making the moves like they were earlier, I should say late last year and then earlier this year. It's not the very violent moves, right? But it's still meaningful moves and still has more of an upward trend. So it's just a matter of sticking in and holding on to the trade.
Sticking it, holding onto the trade. I'm still leaning long. There's 80 something days to expiration. SI Z5 contract. We're on the U5 here. 84 days to expiration. As for me, I like the ticker, and it looks like we're getting back through the key areas. Again, 38.17. We're currently in at 38.36. The 1 month, 38.25, 24.9 technically, but we're through there. So this would be a really, really good close. In fact, I would feel so good about that close where I think it would be worth getting some juice in the short term at this 8.8 IVR and looking at the SIZ5 contract and seeing where the highs are up at 40.5. This to me seems like maybe layering in something a little bit higher convexity with a shorter term duration and not so much that reach trade for the 42 level. Let's get something going here once more. We never could get back to 36, where I was hoping to reestablish this position, but we have made the technical improvements where you can still get a 3-to-1 risk to reward in your favor, that is, as opposed to working against you usually, but you can get that for a return to the high.
A couple of technical things working in his favor. I mean, stochastics are starting to look good. Those have been turning up. These have been, again, you can see that they've slowed down the momentum, right? Like from what we were seeing earlier in the year, but it doesn't mean that the trade is over. It's just kind of quiet right now. And again, the vol is totally different than it was we were seeing early in the year too. So my point is, if you're trading it like it was before, I just don't know about like the super far out of the money stuff that I was doing. That's probably not going to work the way it did. But again, you could still have a scenario where you're trading this more closer to at the money and buying dips. I mean, buying dips has seemed to work for most of this year in both gold and silver.
There is an argument to be made that when silver has been more than 5% above its 1 month moving average, it's tended to struggle. Mm-hmm. You could make the same claim for its 50-day moving average here. When you're more than 10% above there, it starts to struggle. I'm thinking of where we were in late October of last year, Jamal. We were 10% above our 50-day moving average here on October 22nd. We were, let me just double check that date, July 11th. Okay, there you go. July 11th, we were more than 10% above our 50-day. And that's where the rally started to slow down. We returned to it here. The clock has kind of reset. Back in March, we were a little over 7% above our 50-day. So I think that's just kind of a guidepost. When silver gets in that 7 to 10% range above its 50-day moving average, you're running it a little hot. And it's maybe a good time to take long deltas off the table if history's any guide. It can keep meandering and slow down, but it tends to stop for a little while. We've done the reset.
Mm-hmm. Yeah, I mean,
3.02% above it. Maybe it's time to get going again.
I think you and I are, neither one of us like to scalp, but I think scalpers have probably been way ahead of us on this one, because this is just looking at the chart. You can see it's been a good thing to scalp these different times, as long as you take it off at certain levels. Again, you can identify those levels. You just identified a good one, or find areas to scoop it up. This has been silver especially.
Silver especially. So gold here, not as explosive to the upside today, but I really like, let's zoom back in here. Those candlesticks, Mr. Chandler, that's into the 5-day, the 21-day, 1 week, 1 month, bouncing. Today, pull back into them again, bouncing, and a higher low than yesterday with a higher high today. There's a little bit of a carving up, grinding up type of price action playing out here. And gold is just hanging in. Where's the big sell-off? I saw that Chinese buying of gold basically bottomed out a few weeks ago. I saw that U.S. gold imports in the most recent trade report fell off a cliff. They fell to their lowest level since late 22 after hitting all-time highs at the turn of the year. And yet gold prices are still staying with it. I think that says a lot, the fact that these measures of demand have faded and prices have not gone with them. And that reminds me a lot of what happened last summer, which I don't know if people would recall this, and thinking about the longevity of retail traders here. We go back to last summer. There was a period where we had, and this is what I'm thinking of, April into late July, where the market chopped around sideways, where U.S. gold imports fell, and there was rumors, we could only verify in hindsight, that Chinese central bank buying had halted. This does not look like a chart that wants to give things up here. This looks like a big triangle that's been forming that just wants an excuse. Maybe it wants an excuse, but I think it wants an excuse to go to a new all-time high. I mean, how do you short a market that's looking like it's about to pop like this?
I don't know. I don't think you do. I mean, again, this is not the same type of situation as like a copper, right? Where you expect there to be some type of release after whatever theory or thesis that was going on for the last year has changed. This one has been different than that for sure.
Today's 21 DTE, and that is not nearly enough time for these best laid plans of mice and men, Jamal. It's been killing me for the past few months, just buying out of the money call spreads and gold and hoping they turn into something.
I'm sorry, I got distracted with the bottom of the screen. Did Mikey just trade some live cattle? That is hilarious to me.
Good for Mike.
Yeah, good for him. Yeah, it's not something I've really paid much attention to, but good for him, man.
That's what I do. Before I go to steakhouses, I put on a little hedging trade, to lock in my... Okay. So it looks like we may have another swing coming to the top side of recent highs is the point, right? 35, 25 or so. Seeing another run up here would not shock me in the short term. This is looking very, very nice. And hopefully it plays out this time. I think I see myself having this battle in the future, Jamal. In fact, I'm seeing it very too clearly in my mind's eye at this time. Gold is going to rally back up to 3,500, and I'm going to learn my lesson from the past few failed attempts. I'm going to take profit here. And then this thing is going to go to 36.
You know what's interesting? If you basically put a line through all that chop, right? Like you call it chop, but you know what I mean. That's essentially wrapped around 3,400, and it kind of gives you a big indication that 3,400 is a level that it's going to continue to hold for a while. Unless something changes, right? Unless something on a huge macro level changes where you're hearing about selling of gold. But again, I don't foresee anything like that happening. It's been hanging around that level.
I think it's a great point. 2 months ago, the 1 month moving average was 33.90. The 1 month moving average now is 34.06. Mm-hmm. It's basically been flat for the past 8 weeks. No momentum. So listen, range trading's worked. Ilya's been better on this in terms of being bullish because he's been selling put spreads to express his long delta view. Mm-hmm. And that's been great, but the long call stuff hasn't been fantastic. So of course we're going to do it again.
Well, I'll tell you what, this is my promise to you. It's hanging around this 3,400. We see it kind of chopping. It's you can buy the dips and you can sell, some of the, I wouldn't call it selling the rips, but you can fade it at times. But if whatever, we get a big bounce, right? Like a big move like we saw in silver earlier this year out of this chop, and it's like boom, all the way up to 3,500, 3,550, maybe close to 3,600. I get interested again because now it's a momentum play. That's where I get interested again with gold specifically. Right.
And it's treating it as momentum play for the past several months has not been the appropriate view.
Yeah.
Right. And so it's and I think that's the correct diagnosis. And that's been my problem. I've been looking at a problem and saying, oh, this requires this tool. And that's not the right tool to take out of the toolkit, or it hasn't been.
I want a quick 75-point day in gold, and then I'm like interested. Where most people are going to be like, "Oh, I'm fading it. I'm contrarian." And somebody asked me yesterday, "Are you consider yourself a contrarian?" Yeah, I do when appropriate. But if I see a big 75-point move in gold, I'm not fading that. Like, I want to get on that train because that's how gold works. You and I both know that.
Yeah, when people ask me if I'm a contrarian, it's like, well, I grew up in New York in the 1990s and made a conscious decision to root for the New York Mets. It's like growing up in Chicago and choosing not to be a Bulls fan when Jordan's there.
Yeah.
Right? Like, you don't do that because you want to be popular. Crude oil prices back down to the mid 65 area. What do we know? 50% mark of the post-Liberation Day / Iran Israel 12-day war low high trading range. This has been an area we've been intimately familiar with for effectively the last 2 months, seeing as how back here on June 24th and then here on June 11th, and then basically every day since then, we've had a flirtation with 64, 65, 66. Directionally, this has been going nowhere. So neutral has been the appropriate tool to take out of the toolbox, Jamal. Volatility is coming back in as well, below 30 IVR. Are we setting ourselves up for a surprise later this week? I know that Trump has his August 8th deadline with Russia for a peace agreement with Ukraine, or else, so we've been told. Is staying directionally neutral at the halfway mark of the recent trading range the appropriate way to go about this?
It's appropriate given what we see. You can just say hello, old friend, to 65, 66, because that's really been the area for this, despite, the big spike we saw and move or whatever around the geopolitical events. 65, 66 has been the area for a little bit of time. And so it's appropriate given what we have right now. It's around 65. The IVR is 29. Iron Condor is the appropriate play. I mean, we have no idea what's going to eventually be said or what's going to cause it to move. But for now, this is the area.
Just looking at this right now, going out to the exact 1 standard deviation move, it's basically the position I have on right now, risking 3 to make 1. Strikes are a little bit different because of how the market's moved up here, but 3 to 1, 60% or so. I mean, it still makes sense as a trade to me. That's the point I'm getting at. I'm at 43 days in the CLV5 contract. The whole idea here is that we're outside of a window of geopolitical risk. When you are outside of those windows, you typically don't see oil prices do much of anything. And so where do we find ourselves? Is this real geopolitical risk? I said yesterday, Jamal, having looked into it a little bit more over the weekend, apparently the United States has 2 nuclear submarines that are in constant rotation in areas around Russia, and we have done that for a number of years.
Mm-hmm.
So Trump talking about deploying 2 nuclear subs, which are not additional subs, but the subs that would already be going as part of this rotation, doesn't really move the needle for me as this being a significant geopolitical risk.
And I think it didn't move the needle for oil neither, nor for the markets really, right? So that kind of lets you know.
Right. It kind of came back in where you have your 1 or 2 days of like, oh, this headline. And then, okay, let's digest this. OPEC is telling us they're going to increase production in September again, whether or not that production actually materializes. But you have these counterweights right now, right? Drill, baby, drill, kind of. But geopolitical risk being subsumed by the economics of everything. And so flashes in the pan, they are not lasting a long time, no matter when they're happening. And this is not just since April. We've seen this since October 23. I'm fine being directionally neutral here still. It brings down the beta weighted deltas of the portfolio. Overall, it's not a stock trade.
Yeah, no. The directionally neutral is the way to go in oil. I was actually trying to get some off myself. Still try again.
Natural gas is something we will talk about, but not trade. I'm currently in my hiatus. And in fact, I'm just going to get rid of this. And, I was talking with Tom about this on first call. And I said, doctor, I have this position that's not working out for me. What do I do? And he said, listen, if you're going to stick with it, maybe take in the short strikes, maybe like bring down the short call spread side of things, because that's clearly worked. And having seen how far it had fallen price-wise, we're not really squeezing much more juice out of a trade like that. So keep the short put spread side on, roll down the short call spread side. And I said to myself, you know what, that seems reasonable. Let's see if we can hold 3. Natural gas loses 5% and change yesterday. Screw it. I don't want to deal with you anymore. So it's in the timeout box. I'm not going to trade this until after Labor Day myself personally, but it has a 40.7 IVR. Okay. So we can't ignore it per se.
I know.
not that I've been any sort of reasonable person to follow into the trenches on natural gas for the past few trades. How would you be approaching this then? Because I think I just not me.
This is another directionally neutral one. I'm actually looking at the 370, 380, 250, 240 iron condor right now. And it's the first time in a while a trade has been somewhat interesting to me in natural gas. Just so happens that the looks like 200-day moving average is right around 370. I'm sure it would love to go there as soon as I put this trade on. But you can't worry about that. I mean that looks pretty decent, I would say. But maybe I'll be in the timeout box with you. I'll just wait on it. Again, I have been for a while. I haven't touched it. God, I don't know the last time I touched it. Did I trade it this year? I did. Yeah, I did. Oh yeah, I had a put spread on. That was I put a put spread on June 26th, and I took it off on the 8th. You know what's funny? This has got to be right. I put both of those. I put those on those days, but I did them both during the show at 12:48 p.m. Right around the time we start talking about natural gas. That's hilarious.
This is the time of day when, the natural gas trading gets done begrudgingly, and then that's bad because then you turn around and you go, "Oh, this is Chris's fault. That guy's losing." This is.
I didn't say that.
I got the timestamps to prove it,
man.
I got the timestamps to prove it. It's only on Tuesdays and Thursdays I lose money in natural gas. How does that keep happening?
I'm a grown man. I put them on him and took them off.
The dollar today is holding up a teensy bit better. It's not bleeding out like it was Friday or at the start of the week, although we haven't seen much more movement after Friday's data. The market's not quick to rush in any more cut odds. I think this is a tremendous opportunity as first blush. We have a breakdown here, neckline or support in Canadian dollar. We rally back to resistance and we're struggling to crack on through it. That seems to me like it's an opportunity. And oops, don't want you to do that. Click the wrong button.
Do you still have long dollar trades on?
Oh, I applied some yesterday, like Canadian dollar here, for example, in the 6Z5 contract. I'm looking for this to be the high, effectively 74, 73 and a half short call spread. It would bring this then. We'd have to scale through the 1 month, the 50-day moving average to poke through. So I'm comfortable thinking that we may be running into some sort of resistance band up here. So I'll work against that. It's a 66 IVR. That's really difficult to look away from considering how low volatility is in other pockets of the market. Same thing for the British pound, right? We have this moving average envelope that's now has a negative divergence. 21 is below the 50. And we're starting to creep back up towards the neckline in this left shoulder head, right shoulder head and shoulders pattern. So if those all kind of coalesce and converge around 133.80 or so, that'd be a great place to be short again. So I'm not ready to call the dollar bounce done just yet.
Yeah, that's what I was getting at.
Not yet. Like we are former resistance, holding up as support here, holding on the 50-day. It feels like there's a meaningful attempt. And given the positioning, right? If the market was really long the dollar right now, I wouldn't be risking this. But the fact that the market is so saturated with dollar shorts and they've only started to come off the board feels like it's worth trying to fade the recent sell-off from Friday and yesterday.
Yeah, and you look at the Dixie, and again, that's usually the terms in which we talk about it. It touched par last week, right, and it got rejected there. I don't think the bid in the dollar is completely done yet. I still think, like you said, there's still a bunch of people short, and I think we're going to see another surge at some point or another. I prefer to play this like I played it before, which worked out well with put spreads, with long put spreads in the euro and the yen. And I want to apply them, but I don't think today is a good entry point, but I'll figure it out. But I'm definitely still interested in possibly getting long dollar again.
Yeah, so I'm using the opportunity in this volatility here. We look across the board. The Aussie is up at 55.4. The British pound's at 18.3, not so hot. Canadian dollar 66, euro 46.1. And then the yen is a meager 6.6, which delights me because I would like to get some new, fresh downside 6J exposure here. Mm-hmm. And that new downside 6J exposure at 00, 66, 65, 10 to 1 risk to reward Yes. I have zero faith in the Japanese government or economy right now, given their rice situation, which is a word I'd never thought I'd say, but that's sometimes why you do things. Out of the money puts, volatility's cheap. The US, I know we think we're going to get a cut in September. We'll see what Powell does. What's next on the calendar? We're going to make way for Dr. J, but before we do, we have to talk about tomorrow's nothingness. There's a few releases related to energy inventories, a Fed speaker, and of course, we have that 10-year note auction. That's probably the most important event of the day, Jamal, more than any earnings or any calendar event. So keep an eye on bonds notes tomorrow, 1 p.m. Eastern, right as we start the show here. Thomas Westwater and I will cover that live. But beyond that, Mr. Chandler, you're coming up later today. Anything exciting going on for engineering the trade?
A lot of it is going to be our earnings talks, honestly, and we'll see how many of our viewers will talk me into earnings trades, which happens from time to time. So that's probably the most exciting thing.
Tune in for that later. Before trade natural gas. Before we get there, though, Dr. Jim Schultz is up next. He's going to be here. So as Josh Fabian, the producer, said, yesterday sign off with grab a coffee and a sandwich was too hip. So grab your Arnold Palmer and your dentures and come back for more Tasty Live. Happy, Josh?
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Wait for it to get back there.
of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. And I certainly do not have a clue, and I have a very, very low delta that we will get to there where we're trying to go here today. But thank you guys so much for being part of what it is that we are trying to do so we can engage in the search together. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. Man, you can celebrate if you're a bull. You can even celebrate if you're a bear. Today is just a good day to be alive for everybody. So John, bring us into the market though. Let's take a look and see what's cooking there in the old stock market. All right, you've got EMI S&Ps down 950 on the day. You've got the risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, down 50 on the day. You got the boomers up about 10, and you've got the Russell 2000 Futures Index up about 12 on the day. So a mixed bag, like a little bit of a mixed market across the board. Some things are going up, some things are going down. Man, I'll tell you guys, it's almost like markets moving, things change. Like, it's almost like, man, you don't have a single clue what's going to happen in the stock market. Not today, not yesterday, not tomorrow, not any day. You got bonds up a tick. You got notes down a couple ticks. You got oil down $1. You got UB40 hanging in there 35 years later, up 9 ticks. You've got GC up about 7.5 points. So the shifties are celebrating a little bit today. You got the British pound is up. The euro is up. Volatility futures are up about 20 cents. And the spot volatility, the old VIX, is going to be, that guy is going to be down about 10 cents on the day. So the VIX down 10 cents. You've got volatility futures actually up. And so remember, I mean, one of them is kind of a spot instrument, VIX. One of them is obviously a futures instrument, /VX. And so they're going to obviously be different. They're going to usually follow each other and kind of follow suit, but there is going to be, you know, a divergence through the woods for all of my Robert Frost fans that might be watching the show here today. There's a couple of you guys out there. I know that for sure. And so if we look at the overall market though, yeah, you know, I mean, Bitcoin's down a few $100 and I mean, it's pretty quiet. Now, it was not as quiet earlier today. You know, if we look at the E-mini S&Ps, you can see that just earlier today, I mean, you had the market down to, yeah, I mean, it was 30 points lower. I mean, EMI S&Ps were down 40 at one point. This morning, it was only a couple hours ago, I think, after the morning bell, after, I think there was ISM today at 10 o'clock. I think it was, if I'm not mistaken, there was like 2 ISM numbers, right? There was a 9:45 number and a 10 o'clock number. Like the 9:45 was like the warm-up set ISM. And then the 10 o'clock was like the working set ISM. I mean, they're both equally as imaginary, but it's kind of funny. Is that not correct? Like, let me know in the chat. Did we not have a warm-up ISM and then a working ISM? I think that's kind of what we had here today. And the market didn't like it at first, but it has since recovered because every day is an up day, right? Again, all we need is a few computer restarts. Just a quick little, you know, Control-Alt-Delete, Control-Alt-Delete. If we get at least half a dozen to, you know, maybe 9 or 10 of you guys to do that, we should be back to unched on the day. And so NASDAQ kind of followed the same type of price action. You can see the NASDAQ was down to 23,113 at one point. It is now 23,230. So it was comfortably 120 points lower at one point, which is really not very much. I mean, it wasn't even down a full percent today. Like, it wasn't even down, you know, a full 100 basis points. And, you know, gold is up. I think it was up a little bit more earlier, but having a relatively strong day. And then, of course, silver. For all my Hunt Brothers fans out there, silver's had a very, very nice day. Did it get up to 38? No, it got to 37.94. So the big round number bros are going to be upset about that, but there's still time. Like, there's still a chance for it to get back up to 38 there. And so, all right, so there's silver, there's gold. There's a little bit of market commentary that, you know, I don't know. It might do a little something for you today. I mean, not a whole lot, but it might give you a little something. All right, let's go into, man, I want to get to you guys, of course. I want to see where you guys are at. But we've got to talk about Palantir, and we've got to talk about Caterpillar. Man, take a look at what is going on. It ain't much, but I'll tell you, man, it's honest work. It is honest work. Look at Caterpillar. We are up 76 cents on the trade. Look at Palantir. We are up $1.28 on the trade. And so for the first time in From Theory to Practice history, we have 2 winners on the same show. Usually we're good for about 2 winners every maybe 3 to 4 weeks, I would say. And so the fact that we have both of them together concentrated on the same program has never been done before. Like, it'll be 10 years. It'll be 10 years for From Theory to Practice coming up in January. A decade that you will never get back. Like, all the time you've invested, all the time you spent with us, all the time you spent with me. 10 years, man, gone in the blink of an eye. Man, that's crazy, crazy stuff. This is the first time we've had 2 winners on the same program. And so Caterpillar, W, Palantir, W. Now, what are we going to do with each one of those? Well, let's talk about them individually, because I think that the game plan for these 2 guys is going to be at least slightly different. So for Caterpillar at 435, and in fact, here, hold on, let me use this. I'm going to use this little spotlight deal. So the team was showing me, you guys can see my cursor now. I hate to spring that on the team. Sorry, guys. But I think I am going to try. I'm going to try to use this a little bit more. You guys should be able to more clearly identify my cursor, like as it goes around the screen. Like if I want to do one of those deals, you can see. If I want to do like one of those deals, like you can see, and I'm actually moving my head as I do them. And so you're getting the full effect on the show. Like if I do that and that, like you guys don't even know what I'm doing, but now you do, because you can follow with the little spotlight feature. So thank you, Ryan. I'm going to try to weave that in. And if I just, as long as you guys bear with me for a couple of days, I think we should be able to kind of use this on a more regular basis. Obviously the magenta's not going anywhere, the lilac's not going anywhere, but let's take advantage of the technology. Let's try to up our game when it comes to, the Final Jeopardy pen and all the things that it can do for us. So, all right. But if you look at Caterpillar here, you've got the stock at, 435. So I've got my stock at 435, and we've got a 435 call spread that is set to expire in 3 days. So this guy is set to go out to pasture in 3 days. Now, Caterpillar, if I'm not mistaken, let me go back to, let's see, if I go to my charts here. Yeah, so Caterpillar last night, let me look at like let's see here. If I do like I'll do like a 1 minute chart. Let's see here. If I do a 1 minute chart, I don't want to do a month. Let's do a 1 minute chart. Let's just do like one day. I think Caterpillar last night was not looking so great on the number release, right? Like I think it was actually not so amazing. And so yeah, so here you go. Or not last night. It was in the morning, right? It was this morning. And so you can see that Caterpillar this morning, like it took a dive. Like it just fell like a rock, man, on the number, whatever it was. I mean, it came out and said, hey, we're not selling as many widgets, widget machines, widget propellers, whatever they sell at Caterpillar. But then, I mean, the market kind of reversed course. I mean, again, markets move and things change. And then Caterpillar just kind of rocketed higher, which is super nice for us being bullish Caterpillar. So the call spread is actually working so far. And so that's a bit of a surprise. Now the question becomes, what are we going to do, with this call spread? Like if I grab my, what am I going to do with this guy right here? 430, 435. Well, I've got 3 days to go. And so just generally speaking, we don't have the luxury of 45 days to go. I don't have the luxury of several weeks to go where I could kind of sit in the position if I want to, like maybe a Palantir, for example, which we'll talk about here in a couple of minutes. Since this guy is going to expire in 3 days, and right now we have just a tiny little bit of profit, right? I mean, this is the working definition, a real-time example of what a skosh actually is. It's this. It's what you see in the yellow box there, or yellow circle, I should say. That is a skosh of profit. Now, I'm not sure if a skosh is a noun or a verb or an adverb. It might even be all of the above. But either way, this is a real-time example of what a skosh is. It is the profit that we have earned on this Caterpillar position. Okay, since this guy is going to expire on Friday, we only have 3 days to go, what is the game plan? Well, we essentially, which is basically the case with every position that you have 3 options, right? You can close it, you can leave it on, or you can adjust it, like roll strikes, like things like that, right? I think we can very quickly eliminate option number 3 from that kind of bunch. We're not going to roll this. There's no reason to roll this. There's no reason to adjust this. It's working. It's done its job. The question really comes down to, do we want to close it and take our profit, or do we want to leave it on and kind of roll the dice and see if we can't squeeze a little bit more juice out of the orange there? And so, what are we going to do? Well, I think that, when it comes to, hold on a second. Oh, look at you guys. Look at you guys in the, you hit me up on the Zoom chat. They didn't go Teams chat. I didn't get a text message. Like the team came up big clutch in the Zoom chat and said that skosh is a noun. And so, all right, so there you go. So there's your skosh of a profit right there, or the skosh is the profit right there. Well, whatever it might be, it's a noun. And so for all of my English majors out there, I know that I'm having a tough go at this, but we press on nonetheless. And so when it comes to Caterpillar, though, we're not going to adjust it. It doesn't make any sense. So are we going to leave it on or are we going to close it? Okay, I mean, you could kind of make a case for either, I suppose. I mean, you can see right now as Caterpillar goes down, our profits are dwindling. I feel like Caterpillar just went up, though. That's kind of weird. But we're only up about 50 cents on the trade. So, in my opinion, you guys, if you've been watching the show for more than a couple of weeks, then thank you so much for your continued support of the show. It really is only because of you guys that I can do what we do, that we can all do what we do. So, thank you guys so much. You kind of know what I'm going to say here. I think the determining factor, even more so than, hey, what's implied volatility rank? Hey, what's probability? Like, what's all that stuff? I think before any of that, you need to figure out, is it clear? Is the economic significance of the trade at this point in time clear one way or another? And so, if I'm up 5 cents or 10 cents, that's not really economically significant. So that's clearly not economically significant. If I'm up $1 or $1.50 or whatever, it's clearly economically significant. So right now we're right at about 50. It looks like 65 cents. We're kind of on that razor's edge, but in my opinion, kind of leaning more towards yes, this is economically significant now. For my money and in my opinion, when you are economically significantly skoshly profitable, there's the adverb version of skosh. When you are all of those things, I think you got to really have a strong reason. You got to have a want to stay in the position. Has to be a lot of gumption behind, all right, I'm going to stay put because, Caterpillar owes me some money, Palantir owes me some money, like all the things we all go through, right? You've got to really have a strong reason to stay in that trade any longer. I don't really have that. I see the economic significance. This is a pretty good start to the week. I mean, I know it's Tuesday and all those kinds of things, but this was kind of the first earnings trade of the week, I should say. Tonight, we've got AMD, of course. I think in the morning, we have Disney and some other stocks or whatever. And so I want to make sure we do a couple of those things, but let's take off Caterpillar for all those reasons. And so as I grab my handy dandy little spotlight again, and so hopefully this is helping out on the back end with the team there. Let's go ahead and let's highlight both of our legs on the vertical spread. Let's go to and I lost the spotlight. Oh, I bet you when I right click. I bet you guys when I right click, I lose it. Hang on, let me test that. Got my spotlight. I right click. And it's gone. Okay. All right. So there's we learned together, right? So now we know as a team, when I right click, guys, I'm going to lose my spotlight. And so that's something to kind of file away in the old memory banks. But let's go ahead and, wow, look at these markets. These Tony Batista markets down here. Man, look at that. These Vinny's markets, 220 on the bid, 385 on the offer. Man, what are we trading here? We trading Wolf? What are we trading? We trading Figma? Like, man, what is up with this? But anyway, I'm going to go in at the mark price and see if they'll get me out. I don't know. I don't even know if we can get out now. I mean, we might be trapped in this position, and it may just become part of who we are. All right, so we can't get out on the mid price of 302. Let's take it down a little bit. The new mid price is 297. So let's see if they'll give us 297. They won't give us 297. Okay. All right. Let's see if they'll give us, I'll try 294. We'll go in a little bit below the mid price to try to beat them at their own game. All right. So we beat them at their own game. We got improved at 296. So there you go. So there's Caterpillar. All right. Beautiful. Caterpillar over and done. Let's talk about Palantir really quick. And then I want to do AMD and possibly some other things. And man, I see you guys in the chat. And I see the drunken chefs in the house. Man, away from the numbers in the house. Bert Erb's in the house. Andrew Cortado's in the house. Ash Finn, Gasman. Man, look at you guys. Weiss in the house. Miko, Samuel. Man, Daniel Perkins, Brad Glazer. Man, and Griffin, Harsha. Man, I appreciate you guys so much. And all the rest of you guys I wasn't able to mention there. All right, so let's go ahead and let's see. So what are we going to do with Palantir? Okay, so with Palantir, you can see that we are, we're short a 125 put and a 210 call. the stock is at, 175. And so with the stock at 170 or 171, I should say 172. So what are we going to do? Okay. To me, this is a very different situation than what we just had with Caterpillar. Now, you can look across the columns here and you can see that we have obviously an economically significant profit on our hands. So from that regard, should we take the trade off? Yes. But is that the end of the story? No, of course not. This is not going to be the same. Of course not, because it's my show. We still have 45 days to go in this trade. We started the trade yesterday. Whenever I use an earnings release or an earnings call as kind of a Kickstarter and a catalyst to a new trade, right? To a new position in a stock is what I meant to say. And it's 45 days to go, 50 days to go, whatever. It's getting close to that normal entry point that we like to kind of enter new positions. I'm not going to be as quick to take it off if I get a good move after just one day. To me, now you can make a case. Hey, Jim, take it off. It's money in the bank. It's money in your back pocket. Like, Amelia's got to eat. Like, I understand it. Trust me, I understand that better than most. But still, when I look at this, I'm like, man, we've got a nice start to a really, really good trade. I don't see any reason to take it off right now. Let's be a wee little bit more patient. We're in a good spot. We've kind of gotten through the binary event. We've gotten a little bit of volatility crush to kind of, kickstart and nudge the position in the right direction. So I kind of like being a bit more laissez-faire, being a bit more hands-off for my Adam Smith fans that might be watching the show, and just kind of letting the position just kind of matriculate, down the field. And so again, if you wanted to take this off, I wouldn't have a big problem with it. I wouldn't have a big problem with it at all. But I'm going to sit tight. And again, I'm open-minded. And I'm changing my stance on this a little bit, where there will be other times where I might see a trade just like this one, and I might say, hey, let's take it off. Like, let's go ahead and take it off. But, looking at the undefined risk we have across the board in the position, we actually don't have too much. This is going to give us a nice amount of theta. I mean, look, you can even look at the theta column yourself. Like here, let me grab the magenta. Look at this column right here. Right? There's not too much theta in that column. I mean, this is the leader in the clubhouse by far. Like, this is the thing that is driving the train. I mean, Apple and Amazon, right? I mean, those two trades are working out pretty well too. A nice little update in both Apple and Amazon, with the NASDAQ down, which is a little bit interesting. But it's like, man, if I lose Palantir, I'm going to lose a lot of theta. Now, of course, you could combat that and counter that by saying, well, just put on a new trade. Like, let's book this profit and let's get something new working for us. That's totally fine. Like, that's 100% fine. But I kind of like where this sits right now, and I don't really feel a ton of pressure to take this off, right now. But of course, if you wanted to go ahead and take it off, I wouldn't necessarily have a huge problem with that. So I'm going to sit tight on Palantir. And then let me see here. Is there anything else that I wanted to do here before we get to AMD? Because I want to make sure we do AMD. We'll take a look at the other ones. I think Disney's tomorrow morning. Quick little Chipotle check. Look at Chipotle. We're still sitting tight on this short in the money put. Again, we are on the razor's edge of zero extrinsic value. And so the co-host has asked you to start your video. Should I click that, guys? It looks like my video is coming through. Oh.
Yes.
Oh, my video dropped. Oh, but we should be back. Man, I don't know what's going on with all that. And so hopefully it's back. It looks like it's back. Okay. Yeah, I don't know what happened there. That was weird. And so anyway, I think we're back there. Everything looks good. And so okay, so with Chipotle though, we have basically no extrinsic value in here. And so again, I think this is a nice little case study. I think this is a nice opportunity for us to, hold this position. Again, we're going to go ahead and treat this like it's long stock. And I'm just going to basically inventory this trade, and we'll kind of see where it takes us. So we sit tight in Chipotle. But now let's go ahead. Let's turn our attention to, let's turn our attention to AMD. That's what I wanted to do. The video dropping there, but we got it back. A lot of times we don't get it back, man. So that's huge. And so, all right, so AMD. So when you think about AMD, again, I don't really think you need to overthink this. I don't really think you should underthink this. I think you should apply the appropriate amount of thought to this position. AMD, just as a thought experiment. AMD just as a philosophy of life. I don't know how you could possibly look at this stock and look at this industry and look at this way of life and be anything but mega pint bullish. I just don't know how you could possibly be anything other than super mega bullish. So with AMD tonight, I am thinking, you've got the stock at 176 and, we're in the 3-day cycle. I think it's time, guys. We didn't do it yesterday, which felt a little bit weird. It felt a little bit off. It's kind of like you're squaring a circle, like you're bringing earnings trades to me, but there's no butterflies. Like you're bringing an earnings trade to me that's just a vertical spread. Like you're bringing just a short triangle. Like, man, are you feeling okay? Like I know you've been a little bit off the LMNTs. I know you've been a little bit off the ghost, when it comes to the show, which is surprising because that merch ain't going to move itself. Right. But we'll get back to that. We'll probably get back to that at the end of this week when, we have to do the extra long shows. But for AMD here, again, man, I mean, I'm thinking, I think we just play to the upside. I think we do it with the patented expected move butterfly. So we've got the stock at 176. What does Amelia have for us? Amelia is my assistant. She is my intern for the show. She does all of my trading analysis for me. If you're brand new, she is also my 5-year-old daughter. And so if 177.5, 197.5, 217.5. We double up on the guts, man. Look at this thing. $4. All right. Is it me? Is it just me? Or are they giving these things away? I mean, a $20 butterfly that covers essentially the entirety of the upside expected move, and then a little something in case they blow it out of the water and kind of knock the cover off the ball here tonight. And it's only $4 for a $20 butterfly. I thought it was going to be $5.50, $6, and I still maybe would have possibly partaken in this butterfly, but no, 177, 197, 217 for $4.06. And yeah, this is looking nice. This is looking pretty nice indeed. So let's go ahead and push this guy out. And this will be our AMD earnings trade for tonight. Now, again, guys, I know I got lucky this morning and I guess last night. Okay, so we got filled at 407. I know we got a Caterpillar win, and we booked it like it's over. It's done. I know we have a Palantir win, which is still TBD, but it's looking pretty good, obviously. So you might think, all right, Dr. Jim's got a little something going. Dr. Jim's got a little something cooking. I think maybe it's time to go ahead and tail him. I think maybe it's time to go ahead and follow him into, these earnings trades. That is the wrong move. That is 100% the wrong move. Like, if you've seen the show, look at the track record. Look at the career average. Don't let the last couple of starts fool you. Like my ERA, it's about 9.5, right? It's about 9.5 consistently. Sure, we had a couple of shutdown innings. Sure, we kind of found a change up there at the last second. But man, the career rankings, the career stats, not that impressive. So I would find a way to do the opposite of this trade. But again, it looks pretty obvious to me. And so, all right, that's AMD. So let's see here. Do we want to do Disney? I don't know, man. I'll take a quick look at it, just real quick. So Disney 118. You've got the, let's see here. I've got the stock at, let's see if I do, it is tomorrow morning, right? Let me just make sure. Yeah, 8-6 in the morning. Okay. Yeah, let's do it. Now we have something to do tonight and something to do tomorrow morning, which, I mean, we already had plenty to do tonight because Garrett Crochet's going for the Red Sox, looking for 7 straight, looking for 13 over 500 for the first time since 2018, which was the last time our Boston Red Sox won the World Series. But I digress. If I go into, let's go to the trade page. I don't really want to do a butterfly, I don't think, for Disney. I'm feeling a certain type of way. I kind of think, now let's go to the September 19th cycle, 45 days to go. I'm kind of thinking, let's see if we can really, really beat the system. Let's play Disney to the downside. So let's play Disney bearish, which I know, like, there are certain things you're just not supposed to do, right? There are just certain things you're just not supposed to do in the markets, right? Playing Disney to the downside is one of those things. It's like saying you don't like baseball. It's like saying you don't like apple pie, right? It's like, man, are you really going to play Disney to the downside? Let's just see. Again, I'm not necessarily antagonistic towards Disney. I think it's amazing. I think it's great. I think it's terrific. But let's just see if we can't, just steal a couple cookies out of the jar before nobody even notices. And so let's go ahead and let's buy a 120, sell a 115. Man, look at that pricing too. We're only paying 220 for it. That's pretty good. So we're actually risking 220 to make 280, right? And the pop is about 50-50. This is what I like to see. And this is what we didn't see yesterday with Palantir, by the way, if you saw the show. where I queued up a couple different trades with which both of which would not have worked. So if you saw the show yesterday, I wanted to play Palantir to the downside. I tried 2 different ways, but thankfully, man, the stars aligned and we just walked away when the dust settled, and we sold both sides with a strangle, which ended up working pretty well. Had we been directional on the trade, we would have been dead wrong, which is where we're at our best. So here with Disney, though, I do like the way this trade sets up. From a pricing standpoint, pop is about 50, debit paid, again, a little bit less than the width of the strikes. And so all of that looks pretty good. So let's go ahead. Let me delete that. Let's go ahead and if I pay 228 for it. All right, beautiful. So we got filled. Okay, perfect. All right, 228. All right, let's go to you guys, man. Where are you guys at? Man, I see you guys. I appreciate you guys so much. So let me see if I can let me find here we go. So I want to surprise and delight somebody in the middle. I appreciate all of you guys, every last one of you guys. But I see the drunken chefs in the middle. So thank you so much, drunken chefs, for joining the show. I'm assuming that we're talking banana daiquiris or possibly some natty light ice, either of which will be great choices for this very program, of course. Not right now in the middle of the day, but later. But drunken chefs, I appreciate you. How do you feel about rolling credit spreads that get to 35% of profit within a few days of putting on the trade? This is a great question. This is a terrific question, and I may go ahead and wax poetic and only address this question for the remainder of the show. So, so this is such a good question. So you have a vertical spread on, right? And you get the direction of move that you want. So you bank 35% in a couple of days. So you're in an amazing spot. You're holding all the cards right now. You have all the leverage. What are you going to do? Okay, a couple of thoughts. Number one, you're obviously going to have something that's economically significant at that point, just given the fact that you're at 35% of max profit when your original target is usually no more than 50% of max profit. I mean, I suppose if you were selling a vertical spread in, I don't know, SLV, well, maybe not SLV, maybe the artist formerly known as SLV when it was like $20 a share or whatever. But generally speaking, you're going to have something economically significant on your hands. And so again, essentially you have 3 options, right? You pretty much always have these same 3 options when it comes to a given position. And I think it's helpful to kind of go through each one in a bit of an itemized fashion. You can close it and just be done with it. You can leave it on, or you can adjust it. Now, adjusting it is a bit of a black box, a murky gray area, because that can mean a lot of different things. It can mean rolling out, it can mean rolling up, it can mean changing strikes, whatever. And so adjusting is obviously going to entail, at least several things. One of which is what you just suggested. What about rolling it out? Okay. One thing that's interesting to note is if you have a credit spread on, so a short vertical spread. I mean, you said credit spread, but that's a short vertical spread. So you have a short put spread on and the market rallies or the stock rallies. You have a short call spread on and the market drops or the stock drops. Like, that's the situation we're talking about here. If you were to roll that position at that time, you will be able to do it for a credit. So this is one thing that's very important, an important piece to the puzzle. If you have a winning trade on and you want to leave it on for longer, you're actually going to be compensated for doing that. You're going to get paid for doing that. So that's obviously a gimme when it comes to deciding, should you do this or not? Okay, so should you do this or not? Well, close it, leave it on, adjust it. I actually really like closing it or leaving it on. I think either one of those is a good move when it comes to which of the pathways forward through the forest you should follow. Again, I'm more of a leave it on type of guy, which is what we're doing here with Palantir. Different strategy, of course, but same basic idea. Some people might say, hey, let me take it off. I'm outperforming where I should be at this point. I mean, the research team has looked at this so many different ways. I mean, that would, of course, be totally fine. The option I don't really like is adjusting it. Because when you adjust it, yes, you bring in a credit, which is good. And yes, you have greater profit potential, which, again, in isolation, ceteris paribus, is also good. The problem with that is you're kind of running against the overall spirit and the overall intention of what it is that we're trying to do. So what is it that we're trying to do? And I don't mean what it is we're trying to do on this very show, because we have no idea what that is. I mean, what are we trying to do as a network? What are we trying to do, like Tasty as a whole, right? We manage our winners and we give our losers duration, just writ large. Like, that's one of the default settings that we kind of have the dial set to. And so when it comes to a trade that's working, The thing I don't mind going for the profit target because that's what I do myself a lot of the time. And I don't really mind taking it off. What I don't like is trying to squeeze more out of it because then all of a sudden you're kind of starting to run into a little bit of mission creep. Like now you're starting to kind of change the objectives of the mission. And I mean, moving goalposts, man, I mean, that's for the Fed. That's for politicians. That ain't for us. Like we're trying to actually like make change. We're trying to actually like have positive impact, right? And so we don't want to necessarily be moving the goalposts all the time. And you're kind of doing that a little bit when you start to say, "Hey, I have a nice winner on my hands. Let me just try to get a little bit more." It's really no different than if instead of going for 50% of max profit, you started going for 55 or 60, which is not to say that 50 is a magical number. I mean, we've looked at that a number of ways in the research, so it is a pretty good number to kind of settle on. But the thing I don't like is when you start kind of trying to wring more juice than what was already intended out of the orange, when the whole structure of the foundation behind what it is that you are doing every day is not necessarily set up for that. And so that's why I don't really like that drunken chefs. And so I really hope that that helps a little bit. I really think that you're kind of you're squaring a circle at that point, and it is a little bit of mission creep that could be kind of impacting the decisions there. So hopefully that helps a little bit. And so let's see, where are we at? Man, let's go to the beginning. Man, I see you guys. Man, I appreciate you guys. Appreciate you guys so much. Brad Glazer's in the house. Greetings, Professor. Looking forward to your earnings plays today. Lots on the board. Have a good day. Well, yes, I gave you a bullish AMD, so you should be bearish. And I gave you a bearish Disney, so you should be bullish. So there you go. I mean, if you're serious about making money and reaching your financial goals early, then you guys know what to do. I should not have to tell you anymore. Like it's plain as day. Couldn't possibly be more clear. And so Daniel Perkins, man, Dr. J, when Tim Knight said he was short Caterpillar, my pop shot up to 90%. So I was on the other side of a Tim Knight trade. Okay, and you still got the better of me. Never should have doubted the master. Oh, okay, so you're saying you wanted to align yourself with Tim. Okay, which is not a bad person to align yourself. Certainly much, much better than myself. And so yeah, I mean, I really feel like we just happened to stumble onto a winning trade by sheer chance. And again, notice how it wasn't a ton. Like it wasn't a lot. We only made 50, 60 cents on the trade, whatever. And so, but you've got two more cracks tonight, my friend. And tonight, we're not doing any silly business with like strangles and trying to be strategic and trying to actually like, be super thoughtful. Like we're just taking shots, man. We're just slanging them now. Like we're just like, we're bullish, we're bearish. It couldn't be simpler. And so there you go, man. I would do the opposite. Samuel, Dr. J in the house. The market's spotting us today. Let's hope it doesn't drop the bar on our P&L mid-set. Yeah, I certainly hope it doesn't do that at all. Doc nailed the Caterpillar earnings. Stock was down 30 after hours and bounced back. I know, I saw that. That's crazy. It's like failing a squat but standing it up anyway. Built tough, just like their boots. They make yeah, that's right. They make apparel, right? So they've got the equipment, they've got the trucks and the cranes and the whatever, but they make like they make drip, right? So yeah, that makes sense. That makes total sense. Samuel says, by the way, since we're the same age, oh, we are the same age. Okay. Did young Doc Jim rock Caterpillar boots, or was fancy Doc strutting around in Timberlands boots? Man, I had neither. I mean, I've been slides from the beginning, And so obviously it's gotten ratcheted up a couple notches now that we're in Florida, since I mean it's rarely under 70 degrees here. And so yeah, I'm slides. I've been slides from day one. And so I mean, when I was in the studio, I mean I was in Chicago for 5 years, right? At HQ and at the studio, whatever. I mean, I was wearing slides in like February, man. I mean, socks with slides, of course, but man, we kept the slide aura alive, for sure. Weiss in the house. Hey, Dr. Jim, I have an Oklo September 90 short call. How could I defend it or just wait? Man, great question, Weiss. Let's take a look at that together. So you have a short call. Okay. So this is interesting. So Oklo is up $7, right? And so I'm assuming maybe you just put this on recently. And so you have a short call on, you have the 90 strike, the stock is up $7 and it's up to 83. This is a great question because this is a situation we all find ourselves in from time to time, or at one time or another. What do? Well, thankfully, this one is fairly straightforward because you don't do anything. In my opinion, the strategy is still working. Now, you are probably taking on some water. You're probably taking on some heat when it comes to the P&L in the position, especially if you sold this call like yesterday and now the stock is ripping higher. But the thing that's always really helpful for me to understand is what is the end game here? Like, if we hit the fast forward button on the cycle, you said you're in September, right? Yeah, you're in September, so you have 45 days to go. Still a very long time to go. If we hit fast forward though, what's going to happen to this position? The stock still has to beat you. You are still in a situation where the stock has to beat you. That's incredibly powerful. So theta is still working on your side. I mean, negative vega, well, that's always working on your side when you sell options. But you're still very much positive theta. I mean, it's just naked position, so you'll always be positive theta. But now you have, the out of the moneyness of the position that is still in play. Of course, if Oklo, spills over 90, that's not necessarily going to be the case anymore. And so did you say what you sold it for? You did not. And so if you sold it for a few bucks, I mean, let me look at what like a 30 delta. What does like a 30 delta call in Oklo go for right now? Yeah, it's like $5. So I'm assuming you probably sold this for like, $4, $5, $6. So your break even point on this trade is probably 95-ish. And so it's like, man, with the stock at 83, like right now, Weiss, I think you're just kind of a do nothing, go live your life. I think that the move forward is do nothing and go live your life. And so that's what I would do. And, when or if the stock spills over 90, now you can start considering things like adding a put to neutralize your directional bias to the downside, maybe creating for yourself a makeshift strangle, just to have premium coming in on both sides. But then, of course, you have to understand that you're opening yourself up to risk on the downside. So just be aware of what the gotcha is that comes alongside that gimme that you're going after of, neutralizing directional bias, bringing in premium, improving break-even points to the upside, things like that. Like there's always gimmies and gotchas. They come in a 2-pack. Like you're not going to just pull a gimme off the shelf or a gotcha off the shelf. Like it's a 2-pack. Like it's, it's basically like getting a Bowberry biscuit at Bojangles. You can't just get one. And for those of you in the Atlanta, North Carolina area, you know exactly what I'm talking about. And so let's see. But I hope that helps there, Weiss. Andrew Cortado, what's going on there, Andrew Cortado? Brian Dowdy's in the house. Hey, Dr. J. What warnings will we play today? What warnings? I think you meant earnings. Shopify has earnings? No. They're still in business? Nah, there's no way. SHOP. I mean, that's one of the better ticker symbols that's out there, of course. Shop. That's pretty good. They do have earnings in the morning. I'm going to pass just because we already have a couple stacks of cash that are, I mean, I can smell the smoke in the air, man. And so I'm going to wait. I'm just going to sit tight a little bit. But best of luck to you, Brian, if you do indeed play some Shopify. James Bond says, what are you doing with Disney or McDonald's? McDonald's has earnings too? Wow, they're still in business? Nah, there's just no way. Wow, $300 stock. That's amazing. That is super amazing. McDonald's in the morning. I'm going to pass on this one too. Just because, again, we have to be mindful of the piles of ashes that we're going to have to clean up tomorrow. I don't really want to, necessarily voluntarily walk into a third one when we're already going to have two no-brainers. And so with McDonald's, so, I mean, McDonald's is one of those things, I mean, so if you wanted to know, I don't know how I would play Shopify, just being completely honest with you guys. But if I was going to play McDonald's, I mean, how can you not be bullish on McDonald's? The fact that they have just withstood the test of time and they're still around and apparently doing quite well for themselves. I mean, they've made it through all the health crazes. They've made it through all the things like the, low fat from the 80s, the low carbs from, the 2000s. I mean, the Mahas and the RFKs coming after everybody like today. It's like, man, and they're still standing strong. Like, that's pretty impressive. And so you got to tip your hat, man. You got to really tip your cap to them and just, don't hate the player, man. And it's like, man, McDonald's looking pretty good. I would say play to the upside one way or another. And so that basically cements some kind of gap down tomorrow morning after the earnings call. And so let's see, Weiss, let's see. Oh, Miko's in the house. Hey, Dr. Jim. I've been so lonely without the chat the past hour, and here you are, my friend. So thanks for popping in. But now you're back, and my life has joy again. Wow, that's awesome, man. I appreciate you so much. And so Mikos, thank you so much. I appreciate that. I'm really glad that you're able to get some value from the show. Hopefully get some actual trading value, maybe even share a couple of laughs, and that's awesome. So Tony Brandt's in the house. What's up, Tony Brandt? UNH, talking about UNH. Yeah, I don't know about UNH. They've done some crazy things lately. We've basically sidestepped the whole UNH situation just by kind of dumb luck and sheer chance more than anything. UNH is, that's just a 1 minute chart. Let me do, let's do a daily chart. Yeah, like if I go back 6 months, yeah, I mean, now that's a chart. Like if you look at that, like that's something, man. This thing was over $600 and now it's, basically on its lows. I mean, if you're going to be a contrarian trader, I mean, you'd have to play this thing to the upside. I mean, you don't have to do anything. You do whatever you want. But if you're going to be a contrarian trader, you probably would be looking for bullish opportunities here. And so I don't know much about United Health. I know they've been in the news a lot for a number of reasons, I think. I haven't really kept up with really any of it. But I do think that there have been some things going on with them. So, that may entice you to take one side or the other. I would just encourage you to do it strategically. Like if you're gonna do it with some theta on your side. If you're gonna do it with a little bit of vega on your side, some short vega on your side. And yeah, that's how I would look at that. Emmett Morrison says, "Hey there, Dr. Jim. How can you figure out the theta decay on a 0 DTE SPX trade?" Yeah, that's hard, man. That's hard because you know, so theta decay, it's hard for me I can't bring up a 0 DTE right now because the day is almost over, right? And so it only has a couple of hours left. But if I go to SPX and I go to like a 1 day, like if I bring up like if I sell like a 30 delta put, like you can see that the theta, on this trade is extremely high, right? Well, if you look at these numbers together, and the same thing would happen, and this would line up in the morning too, if you did like a true 0 DT at like 9:30 or whatever, you're gonna see a very similar thing. So you look at the theta 770, you look at the max profit of 880. This makes total sense because remember, theta is showing me on a daily basis. These are in daily increments, which makes it tricky for a 0 DT because it's just going to give you like, one lump sum number that's essentially going to decay throughout the day. Like it's going to wither away throughout the day. Now, does it wither away in a linear fashion? I don't think so. It's going to be very much of a non-linear withering throughout the day. But when I think about just theta decay, generally speaking, it makes sense that you're essentially going to see in a 0 DT world, the max profit and the theta for that day are going to line up and essentially be 1-for-1 because you only have 1 day left in the trade. Like right now, you see my max profit is slightly above my theta. That's because if I were to put this trade on, I actually have a little bit more than 1 day. Just a skosh, there it is again, greater than 1 day. And so the theta decay within the day, Emmett, I don't know. I'm not sure. I know it's going to be nonlinear. I don't know if it's even going to follow a specific pattern per se, because the Black-Scholes Greeks and all the outputs that come out from the option pricing models on the final day, they definitely do some screwy things. And so, for me, I don't know as retail traders if, we need to necessarily concern ourselves with trying to zig and zag within the day, like with such a finely tuned apparatus that I'm trying to optimize the theta decay because it does X between 9:30 and 10:30 and Y between 10:30 and 11:30. Maybe it can be done, and maybe the research team can uncover some things that can help us all. But for me right now, I think that might require some resources that we don't necessarily have access to, with like computing power and things and algorithms and speed of transaction and things like that. And so hopefully that helps a little bit. But guys, I'm totally out of time. Man, I gotta go. I gotta run, but I appreciate you guys, man. I appreciate you guys. Ash, Gas Man, I see all you guys in the chat that I couldn't get to. If I couldn't get to you, please come back tomorrow. Come back tomorrow. Come back Thursday. Come back Friday. Thursday or Friday, we have extra long shows. So definitely come back on Thursday and Friday. But guys, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here, and tastylive has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
AMD earnings tonight. It's the one that's anchoring a lot of earnings that are coming out today. I'm going to look at a couple of different earnings trades. I feel like you guys are going to talk me into a couple a day. I just have this feeling. I don't know. We'll see. We'll see. But we got to take a look at AMD. Fox is heading towards the way of a streaming app, direct to consumer. That's right. It's becoming a trend these days, and we're going to see more and more big companies do it. Obviously, you heard a lot about what's going on with CBS. ESPN is also doing a direct to consumer. It is what it is. We'll talk about that. And finally, tariffs. Look, they're not going away. Tariff is going to be is it going to be like the word of the year? I mean, it has to be. We've talked about it so much. I'm sick at how much I've said it this year. But we got another tariff goalpost coming up on Thursday. What's going to happen? We'll talk about those three things and more. Like I said, a ton of earnings here to look around with. And I'm a little annoyed because I could have done a 0DTE trade today and made money. Welcome to the most dangerous show on the tastylive network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Yeah, that 0DTE trade. You see SPOO's sitting at 63.26, and we got about 1 million contracts, 1.06 million have traded. These days in markets, it's hard to get an idea of what kind of range and trading range we're going to have. It felt like we were going to be hanging around 6,300 level in SPX a day, and that's exactly what it is. But when I looked at it, it was when we were down like 30, right? And I'm like, down 30 could equal down 70, or it could end up being up 30. Well, looks like it would have been the play to do, but you never know what's up. Let's pull up some slides, talk about a couple of things real quick before I get you to the platform, which is really where it's at. We have AMD with earnings today. It's interesting because it just so happens that today and yesterday, but more so today, we're starting to hear more about potential tariffs coming on for semiconductor names. That could throw somewhat of a kink in the chain. But nevertheless, their earnings are not about what's coming up. It's about what's past. And tell you what, AMD has looked really good. It had a rocky, I feel like, year last year. But this year, it's been really strong. Stock has been powering higher. And you imagine they're going to talk about AI in some type of way. They were just allowed to sell their chips to China once again. That happened like about a month ago. So things are seemingly looking up. Does it mean stock's going to rocket higher? If it is, you know who to talk to, your boy, the calendar call king when it comes to earnings, man. So we might have to look at something like that in there. We'll take a look in a little bit. Fox One streaming service is supposed to be launching really soon. I think it's on the August 21st. This season begins on September 4th. And you know what this means? You know what this really means? It's fantasy football time. That's exactly what it means. I haven't really analyzed my season. I used to do so much research heading into the season. I used to I'd spend like 10 mock drafts at a minimum, right? I don't really do any of that anymore. Look, but fantasy football is part luck. You can pick the right guys and all this. Like last year on one of my teams, for example, I had Tyreek Hill. And that guy is one of the fastest people in the NFL, as we know, one of the best receivers. He just had a bad year. And I think he had a little bit of injuries messing with him, but he had a bad year. And that can happen. You can't plan for that. It's just something that happens. And that's the great thing about fantasy sports. You just got to roll with what happens. Nothing does that more, I feel, than fantasy football. Fantasy baseball is kind of a close second. It might be first in a way because you can get a nobody that can really help your team. You can't really do that much in fantasy football. Yeah, I know it's next man up, but if a top running back goes down, you're lucky. It depends on if sometimes, running back ability obviously is based on what they can do, but sometimes it's also based on what your line is. And so if you have a good team with a great offensive line and you have a really good running back, boom, great stuff, right? Like Saquon Barkley. If Saquon goes down, the guy after him probably still is going to have some success. Not the same, but still some success, right? but you just can't control it. And if you're lucky, maybe you get that guy in the waiver. So it's a lot going on. I can't wait to get a hold of all of it. Oh, man, I'm still in fantasy baseball right now, by the way. But anyway, it's interesting that they're launching this Fox One service right ahead of NFL because they want to test and see how things are going to go. You know, at some point or another, look, Fox is mostly made up of news and sports. That's their main portfolio, right? Like, that's what they have. And you know, at some point or another, they're going to be pushing all that stuff straight to the actual app, away from streaming TV. What I'm seeing right now, what I think I'm starting to see, is you see Fox One, and they have mostly sports and news, and most of their Fox stuff is going to go through an app eventually. ESPN has an app, right? There's that Venu app, which I think was 3 different companies that combined, and they make an app. What you're going to see is that we all just got to the point of cord cutting, and it went to YouTube, right? Like YouTube TV became the huge beneficiary of it. I think YouTube TV is going to get supplanted, and these things are eventually going to just live on their own, these apps. How wild is that? I mean, that's the world we're going to live in. And then we really are going to get subscription fatigue. I mean, that's just the way things are going to go. Before I go off too much of a tangent here, let's round it out. Countries are scrambling for deals ahead of Thursday's tariff deadline. We've been hearing about deals flying off the shelf, this, that, and the other. Markets have moved with this tariff stuff, right? Friday, I think partly was tariffs and partly the jobs report. I think a little more 60-40. I think 60% of Friday's down move was more related to the jobs report because, again, a bad jobs report means that things are starting to fall apart due to tariffs. I think tariffs being implemented potentially on last week was the other thing, and the deals are heading into it. But point being, market still moves on tariffs anytime they want to. So I think you need to keep just a little bit of powder dry in case Thursday's move ends up being a wild one. Leftovers, the most reliable used car brands in 2025. Let's move to the next slide. Donald, what's up, man? Fantasy football emails came out today. Yeah. Who's my first pick? I mean, I can't divulge that information. I'm going to give away my advantage. My friends listen to my shows at times and at convenient times. That's why I'm like really careful about some of the things I say. Agent, what's up, man? How you doing? Sergio, what's going on? Rancher, how you doing? Yeah, I got to be a little bit careful. I don't want to get too carried away of mentioning my plays. One of the fun things that I do is one of the fantasy football leagues is an auction league. If you've never done an auction league, I'm telling you, it's fun. It's great. It's a little hard. It's like trading. It's like trading in a mock pit. But I think you guys would like it. These are the most reliable car brands, 2025, based on reliability of 5 to 10-year-old models. So this is, going back to 2015 to 2020 time period, okay? Lexus is number 1. I would say I'm not surprised by that more than Toyota, but I mean, they are kind of the same. At some point, I think they are the same, right? Like, they are the same company. I mean, Lexus and Toyotas are your top 2, basically, right? Who knew? I think we all knew. I mean, Honda is surprisingly number 4. I would have expected Toyota and Honda to have been the 1 and 2, but hey, Mazda is up there. My mom had a Mazda Miata. She bought it in 1995. That was like the coolest car. It really was. You can look it up. It was a cool little sexy little car. I got to tell you, I drove that car around a lot in my 20s, like early 20s in Atlanta. That's all I'm going to say. My wife, when I met her, I was driving that car. That's all I'm going to say. Honda is 4th place here. Acura, 55. Acuras, I feel like, used to be kind of shitty, like I felt like, but clearly not. I mean, they looked nice, don't get me wrong, but underneath the hood, I didn't think so. But, same thing with Mazdas back in the day. Reliability scores, man. For used cars, this tells you a lot. Buick is on the list at number 6 here. Volvo, yeah, those are not as great as you think they are. They're great new. There's like a lot of cars that are great new. Used, nah, not so much. Nissan, 49. It's true. Although Nissan's a little near and dear to my heart. It was like that was like my first car. Like my car that was mine, Nissan Sentra. Yeah, it was beige. I called it Sanchez. My wife actually named it Sanchez. She wasn't my wife at the time. She was my girlfriend, but she named it Sanchez. It fit. You ever give your car a name and it fits? Like, that car was Sanchez. It's funny. My car I've had now for 15 years never had a name. But Sanchez, yeah, Sanchez had a name. His name is Sanchez. Subaru, I never had the pleasure of owning one, is 48 reliability score, and Cadillac 47. Yeah, Cadillac. There's nothing says American like Cadillac. You know what I'm saying? Let's move to the next slide. It's almost like a broken record, but it is what it is. Volatility did jump week over week, right? You looked at last week, Tuesday, the 28th. It's the purple line here, and it was a little bit lower. We all talked about it. It was pretty low. When you looked at implied vol compared to historical vol, there was about a 10-point difference, and that gap shored up late last week. We basically see that it was just like the week before. So obviously, big move, a little bit of a move the week before causes vol to go up, but for the most part, we're still in contango. Let's move to the next slide. Yields. Look at the yield curve. Look how much the yield curve in the front is starting to poke up a little bit. It's kind of interesting that 1 years have jumped. You've noticed this difference between 1 year and 2 year paper. It's kind of interesting. It almost says that they're not expecting rates to cut, at least as of for now, but it's I don't know what to think about it. Overall, though, the whole curve has dropped some, right? We've seen the pullback. At one point in time, 10-year yields were around 4.5, as you can see from this a couple weeks ago, but it has pulled back some. 2 years were over 4, pulled back some. So overall, the curve is pulling back, which maybe gives some insight to possible rates hike. But when you look at the near term, you look at the yields, they're a little 1 year's to higher than 2. It tells you something. Let's move ahead to the next slide. Speaking of bonds, the difference between, the rolling correlation, I should say, between 10-year and SPX has been climbing once again. We were looking at this a few weeks back when it was in the red, turning to positive, and then it stayed positive for a while, which again, why does this matter? A lot of times when we see the 10-year hit like levels like 4.5% or 5%, like we've seen in the last couple of years, market gets spooked out and goes the other way. Inverse correlation, right? It seems like they're rolling together a little bit. I mean, it's not happening today, but it does seem like they're rolling together a little bit, and the market is not freaked out by higher rates. So you figure it out. I can't figure it out. It's rolling correlation for a reason. Let's move to the last slide. Lots of earnings. Like I said, we got AMD, you got Rivian, you got Snap, which I just realized, like usually Snap used to have earnings the week before Google and all those guys. Earnings got mixed up around. Something happened with the calendar. I don't know. Maybe the moon changed it or something, but it was weird. Because Snap used to have earnings before Google, right? And you get an insight of what's going on with advertising revenue, and then Google hits, and boom, boom, boom. Snap is a little later this time around, at least in my opinion. SMCI, which has been a big mover as of recent times, has earnings. Upstart is always somewhat of an interesting thing. How much people are borrowing is interesting, right? Upstart usually does a lot of private loans. And at Open, we all know, we've heard about Open a lot. I'd be cautious on playing Open for earnings. I mean, it hasn't been moving because of earnings, right? But I'm not going to tell you what to do. I'm just saying I'm not going to trade it on earnings. It hasn't been moving because of earnings. It's just been moving because it was meme-ish, you know? Lucid has earnings. Toast has earnings. Amgen, which, again, a lot of biotech names are going to potentially come under fire soon. Uber, which I am interested in. That's going to be an interesting one. Shop has earnings, and Disney have earnings. We got a 10-year note auction coming up tomorrow. I don't think we've seen the market move on these bond auctions since that 20-year note auction a few months back. But interesting to note. 10-year note auction coming up on Wednesday, 30-year bond auction coming up on Thursday. And then we got the CPI report next week. We're going to start kicking off more stuff, but it's fairly quiet this week as far as events, macro events, that is. Number of S&P 500 stocks above the 50-day moving average is 264. It's 53%. We've tailed off. Some. Let's move to the platform, please. Just checking. Okay. No. Oh, Rancher. I'm keeping my short call spreads and AMD on. Dangerous. You're so dangerous. It's dangerous. Actually got my PDTR up to 2. Dang it. Oh, you mean pattern day trading thing? Yeah, don't get locked out, man. Don't get locked out, please. Let's see what we got here. Let me show you my current positions. That's Oklo I just literally put on today. I thought it was some calendar call spreads were in order there, especially given that vol is fairly high just on an implied basis, especially in the near term. And I'm able to sell out of the money upside in an expiration that doesn't get earnings. I like that idea, so I did it. 190, the 90, 95, 100 calendar call spreads. That's been paying off well today. Palantir, this was the earnings trade that I did yesterday. Calendar call spreads. Obviously, the upside is going to come in big, especially when you are still out of the money. So the 180, 185, 190 calls and the AUG expiration are basically just melting away. These still have a little bit of value, which I like, which is one of the reasons why I put it on. This is in the August 15 expiration, so we're riding those out. And then the short strangle is working as a strangle. The put side is giving me more love than anything. I was trying to decide whether I wanted to roll this, but I don't think I do. I'm not going to. I'm actually going to close this strangle out probably the end of the day. It's down to 16 IVR. When I sold this yesterday, this thing was 60 plus vol, implied vol, right? Now it's in some, and I think it creates an opportunity for the stock to keep running. So as a matter of fact, where we're sitting here, I was trying to wait to see if I am up money on this thing, 150. I'm going to close it out, and that'll give me more capital. I don't want to put too many trades on that earnings. And again, when you have earnings trades that are earnings, again, this is not necessarily earnings per se, because this was September. It's not an earnings trade. If your earnings are on August 5th and you sell September, that's not an earnings trade. But it does. Oh, come on, being so difficult. Why is it being difficult? Because somebody is 330 bidding this thing. Let's see. Bid size. Look at that. Somebody is bid for 2 of these, 14 of these, 1 of these at 330, and that's what's messing up me closing this out. And they're trying to get me to pay up. I'm going to close it. I'm just not going to close it at this moment. I feel like I can get a better price. So I'm going to close that strangle out, though. What other? UNH is playing out nicely. That is the zebra. I think I mentioned to you guys, they put on a couple of different zebra trades and names that are large market cap names. All of them are over 50 billion. I'm tried to get mostly over 100 billion, but that have a chart that are kind of ugly. But again, if a name is kind of ugly and it's over 100, 200, 300 billion, I feel good about eventually trying to catch that falling knife. And so that's what this is about. I put the zebra trade on in there. That is paying out nicely. Fiserv is also one where I have that trade on. It's not there yet. It's going to take a little bit more to get this thing out of its funk. But again, similar chart, really big name, really big market cap, does a lot of volume, very liquid. We'll hold on to it. And it's out in October. We're good on that. UPS is also another one. Similar deal, right? Similar deal on its butt. It's a larger market cap name, so similar deal, doing that in there. Russell 2000 is my RTY. It's pretty out of the money, the 2400, 2500. But I tell you what, Russell, when you look at it on a continuous chart, the Russell here is could be consolidating. What if this consolidates in this range for a while, maybe touches 50-day a couple of times again, and eventually bounces back up? And once it gets back to this level, it could take some time to carve out. Look where I am right now. That's August 19th. What if it's August 19th or August 20th where it gets back up to here? It makes me feel good that eventually it can explode higher, and you wonder how much higher. Well, I always look at, again, I'm sort of a middle of the road technical person. Technicals don't always decide my trade. I just like to use them in accompaniment with my trade. So what I'm looking for here is for Russell 2000 to eventually retrace this big down move we saw on 12/18/24. That was a Fed day. If it can retrace this move first it has to carve out this technical chop, whatever that may be. And that could take 3 weeks. Who knows? But if it can get back to this level of 2,300, and then eventually the market cooperates, and then eventually it starts to make a big move, well, then it needs to retrace this. And once it gets here, we're feeling good, fellas and ladies. We're feeling good. We're feeling good. Rancher, I know. I mean, UNH is eventually, it could swing back down, but that's exactly why I have the trade in October. You feel me? That's why the trade is in October as opposed to August. That's why it's so far out. I am willing to deal with the ebbs and flows in this thing, as long as eventually over the next 2 months, it's trending mostly higher. If I can get it back up to 300, that'll make me feel good. I think it could easily get back up to 300, don't you think? 300 is basically around this 50-day moving average. If it can get back up to here, and then we're feeling good, I'd probably take it off there, you know? That's my thought process. What trades, what earnings trades are you guys looking at? What any you're interested in? I know, let's see, that's the real AMD. We'll start there. I haven't had an AMD trade on in a while. I tell you what, I feel Rancher's right. I am confident in AMD, but I don't know how confident I am. It really has to blow off the top. I'm not super confident in it. I'd be willing to risk. I'd like it better if this level of the chart were down here and it needed to eclipse this previous high. Let's see. Let's go to 2-year move. How far is? Oh, there we go. That's what we need to see. See, you need a goalpost. You need like the tariff goalpost. You need a previous high for it to eclipse. So going back to July of last year, 2 years. Let's go 2 years weekly. Okay, so it was up to 200 change. It needs to eclipse 185. We think it can do that. Was it there recently? It was up to 182, and then it got rejected. It needs to eclipse 185. So that's where we're going to kind of place our things. And it depends, though. Let's see how expensive these things are. We need them to be under $2, guys. 185. Oh, this is perfect. 110? Yeah, count me in. We'll do that. Since it's got some other strikes too, I'm willing to spend like $300 to $500 on this. The 187s. Come on, don't be cheap. Replaced 187s. We need those. We'll go with the 190s too. I'm going shopping, people. We'll go shopping. We'll go with the 190s as well. All right. Replace. We'll go with that for now. How much is that? That's $300. I could do another. Does this thing run $20 tomorrow? Maybe it does. Let's go with the 190. Let's go with the. They start to get cheap after a while. Almost really cheap. Hold on, clear. These are getting kind of cheap. We'll go with the 192s as well. I'm gonna do up to like 500 in premium in this thing. And we'll go with the 195s as well. Hopefully the stock doesn't tank. Even if it doesn't jump $20, if it goes upwards, that's good for this position, right? That we'll live with that because again, we got a whole nother week for it to possibly bounce. The market bounce higher, so we'll roll with that. I got to put all of those in. Whoops. Yes. Yeah. Again, I do multiples because if it blows through my strike, if it blows too far for your strike on a calendar call spread, then you basically lose what you paid. But if it blows through the strike, this is an earnings play. We want a big move. We're looking for a big move if it's going to happen. Expected move was $14. I'm playing for 20, right? Why not? So that's kind of the way it's going to go. Let's see. What else is there? Well, let's see. Somebody's doing a short strangle. I'm not opposed to that too. I could do the similar trade like I did in except the strangle was actually cheaper in Palantir. That's crazy. The strangle was actually cheaper to do in Palantir. They're about the same price. Strangle was actually cheaper to do buying power wise on a margin account in Palantir than it was in AMD. If this were like 1,000, I would do this just to sort of have something to collect. Wait, hold on. Am I doing something wrong? Oh, hold on. Let's do the 210. Oh, okay, that's more like it. What is the vol in here? Implied vol is 50. Ooh, I do like the idea of this strangle because this can kind of offset. If it doesn't move much, Again, right now I have $463 at work. I could, I'm gonna, yeah. Since I know, edit order. How much am I collecting? Oh, shoot. There we go. Yeah. Oh, come on. This thing's moving around. 62. Let's go with that. I'm gonna try and sell that strangle. And in case this thing doesn't move much at all, I'll recoup a little bit. I'll be able to get some decent money for it. Let's see. Oh, yeah, thanks, Donald. Uber. Uber is another one. They've been coming up with a lot of partnerships recently. There's been a lot going on in here. It's somewhat of a fascinating name. It's looking like a very bullish name in recent time periods. This is one also. And then look, the recent high was 96 and change, 97. It can go to 100, right? Let's see what those look like. So let's see what the 95s look like. 95s. Ooh, really? Oh, that is beautiful. These are really cheap. When they're under $1. 95. What's the expected move here? $6. I'm gonna go with 95. 2 points away. 97. I just don't feel like executing something. I could do 95. You know what? Maybe I will. I'm going to do the 95. How much time we got here? 97. I'm going to do the 95. We got only a couple minutes here left. I don't want you guys wasting. I don't want to waste time with you guys executing. But I'm going to probably do the 95. Since these are so cheap, and I just got the other one off I just got this one off for 46 cents. So if I can do a bunch of those, I'm going to do up to maybe $300 in premium, which ends up probably being the 95, 96, 97, up to 100 maybe. I'm going to play that. $6 expected move. It could go for 10. So I'm going to do that. And there was another one that I was kind of interested in stock-wise. I was actually interested in... I'm interested in SMCI. I could end up playing that. Oh, Snap. Snap is one that I'm interested in. Guess what I'm going to do? Where's this stock? Looks terrible. You know what I'm going to do? Snap, you never know what Snap's going to do. I'm going to buy stock in here. Yeah, I'm going to be bullish. I'm going to buy stock for $9.35. When I get filled, yeah, I want the penny. I'm going to buy stock in Snap for $9.35 for earnings. We'll see if they end up saying something bullish. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello again. Well, mixed bag today. How are you doing? Tim Knight here. We're going to look at some charts together. I just glanced over at my 27 different positions. 14, they're all shorts. 14 of them are down, 13 of them are up, which means it's pretty much a wash. It's a pretty decent day, except for one nasty blemish, which was Axon. Now, luckily, I had a little position, like 20 shares, all 20 shares. And it wasn't, I've done dumber things than Axon before, but it was not a brilliant kind of trade. It was definitely up there in terms of its long-term position. But I think it shows don't get, the old saying, like, don't fight the Fed. I think these days should be don't fight the White House, because there's certain companies that are going to be beloved and sponsored very strongly, like Palantir, like Axon, private prisons, things of this nature. And so that was the dumb part. So that was the big wart that came. They reported last night. The stock closed at something like $7.44, something like that. It instantly jumped like $30. And there must be a pretty big, short float out there, because it got squeezed to death before the open. It's like 790, 800, 810, 820, 830, on and on and on. I've rarely seen anything like that. So it's a pretty small position, so it's pretty easy to squeeze. Luckily, I got out early. Got a lot worse. But yeah, that was the bad blemish on the day. Otherwise, things are fine. I've got the charts preloaded so we can thumb through them, and we'll take a look at the aforementioned Axon as we're going. So let's begin. We begin with the spider, and by and large, things are going well because we started the day off strong, kind of as a add-on to yesterday's positive fuel, but then that went sour, and we sold off really hard. And bottomed about 2 hours into the trading day. Now we're just sort of marking time. We are red on the ES and NQ, green on the RTY. Here we have the spider, and we had our big tumble Thursday and Friday, big recovery yesterday, giving up a chunk of that today. So that's just what we want to see. The diamonds, zooming in on this, kind of the same idea. We opened up, pushed higher, and now we're just kind of hanging out at a very small loss, just barely down at all. But the overhead supply is doing its job. It's holding things back. And it's with China, FXI, this is in the green still. And as I've said, this is a very gappy instrument. It's really hard to set a clear stop on this, but still in this position. Of those 27 positions, some chunk of them, probably 5 or 6, are ETFs. And FXI is one of them, still short that. But let's talk a bit about earnings between when I last saw you and now. The big one everyone was watching was Palantir. And as I said yesterday, in sharp contrast to my Exxon trade, I wisely said there's no bearish reason to be in this. And I had gotten out actually a couple of days before. And that's good because this thing shot higher. We are at lifetime highs on this. We gapped higher. We're up around 171 now, and it just shows sometimes fundamentals do not matter. You can look at the updated P is like a 500, doesn't seem to matter. So this has been, for a while, this was kind of a pretty junky from around January of 2021 all the way down to late 2022. So pretty much for 2 solid years, this was pretty much a garbage stock. It had gone from 45 down to around 5. So real wipeout since then, no such problem. It's gone from 5 to 170. So one of these tremendous gainers, and seems to be no stopping it. Who is paying these prices now? Beyond me, but they are. And very positive result from that. Axon, as I said, big gain on this. We're still confined by this channel. I mean, it has been hemmed in by this to some degree. It is a little off today's highs. We've gotten up to 884.20. We're still close to that. This has been a big gain, over 16% pop on this. So a real shocker there. And as you can see, increase in volume like so. So yeah, nasty stuff, and has been removed permanently from my bear pin. I ain't touching that anymore. Caterpillar reported this morning, and not much movement. It's near lifetime highs. It's up literally a few hundredths of a single percentage point. My stop was up here, anchored to the lifetime high of last week, and that was not stopped out. So still in cat, but it's really not doing much of anything. Couple of other political stocks, more or less in the news. You may have heard there's a lot of cultural chatter about American Eagle Outfitters because of their ad campaign. And I mean, short term, it's done very well. Long term, it's kind of a mixed bag because this has been, when you measure it in years and years and years, it's been doing all right. As you can see, we've been ascending with this sine wave, just a lot of violence up and down, but on the whole has been going up. Until recently, it was pretty junky stock too. It had gone from 25 recently down to the single digits. But this new ad campaign has added a lot of interest to the stock, as you can see. You see the increase in volume recently, as well as the price. What was interesting yesterday politically is that the mere mention by Trump that he really digs those new ads sent the stock blasting higher. So on huge volume, big day, I think it was like 20-25%. It's given up some of that. I guess some folks are taking profits because they realize that the mere mention of an ad campaign by the president is a pretty ephemeral reason to own something. But net, it was positive. Speaking of DJT, here's DJT, which itself is doing poorly. We're down on this over 3%. It's just kind of slip sliding away. So yeah. One green item today is gold, and more particularly miners. Gold itself is been doing quite well. It's near the lifetime highs, hasn't really burst above April's high yet. I'm sure ultimately it will, but of real interest though isn't so much gold but the miners themselves, because GDX is down, it's up about 3%. And so we've been watching the subtle pattern here, base, and it sneaked above it a little yesterday. So that was actually kind of your buy signal yesterday, and the day it just really took off. And so this is it's not at lifetime highs, but it's getting there. The lifetime highs were set way back 14 years ago, but it's getting in that vicinity. And short term, this has been progressing quite nicely, as you can tell. The junior miners don't look as good. They're up, and they're up just about the same amount, but just in terms of kind of the shape of the pattern, it's not nearly as clean because you were starting to break down here. We haven't broken out here. So given the choice of the two, plain old GDX looks a lot more appealing than the juniors. And this also brings to mind that ratio chart I mentioned from time to time, which is the XME, the metals and mining ETF, divided by GDX, the precious metals miners. And we've looked at this dozens of times. It certainly merits another peek. This ratio chart goes all the way back almost 20 years. And we talked about it when it was deep into this territory, because the general idea was short XME, long GDX would do well because long term, that ratio is going to degrade, it seems, for years to come. And so far, so good on that, because it hasn't been a straight line down, obviously, but we've had these retraces from time to time, most recently here, but it's starting to fall away again. And so if you're going to guess, like, where's it going to be in 2 years? Probably a lot lower. I think precious metals and the miners have a great future. There's XME specifically, which itself is doing great. It's not like XME is junk. It's just a relative performance thing of GDX beating XME badly. But XME has been at lifetime highs just recently. It's up today. But again, it's a ratio chart. It's relative behavior between those two. Another important sector, although not as much in the news lately, is semiconductors. Here's SMH. This was at a lifetime high last week. And for about a month now, it really hasn't done too much of anything. If you kind of look above this dashed blue line, ever since really, a month ago, it's just been kind of just gently moving up and down, really no clear direction, consolidating. And of course, the anchor to that is NVIDIA, which is actually down a little today. It was at a lifetime high last week, but it too has just been kind of hanging out up here. I have stayed away from both of these. What I am still in, and which reports tonight, and it's kind of the big earnings tonight, is AMD. AMD has had a very strong run. We bottomed like everything else did back early in April. On April 8th, this got down to 76.48. Just a few days ago, it was up like 182.5. So way more than 100% gain in just a few months' time. It's richly valued. And, you know, stung as I am by Axon, this is, I think, a horse of a different color. So we'll see. Fingers crossed on this one. They do report still short on this. We will see. If it does, perchance, weaken away, that will be of aid to SMH sinking as well. I also would say that had good results with my one and only other semi-short, which is On. We talked about this yesterday. Had a nice fall yesterday, and happily, it's adding to that a little bit. We're down 1% more on. Just some other mishmash from other sectors, some other short positions. Costco, turning away again. This one's down about 1%. We've had a whole series of reversals on this, some of which resulted in a push down, some of which didn't mean anything. You can see here, it didn't seem to do anything here or here or here. It had a modest good result here, a much better result here. And my hope is that this time it'll do the same thing. So the stop on this one is this line, dash line here at 960.18. Another one I really like, and which is doing well today, is CrowdStrike, CRWD. Zoom in on this. Tighten up at the stop on this one. Again, the dash red line as usual, around 458. So anything above that I would jump right out. But as it is now, this is a nice complete pattern. We're getting a good push down today, over 3%. Longer term, I think you can see the potential on this. And another one I'm fond of, down even harder today, is ELF. We've talked about this before, ELF, ELF Beauty. This is down approaching 6%. And I believe they report earnings tomorrow morning. I think. Let's zoom in and check. No, it looks like maybe after tomorrow afternoon. Yeah, it looks that way. Couple of other big items. Well, there's SMCI. And if you ever hang out on Reddit's at WSB, this is a big stock for those guys. A big meme stock right now. Some people put their entire portfolios into very aggressive long positions on this one. I don't trade SMCI. It's not a particularly interesting pattern to me, but this will be very closely watched by that crowd. And then, as I mentioned, AMD is the big news after hours. So in sum, IWM, the small caps, we have been following this, had a big push higher yesterday, still short this with a stop anchored to last Thursday's peak. So the dash red line, that's the stop on that one for me. And then the cubes at the moment are down about 0.5%. And in this case, also short. And you can see the dash line on that, which is just anchored to today's high. But we'll see if AMD could be pivotal in this in terms of adding to some bullish juice to it or breaking down below that blue line again. All right, well, good luck, and I'll see you on Wednesday. Thanks. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. That's right, my friend. As foretold, the highs and the lows were in for the day. I know you were looking at that, wanting us to go down 80 handles, but you were wrong again, Sadnov. Even the S&P down 21.75, NASDAQ down 127, Russell keeping its head up 13, and the Dow down 21. Dow is the weakest of the group. It's got itself back a little bit to just about unchanged, and the NASDAQ takes the lead to the downside. Volatility up 37 cents after trading all the way up to 19. A decent sized move to the upside today. Came back down to 18.30. Bonds are up 4 ticks over 16. 116.01, trade up to 07. They've been strong for
I agree with you. I think those seem like the almost like the strongest instrument on the board.
Yeah, the big brother. I definitely agree with that. IV rank of 12 in the bonds. Notes are taking a little bit of a move south, not ever so much. Bitcoin back under 114 today, down to 113.50. Caught itself a little bit of a rally last hour or so, 114.1. Oil down $1.13. Gold up $8 and change. Silver up 51 cents, about 10 cents off of its high. Sadnov, some of the movers today, as you would expect on the earnings side, or well, not expect, but Palantir was up for most of the day. It still is up $11 and change. UNH, although only $250, is up $9 or $10 right now. OKLO was strong all day, up 7. FSLR up 5, and Oracle and Boeing up around 2 in the orders each one. And on the downside, Sadnov, you're looking more like Netflix down 25. Big move in Netflix. It is $1,000 stock with an IV rank of only 9. Coin down 17, weak all day. MSTR weak all day, down 12. Meta down 11. Costco weak all day, and CRCL with Carvana down about $11 a piece. FIG, I know I talked about that earlier today, trade down to about 79.5. It's 80 cents right now, still down 8.46. That's all I got.
That's a good wrap up. I mean, it's just it looked like this morning they might have something going to the downside, and at the end of the day,
volatility was percolating, and
Yeah.
bonds were catch a little bit. Gold was unchanged.
at the end of the day, they did nothing all day, pretty much. They had one little rally.
Yeah.
They had no real sell-offs. It was another good day for a little bit of premium crush kind of across the board. They bid up a few puts. There's a lot more red on my screen than usual. The bonds are obviously the strongest player. You know, it's such an interesting indicator when the futures close at a huge premium or a huge discount. It almost never fails. When they close at a huge discount, they go up the next day. When they close at a huge premium, they go down the next day. And
Yeah,
that
they
was the
closed at
biggest
a premium
premium.
last time.
That was the biggest goose up to the upside we've seen in a really long time. I'm just looking at some of the earnings plays.
Yeah,
here.
but what now, brown cow? That's the question.
That really is the question. What now, brown cow?
Because the last couple of days were kind of right in the middle of the last 4 or 5 day range here. I mean, still near our highs. Don't get me wrong. Volatility is kind of in the middle of its range over the last week or so. Bonds are now making highs that they haven't seen since April or so, and even gold has caught a little bit of a bid last couple of days too. I mean, I don't know what to think right now.
Yeah, that's fair. I mean, and looking at some of the other commodity markets today, I mean, they were pretty flat actually. The yen's down a little bit, the euro's up a little bit, but they're pretty mixed. And most of the other commodity markets were now just looking at my screen, I'm going to say pretty mixed. The surprise today for me was the Nasdaq because it was so strong pre-market, and then it just really fell to bed. A lot of these Nasdaq stocks just turned around to the south side, and I'm not saying that they don't have a hell of a lot more room to run. They very well might.
By running into the downside.
Yeah, I mean, I think so. I mean, well, only because
usually they a lot more far to fall. I mean, usually don't say run to the downside. So I'm trying to talk like you've been in the business for 40 years and you get at you get interviewed by Bloomberg.
The reason I say that is because if you look at a stock like Coinbase, it traded 400, and we thought it was ridiculously overpriced. I mean, we were yakking about it on the show. It's the most overpriced stock. Now it's 300. Sure. It lost 25% in what, a week? But Nvidia is still 178. I'm sorry, 178.
Yeah, it's down $1 or so today too. But
I mean, Meta, Meta's still 765 or whatever it is. It's close to that somewhere.
Microsoft's still 529 or whatever.
That's right. I mean, Amazon sold off a little. Apple sold off a little bit. I mean, you just mentioned PLTR, but these stocks are, by definition, nothing on the board is cheap. Nothing.
No, MSTR has lost almost 20% too, from 450 to 370 something. Sure.
But all I'm saying is I feel like there's I don't think when Coinbase was trading 400, people thought it would trade 300. And let's be fair, Bitcoin has moved $2,000. It's not like this is not a Bitcoin move,
right?
Yeah. So
not a huge Bitcoin move to the downside to warrant.
No, and stocks like Circle, they've sold off. I think they've sold off pretty good. Some of the stablecoin stocks, and so some of the blooms off the rose there. I just think there's potentially. I feel like there's a lot of room in the Nasdaq, and the Nasdaq was weak today. There's a little bit of room to the downside. So I'm just, I'm not really doing much. I'm just being kind of careful. It was kind of a quiet day for us trading wise, but it was a good day, so I didn't have to do much because we got back what yesterday's. When you have a 100-point up move and you have a 25-point down move and you can come out ahead, it's a good thing. So we'll take that.
Yeah.
Couple things. It's 2:41. It's a Tuesday, and tomorrow's What's Your Assumption? So tastylive.com/assumption. Also tastylive.com/events if you want to sign up for Mike, Nick, and Katie on Sunday, or me and Tony next week. If you want to come to our open house next Thursday, if you're in town for the event, just tastylive.com/support. Support at tastylive.com. It's the only one that's a little different. If you are not on the list for cherry picks, give us drop a note to support@tastylive.com. Cherry Picks came out today. Mike Reckentine, Dr. Data, and Nikki Batista just they did a Cherry Picks today that has popular ETFs on it. But what's cool about this is you can download this, and we get a billion requests for this over the course of the year, which is popular ETFs in every different sector. So like we have, broad market ETFs, commodity ETFs, crypto ETFs, currency ETFs, fixed income, and you can see it up there. Everything leveraged or inverse ETFs, and then we go to you can flip the cards over, and then it keeps going, and to different sectors.
Keep coming.
Yeah, it keeps coming, and it's downloadable so that you never have to worry about this volatility ETFs and all that kind of stuff. That's the main crux of kind of what's there, and then there's obviously some earnings plays. So anyway, that's the main thing is downloading the futures ETF thing. I'm sorry, the sector ETF and the various popular ETFs. That's a good thing to have. It's good to know. It's good to have. Also, there's a couple of earnings plays that we played for tonight, Tony. Not huge. Uber, really small. Uber's been on kind of like a tear. I think it's still up around $2 today. Last time I looked,
$2.11 over $90, 90.51. It's been on a 3-day bender for the last 4 or 5 points.
Yeah, last Uber earnings were not very good. If you remember, I'm just going from memory, but I want to say the stock was trading around 75 to 77, and it opened around 65, down about $10, which is a pretty big down move. It was outside the expected move to the downside, and that was actually the low. Right after earnings was the absolute low, and it's been basically from that mid to high 60s all the way back to 90 something.
Ivy rank is 33. What are you looking at doing in there?
I haven't done much. I sold some 82 puts in August and some SEP, like 80 puts and 105 calls. I don't know. I don't really.
You went to SEP. You didn't do AUG 15 options.
Yeah, I didn't do any AUG 15 options.
Okay.
But
that's all right. I'm not going to hold it against you.
Didn't love what I saw in Uber premium wise. Felt kind of But I feel like after last time, there was a big down move last time. I feel like this time it's either going to be a small down move or a big up move. And so I may sell some junky puts in here. Yeah, what the hell? Let's sell a few junky puts in Uber. I think the more interesting play is probably AMD.
The three-day options.
Yeah, I like the 3-day options because I've been getting paid on those. The
$6 expected move for the next couple of days.
The more interesting play for me today is probably AMD. The Ivy rank is about the same as Uber. That's about 33. Let me just see Uber for a second.
It is 33. Monthly implied volatility in Uber is around 60-ish, and it's about 50-ish in AMD.
Yeah, they have the same implied volatility rank. The only difference between AMD...
It's about 40-ish. I'm sorry, 40-ish in Uber, and it's a little bit higher in AMD.
Yeah, and the other difference in AMD is, if you look at the volume in AMD in the stock, it's traded about 60 million shares today. If you look at the volume in Uber, it's traded just under 20. And AMD is double the price of Uber. So when you think about it from a notional value, AMD's traded the equivalent, if you put it in Uber shares, because the Ivy rank's the same, of 120 million shares to 20 million shares. So AMD has significantly more liquidity than Uber.
And AMD has not had an uptick, not just for the last couple of days, but it seems like since it made its lows in April.
You mean AMD has not had a downtick?
Did I say uptick? I apologize. That's correct. It's not had a downtick.
Yeah, AMD has not had a downtick. Now, usually when stocks have not had a downtick, I don't fade them that much, but we did some small trades in AMD today. We sold some August premium, which is nothing, some 205s and 150s, 152 and a halves in August.
I will tell you this, though. Option volume is normal in AMD for today. Not a lot going on. Like Palantir, not surprised, is 3 times the norm today. in option volume.
Yeah. Well, I can see that. Palantir had a monster, gap up opening. And AMD, we sold some SEP strangles, leaning, no, not leaning anything. Our deltas in there are completely flat, and some AUG strangles just to get some premium on today. I forgot what else had earnings.
That's a good question. I should have that at my ready, and I do not. But I will get it for you. Give me a moment. Go ahead. Talk amongst yourselves.
Yeah. So anyway, that's kind of that's a little bit of my let me just make sure I didn't do anything else there. No, I think those are the two earnings plays. Was there another one? I can't.
Well, we got SMCI, which you don't care about, right?
I looked, I couldn't find anything on, you know what it is? SMCI, hold on, SMCI. When you have a stock that, in your head, it should be it was trading like what, 1,200 or something. And then it did the split, and then it was, this is, I think it was a 10 for, was it a 10 for 1 or 20 for 1? I can't remember if it's
10 for 1 or something like that.
Yeah. And then it dropped all the way down to like in the teens, and now it's a $50 stock with a 19 implied volatility rank. It did have some okay volume today, but the expected move is only $6. I don't know.
Do you care about an Upstart or a Snap? Your beloved Rivian or Lucid?
Lucid, I do care. I bought some. And
you bought some stock, yes.
How could you not want to buy Snap here? Every earnings they miss. Has Snap ever not disappointed? Ever? I'm just asking. I'm asking for a friend.
I think that's a double negative, but no. Good Ivy rank of 49 sounds up, but you only got an expected move about $1.41 over the next 3 days.
Has Snap has anybody ever made any money selling puts in Snap
alongside for earnings? Probably not.
I mean, I really don't know if anybody's ever made money selling puts in Snap. So I'm gonna have to try.
Be the first. You could be the first.
I could be the first. And what was the other stock? Oh, Lucid. Yeah, I bought some Lucid yesterday. Where's the stock? LCID. Yeah, we're up 4 cents.
Nice. I mean, I think it only had a 12-cent expected move or something like that. So 4 cents, a big percentage basis.
Lucid in the 3 days. Yeah, you could sell the 2.5 puts for 19 cents. You're buying stock at $2.31 if you like it. But then again, you could buy the 2.5 calls for 16 cents if you really like it.
Or you could buy the 2 calls for 4 cents over. I mean,
or you could buy the 2 calls for 4 cents. Yeah, that seems like a pretty good trade.
Yeah, I mean, if you're bullish.
I'm bullish. I'm bullish on my boys. I'll throw a bone to the gods out there.
You sold the putties, sissy Mary.
Sold the 2.5 puts. I'm throwing a bone to the good kids.
Mm-hmm.
Yeah, I don't really count. Lucid's not on my big hit list, but I will put it on my watch list.
Oh, you're gonna put it there? Oh, look at you.
Yeah. I'm a good kid.
Everybody didn't know you were such a Saudi Arabia supporter, Saz.
I'm not. Trust me, I'm not. I just
Lucid short puts there.
I'm not. But when it boils down to, I'm an owner, so I have to support my team.
You're so obnoxious. You really are at times.
That's not obnoxious. That's real.
You own a car.
Car.
Saudi Arabia princes are the owners.
No, they're not. They own a minority stake. What are you talking about?
Okay, well, you don't own any stake.
I own a stake. I'm a shareholder.
Oh my God. Yeah, you're a shareholder. Now you are. You're right. The Chinese stocks. Nice. Mm-hmm.
That's right, Johnny.
I see where you lie.
That's right. Anyway, as I was gonna say we stumble into the close, but this is
I don't know, Nasdaq's pretty weak, down 140 points.
Yeah.
All your usual.
Yeah, and I didn't like. I thought with the way they goosed them up on the close yesterday, I thought they would close them not underwater, but I thought they would close them heavy today. So let's see if they do. I would expect that they don't have much upside left in them for the next 9 minutes or so. But you know what? Today was a good day for premium sellers, and you didn't take too much heat. I mean, as long as you didn't own Coinbase, I think you're in pretty good shape today. What Costco?
Yeah, if you had a little bit of short delta on top of that, you probably got paid a little bit too. I mean, because volatility did uptick a little bit.
Yeah, let me see what Costco ended up doing.
You don't want to look at Costco.
Oh, down 10, ugly. And what did Hims end up doing today? Down 7.5. That's where it actually opened this morning. So it rallied all the way back to unchanged and then opened here. I wonder if you think some of these moves in like Coinbase and stuff is actually going to eventually drag down, I think it's going to eventually drag down the
physical itself.
Yeah. I mean, I thought that the exchanges are going to start listing the spot product. It's funny. You go up against these big exchanges and you think, oh man, they can't compete with us, and then all of a sudden they pull out their, listen, listen, kid, we're not dead yet. And then they pull out their, their products, and then you're like, oh, okay. I've been down that path. It's a tough one. Let's take a look and see if there's anything else that jumps off the screen as a kind of a big mover today. I'm gonna say, I don't know. Did you mention UNH?
I did mention UNH, but that's okay. You can mention it again. Tesla had a good range today from 305 to 312 or so. It's mid-range to unchanged at 309.
Yeah, I feel like a lot of these stocks are spinning their wheels, but Tesla's one of those companies that has been, kind of it's already had, compared to these other tech stocks, it's already had a pretty significant sell-off. I mean, Tesla definitely has not participated.
Yeah, it's not the $450 stock it once was.
Now Tesla's a little like Apple here. It's kind of, it's on its butt, and I mean, maybe it goes to 290, 280, and just like Apple, maybe goes to 198 or something, but I don't think there's that much more downside in some of those stocks. I think the real risk is in, Nvidia, Microsoft, Meta, those stocks. I mean, I don't know. Feels like it. AMD, Taiwan Semiconductor, all those. I feel like that's the risk. Reddit, which actually turned around today after being up early.
Reddit's a star.
Which one? Reddit? Yeah.
Reddit. Yeah.
But it's strong. The problem in Reddit, it's real simple.
It's a star. Yeah, that's what I'm saying.
Problem in there, the markets stink.
Yeah.
You can do a $5 or a $10 wide spread, and the markets could be 40 cents wide.
Got it.
It's just a tough stock.
Well, you know what, Sadnov? We cut these guys short yesterday. Let's get them in. We got the overtime crew, Sadnov. Bring them home.
Yeah.
They didn't get all they could eat yesterday, Sadnov. There we go. Hello, gentlemen.
Gentlemen.
Hello. Hello, boys.
Thomas.
Well, we didn't exactly go up. We didn't go down 100, up 100, and then back down 100 today, but we did go down 27, which is not bad. So this is what we would call a market, Chris, that has no real direction right now. I think the tech stocks look a little heavy. They fooled me yesterday. I don't know if that was a hook or not. We'll see tomorrow or the next day. August is a relatively weak month expiration cycle. I mean, they've had some pretty heavy down moves in August expiration, but just curious what you guys think here. We're still 2 weeks away.
Yeah, we are still 2 weeks away. Today's action is a touch heavy, but the Russell's up. So maybe it's just rotation. You can't take too much issue with that right now.
No.
Gold and silver still rallying, and bond yields at the long end of the curve are in a little bit. Kind of a nothing day, but the volumes are back, and I think that's the most encouraging piece of action here. S&P finally crossed 1 million contracts for the entire day, again, without really something crazy going on. That might be indication that the top is carving out, falls up a touch. It's an uncomfortable week.
Yeah, I wouldn't.
I guess you can't talk a bull out of
out of fishing. I mean, the Russell is a little up, I guess, but it's the S&P and the Nasdaq that I'm focused on, and for obvious reasons. I mean, obviously that's where most market cap is buried. And it was very interesting today that we basically came yesterday, retested the underside of the range that we broke last week, and ran away from it like the plague. It's not a huge sell-off, but the place that it occurs is very interesting because it suggests that last week's breakdown was the real move, and what we saw yesterday was a correction, not the start of something lasting. And that it happened today on terrible U.S. economic data on the dot, that was pretty encouraging too, because, of course, last week's freak out was a jobs report and idle Fed kind of a thing. At least that's where the big moves happened. And this data today, this ISM data, told us exactly why the Fed is not going to be in a hurry, but why the markets want them to be. Employment contracting and the price structure surging. So every reason why last week's moves look like the real deal.
Dylan?
So you're looking for a little bit more downside action.
I am, yeah.
Okay.
Let's go to our social media star, Dylan.
Shocking, I know.
I'd like to be referred to as a bathing suit model.
That's what you identify as?
We can do that. I don't think you're probably not going to get on the cover of Sports Illustrated, but we'll,
Listen, if I could just starve myself for a couple more months, get myself into a full stupor of dizziness and discombobulation, I'll look incredible.
Well, Tony was complimenting himself this morning on being a tall cup of water, hot cup of coffee? What are you again? I forgot.
Hot cup of coffee with a lid.
Hot cup of coffee with a lid. Okay, so.
And I agree with that, Tony. I think that is a fair assessment of yourself.
Thank you, Dylan. Appreciate it, man.
Dylan's a hot cup of coffee without a lid.
This is correct. That's what they would call it.
It's interesting that we're going to be using adjectives to describe one another. I appreciate the opportunity to reach for adjectives in order to offer a characterization of one individual or perhaps another individual. And I just so happens that I had the pleasure of listening to this discussion over the last few minutes. And I couldn't help but notice some commentary from one beret-laden, long-haired fellow.
Think he's talking about you.
Dylan, we're going to run out of time here if you're going to go on a long rant. So let's pick it up.
That struck me as remarkably public. I said, this guy, oh, Apple, oh, Tesla, oh, okay, they haven't had a move.
You just called me remarkably public, huh?
Staggeringly public commentary.
That's fair.
From the king of contrarianism. But I agree with you, by the way.
Okay. In fact, that's what we said on overtime.
I'll eat
yesterday.
Those.
That if anything's going to move, the undervalueds are Tesla and Apple because they haven't made a move.
What's that, Sosnoff?
I'll accept those comments because I deserve them. That was a little public.
You'll wear the public hair shirt.
I will wear them publicly.
Okay.
Yes.
Okay.
Yeah.
But I also agree with you.
Down 31. They did not close them strong. They closed them a little weak, like we said we thought they would. Down 32. That's that's something. Not down 80, but it's down.
This is correct, my friend. We'll take a quick 90-second break and come back. We got more overtime with these guys in 90 seconds. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Why would anybody choose to match the market for the next 5 years?
Would you rather be guaranteed to beat the market by 10% in the next year or be guaranteed to match it for each of the next 5?
Can't you just beat it for the 1 year and then just go match it for the other 4?
I'm gonna think I'm gonna do that, yeah.
I think I want something a little bit more upfront, so probably just beat the market by 10% this year.
I'm going to say match the market. I do believe over the long term market goes up, so I'm going to say match the market.
Let's match it because there's a lot of psychological risk the other way of either pulling gains off too early or over trading the other way. So if I match it, then I'm locked in, no losers.
Why would anybody choose to match the market for the next 5 years? Like what? Any idiot can buy an index fund and match the market. So I'd always want to beat the market.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Markets down a little bit. It's Tuesday, August 5th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan.
That's
Here
right.
to take you through the rest of that is where you are. Here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're watching on the platform, Tasty Live. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome. Come over to YouTube. Tell us what you think of this action. What you think of this market that declined after this morning's PMI services report. U.S. economy stagnating a bit, growth coming in, employment falling off, prices paid highest level since October 22. Not a great sign for the largest part of the economy. Bond yields up and down across the curve, a little bit of a twist with lower yields at the longer end. Gold and silver able to take advantage of that and climb back from some recent losses. The dollar holding ground, not great, but oil prices drop. And so I suppose that's good news for the Russell, which is the only index that's able to eke out a gain today, up by 0.65%. Otherwise, the NASDAQ is off by 0.65%, the S&P down by 0.45%, and the Dow Jones with a more modest 0.13% loss. Dylan, you the ever optimist here, give us the lay of the land. We were just critiquing the Godfather himself, Mr. Sosnoff, for being a little bit too public in his opinion, but you seem to think that it's okay to be public these days.
So how do I contextualize this? I would describe today's sell-off at a high level as bullshit.
Okay, well played.
I like it.
What
I like it.
when I say that is that the underlying thesis that I assert is that the overwhelming force that is artificial intelligence, and please forgive me my colorful language, I shan't make it a habit, but I felt it was appropriate at this juncture. I believe that artificial intelligence is an overwhelming force. And I believe that any pullbacks on sort of pedestrian economic concerns of the likes of those who may have left Russia in their youth for the glorious life of the music festivals of Portola.
Happily, so happy.
With great joy and effervescence, I have no doubt.
Oh,
for the
boundless.
Sweet smell of eucalyptus and sourdough bread.
Boundless love for all these things.
But regardless of the glory that they may enjoy on the hills of Portola as they partake of the sourdough and eucalyptus, they still hold an inappropriately pessimistic view of the world as it is portrayed in financial indices. And the reason that they do that is because they look at the world through some basic, practical, pragmatic, analytical framework, which is a source of comfort for them intellectually because they're very intelligent. But their intelligence in this particular instance is a massive liability because of the overwhelming, excuse me.
I love this.
I'm speaking, if you don't mind. Because of the overwhelming enthusiasm and abundance of glory that awaits those who choose to think less and rather enjoy the optimism of the unlimited potential that is a technological revolution that makes the emergence of the internet in 1995 or 94 or 96 or 97 or pick your year in the 90s look like that of a flea upon a horse's ass. Because the transition to artificial intelligence is a moment of historical revolution, the likes of which we have never seen before, and valuation is irrelevant. Basically, a blind monkey could select any of the AI adjacent or directly related names at any price point, and a year from now will make much more money than any fool who attempts to use their intellect, let alone their analysis, to try to trade this market. And that, dear Mr. Vecchio, is what I think on this particular day.
If ever there was the signpost of a market top, by the definition of what a bubble surely is, which is the disconnect of reason and valuation. That was as eloquent a statement of a sentiment peak as certainly I've ever heard.
Well, thank you for your complimentary commentary, which I shan't take with any subtext of side insult that I think was there.
Well, you've been right.
I shall ignore.
There cannot be subtext because until this thing pops, you're right.
If I might refer to my dear friend and perhaps your neighbor, former Fed Chairman Alan Greenspan, the markets, good sir, can remain irrational far longer than you can remain liquid. I'm not sure that might be
that's a Keynesianism and
it's not really a Keynesianism.
It's solvent and it's not even. It's debated as to whether it's
anyway. Listen, whatever.
Anyway.
Okay, listen. You get my point.
Yes. Well, and
Vecchio's the citation.
And we've
I'm not here for quotations and citations. That's Vecchio's job. I'm here for a point of view.
And
listen, he's not the nerd.
To your point, that's exactly what we've seen. We have shown the markets
that is where we are, sir.
Rational longer than
I would tell you this:
solvent.
You can either be long the AI, you can either take advantage of these idiotic sell-offs. So like, oh my goodness, look at this economic data. What about the PMI? What about the CPI? What about the jobs report? Oh, what about the overwhelming global technological revolution that renders your stupid economic data irrelevant? Good sir.
It doesn't make it irrelevant if you just look at the collective wisdom of the world's largest and most liquid stock market today. It's not me saying it, it's them.
0.4% between friends. It's basically a tip at dinner. Okay, come on. This is not a sell-off.
I mean, in the context of what happened last week, it's a beautiful rejection of yesterday's attempted rebound in exactly the place you'd want it.
Your adjectives are unwelcome. There's no reason to characterize its beauty and or lack thereof.
I'm gonna tell it. I'm gonna go get the doll, and you're gonna let me know where Ilya hurt you today. Okay.
Show me that dollar. What happened with that stupid dollar? Trump. Got me by the balls.
23,132 on the NASDAQ close. We're up a little bit after hours, back to 145. It's a 0.65% loss. We turned lower from where we more or less bottom out on July 30th, Ilya. Slight overshoot
Yes.
from some of the levels that we were looking at yesterday on futures power hour and overtime, roughly
Basically the bottom of
23,000.
that range.
Yeah, 350. S&P was 63, 65 or so. And we failed there. I think the reason and rationale for why we actually did pull back and fail away from these levels when we did this morning is worth looking into. You were mentioning the ISM PMI report, which I think is worth bringing up here on the screen for a quick second. The PMIs, as we often do when we discuss these, diffusion indexes based around 0. If you're above 50, you're growing. Higher above 50, growing faster. Below 50, contraction faster the more you are below 50. So the ISM comes in at 50.1, which is barely in growth territory, if at all. But it's the internals that bother everyone, because the internals, as we look across the board, not only are they mentioning tariff. In fact, let me just search for the word tariff here on the screen. 1, 2, 3, 4, 5, 6, 7 mentions in there. What respondents are saying section. Basically, every response has a tariff notation. It's the fact that the employment gauge is falling deeper into contraction territory, and our prices paid index is now at the highest level that we've seen since October 22, which again, respondents are pointing to as the tariffs being responsible. So what does this tell us about the state of the economy now that we can no longer trust BLS data, as Dylan mentioned in his walk and talk rant this morning on Twitter? And are we now looking to the PMIs as our North Star?
All the data is bad. Anyway, sorry, go ahead, Ilya. Sorry.
All the data is bad.
All the data is bad.
We already said this yesterday. We already collectively agreed we're using bad data, but we're agreeing to use bad data because it's mutual agreement.
Yes. I think there's an interesting dichotomy here, and you have to give the devil his due.
Thank you.
There were two things that happened.
Assuming that was directed at me.
There was two things that happened today. And you can pick and choose your data. There was the PMI numbers from ISM, which we're looking at here, which were god awful and disappointing across the board. And indeed, the manufacturing component of this same survey that came out last week, that also disappointing. And you can look at that, and those of us of the bearish mindset can go, see, told you, ha, ha, ha. And then you can look at the S&P version of this same data, S&P Global. They came out with their version of PMI data. And on that score, the U.S. economy is near the peak of last year's explosive growth. Now, that survey was conducted much earlier. It's a different sample space. It's a different time that most of that data was collected. It was much earlier in the month of July. So you could say, okay, the ISM is more current, it's more recent, or you could say that the S&P Global is a better data set, and most PMIs around the world do indeed come from S&P Global. So you could look at that and say, well, that's wonderful for the bullish view. Forget this ISM, whatever. You might also say, well, what does it all mean and what does it matter? One thing is showing you this, the other thing is showing you that. Who cares? It's all bad data. It's all survey data. It was all screaming recession in February and March. Obviously, that didn't happen. It was more about the way that businesses felt, not what businesses did. Maybe this is something we can just write off altogether. And in my mind, there is a very simple way to kind of cut through the noise here and see which thing did the markets actually trade on today and what thing they actually paid attention to. And it's the ISM data, full stop. When that data came out, the stock market fell. That's it. And if you look at what happened with Fed rate cut odds in Fed funds futures, they've moved more dovish. And they've moved more dovish for next year again, not this year. This year, they're basically stuck at where the Fed thinks they're going to be. So very clearly, the markets looked at this ISM data. This is not anybody's opinion. This is the price action itself. And they said, uh-oh, higher prices, weaker employment. The economy needs rate cuts and the Fed won't do them. Bad. Now, does that necessarily give you a narrative to extrapolate into collapse? Of course not. Does the economy stop mattering because we have a hype cycle in AI? No, obviously not. That has never happened in history ever. And we have had more transformational technologies than this, like railroads, like the steam engine, which quite literally turned human history on a dime. One might say the Industrial Revolution of the 1860s shaped up to be a much bigger net change from feudal-like conditions, let's say, to what we know today, Renaissance notwithstanding. And did that change the dynamics? No. The dynamics are still as they ever were. You get a hype cycle, that hype cycle implodes, and then you get the real adoption phase. And all the promise that Dylan is talking about is realized.
Vecchio.
Certainly I don't debate that. It's the valuations and the timing. Would I buy that narrative here now after everything we've seen? Not with your money.
Before we get to that, there's a bunch of earnings that did come out, and while some of them matter, some of them don't, I do think they're worth touching on. Snapchat, snaps out here, share prices, off 14.5% here after hours. Revenues were in line at 1.35 billion, but their adjusted EPS missed at negative 16 cents versus negative 15 cents expected.
No one cares about this company. Do you not agree?
No, I disagree completely, because this is the to quote you, the bullshitty social media company that okay, so a few months ago we shared a deck, I think that was sent over from Goldman Sachs or Morgan Stanley, I can't remember, but it was basically like, if TikTok were to get kicked out of the US market, where would those users go? And they had these different funnels for the different features that TikTok has, and it's like, well, you could go to Instagram as like the next easily available substitute, or you could go to Threads, or okay. At the bottom of every single category was Snapchat, right? So it's the one that
reinforced my point. I thought Snapchat was already a write-off.
Well, this is why it matters. When Snapchat, it's typically the first of the social media companies that see marketing funding get pulled. If companies are going to be pulling back any sort of spending and thinking about their budgets in a more austere kind of manner, they'll continue to pump the Facebook ads. They'll continue to pump the Google ads. They cut the Snapchat ones first because they have the lowest ROI and whatever of a user base compared to the other social media platforms. So it's canary in the coal mine. Frequently, it's been viewed as over the years, and maybe the guidance, which is right in line with the expectation, there was 1.48 billion. They're guiding at 1.48 billion. They're not selling any dreams over here right now. They're not painting a brighter future than what the street expected.
But I'm just understanding your logic. You're saying the weakest of the sheep. If the weakest of the sheep is weak, therefore what?
If this was
if the first of the sheep that you fear might get slaughtered gets slaughtered, you start worrying about the other sheep.
But if there's one sheep that's to be slaughtered, is it not this sheep?
It feels like it is, and
I think that's fair.
There's a proper caveat here, which feels like this happens every single quarter for Snapchat, where they just totally bomb out. The market crawls back a little bit between earnings.
It only exists to support that guy's lifestyle. I forget his name, that LA kid. I feel like this just exists to support that guy's like Instagram with private airplanes.
So Galaxy Digital's also out here. This is another miss. 8 cents EPS versus 10 cents expected. Not fantastic, but share price is off barely a little bit here after hours. SMCI is out as well, which under $50 a share after closing at 57.26. Sales miss 5.8 billion versus 5.9 billion expected. EPS miss 41 cents versus 44 expected. Their sales outlook miss 6.5 versus 6.6 billion. What about their EPS outlook for the Q1? Miss 0.46 versus 0.56. So SMCI down, not great. Galaxy off a little bit here. HIMS was yesterday, right? All right, Dylan.
Other than SMCI, I think it's very easy to take Dylan's perspective here and say these are not the names that are going to make or break the story.
I think SMCI is the most relevant of the list. That
Yes, for sure. For what you're referencing,
for sure.
I would point out the broad picture here about earnings so far right now. This comes from FactSet. How have companies been treated by the market, depending upon if they're?
I think this is actually a huge point.
I was
looking at this too.
Yeah. So if we think about how the market's been treating winners versus losers, winners are the 5-year average in the 2 days before, 2 days after a company beats on their earnings. It's a 1% gain. This year, it's about a 0.9% gain for the second quarter earnings right now. If you're a company that has missed, however, missing has been problematic, and the stat there it is. The 5-year average, again, 2 days before, 2 days after the earnings release, the 5-year average for a company that misses its earnings is minus 2.4% during that window. So far through Q2 2025, it's an average price decrease of minus 5.6%. So companies are being rewarded less than usual for beats, and they're being punished by twice the degree that they normally would be for misses, Dylan. And I think that just goes to like one of those hallmarks of, is this market overvalued? Is it oversaturated? Are we priced for perfection? Right? It's like,
I agree with that. I mean, I think that's self-evident. That basically.
Can I give an example though from like real life?
Sure.
Hopefully, Dad's not listening. Where I went to college, you're only supposed to take 4 classes a semester. One semester, I decided to take 5 because I was working out this whole thing where I'd have fewer classes by the end of senior year. I'd be living in my fraternity house. I don't want to do one.
A big fat party. I understand what you're thinking.
Right. Okay. So I take 5 classes that semester, and I get 4 A's and 1 A minus, 397 GPA. And my dad said, "Yeah, I thought it was pretty good." And my dad said to me, "That's it." And it was kind of like, okay, this is like the best you can do. Pat on the head for 4 A's and an A minus, right? And it was kind of like an FU. And that's kind of how the market's behaving right now. Like nothing is good enough, right?
For the big man.
Yeah, nothing's good enough for the big man right now. And we're seeing the Nasdaq.
If you take a look at the S&P
right now.
The S&P, actually, it's a really interesting thing because this exact dynamic really starts with that happy days news that the EU and the US reached a tariff deal, which should be exuberantly good news. Well, yeah, apparently the EU agreed to eat a 15% tariff, at least for now.
Which I'm not happy about.
I mean, they're not happy. They're rightly not happy, but they do reach a point of some certainty between what is the number 1 and the number 2 most important consumer market in the known universe. And from a global growth perspective, this is incredibly positive. And the market goes, meh, and does nothing and fades it. And ever since then, the GDP number isn't good. The Fed is disappointing. Then the jobs data really spooks everybody. But this idea that the market is not responsive to good news, that it doesn't rally when the news is good. This is that thing that you see as the mirror image of the dynamic that Dylan, you're describing, which is The market is so happy with what is occurring that it just doesn't care. Bad news, whatever. We're starting to get through the looking glass, seemingly, and get the other side of that exact thing, which is the market stops caring about good news and starts saying, you know what, whatever, we're going lower. That's the hallmark of a market that is completely convinced in where it's going, whether up or down, when it decouples from news. And what we've seen in this version of the decoupling isn't that bad news isn't working and the market is rallying in its face. It's the opposite. Good news isn't working, and the money is coming out of the markets even when you'd think it shouldn't.
The dynamic in 2023, Dylan, when the Fed came out and they were like, "Oh yeah, like don't worry, we're not gonna hike rates again." You know, the market was. Yeah. Go ahead.
I believe I am 100% correct. I also believe Ilya is 100% correct. What I mean is the AI supernova is upon us.
I agree, actually.
The ability to value the AI supernova, impossible.
I agree with that too.
The present value of the current and future AI supernova, unknowable, impossible. Look at the Meta forecast.
Totally agree.
Idiotically wrong.
Totally agree.
Look at the missing of the boat at Apple. If I was to say to you, there's going to be an AI supernova, do you think Apple Computer will benefit? You'd be like, oh, hell yeah. They're going to be front and center. Okay, well, maybe not. Guess who's front and center? Microsoft. Left for dead decades ago. All of a sudden, they're the top of the heap.
Mm-hmm.
So I think that this really comes down to your opinion, Vecchio, as to who's right. The supernova, as advocated by your friend in Milan, or...
Go ahead, finish your framing.
The absurdity of the present value of the supernova, as advocated by your friend in Portola.
I mean, I think the only real difference in our perspective is sequencing and timing.
And present value. It's just what is the present?
That's it.
And I have no credible opinion of the present value, but for my belief of the idiocy and insanity of man, which I believe.
And for me, I completely see that, and clearly we've witnessed it time and time again. The history of financial bubbles tells us over and over again that things can inflate more than anybody ever expects, and that they'll snap at a weird time when nobody expects them to, and later than everybody expects them to. I mean, you don't have to go far. Go rewatch the Big Short and watch Christian Bale lovingly portray Michael Burry freaking
by
out.
nature, in their nature though, don't bubbles have to go beyond what would be rational? Because if they stopped, then
that's what would make them a bubble. Yes.
Right.
And so I think
that can only be determined retrospectively.
Right. And so in that sense, all you can do is trade the price action.
Just get long and hang on, brother.
What would Soros say, Ilya?
Time-wise, yes.
When George Soros sees a bubble, what's the rational thing to do in his eyes?
Run it up as long as it'll run up.
Buy Meta.
Run it up as long as it'll run up. And in fairness,
Microsoft put spreads.
We've watched it, but you have to, I think, disassociate what you do as a bet on the long run transformation of this, which, by the way, I am in all of my non-tactical, non-45 day or 50 day DTE, not my active portfolio. I'm very long the stock market and will be probably for the next decade, 2, 3, whatever.
You know, Dylan, that old ESPN commercial?
It's a different time cycle.
With John Clayton?
as a
This is
trader,
Ilya.
you have to look at this and say, this price action is telling you that we are becoming unresponsive to good news. We broke down from an uptrend last week. We retested it over the course of the past 48 hours, and the retest failed. That's what is on the chart currently. So you trade that from a trading perspective. Because the washout will not care that eventually the great and glorious AI future will indeed materialize. The washout on a trading basis will take your money all the same, as it did in 2009, as it did in 2000, as it did in the 80s, over and over and over and over and
When's
over
it going to
again.
do it, Ilya? When?
Nobody knows. That's why you have to trade the price action.
Nobody knows.
That's why you have to trade the price action. Exactly. And the price action says this could be the beginning or maybe not, which is why you have to trade it very carefully.
Becky, what are you doing?
What am I doing here? I'm leaning a little short.
Are you short the supernova? Are you nibbling on these sort of Russian expatriate turned eucalyptus sniffing Portola music listening man's?
So let's say in July I was doing something like a synthetic short calendar call spread. So if I'm long a calendar call spread, I'm long the longer dated option, short the call and the shorter dated option, right? But I was doing that basically the opposite. I was running up the NASDAQ calls and call spreads while holding on to these late August puts in ES. Not perfect. It kind of feels like that's, if I want to be bullish here, I'd want to have a long calendar call spread strategy. I'd rather be short the market in the short term. I'd rather be short the 24,000 call in NASDAQ that's expiring in, however long. In this case, we have the 23,200 here. But something like this, short the 17 days, long the 48. I'd rather be longer duration towards the end of the year than deal with whatever data digestion that we have to go through as the economy reorients itself around tariffs, which again, if you're to believe the PMI data, the non-farm payrolls data, the ADP data, everything that we've had into the stew, viability or not, directionally things are slowing beneath the surface. That's why we look at core GDP. And not just like the top line figures. We've gone from 2.9% to 1.9%, now to 1.2% in core GDP. So consumption and investment is slowing down over the past several quarters. And during that time frame, inflation has moved up from 2.4%, now back closer to 2.9. So higher inflation, lower growth as the economy is digesting the tariffs. Seems really textbook. So if we're going to go through this now, Dylan, where Congress is on the Epstein recess right now. The Fed doesn't have a meeting this month.
Great way to call it, by the way.
That's what I'm calling it. They adjourned Congress early so that they wouldn't vote on the Epstein files. What else would we call it? Yeah, I'm pretty sure my congressman might block
have a partisan bias as a Northeast liberal fellow. I guess it'd be a nice adjective to call you.
Call me a father of a young girl instead. That's my perspective on this. I digress. Congress is not in session right now. We have the Federal Reserve. Federal Reserve is currently on its vacation. They have Jackson Hole later this month, but they're not going to be changing policy anytime soon. If there was a window with which the market could soften up for whatever reason, seasonals, this could be it. So if I think the calendar call perspective, I want it, Dylan, if I were really you and doing this in a responsible manner, and you and I from
my
time
only
to time.
question to you is, what part of the word supernova do you not understand? Something to reflect.
No, but you bring up a valid point, and this is the reason why I think that, in a K-shaped recovery world where AI is a layer on top of the economy that serves the financial and cultural elite, it need not worry itself with declining real income levels for lower and middle income consumers. And that is a horrific, scary proposition for how the economy and the and society could evolve. But it would mean that even if AI displaces people because it does produce this gigantic productivity boom, companies' earnings stay intact. They reduce their overhead for labor. Profits surge, margins explode, unemployment goes up. And in a world where unemployment's rising, what does that do for asset prices if the Federal Reserve has to keep rates low, or the federal government needs to do a UBI program or a public works
UBI,
program?
brother, UBI solves all the. UBI is the hidden solution to all your problems.
So I just see long-term asset inflation because I don't see this country's political and financial elite doing the things that are necessary to get us on a sustainable course.
But do you
That's why I
think UBI is in the cards in the next 10 years?
In the next 10 years, no, but I would be surprised if it doesn't become a more prominent conversation as we look at unemployment rates for people, especially younger Americans, shoot up, especially for young men shoot up. Unemployment rates for men who are graduating.
Targeted gender.
No, I think you have to be worried about that because the preponderance of historical data shows that countries with high youth unemployment rates, particularly young men between the ages of 18 and 35, have higher incident rates of civil unrest. And I think that for keeping our society bound together,
maybe they should get a job.
I don't think that our society has properly catered to the changing dynamics that young workers, particularly young male workers, have faced in recent years. And it's not simply as getting a job, it's about the place in the world, what society has to offer us. I think the prevalence and the proliferation of gambling-like tendencies and influencers is all about getting rich quickly because the American dream has failed for so many people. There's no more ladder.
You're saying that the culture for young people, men and women, is a lottery culture rather than a work culture.
Well, because the upper crest of society has geared a tax system that shunts wealth from the lower middle class up to the upper class, particularly from younger workers to upper workers.
Advantage of the old.
Well, I'm paying a higher effective tax rate than people that are 65 right now in my local area.
The entire system is designed to benefit the 75-year-olds at your direct expense.
Because the system is designed for people to retire in their 60s and die in their late 60s and not live on until they're 85 or 90, which is wonderful.
Asset owners to exploit your willingness to pay a high tax rate and W-2 income to be treated like a punk while they live and play golf.
Yeah.
And carbon load the atmosphere such that you roast to death in the summer.
And I'm actually very optimistic about where this goes eventually. Because I think that
because you're an asset owner.
No,
who lives in Silicon Valley.
Yes, but I don't think where it's going is going to benefit me as an asset owner. I think it's going to benefit my children more so as the beneficiaries of what Dylan is describing. I think one of the things that the AI supernova does eventually is reorganize this in ways that we couldn't begin to fathom. The same way that railroads and telecoms reorganized their societies in ways that couldn't.
But the fundamental difference is that we have the transformation going right now. And we're building data centers. And we're not creating more jobs out of building those data centers by high degree, even though it's sucking up more electricity, even though it's sucking
We're
up
2 seconds into what this transformation is going to be.
I realize, but like the auto industry, you don't have diners without the automobile, right? You don't have auto repair shops without the automobile. We've now had
getting rid of the automobile.
No. But the point is that once the automobile jumps into existence, a whole other offshoot of industries have to pop up.
Of course.
What other industries have popped up that have provided jobs?
We won't know.
Universal basic income. There will be no jobs.
I don't think I'm signing up to that idea.
There's just going to be music in Portola and free money from the robots.
I mean, as fantastic as that would be, I think
sounds like a boring life.
What we're witnessing politically, socially, demographically, is the end of an era that started somewhere around the mid to late 70s going into the early 80s. That era had as its job the solving of an inflation issue That solving of the inflation issue at the corporate level, at the government level, led to tax cuts and deregulation and the formulation of corporations as fundamentally shareholder oriented, which of course means reducing costs, increasing profits. All of that gave us globalization and other mechanisms by which costs could be reduced, because the problem that world faced was an inflationary one. And now we face a different issue. And the baby boomers are leaving the labor force, and they're giving up the reins of power, finally. And
Are they?
Gen X is tiny, so they're not going to be replacing all these retiring baby boomers because there's just not enough of them.
They wouldn't be
And
Gen X
so-
unless they're overlooked. So,
Just calm down about Gen X. Let's not be speaking about Gen X inappropriately.
Dylan, you are
I mean,
a
there's
unicorn among Gen
just
Xers.
not a lot. They're a small generation.
Well,
And so-
I account for more than one. I'm a multi-person person. I have a lot to offer.
We love that about you. Trust me.
And if
No,
only
I accept the
Euphoria
fact. I
sneakers
accept
were
the fact.
available in the US, we would wear it proudly.
Okay, let's not bring the sneakers into this. There's no one talking about sneakers here. I'm a barefoot. I don't even like to wear shoes, but that's a different issue.
Okay.
What we're witnessing across the entire landscape, politically, socially, demographically, is the handing off of one 50, 40-year order to the next. The ridiculousness, by the way, of the last election, where both sides come with equally old ideas and nobody likes it, and a third of the electorate doesn't show up because they can't be bothered to listen to the same thing from both sides that they've heard for 40 years, that they're all unhappy with collectively. It's a wonderful example of what's going on here. I think with AI, as with other examples of that kind of a technology, it will create more jobs than it destroys. It will solve more problems than it creates, but it will create issues, as it does every time. And in 40, 50 years, we're going to have a massive issue, and we're going to have to uncoil that issue. And that issue will be the thing to resolve for that generation. But I actually agree with Dylan that this is a very optimistic moment for the world, because we are probably at one of these important inflection points in history, where the festering issues of the past 10, 15 years have finally come home to roost, and we're going to clear house. And everybody is so upset with everybody on every side that what's going to happen is we're just going to change the paradigm. And things that before were anathema are going to become how we solve things. And we're going to come up with new ideas. And
Meaning UBI.
Meaning all kinds of things. UBI is certainly, I think, on the table. I don't think that's where it's going to go ultimately. But to Chris's point, I think it's going to be very much a part of the conversation. It would be smart to deal with AI better than we dealt with globalization, where the majority of people benefited and a loud, ignored minority was, to the pain of everybody, left to hold the bag. Were we to just spend 30 cents of every extra globalization dollar to take care of those folks, maybe we wouldn't have this mess. But that's not how history works. So I'm very optimistic. I just think the valuations are off, and we need a cleaning of the house before that optimistic future comes.
Cleaning of the house. Hear the Soviet anthem playing in the background.
I would suggest that rather than a cleaning of the house, that there might be a tanning of the supernova. And one
that seems like the most likely outcome here. Forget like the short-term path of the market. In 5 years, is the S&P 500 more likely to be at 3,000 or at 9,000?
Well, the frustrating thing, I think, for Ilya and I is we both completely agree with one another. And yet we completely disagree with one another.
So what's the trade for this week then, Dylan?
Buy Meta, buy Microsoft, buy Tesla, buy NVIDIA. Don't think about it. Don't overanalyze it. Don't talk to Ilya. Just calm down and sell some put spreads in the tickers I just gave you and be happy when you have more money. And then just enjoy yourself and maybe have some steak.
I made some pretty good filet last night. Some of the names from the basket that we put together.
Not to talk to Ilya because he'll make you doubt yourself.
Some of the names that we mentioned in January when we were looking at our phase 2 AI basket: Amazon, Meta, Google, Palantir, Snow, SPGI, FDS, IQV, UNH, and Axon. One of those is doing very poorly. UNH obviously has not fared well in recent months, but Axon, on the other hand, has been punching well above its weight.
UNH. I like your Luigi trade, which is either it's coming back up or it's going away. But anyway, you're saying something.
Well, if it's going away, it's worth more than the sum of its parts right now. Right? If you were to break it down by, think of it as a conglomerate.
Remember, the Luigi defense is that he had it coming. The defense is not that he didn't do it. It's that he deserved to be murdered. So the fact that the defense attorneys even think that that's a viable defense tells you how horrendous UNH actually is. Anyway, I digress.
No, it's remarkable.
Well, and the fact that there's people in the country that are like, oh yeah, that makes sense.
No, not just people in the country. The most elite defense attorneys in the world are like, okay, we cannot claim you didn't murder this man because you're on videotape murdering this man. So our only potential defense is to say that this man deserved to be murdered. And we believe that there's a credible case to say that.
I've been arguing with people about this in Reddit when I see people celebrating the murder of the Blackstone executive last week, Wes Lepatner. Apparently she was attributed to having lived in my town. So this was like a whole thing up here. Oh my gosh, can we figure this out?
Cinnamon buns.
No, she had no family up here. So we don't know why the local news stations were interviewing people in town about her. Either way, though, like signs of this being some sort of class revolution. An innocent woman is shot because the guy went to the wrong office looking for the NFL for his CTE. Like, and we're celebrating this. Like, but isn't that a sign of the social decay that we're talking about, Dylan? Where like you have this K economy where there are things that are happening and the market's making money and society is moving on, and there's a whole bunch of other people who are just increasingly getting left behind.
Yes. It's the sign of where the breaking point from the old order to the new one occurs. And you could be optimistic or pessimistic that it's going to go to something that you want to see or don't want to see. I'm optimistic that the US as a unique phenomenon in the world will reinvent itself in a positive way once again, as it has every other time that it's had one of these sort of inflection points, but they are always painful. I mean, one of them was a civil war, for heaven's sakes. And that's not what I think is coming. Let's just be clear.
Let's not. What kind of American are you, Ilya?
A very optimistic one, and a very patriotic one.
Eucalyptus sniffing one.
Yes, it all looks all right over here under the eucalyptus trees.
I was referencing Jesse Plemons' character in the movie Civil War, which is like a famous meme gag from that movie that came out a year or two ago. I digress. Top headlines of the day. Hey, he was excellent in Breaking Bad, and he's married to Kirsten Dunst, which is, I think, right? I don't know.
I have no idea. I have
Jesse Plemons. I don't know, but that's just why I don't know why that's in my head.
This is the young guy that with Breaking Bad guy, the redheaded guy, that good actor guy.
Yeah.
I like that guy.
Yeah.
I don't know his name.
Dylan, to your point about this AI super cycle, OpenAI today, Supernova, it's releasing this lower cost model that's going to be hosted on AWS that should allow it to compete with Meta's Llama and DeepSeek's deep research models a little bit more effectively. There's obviously not a clear path from A to B here, but I find your relentless optimism somewhat endearing
Thank you.
If only to say that I have never felt as bullish as you have.
About anything ever.
And I will say, given the tone and tenor of some of the comments that have come in over the course of today, and not just today, in recent days, people have been saying like, oh, Vecchio and Radigan are so arrogant, like this thing is about to come down. And it's interesting not being the person carrying the flag and listening to another bull disparage a bear like that.
Are you diminishing me in some sort of rhetorical, dismissive manner at this juncture?
No, it was like an outer body experience.
Okay. You're saying that this is the first time since we've been a trio that I have outbulled you as the bull.
I think so.
I think that's true. And
Probably,
I believe we're in the supernova, and I believe everybody should just calm down and buy your Meta and buy your Microsoft and buy your Nvidia and just ignore Mr. Eucalyptus and enjoy yourself and be happy with your stake money. I think it's very simple.
And by the way, that is completely possible. And if I thought that it wasn't, I would be over indexed short, and I am not.
Because he's fearful of Mr. Stakes and Eucalyptus over here, and he knows
for the exact reasons we've been saying. Because this thing, for no reason discernible to anyone,
that's right,
can blow out bigger for who knows how long.
That's right.
Which is why, and then crash. Which is why you
also
trade the price action, and the price action since the beginning of July has been maybe it's out of steam, and we'll see.
It could go on for years. This
or blow up tomorrow is my point.
But the odds of a blow up tomorrow are much low. The payoff. Listen, I would love nothing more than to make the bear case. Obviously, nobody knows how valuable the supernova will be, how soon.
Of course.
So there was an analyst. This is Dylan. I want to like bring something to your attention about why this money has to keep going. This was sent over by. I saw this from Ben Badger, and he's a CEO and principal analyst at Creative Strat. Creative Strat is a market research firm. Okay. This comes from an executive at Schneider Electric, which apparently is a key player in data center buildouts. Quote, AI hardware is rewriting the data center energy equation. One rack of NVIDIA's Blackwell 2 now draws roughly 180 to 200 kilowatts, driving whole site demand from 300 megawatts to 1.2 to 1.5 gigawatts, a 4 to 5 times jump in a single architecture cycle. So these power spikes stress 30 to 50-year-old transformers and distribution assets that were never designed for such volatility, forcing these utilities and operators to rethink their reinforcement and on-site generation strategies. What this effectively means is that you are seeing a constant turnover here. There's a lot of other information within this about SMRs and hyperscaling, which I don't think is prudent to the conversation. But what they point out is that ultimately chip roadmaps and software volatility keep CapEx on the accelerator in the short term, with each GPU generation delivering higher density. Data centers require continuous electrical and mechanical retrofits. Hyperscalers are blending constant load on sites with burst capacity from tier 1 colos. That doesn't really mean anything to us, but this is like a Ouroboros. They build the data center, right? They're drawing on all this electricity. They now have supply available for consumers who are sucking up all the demand, and a new model's coming out. And so they need to add more energy and more GPUs to build the new model. And it's kind of like this flywheel right now where we're going and going and going. And so why wouldn't there be continuous demand for NVIDIA as inference grows and grows and grows and grows? It's a difficult pill for me to swallow to be structurally bearish on the AI space. That's not to say it's overcooked.
Right, but the reason to be structurally bearish, which I rationally fully agree with my friend in California, is only on valuation. Too much, too soon, too high, too many multiples, too much, too much, too much. And the only reason I disagree is because I don't think we're in a rational environment. I think a supernova suspends logic. I think the meta earnings are the greatest indication thereof. And I think you just need to calm down, stop thinking, stop analyzing, stop doing math, and enjoy yourself.
You know what, Ilya? I think that now that Dylan has brought us full circle to effectively quoting the President of the United States, relax, guy, I think we can leave it there. With that, overtime is out of time for this Tuesday, August 5th. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan definitely in Milan, I've been Chris Vecchio for sure here in New York. Hopefully no more earthquakes. Please stop. We'll see you tomorrow. Quick break coming up next. More Ilya with Macro Money. See you there.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand's worth in the front month for sure. Don't do it, kids. Don't do it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today. You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. Four large, 4K, $4,000, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
Stock markets fizzle after an attempted recovery at the start of the week from last week's bloodletting, and it happens against the backdrop of another troubling piece of U.S. economic data. So what is the U.S. economy actually doing, and how worried do the markets truly need to be? That's what we are going to tackle here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. Let's take a look at what we have on the menu in front of us then, and what the markets did today. We'll, as ever, begin with a look at the price action, see how we got there, and then try to figure out what comes next. This is the current, that is the September contract for S&P 500 futures. And we bring it up because the architecture of these moves today and over the course of the past several days really is eye-catching and seems to suggest that there could be something that's starting to happen here. So these tops right here, of course, established for us a range last week. This was the US and EU deal on trade. We get a gap over the weekend, and that gives us the top of where this range is, and we fizzle. The optimism doesn't last. The Fed right here, that's this third candle in this red sequence here. It's disappointing, but ultimately the price action doesn't find lasting follow through because we get into earnings, and of course then we get this massive gap and the new record high from the Meta and Microsoft earnings, which are explosively better than expected. But that too, the markets fade, and we end up finishing with a lower close than we did before on Fed Day. And then, of course, Friday last week, there's this explosive sell-off that finally cracks the architecture of this range. Now, that comes courtesy of the jobs report, which we'll take a look at once again in just a moment. But what's critical here is the price action itself. There is a very straightforward stair step up here that develops from these panic lows around Liberation Day tariff rollout in early April. Once the markets sort of digest what's going on and the White House seems to take a step back from the worst of what the markets are concerned about, you get this clean stair step up where former resistance becomes support on a retest. And so here's where you start to see the breakout. You set a higher high, you come back, retest these former levels as support, then set another higher high, retest these former levels as support, set another higher high, establish a range here around these former levels. Once they're taken out, again, former resistance becomes support, establish a higher high, and then here we break the sequence. If these are the previous highs, then we have failed on their retest and broken through. Moreover, when we start this week, the markets rally all the way back up to retest the breakout point for this range, and today we are rejected there. In other words, there is the early indication in the price action itself. Now, before we get to any indicators or news or whatever else, there is early indication here that the price action is beginning to roll over. In other words, that we have a sequence of higher highs and higher lows that has given way, and we are setting lower lows now. Now, it's, of course, very early yet, and we still have this very important level of support, which has been holding since early July at 62.41 or so, but the architecture of what the price action is doing here is very eye-catching, especially since the rollover starts not with a bevy of bad news, but with a bevy of good news that is faded. First, the EU-US deal. Next, those explosive tech earnings. Against this backdrop, today again, the outlook for Fed monetary policy pulls deeper into a dovish direction. We are now looking at 129 basis points in rate cuts between now and the end of next year. The markets are relatively anchored for this year at 50 or so basis points. We can see there's a little bit of fuzz around that. 52 basis points, that's basically a rounding error. And That's in line with what the Fed has been saying pretty much all year long. The real question is next year, and what the markets increasingly see as the likely disconnect from what the Fed is saying versus what they're going to have to do. The markets are now fully priced for 3 rate cuts next year, whereas the Fed has only forecasted 1. And today's data, the start of which is marked off, the release, by exactly the spot where stock markets start to sell off today, that reinforces this idea. And of course, we're talking about the ISM service sector report. It comes out disappointing, 50.1 on the service sector index. And perhaps the most critical bit here is that the biggest part of the U.S. economy is now at standstill. The service sector, of course, much larger in its contribution to the overall economy than is manufacturing. If manufacturing, roughly speaking, is about 20% of the economy, the service sector is closer to 70-75, with the rest being ag. And so the service sector is really the key here. And of course, we've seen now a parallel deceleration in both services and manufacturing for quite some months. So it's not as if it is news, really, that the U.S. economy is slowing, at least on this measure. We've seen since the beginning of this year, that peak that you see on the manufacturing sector right there, that's January. And so this has been ongoing now for 7 months. The biggest point of contention here for markets is, first of all, this is much weaker than anticipated. The markets were looking for 51.5. They got 50. As ever, this is done in the logic of PMIs. So 50 is neutral, neither growth nor expansion, or neither growth nor contraction, I should say, in either of these measures. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Last week, we got this disappointing bit on the manufacturing side where the pace of contraction accelerated, whereas it was expected to moderate. Now we have a similarly disappointing service sector reading, which was expected to accelerate for a second consecutive month in the growth direction. And instead, what we have is standstill, barely above 50 at all. And that, of course, taken together with an anemic and a contracting manufacturing sector, gives us an economy that has basically stopped growing on this set of indicators. And perhaps the internals here are the most striking and speak to what's going on with the Fed policy outlook and the market response there too. The Fed, of course, has a dual mandate of price stability and maximum employment in that context. We learned from the manufacturing side that prices cooled, but nevertheless remain very elevated relative to where they've been and relative to where the post-COVID inflation shock is, which is, of course, here. In the case of services, the price structure actually continues to deteriorate in July, and we get to the fastest level of price growth since October 2022, which is, of course, right in the heart of the come down from the peaks of the COVID shock. Now, it gets worse. The employment side of things is in contraction mode, and we can see that across both services and manufacturing. Not only are we below 50, that is to say, employment in both sectors is shrinking, but it's shrinking at an accelerating speed. So we're getting deeper into contraction mode. And if we were to unpick the internals of this service sector report, there's really not a whole lot to like at all. Growth in new orders stalled, while the backlog of orders continued to shrink, meaning that new orders aren't coming in, whereas companies continue to work through the backlog, and there isn't anything by way of new demand to top that up. Supply deliveries slowed, and both imports and exports of services flipped from expansion to contraction. Expansion in June, contraction in July. So all signs but the pricing structure seem to point towards slowing activity, which is how you land on near standstill here, whereas the pricing structure is pointing to aggressive inflation. And of course, this is precisely why the Fed has been leery of cutting rates. But from the market's perspective, these inflationary concerns are inherently temporary because the demand destruction from the tariffs that is fueling these concerns will ultimately overpower, and we will land on growth, cooling, and disinflation. And ostensibly, you might be seeing that already in the manufacturing side, where we've finally had a dip in inflation. And of course, the manufacturing sector is a little bit more cyclically sensitive. And so perhaps we're seeing the beginnings of that start to occur. But this is how you end up here, where the markets don't think the Fed is going to do any more than they've already projected, and they're anchoring around that. We can see there's something of a range that's developing here since the beginning of the year, with the bottom at around 50 basis points, in line with the Fed's thinking, and we've kind of oscillated between 25 and 50, one cut or two this year. And despite signs, deepening signs, as we can see here, of economic weakness, we're not really seeing us move out of this range, because the conflict between the direction of prices, higher, and the direction of employment, lower, is seen as keeping the Fed as likely to stick with what they've been saying and what they're comfortable with and no more. But the markets are increasingly seeing that this reticence is not going to last into next year, because the economic environment will be so dire that the Fed will have to stop sitting around and start stimulating in earnest, which is how the markets expect to get 3 cuts next year, while the Fed has only committed to 1 so far, and even that loosely. Now, we also saw the final revisions and the final outcomes on S&P Global's version of analog PMI data, and here the view is much more optimistic. We have a surge in the service sector that continues, and in fact takes us back to some of the heady levels that we saw in the second half of last year. That, of course, gives us a potent push on the composite index, because, of course, most of the economy is services. So if services is booming, then the overall economy follows. But a deeper slump in manufacturing, which has veered off in the opposite direction. So we're starting to look a bit like we did here at the midpoint of last year, which incidentally was when the markets, as we saw, had a similar sort of view, where here we can see that there was a steady view for 2026. The view for 2024 was similarly anchored, but then it was 1 year forward to look at 2025. And that's where the expansion in rate cut odds was really building, much as it is now building for 2026. Markets perceived a similar kind of a dynamic. And so what we end up with then is perhaps the market's looking at this and saying, well, maybe this is where we were at the beginning of July when the S&P survey was conducted. It was done earlier and was released earlier. The numbers we saw today were revisions. And maybe the ISM number or set of numbers is where this ultimately is going. And of course, that's the troubling part. And that's why the markets react to those, the ISM numbers today, much more so than they react to these S&P global ones. Now, even if we take this at face value and say, you know what, let's focus on the positive. Let's say this was the more accurate view, though the S&P global numbers are collected earlier than are the ISM numbers. We also got confirmation on those same numbers, final revisions across a number of other major economies. For Europe, we can see standstill, barely above 50, and indeed stuck there, stuck near that standstill as we've been basically all of last year and going into this year. In the case of China, the S&P Global and Caixin version of that data, again pointing to standstill. We have a slight pickup in services and a deterioration in manufacturing that sort of within the recent ranges gives us a net outcome that's a bit positive. And we'll take a look at what that composite landed on in just a moment. But it's not difficult to kind of put a midpoint through here and say, well, if this is pushing in this direction and this is pulling in that direction, then you probably end up somewhere just north of 50 for the composite. That matches the official numbers out of China. This is kind of their analog of what ISM is relative to at the S&P global numbers in the US. So you get two PMI numbers, two different PMI numbers in the US. You also get two different ones out of China. You can see here the composite is basically hugging the 50 line. And that sort of reiterates what we've been seeing in China for now 9 consecutive quarters, which is a near total absence of demand. We can see here that going all the way back to where the initial reopening of the economy occurs, which is right about here, you get one good quarter into the end of 2022. And thereafter, things fizzle. In the solid line here is real GDP growth. In the dotted is nominal. Of course, nominal GDP includes inflation. Real GDP factors that inflation out. And when you look at the difference then where real GDP ends up above nominal, that means that to get from nominal to real, your inflation adjustment is negative. So nominal GDP minus a negative number is the only way you'd end up with a real GDP number that's higher. And that's, of course, exactly what we're seeing. The inflation coefficient on Chinese GDP has been negative, implied, for the economy as a whole for 9 consecutive quarters. And as you might expect, when growth is positive and money and demand are chasing a given bit of supply at any given moment in time, then prices rise. And that's indicative of demand outpacing supply. That's what growth is. This is the polar opposite of that, where clearly supply is outpacing demand, which is why prices are falling. Things are essentially on discount economy-wide in China. And that speaks to the near total absence of demand relative to the supply that's available. So where does this land us? Here, by the way, is that composite number for S&P Global. For China, it's 50.8. So just about here, right in the middle of these things, as we've been saying. And even if you take the optimistic view then and say, this is the real deal for the U.S. economy, it's growing at a level that is analog to the very heady growth we saw in the second half of last year, we can see that Europe and China are basically stuck near neutral. Both are certainly growing, but the pace of that expansion is anchored at only a hair above no growth at all. And we've been anchored here for the better part of last year as well as this year. And this really is why the markets seem to be so concerned. Because if this is the lay of the land, then the one economy that cannot fail of the top three that drive global growth is the US economy, because there's no real meaningful support coming from the other two. As we've pointed out frequently here, 58% of global GDP is just these three economies. And of the remaining 42%, most are vendors to these three that depend on these three to have demand. So the influence of these three is actually in excess of their size in the relative GDP pie. And so in this, the most optimistic version of the story, you have a single point of failure on global growth. And then what this suggests, and why these ISM numbers were so disappointing and so eye-catching for markets, is this later conducted survey suggests that maybe that thing you can't afford to have happen, the failing of this runaway engine and its potential to correct back down to where these are, that's maybe starting to happen. And that goes to the jobs report that we've just seen. Of course, very disappointing at 73K, but even more so disappointing in the prior month's revisions. We can see here the cumulative 2-month revision here. If you squint, you can see it's all the way down to 258,000 jobs that were in the earlier estimates that were phased out. And you can see when those kinds of revisions of this kind of magnitude occur: COVID recession, global financial crisis, the recessions of the 1980s, and of course the GDP report, which for the second quarter gives us a bunch more noise around what's going on with imports. They surge, then they fall off, and inventories, they surge, they then fall off. But it's the contribution from consumption that's the most important, because that's 68% of GDP. And these numbers are so small that between the first and second quarter this year, we get the weakest 6 months of consumption since the first 6 months of 2020, the COVID recession. And so this is perhaps why this is what we're looking at. Because the markets are starting to conclude, looking at the preponderance of data that is played out here over the course of this turn, that the US economy, the one engine of global demand you couldn't afford to fail in this environment, is starting to decelerate in a worrying kind of way. And if you look at the way that that's happening, the Fed is not going to come to the rescue until the pain is far more acute, which means the economy has all kinds of room to weaken before there is action from policymakers to push us in the opposite direction. And against that backdrop, positive geopolitics, positive earnings are being ignored. And what appeared to be a breakout last week now appears to be reinforced after the bounce at the start of this week hits a wall. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, on with Chris Mondays and Fridays for Futures Power Hour, on with Chris and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Good luck trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is going on, everybody, and welcome back to Risk and Reward with Ian Gus. Gus, we got another PLTR of the week. We'll be getting into a little bit of that, hash out some of the details, but it's been a pretty volatile week. How are we doing today?
Yeah, doing good. We were just discussing our favorite Soulja Boy songs before we started the stream. Everybody, let us know your favorite Soulja Boy song in the chat if you have one.
678 8212.
That is what it is. Yeah, we were having a little acapella session to give the full backstory. But Catan, sorry to hear about your boat being attacked by the orcas. I guess I don't know if this is fake news or not.
I heard they're vicious sometimes.
Orcas,
petty.
well, they are. I have a whole thesis about orcas controlling the stock market.
Let's hear it.
I've never told you the orca thesis?
No.
I think I have.
You should have started with that.
Yeah, man, orcas. Okay, I've definitely done this on this show before, I think. But orcas, there's the orca salmon hat thing. You're telling me I haven't told you about this?
Orca salmon hat. I'm not catching on.
Man, yeah. Orcas, they exhibit this strange behavior where they'll put dead salmon on the top of their heads and swim with their heads slightly above the water. And scientists don't know why they do it at all. They think it might be some kind of social thing. But it's only been documented 3 times in history, and it coincides with the 3 most recent massive market crashes. There was one in '87, there was one in '08, and then also '70s oil crisis and all that. There was one in the early '70s as well. So if the orcas start wearing salmon hats, the market's going to crash. That's my theory. So I don't know how Catan being attacked by an orca exactly plays into this thesis.
Only time will tell.
The orcas are getting active is the point.
No, orcas are getting active. I hear orcas can be pretty vicious. I mean, as we get into it, the market's been pretty vicious. It's been volatile. Last week, at the end of the week, we had a pretty big sell-off. Over the weekend, we gapped up, rallied a little bit, and then we kept on rallying today, and then we sold off again. I'm curious to see if we're going to continue to rally, but a lot of fluctuations into a lot of these positions. Anything else standing out for you?
Yeah, I mean, when Meta and Microsoft had those insane earnings beats last week, and then that still wasn't enough to, keep the market propped up the following day, I kind of thought maybe we were, starting to see the end of this rise and taper off, and maybe we would enter a much-needed 1-month breathing period a little bit.
You would think.
But that does not seem to be the case. It seems like we've turned right back to pushing to higher highs. Earnings season has been kind to a lot of people. I mean, not so kind to others, such as the nature of earnings season. But yeah, it's an interesting one. We got some earnings trades to discuss here as we dive in.
Yeah, we'll go ahead and jump into it. We can start pulling up some of these slides. We do have a risk of the week, another PLTR on a meteoric rise.
There we go. That was good.
Meteoric rise.
You really sounded that one out. Yes, risk of the week, and then we're also going to talk Palantir. Great earnings call. I think this company is freaking fugazi, but we're going to get into it. So let's dive straight over. So first of all, kick us off with your risk of the week.
All right, guys, we got a new risk of the week. I think last time I did SPY, I still have that position on. I sold an added money call spread. The move that we got at the end of last week helped me out so far. We'll see if we get bought back up. That was last week. This week, I'm feeling RKT. I know RKT's been going around a little bit. It's a cheaper underlying. They're up 40% year to date. That could be a good thing or a bad thing. It's like if an underlying is moving 50%, within 6 months, that can either mean something really good or really bad. So they've been in headlines so far. Rally's been driven by a lot of bullish sentiment. I mean, some major acquisitions like Mr. Cooper and Redfin. super high short interest, maybe because of how much we've been rallying lately. I mean, last time we learned super high short interest, I mean, people like to jump on those. It reminds me of the GameStop saga. But I know we had last earnings for RKT, we beat earnings, we had higher EPS. The stock still faded. I mean, with cheaper underlyings, I mean, it's really difficult, like fundamentally speaking, for them to prop their stock up and sustain it at those levels. So I'm curious to see how they'll do. Not that we care too much about the fundamentals, but then we have some of the analysts, current price trading at about $18 for potential more upside, but I'm going to be getting short on RKT. So instead of joining the momentum and joining the herd this time, I'm going to look to buy a put. Debated on selling the call, but I think we're going to go with buying the put just in case we get a drop and we can see an expansion in volatility. So that's what we're going with this week, guys.
Yeah, I like this one. I think trying to short these meme stocks as they come back down is a wise strategy. It can be a tough one to time.
Meme stock.
If you're willing to hold through the pain a little bit. Now that was Open Door, and that thing is a freaking meme stock. As is this. I don't know. They got good commercials.
Nah.
That Rocket Money app looks lit. Yeah, you seen that thing? They advertise like crazy. It cancels your
You want to know what's so
subscriptions.
funny? The first brand deal that I've ever gotten was 4 or 5 years ago. It was a company called Truebill, right? Truebill does exactly what Rocket Money does. A year or two later, Rocket Money bought Truebill. So technically, Rocket Money is Truebill. And Truebill...
Technically, you're sponsored by Rocket Money.
No, this was... No. But it is funny how things panned out because I ended up downloading Rocket Money later on because I was curious about it. Come to find out, they're the ones that actually purchased Truebill. So looks like they might take it to higher heights. But when I heard Rocket Money, I was like, that sounds familiar, but there's no way this is... I think I have Rocket Money on my phone right now. And I think I'm paying for it. I think I have a subscription to Rocket Money. But anyways, we're going to go with
You
Rocket
better cancel
Money
that thing if you want this to come back down.
It's actually
Jeez.
pretty cheap. You know what's cool about Rocket Money? If this is the same...
Bro's going to endorse the company. He's going to say, I'm short Rocket, and then just give a glowing endorsement.
So I do have it downloaded, but it needs to be re-downloaded from the iCloud.
Sure, where it does like the auto.
Yeah, and then you get to choose what's kind of... This is not at all, but you gotta choose what you want to pay monthly for it, which was a very different model than I was used to seeing any company incorporate. So I wasn't choosing Rocket Money because I've seen it before, but when we keep talking about it, I'm like, yo, I have used this application before. So it's been moving off of a lot of momentum, a lot of speculation, but we're going to be getting short right now. So
yeah, love shorting the memes. It's such a great thing to do. You know that these companies must return to their fundamentals sometime. Yes, you will be validated, especially if you're willing to hold through a little bit of pain. It works. I don't know if I've told this story on air before, but when GameStop, the OG original GameStop saga, I wanted to short it on the way back down, and I did it, and it got too painful, and I cut my losses, and like the next day it came crashing back down. I would have been up so big. I lost like 900 very valuable dollars my freshman year of college. So yeah, I'm with it. Short these memes, baby.
Yeah, no, I mean, I feel that completely. I mean, when you see like your net worth fluctuating like that, like me in college too, bro, that was me. It's like a $200, $300, $400, $500 loss. It was like, all right, where do I?
Yeah. I guess I'm having ramen again for dinner. Yeah, exactly.
No, but that's going to be my risk of the week. We'll see how Rocket Money pans out. We'll see how... All right, we'll see if we can sustain some volatility.
For sure. Let's jump over. My risk of the week is DoorDash. I believe I put this on as risk of the week a few months ago, and I got long. And I still really am a buyer of DoorDash in the long term. However, based on their recent price action, I just think that this thing is really overinflated right now. I mean, a killer trade after their Q1 earnings report. It took a dip down into the 170s. I took a spread. I needed 170, and it has just ripped since then. I actually wish it was a naked call. I was just telling you that the other day. But it's up 50% this year. It's up 35% just since the start of May, which is about when I entered that position. Fortunate for me. The run-up is justified. They've made smart acquisitions. They bought 7 Rooms and Deliveroo, which were the two largest UK food delivery services. They also operate in Australia and a few other places. And I really like those acquisitions. I think it bodes well for global expansion. And I'm really playing more into what I think the market is going to do rather than what I actually think DoorDash is going to report. I don't have any opinion on whether I think DoorDash is going to meet, exceed, fall below expectations. But the last earnings call was very bullish. They beat EPS by a lot. Revenue came in on target, and they announced that they had spent over $5 billion on these 2 big acquisitions, all cash, no recurring payments or anything like that. And the stock slid 12% on that news. That was why I entered the original position, was because I was like, wait, this is bullish news to me. I don't understand why the stock is sliding. And since the market has priced in my sentiment on that one. But now we're at this incredibly overextended price point, in my opinion. It closed at about $255 today. Analyst price targets hang at $212 to $240 right now, and I don't put a lot of stock in that, but I think that is a good reflection of the broader sentiment that I can't even find one analyst saying, oh, this thing's going to go to $350. And these recent acquisitions are going to hurt their short-term margins, and I think the market is going to overreact to that. I think that is something that should totally be expected and be priced in, but DoorDash is going to come out and say, oh, we just spent all this cash, so we're coming in a little bit tighter on capital than we thought we would this quarter, and that people might overreact to that. I think, like I said, I buy into the long-term thesis of DoorDash. I think that this company is only going to grow. I'm an avid user of DoorDash myself, but just in the micro here, and this is incredibly binary. My contract expires Friday. I want to isolate this binary event and do nothing else. I'm define risk. I bought a put spread, and yeah, I think it's overextended at the upside. I think it needs to breathe. I think the market really wants to push this thing down, and I think they would have to blow every expectation so far out of the water for this to take any sizable move up. So feeling pretty good about my position there. I need it below 250 is my critical number.
Yeah.
So
no, I like it. I'm always curious to see how the company acquiring the company, how they pan out, like in terms of the response from the underlying stock, and then also the company being acquired. The reaction from their stock.
I always think it's interesting, and especially when and this was a rare time with those buyouts where I just wholly disagreed with the market action. Usually I can find the validation, but not only do I think that they're strong acquisitions that will make them a lot of money in the future, but also they had $5 billion in cash laying around. Is that not a sign that the company is doing pretty well? I mean,
or healthy in the time being at least. I mean, I know one thing. So what's funny is, I know with a lot of small caps, I used to really love watching the mergers, the acquisitions, things like that. Something I noticed was a lot of the times the company buying the company takes a little bit of like a temporary hit, because I mean, they just forked out a ton of cash. So they take a temporary hit for a potential investment on their money. So I really like to see kind of how the company being acquired, if they get any type of short-term momentum.
And I think the acquisitions thing is so interesting, because when Amazon says we're making a multi-billion-dollar expansion we're going to spend billions of dollars to build distribution centers in the UK, everyone's like, awesome, and Amazon goes through the roof. But then DoorDash says, oh, we're going to spend billions of dollars to buy our two biggest competitors in the UK, and for some reason it tanks 12%. It's strange.
That's valid. I guess I could kind of see Amazon and DoorDash low-key on a different playing level too. I kind of see Amazon more of like they're so unfair. I see Amazon as like literally every industry now. So I see Amazon I wouldn't be surprised if Amazon has their own DoorDash system in the future.
They do groceries now with Whole Foods.
Okay, so I guess there we go. It's like a direct competitor there. But yeah, very interesting. We'll see how that kind of pans out. But I do like Dash. What is that trading at right now?
Yeah, we will see. Yeah, I think it closed just over 255 today.
Okay. There.
Yeah, so it's on a tear, and I think the tear will continue. I'm looking to get back long into this after this, especially if my trade is correct and a good buying spot presents itself. But I just don't see any way they can make higher highs.
Yeah.
That leaves
us up on the small cap. Small caps. Those are pretty poor fundamental companies, no doubt. I think it's stocks under $10 is technically considered a penny stock, and I think 90% of penny stocks end up filing for bankruptcy and getting delisted off of the NASDAQ. So
let me tell you about a little company called Aerotine International.
I didn't even mean to. That's funny. We can go ahead and jump to the
only thing you're going to regret, Aero, is that you didn't buy more. All right, let's dive over. That leads us straight into our primary segment for the day.
Awesome.
We've lost slides here. My apologies. We'll hop back over. Leads us into our primary segment for the day, which is Palantir. Palantir, on an absolute tear. Everybody, if you're a trader, you know the name Palantir by this point. 340% gains last year, up over 100% this year already. This thing just keeps going. They just had a very profitable earnings call today. Yes, today. And they moved up another 8%. And so I just wanted to take a second to talk about Palantir, who they are, what they do, and if this move could possibly be justified. So, a few quick numbers here. They're absurd numbers. Palantir is trading at 295 times their forward price to equity, and they are trading at 661 times their trailing price to equity. This is insane. That makes it the most overvalued large cap stock in the United States by the definition of overvalued. There is nobody that is trading at a higher forward PE ratio than Palantir. They went up 340% in 2024. They went up 130% in 2025, but they somehow have done all of this and increased their earnings and their margins with no matching increase in employee headcount. Now, on one hand, that shows scalability, for sure. It shows that you're able to do more than everybody else with less than everybody else. But the contrarian point to that is that this company, their market cap is so ridiculously much higher than anything they could feasibly do anytime soon. It is absurd, and it's trading purely on hype is what it is. And I mean, anytime you see something trading in the triple digits of their forward PE, fundamentals have gone out the window, and we are talking pure hype. So it's just this really interesting situation to me, because logically you would say, oh, well, eventually this hype is going to die and they're going to have to be evaluated by their fundamentals, at least to some degree. But we've been doing this for years now, and it just keeps happening. So I don't know. I don't know. What are your thoughts?
I mean, I like PLTR. I mean, I think the momentum is going to continue. I think outside of the fundamentals, I think PLTR, the train isn't done. And I mean, with the fundamentals, PLTR was one of those that have been around for a while. I think PLTR was the first or second underlying that I think I ever placed an options position on. So I mean, in terms of the fundamentals, I'm excited for it, but I'm more so hoping that the momentum continues to the upside.
Yeah. So let's talk today. You can take us away.
Cool. I mean, now we got a strong Q2 earnings for Palantir, raised profit forecast. We had that on Tuesday. Here Tuesday. Estimates are looking good. Revenues are looking good. The stock reaction, boom, to the upside. I mean, we gapped up and ran a little bit more to the upside. I mean, that's showing investor confidence, in my opinion. Not only are we getting a pretty big gap up to the highs, but we're still continuing to run to the upside. And then we closed green on the day. So it doesn't seem like the sentiment has shifted at all here. If anything, it seems like it's only continued, but now it's kind of harder to get involved because now we're trading at these extreme levels to the upside. But they did have a solid Q2 earnings beat. And I mean, PLTR, it doesn't seem like they're slowing down anytime soon.
Yeah, it really doesn't. And in a vacuum, a considerable beat on a percentage basis on your EPS, exceeding revenue. I don't think that in a vacuum, I don't think that these numbers are unjustified for an 8% move. Like, I think that it is sensible. I'm not upset about it, but it's just, we continue to trade just so far ahead. And I don't know, it's like, with the way that we're treating this thing, we're acting like they're going to put the first man on Mars or something. Like, and maybe they are.
With how discreet they are, sometimes they might be.
It's true.
That's what I'm saying. Some of their filings, it was a little vague, especially 2, 3, 4 years ago.
I ain't giving my money to the mystery man. Are you kidding me?
If stock go up, we going up.
I mean, if stock go up, but I mean, stock go up on
absolutely.
It's so far from justified. 100%. It's so far from justified.
Right. How would you consider it? Just position sizing? How do you get involved in this?
I don't.
Right.
I don't. I feel that is the safest call for me. Is I don't, because if I got involved with this thing, if I were to get involved with this thing, 20 times over the last 2 years, I would have said, today's the day. Yeah. This thing is overvalued. Yeah. It has to come back down. I would just be shorting the hell out of this thing, getting my lunch handed to me day after day.
It's real though.
Yeah. So I keep my hands off, but it's just so interesting because I think that a Amazon, I think that a Tesla, these companies, and I really mean Tesla by proxy of SpaceX or whatever. When you buy Tesla, you're buying Elon. That's something we've established on this channel before, but. I think an Amazon has much more propensity to take over the entire world in the way that we're acting like Palantir is going to. And the reality is that they only made $1 billion last quarter.
I agree. I mean, they do not have even close to the facilities as Amazon does, and not actual facilities. But we'll go ahead and jump to the next slide here.
Yeah, let's hop over.
Some strategic initiatives. Is it me?
Yeah.
We got a lot of.
Go ahead.
We got some strategic initiatives. We got a lot of AI. AI still seems like it's the buzzword, but at this point, it's not even just a buzzword. It seems like AI is something that these companies are taking very seriously, especially with something like PLTR. So we have here their goal is to deploy AIP to about 85% of its existing clients by Q4 of 2025. That's a pretty big push, right? They got a lot of goals for the end of this year, which is. We're already into the 8th month. We got 4 more months.
And it doesn't matter if they meet these goals. They're just going to keep going higher either way. Yeah.
Apparently. The plan includes launching industry-specific AI agents and cutting deployment time in half. So, I mean, efficiency. I know the best way to get efficient at anything is systems. And then a system will allow you to be able to scale whatever you need it to. So I know they're consolidating a lot of their files, a lot of their data. I know that's one of the last bullet points there. Didn't mean to pull from the last one. But they're looking to scale. Whenever I see them getting systems down, cutting here, it sounds like they're making room to scale for what they didn't have room for already. So analysts expect the platform expansion into a new enterprise in 2025, potentially lifting guidance. So if they get those guidances lifted, or lifting those guidance, we could see more positive outlook from PLTR, especially headed into the new year. Yeah, they're not even going to care about if these goals are met by the end of the year if this sentiment, because the market is moving off of vibes sometimes. It's feeling like.
Especially with this stock. I mean, this is the most vibe-driven stock in the market right now. I mean, by the numbers, that's the case. Yeah, and I agree. I mean, I think they absolutely do have the scalability. They're doing great with their AI integration, and they are trying to integrate AI into spaces where I think it makes a lot of sense that I don't know why other people aren't focusing on, like we talked about with Surf Air, and the whole reason people are amped up about Surf Air is because the AI that Palantir is developing for them could potentially be applied to all air travel and air traffic control, and that would be this huge earth-shattering thing. But yeah, it's just, I don't know. It's really hard for me to buy into a company that is trading on vibes this much. It's interesting, but yes, legit.
What do you got to say about the SPY? QQQ? Sometimes I feel like SPY and the indexes are trading off of vibes. Sometimes
I think that's true, but I don't know. I mean, that's at least an aggregation. Nobody, you know, I mean, there are people that obviously, I mean, I do it, buy and sell SPY and QQQ, but that is. SPY and QQQ largely serve as a reflection of what is happening across the entire market. And any individual.
Are you saying our economy is moving on vibes? I don't know if you know Kyla Scanlon, not a little plug, but she's great work, fundamental economist kind of person, and she has a lot of great content out. And she made a piece one time talking about how the economy is moving on vibes. And from then, it stuck with me. I was like, we've been using the word sentiment. That's the old word, but the young generation word is vibes.
Well, yeah,
like we have been moving
we talk about the market moving on vibes all the time, and I mean, the whole economy kind of has been moving on vibes ever since our deficit entered the trillions, and we just continue to function somehow. Nothing is real, but yeah, it's an interesting one. But the military contracts are legit, and let me be very clear: I don't think Palantir is a bad company. I don't think this is a company that can't be successful or can't grow. The share price pisses me off. The market cap pisses me off. All right,
valid.
Commercial partnership and diversification. I just alluded to the Surf Air partnership that we've talked about previously. Also partnering with, is it Sauer, S-A-U-R?
Mm-hmm.
I don't know, Sauer Group. Deploying AI for complex management using their Foundry. Their Foundry is a big deal. If you try to research Palantir, you will see the word Foundry 100,000 times, and then eventually you have to cave and Google what is Palantir Foundry.
Wait, what word again?
Foundry. Oh. That's what they call their systems, their AI. What?
What is it called?
Foundry?
Oh yeah, just say it one more time. Foundry. Just drill that in.
Yeah. No, I'll forget. Anyway, Fedragoni, that's recent, as of June, this quarter, integrating AI tools to revamp their manufacturing and supply chain operations. TWG Global, embedding AI into financial and insurance workflows. And again, I understand that if you are buying Palantir, you are buying AI to an extent, much the same way as NVIDIA was for a long time, and still is to a degree. And they are providing all of these solutions to people. I think that all of this is very promising stuff, and I think that AI solutions and workflows are definitely going to be the future of business. So I think that there's a very, very strong market for this, and I can see the bullish case. I just can't buy into it.
100%. Clearly, as we know, Gus is definitely not getting long PLTR for the rest of the week.
I am this close to going on a Bill Ackman Herbalife situation with Palantir.
Bill Ackman Herbalife situation.
But I'm not gonna.
Starts going in on PLTR. PLTR is scared of Gus. Don't put out any hit pieces against us. No, anything else to add before we hop on out of here today?
Yeah, no, I got nothing else.
Cool. Well, we got Rocket Money, we got DoorDash. We'll see how that pans out the rest of the week.
We're short both, right?
I am short, yeah. Got some more short delta on into the portfolio. We will be back here live 4:30 o'clock Central Time. Love you. Appreciate you guys hanging out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.